Munde. He is, of course, the commissioner of the FDA. And while he's built a career around tough decisions and administrative reforms, what he's been doing in the last few weeks has shaken up things, whether it's in the food and beverages industry, whether it's within companies that are delivering food online to you. They are all now on tenterhooks when Mr. Munde comes in. Mr. Tukaram Munde, thank you so much for joining us in our studios at NDTV Profit. It's truly an honor for our entire team.
Pleasure is mine.
And what you're doing is completely inspirational.
Thank you. I don't think it's really inspirational or I'm doing some extraordinary work. I believe that I'm just trying to do what is expected of my role. Nothing less than that, nothing more than that. And if everybody one of us performs our roles that is expected of, I think we can be a really great society.
थोड़ा आप थोड़ा humble हो रहे हैं. ये मतलब humble diplomatic वाला.
I don't think so. Some of my friends and many of my critics called me arrogant.
Really?
Yeah. I mean, you may have a look at it and you would find on television also sometimes this question has been asked multiple times. You are called arrogant, you don't listen. So this kind of allegations have been there almost throughout my life, but they are bits and pieces, but they are. So it's neither about humbleness. My philosophy is very, very clear right from the beginning, and not in this post alone. Because we have assigned a particular role whenever we are posted in a particular capacity. Are we honest and transparent about what we are expected to do and what we have done? That's how I look at it. And if it succeeds, nothing like it. If it doesn't, at least I have tried.
If you, of course, have this kind of an impact on people that serve the greater public, then that can only be positive, right, from the perspective of the public. But equally on the other side, there is an argument to be made about proportionality. And this has been made even in the court of law.
Right.
To say that if you have a sword, should you use a sword to kill a mosquito? Do you think that there is proportionality?
Absolutely. We go as per the proportionality only, and I can give the data to back it up. I can give the provisions of the Act to convince you and the courts. There is a law in place. Do we follow the law? Yes, we do. Do we follow the processes? Yes, we do. Now the question about it has come up in the context of whether forthwith suspension should be there or not. Why not give notices first and then act upon? This is generally the context in which it has been played out. Now, just for the information of viewers and to the viewers, we act in food sector as per Food Safety and Standards Authority of India Act 2006. There is a section called 32, under which we, the FSOs and other officers, take action. There is subsection 3 proviso is there, very clearly written. In the public health, whenever there is a likelihood of health hazard by the food which is going to be sold or consumed, the designated officer has the right to suspend license forthwith. This is the wording in the Act. So the Act provision is there, particular context is there. Are we following that? Now, if you look at the actions we have taken in last 2 months or time, more than 3,100 inspections have been done during this time, of which 165 odd licenses were suspended forthwith out of 3,100. And more than 750 were establishment or given improvement notices. Now, if it doesn't sound proportionate, I don't know what the definition of proportionate would be.
Mr. Munde, thank you so much
Thank
for
you.
coming in
Sure.
from our entire team. I think this has been
sir.
absolutely amazing. There you have it. The man who has just by following the letter of the law and the spirit of the law changed the way that we look at our rights as citizens when we order food online, go to a restaurant. And yes, there'll be a lot of debate. But I think this is an example of what real leadership can do. Thank you so much, Mr. Munde, for joining us.
Thank you.
Thank you.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform. Digital first. Virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Buy now.
US President Donald Trump says the US was not seeking an extension of the MOU with Iran, which expired on Monday, stresses on deal which bars Iran from having nuclear weapons. Meanwhile, US President Trump also praises India's election system while calling for the passage of the Save America Act. In a social post, Trump said India's Chief Election Commissioner Gyanesh Kumar had earlier asked his administration how elections could be held in the US without a valid photo ID. Meanwhile, oil prices advance as prospects for a new agreement between the US and Iran weaken after President Trump says that he was not interested in extending the interim peace deal. He also threatens to bomb Oman if it interferes with shipping through the Strait of Hormuz. US futures trade flat after the major indices start the week on a somber note, pressured by persistent tensions in the Middle East and rising treasury yields. Street also assesses import-export data and home sales report. Indian benchmarks too start the week in slow mode as Nifty closes below 24,300 yesterday. Cautious sentiment prevails. GIFT Nifty indicates to another flat opening. Good morning, you're watching Markets Today with me, Shreyanshi Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, that's a lot to talk about right now. And when you talk about the diplomatic clock, that in fact has run out and the rhetoric is getting sharper. Now, when you talk about the US and Iran Memorandum of Understanding, that's expired, with US President Donald Trump also saying that Washington is not seeking an extension at this point in time, demanding that Tehran effectively surrender. And you do have Trump also claiming that his team is in discussions with Iran's Revolutionary Guard, though the IRGC has denied this categorically. And you do have Tehran, meanwhile, signaling a little bit of a tougher response at this point in time, warning that its forces are ready if attacked. Now, Iran is saying that US violations have rendered the original 60-day negotiation deadline meaningless, pushing the conflict further away from diplomacy. And that's something that you see reflected in oil prices as well, and we'll talk about that in just a bit. But before we do that, let's also zoom in on some of the commentary coming in from US President Trump, because he's saying that the objective remains clear. Iran must not get a nuclear weapon. He's also claimed that the US has effective control of the Hormuz, while warning that Tehran faces soaring 300% inflation at this point in time. Let's go across and listen in to that bit of commentary.
Well, they want to make a deal, but they're not going to make the kind of a deal that I feel is necessary. Look, we're in there for one reason. Iran cannot have a nuclear weapon. You understand that? Iran cannot have a nuclear weapon, and they won't have a nuclear weapon. And right now, them building one after what we did previously with the B-2 bombers, it's going to be a long time behalf. But Iran cannot have, it's very simple. They can't have a nuclear weapon. I think it's a great idea. Yeah, I mean, we control it. We control it with the blockade. We have a blockade. We control it with a blockade. And I like the idea of declaring it a territory.
Why might you do that?
We have total control over the strait. Now, they can be a nuisance. They can put a mine in the water, and people don't like having mines hit their billion-dollar ships, et cetera. But the blockade has been very effective. And, we're taking out, now maybe that will stop, or maybe it'll open up even further, but we're taking out millions of barrels of oil a week. If you look at the kind of numbers that we're doing, the strait is open and the oil prices are coming down, and they will continue to come down unless we decide to do something far more drastic than we're doing. Iran is in big trouble. They have 300% inflation.
All right, then there you go. So that's key commentary coming in from US President Trump as well. And he's in fact pointed to India's electoral system as an example of election security as well, citing a recent conversation with India's Chief Election Commissioner Gyanesh Kumar as he renews his push for stricter voter identification requirements in the United States. In a post on Truth Social, you do have this week Trump really recalling comments that he said that Kumar made during a conversation with the US administration about the absence of a mandatory photo ID requirement in US federal elections. In fact, he said earlier this month, India's Chief Election Commissioner Gyanesh Kumar asked our administration, how can you have elections in the US without a valid photo ID? And that's something that Trump has written as well. So that's the key commentary coming in on that front. You right now have both the sides, when you talk about the war front, claiming control of the Hormuz. And of course, you did have Iran last week as well saying that you cannot really be securing the Strait of Hormuz with just a tweet as well. So quite the interesting rhetoric that you're looking at. And against that backdrop, let's take a look at how the markets also fared. Now, when you talk about Wall Street, you did take a look at a very lackluster day in trade coming in part due to the oil prices that you had coming in with that uptick that you've seen as far as supply concerns are concerned. Now when you have Dow Jones, S&P 500 and Nasdaq across the board, you see that loss also coming in. So somewhere close to 0.5% to 0.5% cut coming in across all indices. When you talk about US futures, though, very close to the flat line, so not much of a cue that you're picking up from there, except for a little bit of a negative bias yet again when you talk about US futures. When you talk about Asian markets, a little bit of a mixed picture is something that you're looking at for Asia at the moment, because Nikkei is down about 0.8%. Hang Seng, as you can see on your screen, is down about 0.2%. Against that backdrop, Shanghai is just up about 0.2%. So not very decisively higher, but higher nonetheless in an otherwise tepid backdrop. When you talk about oil prices, that's why you're seeing some surge also come in, and very close to $91 a barrel Brent has yet again managed to really recoup that level as well. 0.3%, 0.5% uptick coming in for Brent as well as WTI with that 0.6% uptick also coming in. So that's something that you're looking at. And of course, the rise in oil prices has stoked some of those inflation fears. Yesterday, you did see the 30-year Treasury bond yield that reached a peak not seen since June 2007 as well. So that's quite interesting in terms of the handover. But speaking of how to make sense of that for us, in fact, you do have Sharad who's joining in right now. And Sharad, it is a very, very interesting day to be looking at FNOQs this morning. You have oil prices rising. You have both the sides who are really looking away from diplomacy decisively.
Exactly, and the major concern is the rising yields. And because of that, the concerns are there, especially in the Asian markets, and also the US futures are in the red. What the initial implications is coming in from the GIFT Nifty is on the lower side. Yesterday also, the cash impact after 10 sessions, it was on the lower side, dragged by the bank. So a little bit of concern is definitely there, at least in the initial hour of trade. Remember, there is a Nifty expiry also at play, but more participation is coming from cash. And largely, the Nifty bank setup looks slightly weaker than Nifty. Overall, looking at the FI numbers also, they are back to selling in the cash market, but the amount is pretty big. A lot of large blocks are there, and today also blocks will be coming in, and we'll be focusing especially with the Paytm. When it comes to shorts, it's largely unchanged at around 89%. It hasn't moved much, and neither the PCR levels have moved. Looking at the distributions, of course, how the overall momentum is changed is that 24,500. This is where we are seeing major call action, and also positions being made at 24,600 and 24,000 when it comes to put as well. Looking at the stocks itself, it should be in your radar, especially if I talk about Oberoi Realty. Good long build up and some relief also coming in for the company. Apart from this, also open interest losers, let's have a look. Interest rate sensitives, of course, would be there in your radar, but apart from that, also short covering coming in Ashok Leland as well. So maybe auto stocks can see some reversals as well. But yes, a very stock specific approach is something which we are expecting in the FNO space. But yes, initially there will be a drag for the indices.
No, absolutely, and quite a worrying set of geopolitical cues as well. Thank you so much, Sharad, for joining us with that update also coming in. So there you go, that's what to expect when it comes to the FNO front. But let's also move on, and like Sharad said, it's quite a few stocks that should be making it to your radar this morning. Something like a Colgate as well, stepping up premiumization and ad spends to drive growth. In its Investor Day presentation, you do have the company really highlighting the importance of premiumization and what will be the next key drivers. In fact, Mahima is joining in with all of those very important key takeaways, Mahima.
Right, so Shanti, I think the biggest key takeaway, I think a few of them were that, firstly, they've said that growth over profitability is something that they're going to prioritize. So what they've gone ahead and said is that the ad spends for them are going to inch up to kind of augur sales, and because of that, margins could remain under pressure, or largely gross margins could be in the same range as they were earlier. In terms of volume, plus mix plus pricing, the focus is going to be more on the volume mix, and overall toothbrush is going to be the next leg of growth engine for the companies, what the management has indicated. In terms of premiumization, toothpaste premiumization share is now at 2.5 times versus that of just a minuscule amount in calendar year 21. For Colgate especially, the premium side of business, it has grown 5x versus direct competitor. And in terms of premium portfolio, advertising on sales, that's around 50 to 55%, so much on a higher end, and incremental A&P spends are directed towards premium is what the management is indicating from here on. In terms of how digital and e-commerce has played a good part in auguring sales, they've gone ahead and said that modern trade and e-commerce is now almost 20% of the toothpaste category from 16% in 2023. Quick commerce is now almost 40% of e-commerce category, and e-commerce margins are 400 basis points higher. So I think the efforts will go towards scaling that, and premium products are more than 50% of e-commerce business now. So premiumization is the name of the game right now. In terms of the personal care, that is the palm olive business, overall it's of course a digital first brand strategy, and they are trying to build a D2C ecosystem around it, and the partnership with Bombay Shaving Company is going to be auguring growth, and Colgate will retain the general trade and modern trade operations is what they've said. So this is the overall view, and of course key takeaways from their investors day meet.
Right, thank you so much, Mahima, for joining us with that. So there you go, that's one stock to really watch out for. But let's also move on and talk about Jio's 300 rupee Prime membership. And that's something that's really signaling tariff discipline and potential future price hikes, along with the telecom tariff battle really heating up. You do have Sumit Sarkar joining in with all of those key details.
Well, yes, Airtel will definitely remain in focus given the fact that Jio has brought back its Prime membership plan for around 300 rupees for 1 year now. What does this Prime membership plan give to a user? It's for all existing and a new user. It will give them a 1 year lock-in for the selected prepaid and the postpaid plan. Even if there is a price hike that happens in the next 1 year, the user will pay the amount that they have locked in at this moment, irrespective of whatever the price hike is. Apart from that, they will get a rupees 300 voucher which can be used against Jio Home or Jio PC. There will be priority support and multiple other services that a Prime member would get in Jio. Apart from that, if they are giving any references to any friends and family, then they will also get a cashback of rupees 300. But again, this is just for references, not for taking a Prime membership of 300 rupees. Now, what does this mean for the telecom sector? It clearly indicates that there is an indirect price hike that has been taken by Jio. If at all a user chooses to subscribe to this membership, then it indicates a price hike of around 25 rupees per month for any Jio user who's choosing the Prime membership at this point of time. Also, this is kind of indicating that there could be a price hike in the next 12 months, given the fact that Jio has brought in this plan and is trying to attract users to choose this plan, given the fact that, and they're also saying that even if there's a price hike, then they will have to pay the amount that they're locking in right now. So this is indicating kind of two things. Firstly, a price hike of 25 rupees per month, and this is also hinting at a potential price hike that could happen in the next 12 months. But what it means for Airtel, for Airtel, basically we'll have to watch out for subscriber churn, because there could be some going forward, given the fact that around 20% of Airtel users were on the 299 rupees plan, which is currently being discontinued by Bharti Airtel, and they have made the 349 rupees plan as the base plan at this moment. An Airtel user would definitely save close to around 300 rupees over the next 12 months by switching to Jio over Airtel, given the fact that Airtel is charging around 50 rupees per month extra compared to what it was doing earlier, which means that the total cost translates to around 600 rupees for any user over the next 12 months, and deducting the Prime membership that one will pay for Jio, they will still save on rupees 300. So subscriber churn is something that we need to watch out for, because so far Vodafone Idea and Jio both are continuing with their base plan of 299, and Airtel is the only player which is offering the base plan of 349, and 20% of Airtel users are on this plan.
Right, lots to watch out for. Thank you so much, Sumit, for joining us with all of those details. So the telecom tariff battle is clearly heating up as well, but it's time for a very quick break right here on Markets Today. More news and updates on the other side.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant.
Welcome back. Thank you so much for staying tuned in. Well, it's time now to talk about India stepping up its electronics manufacturing push, with the government also focusing on deeper localization of components, stronger supply chains, and greater design capabilities. You do have IT Minister Ashwini Vaishnav, who's saying that 106 projects have been approved under ECMS with 70,000 crore rupees in investment, with 38 already in production. Let's also go across and listen in to his exact remarks.
आज इलेक्ट्रॉनिक्स कंपोनेंट मैन्युफैक्चरिंग स्कीम में 106 प्रोजेक्ट्स अप्रूव हो चुके हैं। इन 106 प्रोजेक्ट्स में 69,548 करोड़ यानी करीब 70,000 करोड़ रुपीस का इन्वेस्टमेंट आ रहा है, और जिससे करीब 75,000 लोगों को डायरेक्ट जॉब मिलेगा, डायरेक्ट एम्प्लॉयमेंट, यानी करीब 2.5 लाख लोगों को टोटल डायरेक्ट और इनडायरेक्ट मिला के इन 106 फैक्ट्रीज़ में एम्प्लॉयमेंट मिलेगा। आज इसी स्कीम में 31 प्रोजेक्ट्स अप्रूव हुए हैं। सबसे अच्छी बात है कि इलेक्ट्रॉनिक्स कंपोनेंट मैन्युफैक्चरिंग स्कीम में बहुत तेज़ी से इंडस्ट्री ने अपना इन्वेस्टमेंट लगाकर 38 प्रोजेक्ट्स में मैन्युफैक्चरिंग ऑलरेडी चालू कर दी है, और 16 प्रोजेक्ट्स अभी अंडर कंस्ट्रक्शन अभी चल रहे हैं।
All right, then there you go. So that's the word coming in from Ashwini Vaishnav. But let's also go across and listen in to what the MeitY Secretary S. Krishnan also had to say about the 5th tranche of ECMS.
Currently, we've cleared almost 31 applications which will be dealt with in this particular session or in this particular gathering. And totally, the investment that we are talking about is 7,877 crore. So that is the next set of approvals that we are providing. Again, in terms of distribution, we have 10 states of the country which are covered in the applications which are being currently approved. So you can see that there is a big geographical spread, and illustrates how the electronics clusters are developing around the country as we speak.
All right, then, now that we've told you what they had to say, let's also get you a sense of the impact and a sense of who it's going to be benefiting in terms of the new approvals. In fact, Sharad is joining in yet again with that. And Sharad, it's quite the interesting set when you look at these details.
Exactly, and largely, of course, to promote manufacturing, this setup has happened, and this is the 5th tranche under the ECMS scheme, just to give you the perspective how much projects have actually started coming in. And you can see largely the key announcement apart from this includes almost 8,000 crore investment, and this of course includes the follow-on investments as well. And this will be the fresh tranche of investment. This will be spread across 10 states. And going ahead, let's just look at the companies which would be benefiting. If you could just show the companies which would be benefiting, and there are 3 listed plays also which should be in your radar. This is our clearances which was already done, but let's move ahead and understand the companies which would be in focus. These are of course the segments where the approval has happened, and largely we have Jyoti CNC. That is where the company is showing some big kind of inflows, and Wipro Global also, that's where additional invest has come in as a specific approval. Micromax Precision is also there, but in the listed space we also have Syrma and Centum Electronics also. So if you are tracking these announcements which are coming in, largely you will see 3 players are there in the listed space which have benefited, and these proposals include also for Centum and Syrma SG. So these are the important specific proposals where the listed players will benefit today.
Absolutely, and thank you so much, Sarath, for joining us with that entire, detail also coming in. So across segments, you're looking at an impact coming in. 3 listed players is what you're looking at as well. Thank you so much for joining us with that. But let's also move on and talk to you a little bit. Other than those 3 players that Sharad has mentioned, let's also add some more stocks to your list this morning. In fact, Varsha is standing by with that entire list that she's drawn up for us in terms of news flow. And Varsha, we'll start about talking about the counters where you're going to be seeing positive inflow possibly coming in.
Yes, so first of all, of course, let me start with, ONGC and Oil India, wherein they'll be benefited, of course, because of Brent crude, which is about $90 per barrel. You have Nelco, which will be in focus on the back of strategic partnership with LVO. SPR Autotech will also be in focus on the back of QI. Actually, 2 stocks will be in focus on the back of QIPs. One is, of course, SPR Autotech for 1,000 crore QIP, and NetWeb Tech, which will be launching almost 1,200 crore QIP. So keep a watch on these 2. You have IIFL Finance, SEDMAC, which will be in focus on the back of upgradation when it comes to their ratings. Sigma Advanced System will be in focus on the back of order win, 155 crore anti-drone petrol vehicle order which is being received by the company. You have Oberoi Realty, wherein they have received a legal relief. This is coming for their Gurugram project. DTCP Haryana upheld approvals for their 360 North Gurugram project. So keep a watch on this Oberoi Realty also. And Leap India will also be in focus, as government of Singapore has bought almost 22 lakh shares. So these are some of the companies which might open positively. You also have some of the companies which is expected to have some pressure. You have Paytm, wherein Resilient is expected to sell up to 4.98% stake. You have paint and aviation stocks will also be in focus on the back of rising, as oil extend gains. So there will be some kind of raw material pressure, and hence you might see some kind of temporary pressure when it comes to these stocks. You have Seagull India, wherein 331 crore tender cancellation has been done for this company. So these are 3-4 stocks which might open or which might see some kind of pressure in opening.
Thanks, Varsha. So watch out for all of those stocks that Varsha mentioned. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Buy now.
Sell immediately.
Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters. When the headlines move fast. you're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Welcome, you're watching India Market Open and it's going to be an interesting morning. Good morning, folks. Good morning. The ceasefire is over. The aggression has begun.
Yes.
Already one vessel has been seized by Iran in the Strait of Hormuz. US has declared that the Strait of Hormuz is now American territory.
Yeah, and he is actually threatening in terms of going and bombing Oman, a lot of other places he's talking about. And look at Brent. 91. So are we on that upcycle or that upride again in terms of Brent crude prices is the question.
Yeah, and the fear is in the Indian equity markets, you've had a significant amount of consolidation over the last 6 trading sessions or so. And even in trade yesterday, the cash window, and we'll talk about that in some more detail, you had a bit of a recovery through the day. We had a very narrow band, but in the cash window, you fell for the first time. So we were talking to the technical analyst yesterday, and he said that this might just be a sell on rise market.
Sell on rise. I think this is going to turn into a panicky market. Let's start our program this morning by just showing you what Donald Trump has said.
Last week you said that you soon declared the Strait of Hormuz to be a territory of the United States. Could you elaborate?
Well, I just think it's a great idea. Yeah, I mean, we control it. We control it with the blockade. We have a blockade. We control it with the blockade. And I like the idea of declaring it a territory. But we're taking out millions of barrels of oil a week. If you look at the kind of numbers that we're doing, the strait is open and the oil prices are coming down and they will continue to come down unless we decide to do something far more drastic than we're doing. Iran is in big trouble. They have 300% inflation.
All right. This is what's happened with US markets overnight. The week has started with losses as the US-Iran tensions are showing no signs of easing at all. Just pull up the indices if we can, and you'll see how we started Monday, or at least the US market started Monday with about 0.5% cuts across the board. The Nasdaq down 0.32%. Futures haven't improved too much because things have gotten worse and worse with the kind of rhetoric you're seeing. So you have all Nasdaq, S&P 500 and Dow Jones futures in the red as well. Treasury yields is really the indicator, one of the indicators of the pain, right? Treasury yields spiked as inflation fears persist as oil prices are rising. The 10-year was at 4.72%. The 30-year has risen to a 19-year high at 5.3%. Oil prices are trending upwards as the 60-day ceasefire between US and Iran has now ended. There's no sign of extension of that ceasefire. In fact, both sides are getting more and more aggressive. Brent at 91 and a little over 91 this morning. Let's pull up Asian markets for you and look at what's happening there. You've had the Nikkei down about 1% today. Shanghai mildly in the green. I want to see what Kospi is doing this morning and what some of those other Asian markets are doing before we get to the India implied. We'll pull up the Kospi for you in just a bit. Let me get you India implied right now. It's showing 100-point downtick on the India implied. Let me go across to Seth Freeman, Senior Managing Director at Glass Ratner Advisory and Capital Group. Seth, a very good morning to you. Is this all on cue that the ceasefire has ended and the aggression has begun again? Because even through the ceasefire, it was a very uneasy one at best.
Well, we have to remember the genesis of this and the beginning. This was supposed to be 1 week, maybe 10 days. And we had a ceasefire, and now it's been declared dead, and oil prices are back up again. At the same time, it was very important what you pointed out about the 10-year mortgage, the 10-year Treasury, because that's what drives mortgage rates, and that's going to cause more havoc for U.S. consumers.
What do you think is the line in the sand? Because we've seen this play out before. From the perspective of the US administration, they look at treasury yields at a certain level and they see it as perhaps a little unsustainable. Of course, there's no proof that this occurs. but then usually there is a little bit of a climb down on the rhetoric and there is an easing of the tensions once Treasury yields move past that 4.7% mark. Do you see it as such? Is there a line in the sand?
I don't think so. You know, we've been talking about this now for months together, and it's been like a yo-yo. And these threats today or yesterday about bombing the you-know-what out of Oman because Oman is negotiating with Iran, that's escalated rhetoric, and the market is reacting to that.
Seth, what are the repercussions that you're seeing yet again? Because he is talking about oil where millions of barrels of oil that is getting shipped through the US. However, your Brent is again climbing above that $90 per barrel mark. Right now, we're already at 91. Do you think from here on there is a potential we could surpass that $100, $110 per barrel mark in just no time? Do you see that risk coming in?
Oh, I think there's a big chance of that. It's hard to redirect distribution. Now, the U.S. happens to produce a lot of oil. Now, the problem is really going to be seen in allied countries. Europe and Asia are really going to suffer because of the dependency on imported oil.
Seth, how are you looking at Indian markets right now in the middle of all of this? Our Q1 is over, the first quarter results. They were pretty good, but that kind of relief is not visible because of everything that's happening globally. Do you see the latest developments as a negative from the perspective of Indian markets?
I think it's negative just in terms of a risk-off kind of sentiment. And it hasn't been, I haven't read much about it in the Indian media, but it's been playing here about threats against India for continuing to or restoring buying oil from Russia. And so I think this is actually could develop into political issues as well.
All right, Seth, always a pleasure speaking with you. Thanks so much for taking the time. All right, let's talk about what happened in trade yesterday. You had foreign institutions that turned net seller, and the quantum was actually higher than the recent past. 2,535 crore rupees on a net basis was sold by foreign institutions. Domestic institutions also mopped up quite a significant chunk, that is over 5,100 crore rupees. Interesting to note that the benchmarks lost value for the first time during that cash window. We were talking about it at closing yesterday, and Sharad Dubey, my colleague, called it the law of averages. Eventually, something had to give. Whether it is that or something else, it remains to be seen. And I'm curious what Kush Bora has to say, and you'll find out in just a bit. But the Nifty 50 dropped as much as 52 points, and the Bank Nifty fell 218 points during that cash window. The culprits in this case were HDFC Bank and SBI from the banking pack, and HUL, which saw prices drop during that cash window. The Nifty 50 once again traded in a pretty tight range of about 130 points. It made a sizable comeback or recovery in the second half of the session, only to drop about 50 points at the end. IT majors, Bharti Airtel, Sun Pharma weighed on the benchmark on the downside, and Nifty IT was the worst sectoral performer. It dropped as much as 1.75% towards the end of the day. And you also had Nifty Bank that ended flat. The PSU Banking Index, however, underperformed. FMCG and consumption were the other sectoral laggards, whereas realty and the metal indices outperformed, gaining between 1.3 and 1.5%. Yesterday, you saw perhaps the last reactions to earnings, and quite a few big ones at that. You had, for example, Schneider Electric, that was the stock of the day arguably, and a few other stocks from the broader markets did incredibly well on account of the numbers.
Yeah, I mean, and I think the earnings season is far behind us now.
Yeah.
So the question is, what is going to be that trigger when it comes to reactions that we're seeing in the stock markets, right? I mean, that's the only thing, and that's the reason why you're seeing that downward pressure if you talk about implied open. Let's just pull up that one on the screens and you'll see, I think it's almost 100 points down, take 90 points in terms of implied open. In terms of the setup today, it's going to be interesting to watch out for what's happening. First up, again, that range-bound session is something that you will constantly see. The bias remains cautious, and this is mainly on the back of the West Asia crisis that do continue. The MOU between Iran and US is something which is already ended. And as Tamanna was mentioning, you have Trump, which has gone out and said and declared the Strait of Hormuz as US territory. Now, the benchmark indices are actually testing their critical short-term moving average clusters as well, and that is the key from a technical perspective. Elevated oil continues to pressure the Indian rupee, which has already hit a two-week low. Now, in terms of strategy, the question is avoid aggressive longs, and that's exactly what Alex was alluding to, what could have happened in yesterday's session. Maintain a sell on rallies until Nifty conclusively breaks and stabilizes above that 24,400 mark. Now, look at the long setups purely in outperforming themes like metals and your select financials. And it's best to stay cautious when it comes to IT and heavyweight FMCG companies. And the reason why I'm talking about FMCG companies is because the way crude is performing, the impact it could have in terms of inputs for FMCG companies as well. In terms of Brent above $90 per barrel, watch out for upstream oil and gas companies like ONGC and Oil India and Trade. As we know, they could be beneficiaries today. OMCs like HPCL, BPCL, IOC also will be in focus. Paint and adhesive companies like Asian Paints, Berger, Pidilite will be in focus. Tire companies will be in focus as well. And you have an Indigo that you should be watching out for in trade only because of the way crude has been panning out, Tamanna.
If I look at some of the factors that are in mind today, Nifty has been extending its losing streak, isn't it? Now it's been about 5 sessions. So the setup has turned cautious to mildly bearish, I would say. Nifty is below the short-term moving averages. The index remains above the 50-day and 100-day EMA. That's the exponential moving average, keeping the broader structure from turning decisively negative. So in that sense, 24,200 is a key line in the sand for the Nifty, isn't it? Supports at 24,240, 24,210, 24,160. Resistance at 24,340, 24,375, 24,425. Key downside, the breakdown level is at 24,200. A sustained break below 24,200 risks triggering fresh selling pressure towards 24,000. Key overhead hurdle 24,400 to 24,500. For the Bank Nifty, the broader Bank Nifty structure also remains healthier because it continues to sit above its medium and long-term moving averages. Bank Nifty currently looks better than the Nifty. Supports at 57,215, 57,065, 56,820. Resistance at 57,700, 57,850 and 58,095. Just wanted to pick up some parts of Surinder Goyal's India strategy, that's from Citi. He broadly says it's a better than expected Q1, earnings and decent outlook ahead. They have though rolled forward their Nifty target to June 27 from March 27 earlier. So they've pushed it forward. But the new target has increased from 26,000 to 26,800. They've added Axis Bank to the top large cap picks. They're overweight financials, telecom, healthcare, utilities, underweight IT services, staples and metals. So that's some insight coming in from Citi. But of course, what we've seen this morning is clouding things more than anything else in the short term. Let me go across to Puneet for the F&O setup. Is it looking as murky as geopolitical events?
Well, most certainly, and that's clearly visible on the data as well that we keep tracking on a daily basis. Today, of course, is the expiry for the Nifty. What you have seen in the month of August is very range-bound moves. So yet again, with this start of almost 100 points downtick, tad below the 24,300 mark is what we'll be at. Yesterday as well, what you saw throughout the session for the Nifty 50 is that we ended below that level. And when you also look at essentially the Bank Nifty as well, here too, what you have consistently seen is that closer to that 57,500, 57,700, you're either seeing selling or you're not seeing too much pressure being built in at this point of time for this particular index. Cash market also continues to be in a similar juncture because you've seen actually selling come through of almost 2,500 crores yesterday in the cash markets, and the index long too continues to be very, very, in that range of 10 to 11% for now. The open interest distribution also a very, very similar picture that you're seeing compared to yesterday, just that you've seen higher activations essentially between 24,000 and 24,300 for the puts, and for the calls 24,500 continues to be the near-term range with the highest open interest. But what we have seen consistently is stock-specific action, and here as well, you saw Voltas as well as Oberoi Realty continue to see Voltas saw short build-up as well, but there are positive notes that it outperformed peers like Blue Star actually in Q1, and hence you could see some buying momentum come back on this counter. Oberoi Realty is one where some long build-ups is visible. Also, when you look at the open interest losers side, you've consistently seen key counters, and let's look at the last bit of names too. Adani Ports as well as PFC, both of those counters continue to be in focus. So is the Ashok Leyland. Decent set of numbers, stock was up 3% and covering visible. So very, very stock specific action that you're seeing, but do keep in mind for a lot of QIPs as well as stake sales that you have today, all those stocks continue to be in focus too.
Okay. So typically when result season ends, there's a bit of a vacuum in what stocks that we're talking about, right? Because that barrage of information is dried up, but we still have some interesting picks for you. I'm starting up on my watch list with Oberoi Realty. So it's actually good news for this counter. They've gotten a go-ahead. It's a paving of the way of something which was a problem for them. This is for their project 360 North. The DTCP has rejected a challenge that they had, a legal challenge, and fresh allotments of that project can resume. Remember, this was a super hit project which saw huge excitement, and then there was a legal hurdle which came in. So the project license now remains legally intact. Change of developer in favor of Oberoi Realty remains valid. Restriction on fresh allotments also lifted, and Oberoi can resume creating new third-party rights. Existing sales will remain unaffected, and there's no stay on construction of the project. So the legal overhang is materially reduced following DTCP's order. It's positive for project execution and future sales momentum as well. So that, which is why I thumbs up on that stock. Likewise for Nelco. Nelco has announced a strategic partnership with LVO. Why is this? They will be bringing next generation direct-to-device and IoT connectivity to South Asian markets. This collaboration aims to expand access to the LVO network for enterprises and customers in India and internationally. This is, of course, a Tata Group company, and this is an important one for them. Lunar Holdco is doing business as LVO Mobile. It's a company that delivers global direct-to-device satellite mobile connectivity solutions and elevated intelligence. So watch out for Nelco. I'm picking a note that Jefferies has on Radico Khaitan. They're maintaining a buy on the stock with a target price of 5,200 rupees. They're saying the Alcobev industry is entering a multi-year premiumization cycle, and the trend is most evident in vodka, where Radico is the market leader. Strong innovation, execution, and a supportive regulatory environment is helping Radico to deliver sector-leading growth in its premium portfolio, they say, and premium mix and India-UK FTA benefits are expected to drive continued margin expansion. I'm going to quickly put in one more from BSE because, we've had that conversation around CAS, and that's clearly a problem for BSE as well. Nuvama has downgraded the stock to a hold, and you already saw about a 3.5% cut in the stock price yesterday. They've gone from a buy to a hold. They've cut the target price quite significantly to 3,240 from 4,090. They've said CAS has reset volumes and impaired the expiry date decay trading dynamics. Bank guarantee norms are second leg. Market share gains are nearing saturations as well. So they've cut their earnings per share estimates for FY27. They've cut it by 6% odd. For FY28, they've cut it by 15%. They're saying consensus estimates could see a reset post Q2 earnings. So watch out for BSE. You might see some more pain in that stock.
Yeah, it's the prop trading books that are drying up for BSE, certainly having a bearing on the volumes, as you pointed out. NetWeb Technologies, top of my list. It's one of the companies that is launching a QIP. Pretty standard here. It's set to raise as much as 1,200 crore rupees. The floor price has been set at 4,885.9 rupees per share. This is based on a formula based on the last several trading days, and it may offer up to 5% discount to that floor price. Just important to note that the floor price is 6.4% discount to the current market price, and it's because the stock has risen quite considerably in the last few trading days. In fact, if you can pull up the chart for the last 5 days for NetWeb Technology, you will see what I mean. Quite a bit of that over the last 2 or 3 trading sessions. The stock is up as much as 6.3% in just that time frame. The second stock that is has announced a QIP is SPR Auto. This was called?
I'm not sure.
SPR. I'm going to find that out for you. It's a pretty pop. Shriram Pistons. Yeah, there you go. It's a pretty old company, Shriram Pistons. It's now called SPR Auto. It was a test that I leveled at Hiral. It launched QIP issued to raise up to 1,000 crore rupees, and the floor price is fixed here at 4,438.2 rupees per share. It may offer here too a 5% discount to that floor price. The floor price is just about 0.4% lower than the current share price. So watch out for that in trade today. Akim's Drugs. This is an interesting brokerage note that I thought you should know about. Citi has weighed in. It's maintained its buy and it's hiked its target price to 860 rupees from 610 rupees. Bear in mind, of course, that the stock has risen quite dramatically in that interim, and so that price increase is warranted. The earnings quality has improved on CDMO demand. Strength rather is what they're saying. Domestic CDMO remains the key growth driver and other segments are staying subdued. They hiked the FY27 and FY28 EPS estimates by 5 and 10% respectively to reflect a more constructive API pricing outlook. So it's pretty straightforward there. They've adjusted their expectations higher based on what they've seen in the earnings.
Interesting one there. In fact, on my list, I have one which is a thumbs down, which is Seagull India. And that's because the Delhi government has cancelled a tender worth 330 odd crores. Now, they had emerged the L1 bidder for this tender and it was annulled in view of documentary consideration. There was a potential you could see some downward pressure coming in on this one. And this is not the first time it's happened with Seagull India. A couple of years ago, you had seen a similar concern that Seagull India had faced. The second one on my list is a Paytm, which is 197 Communications. Now, the reason I'm giving it a thumbs down is because there will be liquidity on the stock and that would put pressure in terms of the counter, at least in today's session. Now, Resilient Asset Management will be selling 4.98% stake in the company via a block deal, and they will be selling the stake under an OCD agreement with AntFin. OCD is optionally convertible debentures. Now, Resilient actually bought 10.2% stake in Paytm from AntFin against these OCDs in 2023, and this block deal is going to be worth almost close to 4,900 odd crores. It consists of a base offer size of close to 3% stake and an addition, that's an upsize option of 1.98% stake. Floor price has been set at 1,535. Now, Resilient Asset Management BV is wholly owned by Paytm founder and CEO Vijay Shekhar Sharma. However, this company is executing the share sale and the entire proceeds will actually be retained by AntFin Holding BV. Now, this complies with the existing optionally convertible debentures agreement that was signed between Resilient and AntFin. In 2023, when the restructuring happened, that is August 23, Resilient actually acquired a 10.2% stake in Paytm from Chinese affiliate, which is AntFin, and instead of cash, Resilient issued OCDs to AntFin. Now, this structural shift gave voting control and ownership to Vijay Shekhar Sharma while leaving the underlying value with AntFin. And this is the move that significantly insulated Paytm from regulatory scrutiny regarding Chinese ownership. So there will be no impact on the founder's direct stake. That's what we want to clear over here, because Paytm has explicitly clarified that the company itself is not a party to this transaction and there will be zero change in Vijay Shekhar Sharma's direct personal holding, which stands at close to 9% as of June. And following a complete upsize block execution, Resilient's remaining holding will actually decrease to roughly 5.2%. So watch out for this one in trade. And lastly,
no, so I just want to ask you a question on this, Hiral, because you've looked at it closely and there's a lot of chatter online making the claim that this is a promoter stake sale in some way, that there is more to go, and VSS, Vijay Shekhar Sharma, will have to offload more. You're saying that's not necessarily the case?
No, that's not necessary over here because his stake continues to remain at 9%, and this is because of the restructuring that happened back then in 2023. this only negated the regulatory hurdle that Vijay Shekhar Sharma was facing on the back of a Chinese entity owning stake, and hence this was the OCD restructuring settlement that they had done. So now whatever stake is being sold is by Resilient, which is Antfin, and Antfin will get this money. So there is no financial role that Vijay Shekhar Sharma has to play in this, and his stake continues to remain at 9%. So there is no Vijay Shekhar Sharma kind of an overhang that remains over here.
That is an important clarification, because that is what has been going round and round. You have two very well-known ex-handles who track markets carefully sparring over this. So we wanted to
Vijay
give that
Shekhar Sharma is
clarification as well.
not selling, and that is the key over here. His stake continues to remain at 9%. In fact, the other one which I have on my list is Colgate. It's very interesting because seems to be kind of a non-event, but I think their pivot that they're talking about to volumes and margin recovery, I think, is a key over here, because what they've said is that they will defend market leadership against intensifying competition. They're expecting growth in the latter half of 2026 to shift towards volume-driven organic growth, and double-digit advertising spends is what they are going to look at, which will support the premium product pipeline. Now, Citi has maintained a sell. They have a target price of 2,000. You have Goldman Sachs also, which has maintained a sell. They have a target price of 2050. And I think there was one more brokerage note that has come out on this one. But clearly, I mean, premiumization is the key. Margins is something that they will not really look at. And it is going to be volumes that they are going to look at going ahead. Second half of 2026 is where the growth will come in. Though brokerages have not really changed anything in terms of their stance, there is a potential where you could see some bit of positive cues coming in on a Colgate Palmolive as well. So that's what is on our list.
Yeah, absolutely. Now, the other thing, of course, was the update from the Ministry of Electronics and Information Technology. It has cleared 31 projects under the fifth tranche of the ECMS scheme, taking the total approved investments beyond 69,000 crore rupees across 106 projects. First, let's listen in to what the MeitY Secretary S. Krishnan had to say about that. Listen in.
Currently, we've cleared almost 31 applications which will be dealt with in this particular session or in this particular gathering. And totally, the investment that we are talking about is 7,877 crore. So that is the next set of approvals that we are providing. Again, in terms of distribution, we have 10 states of the country which are covered in the applications which are being currently approved. So you can see that there is a big geographical spread and illustrates how the electronics clusters are developing around the country as we speak.
All right. So that's the word coming from the MeitY Secretary. Let's head across now to Sharad to talk about the impact on listed companies, if at all, and who benefits. Sharad, what is the list here?
Well, Alex, largely the products include capital goods, camera modules, display modules, and rare earth permanent magnets and speakers and mics as well. But on the listed play, there is of course Jyoti CNC Automation, where there is a larger amount of allocation of almost 1,021 crore rupees. Also Wipro Global Engineering, there is an additional 1,000 crore investment coming in. Micromax, VVDN Tech and Resolute, all these are unlisted plays. That's also where we are seeing a good amount of investment coming in. Amongst the listed plays, we also have Centum Electronics, where a smaller investment of 54 crore is there. Two chemical names also make it to the list, Acuitas Chemicals and PCBL Chemicals, minor investments there. And also proposals include from Syrma SGS as well. So all the three larger names are there which should be in your radar: Syrma SGS, Centum Electronics and of course Jyoti CNC Automation will benefit from the fifth tranche of the ECMS segment.
So watch out for those stocks in trade. Thanks so much, Sharad, for that. We've got more stocks to talk about and strategies ahead of the start of trade, of course. We'll be joined on the other side of the break by Kush Bora and Parag Thakkar. Stay tuned for that.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy.
Welcome back to India Market Open on NDTV Profit. Now, clearly, you're seeing a 100 points downtick. That implied open is indicating. And the question that all of us in the studio have is what's actually happened in terms of cash and what did that downtick actually mean? Joining us in the studio, we have Kush Bora and Parag Thakkar as always. Good morning. Good morning. Parag bhai, before I come to you, I'll go to Kush to understand what did he make out of the cash session yesterday, because this was the first in terms of a negative reaction out of the last 2 or 3 weeks since its execution.
Yeah, so first up, a very good morning, guys. My sense is that cash is going to reflect the broader sentiment of the markets. For the last 9 sessions till yesterday, or till day before and yesterday, markets have made a lower high formation. Remember, we spoke of that yesterday. Even though there was an intraday recovery, a very strong one, and it seemed like a meaningful one, the broader trend remains cautious, right? So I think that's where markets kind of took cues from, and we had a lower closing in the cash. And see, we've spoken about this. It's right now a black box where most of the days it's gone up, but doesn't necessarily have to always, right? And hence you have to be cautious, especially on days like this. Why? Because today is the Nifty weekly expiry. So don't take it as a given कि हर बार ऊपर ही close होगा. I think markets are taking cues from the broader trend, or at least the closing mechanism is taking cues from the broader trend, which right now is negative biased.
Yeah. So explain how a situation like this could result in a pretty hefty loss if you're caught off guard, right? If you're assuming that you will always close positive, and a situation like this occurs where you've actually dropped as much as how much 50 points from the close at 315, right? Not the reference price, but the last tick at 315. From there, you've closed 52 points lower. What is the impact that can have?
So, Alex, see, I always root for the little guy, right? For the last guy, who's trading, the retail investor. They will actually benefit from this because they are usually option buyers, right? So when you get a big movement, especially on expiry days, they will benefit. Just for a change, I'm going to talk about the option sellers. Everything said and done, they are the market makers, and they take definitely a bigger chunk of risk when they write options, correct? Now, if you don't have predictability in terms of where the cash settlement is going to happen, see, 2050, 2030 points here, that doesn't matter. But if you move 100 or 200 points, which changes the strike price and puts the option in the money on the up, on the downside, then writing options is going to get risky. And if option writers sort of move out, you're going to see a decline in volumes. That is going to be a concern going forward. So I remain cautious, especially on expiry days, because of the cash. And yeah.
So do you think options and expiry strategies that one should look at, that will need some bit of an adjustment versus the way you looked at it earlier because of this cash window?
Look, okay, so of course, the option buyers are also smart, but the writers are definitely 120% smarter in that sense. Like, they're taking a much bigger chunk of the risk. So they've already adapted. I think a lot of them have moved out or perhaps reduced their volumes. So the strategies for option writing will for sure change because of the cash impact.
Okay. While we're on the subject, let's listen into what the chairperson of the SEBI had to do with regard to the cash. And I think it's mostly about the engagement with market participants. Listen in.
I think the SEBI, our teams have been participating, been talking to the different participants on the level of participation, on what particular concerns are, and in the social media also there have been a lot of suggestions. I think some media houses have done, I think, full day dedicated programs on how the cash could be improved in terms of like cash remaining as it is, but maybe certain things that are worrying some of the, I think, those who are doing options trading and so on. So we are actually analyzing those issues, and will soon come to a view on the matter. It is too early to say. अभी आप जो विदेशों की बात कर रहे हैं वो सेटल्ड सिस्टम है, और अभी हम लोग बात कर रहे हैं पिछले 15 दिन में क्या हुआ, तो पहले दिन में क्या हुआ, उसके बाद सब्सिक्वेंटली कैसे पार्टिसिपेशन रिलेटिवली बढ़ी है और कैसे वॉलेटिलिटी भी नीचे आई है, डाइवर्जेंसेस बिटवीन सेंसेक्स एंड निफ्टी वो भी नीचे आए हैं। और ऐसे भी हमने देखा है कि जो एक्टिविटीज़ है, जब कुछ एक्स्ट्राऑर्डिनरी एक्टिविटी यदि कभी एक्स्ट्राऑर्डिनरी होता है, उसके पीछे भी डेटा इज़ बीइंग एनालाइज्ड, राइट। तो सम ऑफ द टाइम्स हमने देखा है कि एक्सपायरी डेज में कुछ ऐसे हो सकते हैं जिसमें कि जो कि इतने साधारण ना हो, जैसे हमने कहा है कि उसमें भी कुछ छुपा हो, तो वो डेटा भी हम देख रहे हैं। जैसे आपने बोला था वीवैप सिस्टम जो पहले था, उसमें भी क्लोज के समय में कई बार इस तरह से ट्रेड्स आते थे जो काफ़ी मूव करते थे। तो इस तरह की घटनाएं कभी भी हो सकती हैं, यदि लोग नहीं करें तो हम उन लोगों को जो वो ऐसे मैनिपुलेशन में यदि करेंगे तो फिर उनके खिलाफ हम लोग सख्त कार्रवाई भी करेंगे।
All right, let me go across to Kush Bora this morning on the indices.
More of the same.
Nifty is passing through the Strait of Hormuz.
If it is, at least something is, right? Ships तो जा नहीं रहे इतने apparently.
नहीं, एक बेचारा apparently जा रहा था, and then there was an attack on that as well.
Yeah.
You know, the tricky part is that what does the end of a ceasefire mean? Does it mean more of the same, or does it mean a resumption of escalation? That's where the lack of clarity continues. Will they keep talking to each other, or will they now go back to what was pre-ceasefire, which was a lot of military warfare and kinetic warfare? In that mood, do you think that the Nifty has enough dum to stand on its own?
You know, very interestingly, I think I heard a statement where Iran said that we will not be talking to Donald Trump and we'll wait out his presidency's, end of the term for his presidency. In one of the statements, if that is the case, who knows how this is going to end? So
no, but then Trump is saying Iran has 300% inflation. I'll wait out the collapse of their economy.
And he said the crude is going down and Strait of Hormuz is open, last night's statement. Okay. So I don't know. I don't know where this is headed. Yeah. No, but see, as far as Nifty goes, I think even before, crude hit 90, which it did yesterday, I think there was some preemptive moves because we've now had 10 sessions of lower high formations on the Nifty. You can take heart from the fact that yes, there was a very smart intraday recovery from those 225 odd levels. That was also kind of nullified by the cash effect. And today we're seeing a 100-point gap down. You know, interestingly, despite the kind of these, this gradual decline, no momentum indicators, no technical indicators are actually at oversold territories, which would say कि नहीं यहाँ से rebound आ सकता है, at least play for that rebound, correct? So I remain a little cautious on this. PCR also fairly neutral, RSI also fairly neutral. The only thing is that support around the 24, 250, 300 zone is being respected broadly. So we might see a bit of an uptick because we've fallen and today's expiry, but like I said, that is more of a hope trade. There isn't really an oversold nature of the market, which suggests कि नहीं यहाँ से rebound आएगा.
Okay, and stocks?
Yeah, despite all of that commentary on cautious side, stocks are on the long side. That's how it's been playing out. At least selectively, stock-specific action has been interesting, to say the least, right? So, Forgings, again, this is a stock that we've discussed, a couple of times, has a tendency of rebounding from the 20-day moving average. Yesterday, you saw a very similar move, not worried about the 5.5% kind of a gain. There's good momentum, good volume action. So, for targets of 646, 666, you could go long or stay long if you had a position, stop loss at 610. KPR Mills, this one also gathering good momentum, 50-day moving average being taken out, 1175, 1215 are your targets, 1095 is where you keep that stop loss. And the third one is more of an update, by the way, GNFC. This was our weekly pick yesterday. in a market like this, went on and hit its first target of 595, closed, with a very healthy, uptick. I think you could continue holding on to this for targets of 625. Now you can bump up your stop losses to 590. So these are the 3 picks.
3 picks, all right. Parag bhai is somebody who displays on an ongoing basis what it takes to be a long-term investor, because even today, this morning, he's waited patiently for about 10 minutes to have the first word. And thank you so much, Parag bhai, for your patience. But let's talk about some of the winners from Q1, because you saw the last dregs of the earnings season pan out yesterday, and you've seen across the board, right? And I think that you also study the broader markets very closely if you don't hold those stocks. So what stocks stood out to you after the earnings season?
So basically, we have discussed about Sundaram Fasters in the past, right? Because I talk too much about large caps, ICICI banks and those kind of names. So today I'll take some small cap names also where I saw the results were excellent. For example, Sundaram Fastener we saw 20% move in the stock price also. LG Equipment is a company which showed fantastic numbers, 23% growth in revenue, 28% growth in EBITDA and PAT. And it is a company with 680 crore net cash, 35% ROCE. And aftermarket, which is driving profits for them, because aftermarket makes more money. And now that is, in India, it is 30% of the business. In US, it is 16%. And that is going to grow as their install base increases. So I would say that this is a company, and this is amazingly, I would say, clean balance sheet. 2,200 crore net worth. Out of that, 680 crore is net cash. So on a 1,500 crore capital deployed, this company made a 612 crore trailing basis EBITDA.
Okay.
So actually, ex cash ROC is higher than 35%.
But it's trading less than 2% away from its 52-week highs.
That's okay. So I think company is doing phenomenally well. Plus now compressors were used in all the industries, right? All our conventional industry like textiles, FMCG, pharma, auto components, steel, cement. But now they have got new segments also, like renewable energy, EV, semiconductors. So I think it's a great futuristic company with excellent fundamentals, high quality promoter and high ROC business doing well. And now as aftermarket business increases, the profitability will further improve. In fact, management on the call said that right now margins are 14.7, they can inch up to 20%.
Interesting. Okay. What else?
Sorry. LG is a table thumping buy.
So I already own the stock.
But people are watching who.
I'll tell
beyond your own portfolio, Parag bhai.
No, the only thing is that today when we are seeing US 10-year at 4.73, US 30-year crossing 5.3, oil at 91. It will be wrong on my side to thumb the table today, because somebody should not just aggressively buy today itself. I'm saying.
Is anything a table thumping buy right now after the entire result season?
I'll tell you, there is, as Alex was saying, this quarter's results have clearly shown who are the winners. Who are the winners in each sector. So you have to just spot them, you have to buy them when there's a big decline. That is the strategy I will follow. So ICICI Bank was the best in banking, Ultratech was best in cement, JSW Steel was best in steel, ports mein Adani Ports nobody can match. So these are the stocks.
We actually have that list of Parag bhai's, picks
winners.
And winners. There you have it. Which were the best in which sector?
Correct. So Nestle, Marico, as I mentioned, then Honasa was best result, one of the best result. Messrs Bectors we discussed, right, at around 193. It is already 255 now. That also reported very good numbers. So consumer 4 names, steel as I said, cement as I said, banking, ICICI Bank I said. In smaller banks, many small banks did well. DCB, Karur Vaishya, Karnataka, many small banks did very well. So I would say that in media, for example, PVR reported excellent numbers in spite of not having any big blockbuster hit. So I would say that there are, across the sectors, you will have in CDMO space, Divi's reported excellent numbers. In pharma, Ipca Labs reported excellent numbers.
So, Parag, we're talking about broader markets as well. Quick one. Now, Nifty 50 itself, if you go to see, we were not anticipating that kind of growth. And I mean, an estimate was around 10-11% overall, right? It's come in at 18% in terms of the profit growth at a 10-quarter high.
Yes.
Correct? Now, then within the benchmarks, within the large cap, There, do you see any thumping the table kind of a buy? Because it has outperformed. Let's
see, we have spoken about Bajaj Auto earlier many times, right? So I'm saying that TVS Motors, Bajaj Auto, M&M, I would say that there are winners in every sector, and those are clear winners. Yesterday, for example, I met 5 companies, large cap companies of India.
Okay.
On the ground, up till now, everything is holding on very well. Asset quality, even one of the large banks told me that now they are going to expand a credit card business also, which was muted for the last year. Because now they are seeing that credit behavior of the people have changed significantly. And now this UPI payments, GST returns, account aggregators, all these are enablers to give credit.
So Parag bhai, that is a point that you've made well, right? And you've highlighted the companies that have done well in Q1. And quite a few of these have actually gained on the back of that as well,
yes.
Right? Now, the question therefore at this point, and I'm going to reiterate what Tamanna is asking, is that if somebody has gone past the earnings season and has not bought some of these stocks,
yes,
then is this the time to go out and buy it?
It is a time, but let the stocks correct.
And so therefore, by how much? If you talk about, for example, a Mrs. Bector's, or you talk about an LG Equipment, LG Equipment because you like the stock so much,
yes.
It's trading at less than 2% away from 52-week highs. At what level, according to you, is it going to look attractive?
I would say that, see, if the crude oil price and US 10-year, all this macro setup remains negative, then you have to stagger your buying. You have to start buy. I'm not saying don't buy today. Buy slowly, gradually, build up your position on every dip.
Okay.
Because till this oil remains above $90, till US 10-year remains above 4.7%,
there's no
you are
guarantee.
not going to get a meaningful
30-year
short-term.
19-year high. The 30-year treasury yield is a 19-year high.
Yeah.
You wanted to come in?
But one thing I'll tell you, this macro setup can change when we are sleeping. When we are sleeping.
As
also.
it did last night.
So that's why you have to stagger your purchase. You cannot exactly time the bottom right now.
Yeah, but if just on the macro setup, and if you're talking about US Iran specifically, I mean, I don't want to claim that I know what is going to happen, but from what we've seen so far, just analyzing the data of the pattern of how the two sides have behaved, it's likely to get worse before it gets better. Because this cannot continue as it is. It's an impasse, right? So something has to change for the whole situation to change. But anyway, you were saying, Kush.
Yeah, actually, when I say that, there isn't anything that, screams oversold in the Indian markets, this is perhaps a cue where we've in the past seen when the 10-year, US 10-year goes from 4.7 to 4.77, we see some kind of a news and then, a reversal, which is positive for the markets, by the way. Last time when the 30-year hit 5.2, now it's at 5.3, right? We saw some kind of news and a reversal. Perhaps that's a cute, but not something that you bet on just because it's at a high, right? So maybe if there is a news and then the markets kind of give you a positive traction, then there could be a rally which could start from here. But like I said, you have to wait for that cue to come in and not preempt that.
Okay, Somit has been standing by to talk about the telecom sector. So, Jio's new 300 rupee Prime membership signals tariff discipline and potential future price hikes. We saw this a few days ago with Airtel, Somit, and we had said then that the others could follow. Is that what we're seeing playing out?
Well, not exactly the similar way, but it's a bit different. Now, what Jio has done here is they have brought back the Prime membership plan, and that is starting at around 300 rupees for 1 year. And what a user gets out of this is that they will be able to lock in the prices or the tariffs irrespective whether they are on prepaid or postpaid plans for the next 1 year. So this means that if a user is at a 299 plan, he will pay 299 for the next 1 year irrespective of whether there is a tariff hike or not. Even if this 299 plan discontinues and the prices are now 349 or 399, the user will continue to pay just 299 for the next 1 year. Apart from that, they will also get a voucher of 300 rupees for Jio Home and Jio PC. There will be priority support and some other benefits as well. And if they are able to get in a family or a friend that's through via reference to Jio Prime membership and Jio as a new Jio user, then they will also get a 300 rupees cashback. Now, what does this mean? Well, if an existing user or a new user is using this 300 rupees membership plan, then it's kind of an indirect tariff hike of 25 rupees per month. And this membership of this plan of bringing back the membership also hints that there could be a potential tariff hike down the line. The timeline of the same is still not known, but at this moment Jio is playing on the fear that there might be a tariff hike going forward, and hence they have brought back this plan, and users might choose to this plan to seal their tariff rates for the next 1 year. Now, what it means for Airtel, one needs to watch out for subscriber churn, given the fact that as of now, neither Vodafone Idea, neither Reliance Jio have shut down their base plan of 299, while Airtel has removed the 299 base plan, and now their base plan stands at around 349 rupees. Now, as per estimates, around 20% of their user base was sitting on this 299 plan, and if any of those users switch to Jio, they will still save around 300 rupees over the next 12 months. Now, this is because Airtel is charging now 50 rupees more than what they used to charge earlier, which translates to around 600 rupees on a yearly basis. And if one switches to Jio and chooses the Jio Prime membership, they will still save 300 rupees over the next 12 months, and that is the reason why one should watch out for Airtel, because 20% of the subscribers sit on this plan, and if there's a subscriber churn, then that could impact the overall financials for Bharti Airtel.
Okay, this is going to be interesting. Parag bhai, do you see a threat for a Bharti Airtel on this? Because there is a potential that, you know, the subscriber churn that could happen, and they could move to a Vodafone or a Jio.
So I would say, Bharti is one of my core holdings,
Exactly,
and it doesn't change my thesis at all. As I keep saying, it is a bond for me, which is a 6% yield bond, and it is going to compound at 10-15%, because at some point you are going to see some tariff hikes in future. Even in the absence of tariff hikes, their ARPU has increased, right? So of course, this might cause a little bit of correction in Bharti Airtel stock, because there was an anticipation after that move that industry will go for tariff hike, and that might get negated due to this. So I would say that there might be some correction, but that doesn't change the overall broad thesis of Bharti.
Okay, want to talk about a note coming in from Bernstein. Sumit Sarkar is standing by. They've turned more constructive on Adani Group stocks. They say the group has emerged stronger after navigating multiple overhangs with leverage reduced and share pledges largely eliminated. What is Bernstein saying, Sumit?
Well, yes, Bernstein has come out with this quite a positive note on the Adani Group. They are saying that the group has emerged stronger after the short seller and the US SEC and Department of Justice overhang. They're also saying that the share pledged have been largely eliminated, and the leverage has reduced considerably for the group overall. However, there were 3 recent events that have slowed the investor enthusiasm. However, this will change going forward is what the Bernstein is saying. Now, what were those 3 events? Firstly, when it comes to Adani Port, there was a potential news flow which suggested that Adani Port might look to acquire United Kingdom's AB ports, which had raised investor concerns. But Bernstein now believes that the current correction in the share prices clearly shows that the concerns are overdone, and this might be an opportunity to accumulate Adani ports as per Bernstein. Now, they have maintained the outperform rating and have hiked the target price to 1,973 for Adani ports. For Adani Green, the target price is at 980. They are saying that the 4 to 5 gigawatt renewable capacity and BS move to Adani Energy Solution was done to secure funding and to improve the revenue visibility, and this was seen as a concern for short term by the street. They're also saying that the management has guided for an internal rate of return of close to 16.5 to 18% on these projects. They're also saying that the fundraise related overhang is also done because they hope that the QIP phase is now largely behind the group. And overall, if you look at Bernstein report, they're quite positive on Adani Power. They have maintained their overweight rating with target price of 220, and for Ambuja Cement, they have maintained the overweight rating with a target price of 486.
Okay, standard disclaimers there. You're watching this report on NDTV Profit. That's part of the NDTV Group, and NDTV is a subsidiary of AMG Media Networks Limited, which is an Adani Group company. We'll take a very short break. I want to pull up the implied open before we get into that quick break. We're going to have a bit of a tough morning, and all things considered, you shouldn't be surprised. 110 points down on the Nifty. Crude is at 91. The 10-year has spiked. The 30-year US Treasury yield is at a 19-year high. That's usually not great for equities. Does that mean that there are no ideas out there? Not at all. We have tons of them. We're coming back with that and more after this break.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If It succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal.
You're watching India Market Open. We're bringing it to you from the NDTV Profit Suzlon studios this morning. Kush Bora, Parag Thakkar with us in the studios. We have a bunch of other reports that we're flagging off for you this morning, including what's looking interesting and what isn't. We had a conversation a short while ago, Parag Bhai, about Colgate-Palmolive, and some interesting observations coming in. Brokerage notes are also looking positive. The fact is that monsoon, which was a big fear, say about 6 weeks ago, that fear seems to have eased.
Yeah. And plus Colgate stock price is also corrected significantly. So I know that Colgate is not a high growth stock at all, right? It is a fully penetrated category in urban India at least. So the premiumization is the only way to grow. So I would say that it doesn't deserve a very high PE, but it is now corrected significantly. From
if anything, there are other offerings that are countering or eating into some of its market share.
Yeah, but this quarter they have not lost market share.
They
Yeah,
haven't.
it was a good
It was a good
growth.
quarter.
Good quarter, yeah, decent quarter.
Most of FMCG had a good quarter.
Absolutely. So I think the stock price has corrected significantly. Yesterday, I think they had an analyst meet, and where again premiumization was given, plus their focus on volume growth also was highlighted. I think, and plus, when you have this kind of environment, when macro setup is hostile, these are some of the stocks which gives you protection. So I would imagine that from here on it should do well.
So you're not concerned about, for example, the update on palm oil prices going up, the fact that edible oil prices are going up, the fact that now with crude oil at $91, your container
packaging cost will go up.
Yeah.
So for Colgate only packaging cost goes up.
I'm saying for the entire pack.
I'm saying for the entire pack, yes. Of course, Godrej Consumer and HUL are large users of palm oil. Britannia is a large user of palm oil, right? But for Colgate and Marico kind of companies, it is only the packaging cost which goes up. Because in this case, the raw material price doesn't necessarily shoot up in line with the crude oil prices.
Okay. I'm going to ask you about Paytm and what you make of this whole confusion, and that large block has actually been executed even as we speak, and we'll see how that reflects in the pre-open session as well on Paytm. But before I come to Parag Bhai on that, let me give him some time to mull it over and go across to Varsha. She's joining in with more stocks that should be on your radar today. Varsha.
Well, yes, few stocks which should be on your radar. Let me start with South Indian Bank, wherein they're going to open 5 new branches in Kerala. You have DCX system, which will be in focus on the back of order win of around 16 crore. The order is for cable and wire harness assemblies, and their arm has also received export order worth rupees 3 odd crore for printed circuit board assemblies. You have Lloyd's Engineering Works, wherein the arm has partnered with one of the companies in Italy. Now this is for defense product development, technology transfer and license manufacturing in India. You have Sigma Advanced System. They have partnered with Indrajal Autonomous Defense System. This is to secure 155 crore anti-drone petrol vehicle order. This is from Home Ministry. Will also include a 145 crore border security order and 10 crore urban police security. So a strong order flow when it comes to Sigma Advanced System. You have Manipal Health Enterprises, wherein they have signed an agreement to acquire Kinder Women's Hospitality and Fertility Center. This is for 130 odd crore, and the transaction is expected to close within 90 days. So these are a couple of stocks which should be on your radar as of opening.
Okay, thank you for that, Varsha. Parag, I want to come to you on Paytm, and this is a 2023 arrangement. At that point, there was a huge hue and cry. And tell me if I'm explaining it correctly, and then please add. Problem was that Paytm, Chinese company hai, wo issue ho raha tha. They were afraid that we'll run afoul regulators, public perception, XYZ. So this arrangement was created. The reverse of that arrangement is happening now. It's unwinding. So does that mean technically Vijay Shekhar Sharma is selling a stake or he is not?
No, so basically I am also not, what you have said that I have read. So I'll not comment too much on it. Ultimately his stake is not reducing. That's what, right? And
the reason I'm asking you is because you set a lot of store by promoter buying and promoter stake sale.
So whatever I have also read is it does not actually imply promoter selling. So that is okay. Plus, I would say that there are many buyers in the market. People are very bullish on this stock because of the operating metrics and all. Although at 1 lakh crore market cap with 203 crore EBITDA last quarter, I am not a buyer, but I would say that people are projecting this 1,000 crore EBITDA to move to 2,000 and then 3,000 crores also. Because
and without a dramatic increase in the cost
MDR, correct. So it's a high growth stock and it has got its own buyers.
So you're not worried about MDR and all of that as far as Paytm is concerned?
What I'm trying to say is that, see, I cannot pay 1 lakh crore market cap for a 1,000 crore EBITDA company. But there are many people in the market who are looking at the CAGR growth, which is more than 50% over here, and so they like the stock, and they have their own reasons to like the stock.
Okay, Ruchit Jain is joining in, but even as he is, the first rates on pre-open are beginning to tick in on what could be a pretty rough Tuesday. Let's look at some of those rates on pre-open. There you have them on your screen, and let's wait for them to settle because you're seeing a very different picture on the Nifty and on the Sensex. Let's look at top gainers on the broader markets as well before we get to Ruchit Jain. If you can pull that up on the NSE 500, and you'll see some interesting names. I want to see what Paytm is also doing. All right, so I'm seeing RITES, LG Equipment actually 16% down this morning, but all of this will settle. Paytm about 0.63% now. Let's wait for those rates to settle. Ruchit Jain, Vice President, Equity Technical Research, Wealth Management at Motilal Oswal Financial Services, joining in. Ruchit, very good morning to you. Let's get your Nifty and Bank Nifty view first.
Yeah, hi, very good morning. Well, overall, we seem to be in a consolidation phase as far as indices are concerned. We have seen a gradual pullback in the last few trading sessions, and what has been noted that since last 10 trading sessions, markets on Nifty is not able to surpass its previous day's high. So this is what a pullback move usually looks like. The 50-day support is coming around 24,190. So that's where the major support for the Nifty is placed. So from a very near-term perspective, we think that markets would continue to see some consolidation. Even if you look at the overall market bet for the broader markets, be it for the mid caps, be it for the small cap, it's almost 1:1, marginally in favor of no declines or in advances. But not much. We are not looking at much trended moves for now. So I think markets would continue to consolidate with more of a stock-specific activities. On the lower side, if the index comes near 24,200, 250 zone, that's where the risk-reward ratio would become favorable to take some contra long. So we would advise that in case if we can dip around that 24,250, maybe not today or tomorrow, next 1 or 2 trading sessions, then take that as an opportunity to buy around the 24,250 to 200 zone, where the stop losses would be smaller, and then we can expect a good pullback again towards 24,500, 550 levels.
Okay, Richard, good morning. Hiral here. So what would your top picks be? Because I mean, even in spite of pre-open indicating a 0.3% up move right now, there is a possibility of consolidation. I think a day where you will see stock-specific action once again. What would your top picks be?
Yes, very good morning, Hiral. So a couple of stocks that we are recommending to go long, and one theory that works in such consolidation market is when the index trend is sideways, you should always find out for stocks which are moving higher, where the stock-specific trend is not sideways. 2 such names, which we like. One is BHEL on the long side. We have seen a good consolidation post the results in BHEL after forming a good support base. If you look at last 2-3 trading sessions, the stock is gradually doing good and the volumes are also increasing. So BHEL is one stock where short-term traders can look to buy at current levels with stop loss below 427 for potential up move towards 450. And KEI Industries within this wire and cable segment has been doing quite good. It has surpassed its previous swing highs, good volumes, and as I said that the parameter of a relative outperformance compared to the markets, that's where the stock is looking quite bullish. So KEI Industries, one can go long around current market price with stop loss below 5,700 for potential targets around 6130 on the higher side.
Yeah, okay, fair point. Let's talk a little bit about the stocks that are buzzing in trade today, and some of them have actually settled. You have Jyoti CNC that's doing particularly well, 3.5% higher. Dr. Lal Path is okay, it's up about 3% or so. Concord Biotech, Sun Pharmaceutical bouncing back a little bit from yesterday's drop. It was one of the worst performers on the benchmark Nifty 50 yesterday, and it might be gaining back a little bit of ground. On the other end, the losing end, you don't have too many big losers, but MGL looks like it's going to have a rocky start to the day, down about 2% or so. NMDC Steel continues to lose ground, and this is something that you should keep on your radar. It's down about 1.8% after yesterday's, I think, 5 or 6% drop, if I'm not mistaken. Aavas Financier is also down about 1.8%. Kush, what's the view on NMDC Steel?
Consolidating, negative bias, given up the 200-day moving average. I wouldn't really go long because yesterday also, opposed to what the rest of the market is doing, where the volumes have thinned, this one actually went down on relatively high volumes, supported around 40.5. So if anyone's got it, you can hold it at those levels, but no triggers per se to actually create fresh long positions at these levels.
Okay. I want to pull up some of the beneficiaries of the new scheme that the MeitY Secretary has announced. This is the government's electronic components manufacturing scheme, right? Look at Jyoti CNC. It's got about 1,000 crores under that scheme. Basically, a proposal has been greenlit. You're looking at Centrum there. Sirma SGS is also doing well this morning. Let's look at Micromax Precision Molding among the other ones. Some of them listed, some of them not really listed. But Sirma SGS and Jyoti CNC looking interesting over there. Just want to get a quick view from you, Parag Bhai, not on the specific scheme and its impact necessarily, but as everything else dulls down, can we expect more government investments to push certain narratives and sectors and ideas more than
absolutely.
anything else?
I think EV is one thing which I am very clear. That after this West Asia war conflict and the energy shortages which we saw in April, I think everybody is awakened to the fact that we need EV ecosystem, and that has to be developed in India. So you have to encourage it by doing whatever it takes. So that is one thing is very clear. Electronics, they have done it earlier also. And
so it's more of the same.
It's more of the same, and you have to keep doing it, right? Otherwise, your electronic import
what are your EV plays? I mean, is it the OEMs? Is it the ancillaries? Where are the EV plays?
So Ather, TVS, Bajaj Auto, M&M in the OEM space, and there are so many auto component companies. Like in my portfolio, we had ASK Auto, where we booked some profit, but there are many companies. Even this latest IPO, Dhoot Transmission. He's also competed to ASK Auto, and there also whatever components they make in an EV, the content per vehicle goes up by 50%. So I would say that these are some of the, for example, Minda Corp is one. Of course, the stock price has rallied a lot, but I would say that many other auto component companies who benefit from this transition towards EV, because content per vehicle goes up, like Samvardhana Motherson, for example, or Motherson Wiring. Because wiring harness content per vehicle increases by 50% in EV.
Got it. You know what's interesting right now when I'm seeing the screens is, in terms of the top gainers, the biggest gainer is seeing gains of around 2%. And likewise on the losing side, the maximum moves is a 2 to 3% kind of a downtake. So there is no major stock specific move in the markets today as well. And I think in this kind of a market, it'll be interesting to see if Kush is able to find any calls, and that's what I'm waiting for.
You know what I'm surprised about? Neither you nor Alex have asked me कि market नीचे जा रहा है, why don't you have a short call?
Because उतना नीचे भी नहीं जा रहा है ना.
That's the point. और उतना ferocity के साथ भी नहीं जा रहा है.
So now, Coach, you're not going to get such easy questions.
The predictable ones, right?
Yeah. Cricketer, na, you should be used to facing swinging deliveries.
Yeah, swinging deliveries, bouncers, googlies, all of them under practice. No, but see, So, like I said, GNFC yesterday, the weekly pick that we spoke of, in a market like this, in a scenario like this, where the market breadth is weak and market's not doing too well, the stock actually gained, 5%, more than 5%, and hit that first target. So there is very clear stock-specific action, stock-specific outperformance. And on the downside, there isn't enough momentum to go out and give short calls. And whatever are actually on the short side are very close to oversold territories. Wahan se short nahi banta. Also, I'm sure the viewers would have observed, I also said it out loud, I am rehashing a few calls that you've heard in the past. That's because jahan momentum hai, ऐसे market में उन्हीं stocks के साथ रहना is more advisable rather than searching for new ideas every time and then saying कि अच्छा ये वाला चल सकता है. So stay with stocks which already have strength. Stay very, very stock specific, and I will reiterate. Supports and stop losses. Please respect those in a market like this.
All right. It's a little late, but we've got the big brokerage call of the day lined up for you. The AC sector is in focus as HSBC remains positive on the segment while maintaining a buy call on Voltas. It was a stock in focus yesterday after the earnings and Blue Star as well, by the way. We've got Sharad joining in with more details here. Sharad, this was a space that had quite a bit of pain earlier in the year with inventories building up. What is the brokerage saying?
Alex, you're right, and of course there's one more important point I would like to mention, the uneven monsoon which has come in, and that is why at the dealer level there is a good strength coming in. HSBC is also reflecting the same. Blue Star, there's an upgrade to buy from hold and target prices at 1780 for Voltas. It's a maintained buy. Its first quarter has been a really strong quarter for the Indian cooling industry. The room AC, RAC segment grew 25% in this first quarter. Estimated volume growth is also between 20 to 22%. Voltas has fared better than Blue Star. And looking at the summer sales, if you take the period from January to June, Blue Star had stable margins despite the slow growth from a high base. However, a little bit of estimates have been cut on a lower margin guidance. But yes, bullishness definitely coming in for the AC stocks.
Okay. Quite a contrast from previous monsoons for the AC stocks. But Ruchit, what are you spotting at the end of the pre-open session? Is it AC stocks? Is it your ECMS players? What are you finding interesting today? And just the fact that the Nifty perhaps is not looking as dull as was expected.
Yeah, so I think more of a range-bound activity would be there today also. Among the stocks which are in news, which you all were just discussing, Jyoti CNC is one which I have also kept on my watch list. So primarily, if I look at a bit longer term charts, on the monthly charts, the stock had recently formed a bullish engulfing pattern after a significant corrective phase. And now it is being showing a gradual outperformance or moving higher. 875 was the previous swing high resistance. It's opening around 870 levels. So post opening, if it manages to surpass that 875, I think this is one stock which could do well in the intraday as well.
That's Jyoti CNC, an intraday pick that you could be watching out for. How are you looking at ONGC and Oil India? And that's because of the way crude has been panning out. You're above $91 per barrel mark. On the charts, is there any strategy today, Ruchit?
So just from a trading perspective, I think one can take some long positions in stocks like Oil India. But a lot of dependency on what oil is doing on a day-to-day basis. I think that's where the direct correlation is playing out. So today the oil is up, then we are watching this for a positive bias, and tomorrow or next 2-3 days, if any news flows comes and oil price goes down, then the stocks would definitely see a correction as well. So in such cases, I won't advise taking long from a positional perspective, but look at it as a day-to-day or just 1 or 2 days perspective. Then Oil India can do rally towards 495 kind of level, but would be more of a trading pick only.
Okay, that's a fair point. Ruchit, I want you to expand that list and talk about the oil sensitives on the downside as well, and to say, is there any potential to trade some of these? One. Two, I want you to talk about the metal pack as well, because there's a cohort of stocks, even as a subset of the metal pack, that has been doing particularly well, or certainly has fundamental reasons for doing well, which is the aluminium pack, right? Or the base metal pack in general. What do you say about these?
Yeah, so coming on to first the oil and gas industry, where things like the stocks like OMCs is there, or even aviation like Indigo is there. So we are not witnessing any kind of momentum-based trade over there. So we think that along with how the markets are consolidating, such consolidation could continue over there. We won't see any significant price-wise down move just because of the crude oil price up move. But yes, the upside should be limited as well over there. So not much trade setups. But yes, coming to the metals, then definitely the momentum has been there on the stronger side, in such selective metal names. stocks like Hind Copper, if you look at after the recent correction, last 7-8 trading sessions, the volumes have increased significantly. It has formed a good support base around its 200-day EMA. JSW Steel, from a positional perspective, looks a good outperformer in case the metal space as a whole does well. Because during corrective phases, we are not witnessing any kind of volume-based selling over there. So Hind Copper is one stock which we like relatively from a trading perspective. Around current market price, one can expect levels around 600 to 610.
Okay, that's Hind Copper. Let's just pull up a Indo MIM as well and see what that counter is doing in trade. It's interesting. I think this is a recent listing, if I'm not mistaken. I'm just going to check that out because I don't think so any of the technical analysts will have a call. But yeah, just listed in August, but good moves coming in on a Indo MIM in trade. Paragba, any view on, because this was a recent
new listing, so I have not looked at it. Yeah.
Okay. Apart from this, in terms of other names, Piramal Pharma is down. DCM Shriram, 2.5% up move coming in on that one. Honeywell Automation is also seeing some good moves in today's session on the charts, Kush.
So Piramal Pharma is fairly, decent, I would say. Had a good run, 2-3 days of selling pressure. Right now it's taking support of the 20-day moving average. I won't be surprised if it slips to about 194, 195 levels also. But that's the support zone. Primary trend is still intact. So I remain constructive, but wait for the fall to settle and then go out and buy.
What levels?
Around 195, 194.
Okay. All right. You are going into 20 seconds. For the opening bell, and this Tuesday morning, I think if you don't have a big down tick on the open, we should feel frankly relieved about it because you have crude at 91 this morning. Your closing rates in the pre-open session showed a slightly depressed Nifty, but nothing to worry about. How are we opening up is the question. Will you see crude sensitives react? My guess is perhaps yes, because that is where most of the pain lies. Look at the advanced decline. It's actually more advances than declines right now, at least on first tick of the Nifty. 24,233 is what we're seeing, and actually not looking half bad. Let's pull up the Nifty heat map if we can and look at what's moving and actually giving some strength to the Nifty because you have some movers there. ONGC expectedly 91 on crude is positive for ONGC. Bajaj Auto doing okay. Grasim, M&M, SBI as well. You have an even Stevens on the reds and the greens on the screen. Your India VIX is actually in the negative, which means there's not too much stress about what's going on in the Strait of Hormuz right now. What's not working? Indigo expected. A key component now has gotten more expensive in terms of crude prices. Max Health has been having a tough time in any case, and Max Health also in focus. Infosys about 1% down, so is Asian Paints, Jio Financials and Bharti Airtel add to the bottom of the list. I want to pull up Nifty contributors for a second if we can. And there you're seeing State Bank of India is leading to some strength, or I would say cushioning the fall of the Nifty that you would have expected. You're just about 42 points down. Remember, your implied open was showing you over 100-point cut on the Nifty. That's not happening. M&M, Axis Bank are among those which are lending some support. On the losing side, once again, Infosys, RIL, Bharti Airtel and ICICI Bank. I would say it's not a bad morning, Alex, and in fact, maybe you will spot not some great winners, but at least those moving in the right direction.
Yeah, I wonder what the luck is going to be. But before we do, let's take a look at the broader markets and see where they're at. You have the benchmark Nifty 50 that's trading with cuts of about 0.2%. So too, not too big of a cut for the mid-cap index. Pull up the small-cap index as well and see where it's at. It's actually in the green, up about 0.25%. And that is reflected in the advanced decline ratio that you can see at the bottom of the screen. More advances than declines at this point. Pull up the sectoral heat map for the market as a whole, and there is a fair bit of green on the screen led by auto, but pay attention to the gains. Just about 0.4% for the top gaining index, up about 0.4%. PSU banks here making a bit of a comeback after a few days in the red. The small cap index is, you've already seen, up about 0.2%. Oil and gas is up about 0.2%, and so too is the Nifty CPSE. At the bottom end of the spectrum, you have the Nifty IT that continues to lose ground. Yesterday, it ended with cuts of 1.75% as a cohort. Today, it's down over 1%. Where does that stop, and will you have opportunities at the bottom again? Where does that bottom hit? We'll ask the technical analysts in just a bit. Realty down about 0.4%. Infra about 1/3% or so. Let's jump straight into stocks, and I must confess that they're few and far between today. It was so easy to pick stocks just yesterday when you had earnings to talk about as well. Jyoti CNC, Syrma SGS, Centum Electronics. This is on the back of the 5th tranche of the ECMS scheme announced by the MeitY. And we spoke about this at the start today. The total amount of that scheme now coming up to as much as 69,000 crore rupees. So it is a boost for these stocks. They're up and about in a dull trading day. ONGC, Oil India, let's take a look at particularly Oil India. You already saw ONGC crude rally continue. It's above $90 to the barrel for Brent crude. It's up in the green. Nelco has signed a strategic partnership with a company called LVO. Let's see where it's at. It's, wow, down about 3.5%, nearly 4%. We'll have to talk about whether this is something that the street is looking at as negative. SPR Auto Technologies and NetWeb Technologies have both launched QIPs. SPR is up about 2.5%, pull NetWeb up. It's a stock that has gained, as I pointed out before the start of trade today, as much as 6-7% over the course of the last 5 or 6 trading sessions. And so this is really not too much of a surprise. IIFL Finance, Sedimac Mechatronics, they've seen a ratings upgrade. Both stocks are up and about. You have Sigma Advanced Systems, 155 crore anti-drone patrol vehicle order. This is actually the biggest gainer in trade today so far. Keep an eye on this one. Oberoi Realty has a positive development in regard to one of their key projects, down about 0.75%. Leap India, government of Singapore has bought a large chunk of shares. Okay, so the stock is up and about. Paytm, a major block deal took place before the start of trade today. No change at all. It's just about flat. Remember, we spoke about this. This does not constitute promoter selling, and so the street is sanguine about it. Paint, aviation, OMCs, all on the downside with regard to crude oil prices going up. They're all in the red at this moment. Interglobe Aviation as well, down about 1.2%. This is par for the course. And finally, Seagull India, a 331 crore tender cancellation. This is the rest of the pack, oil marketing companies as well. Seagull India down about 2.5% on account of a cancellation of a tender. That was about 330 crore rupees. Hiral, I'm wondering if there's anything more from the broader markets that I've missed?
Nothing in terms of news to that extent, but what's interesting is a Uflex, Alex. That stock is continuing the upward journey that we saw in terms of yesterday's session. Guro is another one which is seeing some bit of pressure today. Let's pull up that one on the screens as well. That stock is down 2.5%. Cupid is seeing some bit of buzz today, as well as Ethos. Ethos, interestingly, is up almost 7 to 8% in trade. But apart from this, I don't think so there is any other name. Aegis Logistics is also picking up 3.5% is what you're looking at in terms of gains. Ahluwalia Construction is down around 6%. SJ is down a little over 4%. Colgate Palmolive is now actually down 2.5%. And this is probably taking commentary from the analyst day takeaways as well. And the Angel one is also down. So I think probably your brokers are taking some bit of a downtick in today's session. And this could be on the back of the prop trading volumes, which are showing you a downtick, and we will get you more details on that one. But Kush, the way markets have opened right now, if you have to look at Nifty 50 as well, I mean, very close to be breaking that 24,200 mark as well, and there is a potential right now. If 24,200 gets broken, what is that next level you should be looking at, and any specific strategy that you're seeing in terms of opening?
So I'll come to Nifty in just a second, and an interesting observation at that. But while we're marking stocks, Forgings and GNFC, both of them strong opening, steady gains, and a follow through of what happened yesterday on both of these names. If you have positions, continue to hold, keep your trailing stop losses at your buying price, on both of these, by the way. So good moves on these. Now, here's the point on Nifty. If you see Nifty futures yesterday, the last tick at 315 was 24,413, right? If you see the Nifty futures now, 24,275, correct? देखने में 50 point लग रहा है, but if anyone went short at around 3,315 yesterday, they'd be making about 100 and 150 points on the Nifty, right? Perhaps that is one of the reasons you are not seeing the kind of fall that the GIFT Nifty was suggesting, because whoever's gone short, if overnight you're making 150 points on the Nifty, you might as well come in and cover shorts, right? So that is one thing that is playing out. I wouldn't be surprised to see it slip closer to 24,200 from here on, not too far, by the way, on the spot, 24,230 is where we are. But the other interesting point is that the 24,200 put has seen massive additions in the first 7 minutes of opening. So perhaps the market is expecting कि आज शायद 24,200 respect हो सकता है. So obviously I wouldn't go short on this. If I had, I would go out and cover my shorts, like is actually apparent, in the open right now.
Okay, Ruchit, what are you spotting after the opening rates and, in the first tick? There are some interesting ones actually. RR Kabul, look at Schneider Electric, one of the big losers yesterday, seeing a bit of recovery. Any of these appealing to you?
I think wire and cable segment as a whole can see a good outperformance going ahead. So RR Cable is looking good. KEI Industries, which we discussed at the start of the show, that is also looking good. So I think this segment can do well. Apart from this, from the opening rates, I can see that defense as a theme is showing a good momentum. Look at stocks like HAL, which has recently given a good breakout on the weekly charts. Even Paras Defense, where the stock has again surpassed its previous swing high resistances. A slow and gradual move have been seen in the recent past. So I think this defense as a space can relatively do well in such kind of consolidation phases.
Okay. By the way, the Bank Nifty also just a tad bit lower at 0.1%, and we were talking about how the PSU banking pack was finally showing signs of a little bit of a recovery. Pull up that index. It has slipped since then, and it's now trading with cuts of about 1/3%. It may just be the regular culprits in that. I want to see where State Bank of India is. But Kush, do you have a view on the Bank Nifty at this moment?
Surprisingly, I missed talking about it. I have a very positive view on Bank Nifty, and Parag Bhai will be smiling, next to me. But because of whatever's happening in the macro and the crude being where it is and all of those factors playing out, right, Bank Nifty is not doing much right now. But look at HDFC Bank, look at ICICI Bank, look at SBI, and from a medium-term perspective, 3 to 6 months out, right, most of these stocks are either very close to their support zones or their breakout levels, right? Any steady, news flow or any positive news flow, and you will see a big move on Bank Nifty. The 57,500 level that we've been speaking about, right, has a strong support zone because of the 20 and the 200-day moving average convergence. Now the 50 days also converging around that level, which means technically this is becoming a very important zone. If we break below 56,900, 56,800, then this trend, from a near-term perspective could get dampened. But otherwise, I think Bank Nifty right now is a buy on declines kind of candidate. So I'm very constructive. I'm just looking for some sort of an uptick in some of these large caps. So, the Bank Nifty also could get going, but constructive on Bank Nifty.
Just want to quickly mark Aegis Logistics, one of the top gainers this morning. Here's what's happening. A report in the Economic Times saying that they're in advanced discussions to acquire TriStar for $1.5 billion. They go on to say this consolidation could be one of the industry's largest efforts, and Aegis is seeking acquisition financing from lenders for the deal. So it's an acquisition chatter which is actually coming through. Not too many details on what valuations, what they're paying, etc. But I suppose that will follow. Would be interesting to find out from Aegis Logistics what they're doing. Fundamentally, is this a company that you are tracking, Parag Bhai?
No, I don't track it too much. But recent numbers of these companies have been very good. And some part of their business can be an annuity business because it is related to terminal and so oil handling and all. Based on the current numbers, I would say that currently the market cap is around 44,000 crore, and if the acquisition amount is correct, it is 15,000 crore. So it will be a big acquisition for this company. And currently around at current rate, they can make EBITDA of around 2,500 crore to 3,000 crores. So it will be they'll have to take large debt. So net debt to EBITDA will expand significantly in my view.
Okay, thank you so much, Parag Bhai. Thank you so much, Kush, Bora and Ruchit for joining us today and taking us through this leg of the show. But we're joined now, and I'm quite interested and excited for this conversation, by JP Morgan India's Rajiv Batra. So the view from JP Morgan remains broadly constructive, with domestic demand helping offset external headwinds. Power, capex, defense and auto stand out, while financials and industrials remain their top pick. IT is the key underweight. Rajiv Batra, head of Asia and co-head of Global Emerging Markets Equity Strategy at JP Morgan, joins in with more insights. Rajiv, a very good morning to you. It seems like for the Indian markets, you can do everything right, but the results are not showing. If this was a student, they would be quite frustrated because they're putting in the hard work, getting all the marks, or at least the unit tests are working, but final exam mein result nahi aa raha hai. The quarterly numbers are good, the macro and micro indicators are good. What else needs to happen?
Good morning, Tamanna. Thanks for having me back on the show. You gave a right analogy. That student is trying its level best, trying to get the grades and stuff. But we forget when we enter into the postgrads and the B school, it's all about the relative grading. And that's where India is lying at this current juncture, where it's all about the relative performance overall and relative earning growth. Yes, definitely India large cap or MSCI India has delivered 19% revenue growth, 16% bottom line growth. But it's in the era where S&P 500 has driven 33% earning growth, and MSCI EM benchmark has given you 91% earning growth. So in that sense, even absolute term, we are giving what all market want, but in a relative term, it is falling short what the neighboring countries are offering us. The good part is, if we keep on building on this momentum, like what we have learned from small cap space, mid cap space, which have been delivering 20% plus kind of a growth for the last 7 quarters, and now emerging as a huge outperformer. If the large caps keeps on doing so in consistent manner, then the relative outperformance one fine day will also come for India.
One fine day. Okay. So we have to wait for, I'm sorry if I'm stretching the analogy, we have to wait for everyone in the class to perform worse than us. And
either they perform,
or for the invigilators to feel that we have potential in the future.
Either they perform worse, or we keep on performing and keep on bettering our performance compared to the previous quarters over there. Either of the situation. Right now, like last 2 months, we got the benefit because others were not doing well, and hence 2 consecutive months India outperformed the regional benchmarks. But this particular month itself, it's not just because of others not performing, others are also making a comeback, but India's story got supported by fundamentals where current account pressures, inflation pressures were all subsiding, and to put cherry on top, a double-digit growth on the top line made a comeback.
Okay, Rajiv, good morning. Hiral here. So, if you're talking about a comeback in terms of India, what's preventing you from turning more aggressive when you talk about your base case Nifty target, because that is still at 27,000?
To become more positive, or to shift from our base case 27 to bull case 30,000, number one ingredient is you need the broadening of growth to other sectors which have just started in this quarter on a consistent manner, at least for next 2 to 3 quarters more. That's where the earnings momentum will start building up in India, particularly the large cap. Second, and the most prominent one, where the pressure keep on coming, global oil prices and inflation needs to cool down. So that remove the worry or threat of policy tightening or a higher policy rate coming on us will get subsided fully. And last but not the least, FPI outflows needs to reverse. Here I'm not calling for we want a huge amount of inflow. By reverse means there should be pin drop silence. No outflows, no inflows, but nothing happening. Right now we are fighting with 2 kind of outflows, one from FPI and the second one where there are capital issuances going on and they are taking liquidity out from what domestics are doing through buying.
Rajiv, very interesting ingredients that you've given to actually move from the base to the bull case as well. But if, let's hypothetically understand that earnings may continue to grow in double digit in calendar year 26, in calendar year 27 as well, do you think valuations could also be a limiting factor for the further upside to come in? Or do you think valuations probably will be out of the picture at that point in time?
So right now, the base case just purely takes into account 11% earning growth for this year and 13% earning growth for next year. No re-rating into account overall. Re-rating in this environment will be a stretch where we are seeing global bond markets is becoming super volatile. We just saw US 30-year yield touching almost a 2007 high kind of a mark, except China. Across the big global countries, in DM countries, bond yields are rising. So that's not a good news from the valuation sense overall. Then the dollar liquidity tightening because of constant worry of hike comings in different G3 countries is a constant pressure point for the valuation. Hence, it's better not to rely too much on a valuation re-rating and continue to stick towards earning. And if earnings maintain that particular path, by default, in matter of not 12 but 18 to 24 months, people may start giving us a valuation premium, which is missing at the current juncture. It has declined from 110% relative premium to EM to now 60-65%. To command that 110% again, we need to constantly give high teens earning growth for the large cap space.
Rajiv, I'm wondering, with the recently concluded Q1 numbers showing what they have, why are you still not as constructive on IT services? Not that the numbers were great, but that sense of dread on AI is beginning to ease. Would that cause a re-rating or a relook at any point at the IT sector?
So Tamanna, for that sector needs to make a comeback. We need growth, potential growth number to move from a current cohort of 4.5% at least to a high single digit number, 8.5 or even maybe 9%, which looks like a stretch. The current valuation which we are trading in post the recent rebound only justify this 4.5 or max 5% of an earning growth. Now to go a higher multiple from here, from where the decline happened, growth needs to move. If growth is not a certainty yet, valuation rebound will be question mark, and markets or IT sector movement will be much more in line with what action will happen in the global software space. As an example, we saw for the last 2-3 days, global software sector stocks are under pressure, and hence we are seeing again Nifty IT taking a hit overall. So valuation should not be an argument to look into the Indian IT space. It is much more on earnings rebound and more probably the higher earnings certainty, whether you can get that 8%, 9% threshold of earning growth for next 3 to 5 years.
Which to your mind are the clear winners of Q1, notwithstanding base effect, etc., which are setting to benefit once macro factors undergo a change?
Look, the clear winners are number one, power demand hitting 271 gigawatts in mid-May was made it that sector is a clear winner. Beyond that, the capex which is going on the grid side, on other power equipment side, defense industry. Then on the consumption side, it was very heartening to watch the volume growth that has come in consumer staple space, in the auto space, and also the export scaling that started happen overall. Now, if the macro headwind fully subsides, then people will start giving better valuation even to financial sector, which is seeing a very strong, robust credit growth, but they are not getting the deserved valuation, which ideally should have happened by now. And that's where the Nifty banks or MSCI India financials are struggling. So financials will be the one particular space to watch. But beyond that, I will say one needs to keep a barbell at this occasion in terms of an allocation, where on one side you could be on a quality growth, which is your financials, healthcare, and in financial healthcare and consumer discretionary space. But on the same point of time, where there's a very strong earnings momentum, you need to be on industrials and materials.
Okay, industrials and materials, Rajiv, how are you looking at consumption? Because if you see in terms of this quarter, a lot of outliers where you've seen, that growth coming in there. Now the question is FMCG, question is consumer staples. If you have to look at both of this, take into consideration what El Nino potentially could do, because there is murmur about El Nino and the impact, but no one's really talking about it right now. Would you say with valuations where they are, this could be an opportunity to nibble in?
The El Nino is now becoming a very well-known risk. The new risk in town will be what happens to the policy rates overall. If the way global bond market is moving and the volatility is rising overall, we don't know at which level the US 30-year, 10-year or Japanese bond 30 or 10-year will settle. But if that brings the argument to defend your bond market, to defend your currencies, you need to do the rate hike, then that becomes a new headwind beyond El Nino to the consumption space in India. So that's worth watching over there. But it's not all bad news only. At same point of time, the good news will be the 8th pay commission. Again, that gained a lot of traction start of this year, but suddenly for the last 6 months, nobody is like talking or even taking that into account. So taking all these factors into account, valuations again will be a constraint to command much more higher premium from here, but it will be the earnings direction led by volumes that will decide the course. So I will not be looking at the value growth. I will be tracking how the volumes are panning out each and every month to give us a clear direction in the consumption space.
And Rajiv, how are you looking at the financial side of it, in terms of BFSI? Because we've been speaking about what's happening on the FCNRB. The window is getting closed earlier, so there could be some positive moves in terms of the collection. But do you think there is a potential of any negative impact on the banks going ahead? Or again, between PSUs and private, what would you look at?
So in terms of banking sector, the only big negative which I'm worried about at this juncture is if yields keeps on going higher, anybody who has a higher skew on the treasury earning side, that could be an issue. As an example, if rate hike cycle come, NIM expansions are there in place, then it will offset any kind of a treasury losses due to the higher yield. But in case if yields are keep on moving higher and any particular banks have much more higher exposure to the treasury gains, then it becomes an issue overall. So that will be the only worrying factor at this juncture. Beyond the continuous selling has been still ongoing in the financial space from the foreign investors. So whenever they want to express a bearish view on India or they want to lighten up the position on India, they sell what they own. Their huge ownership still in India lies in financial space, and that constant pressure is going to be maintained. Beyond that, FCNR money which is coming in place, it will give much more headroom to increase the lending in the system. Credit growth can go much more higher from current level also, because you don't have any kind of a SLR or CRR provisioning on the money which is being allocated through FCNR. So that will increase the credit growth. But the two pressure point will be, do watch the mercury which is rising on the global bond market yield side. It will have an impact on the Indian banks too.
So more headwinds than tailwinds right now. Do you have a year-end Nifty target? That have you moved it around? Do you have anything in mind, or are you as unimpressed by the Nifty right now as most of the market seems to be?
Look, the multi-cap approach, like having that one is much going to be better rather than deciding which style we need to prefer. So this is the reason why we have neutralized position across large cap, small cap and mid cap overall. Nifty is largely your top 50 names only, and that's where most amount of a growth disappointment was there. If I have to put a number, I will say I will go along with my base case, which we think if we maintain this 11% kind of a trajectory, then 27,000 is very much possible within the next 12-month period. Yeah, bull case could be a stretch if this headwinds keeps on rising of 30,000 to up here.
Rajiv, thank you so much for joining in today and speaking with us. It's always a pleasure to have you on. Rajiv Batra there joining in live from Singapore. speaking on JP Morgan's India View. Now, let's get to our corporate radar. We have a very interesting company that we are going to be speaking to today. It's called Sigma Advanced System, in focus after posting not just a decent Q1 result. The company has recently bagged an order worth 155 crore rupees from various places. Now, before we speak to Sunil Kalidindi, CEO of the company, to understand the timeline of the order, just a bit more about the company, frankly, Parth is joining in with more details.
So good set of numbers from Sigma Advanced in the first quarter of FY27. Revenue saw a growth of 16% quarter on quarter to reach over 370 crores, while EBITDA also grew by 11% quarter on quarter to reach over 60 crores. EBITDA margins, however, saw slight pressure and dipped by 100 basis points to 16%. The total order book of the company stands at over 8,000 crores, with the majority of it being in the aerospace segment. About the recent order win, they have the Indrajal and the Sigma consortium has won 155 crore orders from the Home Ministry. Now, in this 145 crore is for Ranger to boost India's security, and the other 10 crores is for the urban security. Now, coming to the guidance, management has guided to improve the EBITDA margins by 2 to 4% in FY27 and further 4 to 6% through FY28. So, and also the company will be expanding into USA as well. So, both the addressable market is going to increase and also the margins, and this is why Sigma Advanced is in focus post the Q1 results.
Thank you for that, Parth. Sunil Kalidindi is joining us. He's the CEO of the company. Sunil, thank you so much for your time to us. Now, Sigma has an interesting story.
Thank you so much for having me.
Absolutely, our pleasure. Sigma has an interesting story, right? Because there was a pivot at some point from software to defense, aerospace, etc. Just let's start a bit with that context and backdrop for our viewers before we move to everything that's happening lately with you.
So we are a globally integrated defense and aerospace platform with a solid footprint in the UK and India across all the facilities that we have between these two locations, and a customer base across India, UK, Europe, and North America.
Okay, no, that's fantastic, which is why I wanted to highlight the fact that this used to be a software company. There is a pivot and, of course, a lot happening over here. Tell us about the Indrajal order with the Home Ministry. What does that entail? What are the timelines of it? And, of course, since you're in a sensitive sector, you can share as much as is possible.
Sure, thank you. So we've been engaged with the customer over the last several months. We've gone through the whole cycle of a successful demonstration to the customers, solving their use case and the challenges that they were facing, and then that whole journey is translated into a meaningful order for the Sigma Indrajal consortium.
And tell us a bit about the Rolls-Royce LTA, which is worth about 4,000 crores, if I'm not mistaken. How will this pan out? What are the timelines for it?
So the Rolls-Royce LTA that we have in place and we've ordered, which we've announced a few months ago, is about roughly about 3,800 crores, spanning over the next 7 years. And the execution is already ongoing, right, as we speak, and that's panning out quite well. And our customers are also quite happy and satisfied with the progress that we're making.
Sunil, good morning. Hiral here. So, in terms of your reported order book, a little over 8,000 odd crores is what you're looking at, right? You've mentioned about execution. So, what is the expected execution schedule if you have to look at FY27 to 28 for this 8,000 plus crore order book?
So expected execution across the entire order book that we have, right, which is 8,000 plus crores, we are talking about closer to 1,900 crores of execution this financial year, and we're tracking very well towards it.
Okay. And how much of the FY27 revenue is already covered? I mean, how much of it will come in terms of FY27?
So about 375 crores is already covered in our Q1, in line with our quarterly results that we declared last week.
And if you look at it from a quarter-on-quarter perspective, we've done fairly well. Our revenue is up about 16%, and our EBITDA is up by around 11% in terms of operational numbers.
And what about the mix between the domestic and export orders? Where does it stand right now, and where do you see it moving ahead? And will that mix, if it's going towards exports, be margin accretive?
So the mix currently as it stands is about 85 to 90% is exports, split across our aerospace and defense exports verticals. And about 10% remains in, 10 to 15% remains in within India across our various customers, basically split between defense PSUs and the military.
Sunil, just, give us a perspective. A lot of interest in your company. You're in a space which is also getting crowded. How are you standing out? What is your USP right now? And is the fact that there is a lot of focus on indigenization in the defense space truly your tailwind?
Absolutely. So I think as a company, we're quite uniquely placed, right, across the three business verticals: our aerospace, defense exports, and our defense business that we have in India, so which is more oriented and focused towards Indian customers, right? And we truly believe the government's vision of Make in India for the world. And we're working. We're working towards making that vision possible.
Okay, thank you so much, Sunil, for joining in today. Just look at what that stock. I'll just pull back that 1 year stock price for us. Sunil Kalidindi, the CEO of Sigma Advanced, is speaking to us, and it's quite a journey. In 6 months, the stock is up about 300%. I don't know if you have a 1 year chart, but it's again at an upper circuit of 5% today. All right. Auto companies are ramping up production and inventory ahead of the festive season. Danish is here with what they're planning to do. Danish, that tells me that there is an expectation of good demand this festive season.
Well, that's correct. The entire auto industry is really confident of this festive season, and they believe that the momentum that we are seeing since September last year after the GST cut, it will continue for this festive season as well. Hence, the industry is preparing for the festive season. Mahindra, first of all, they are increasing their capacity. They're going to increase the capacity from 64,000 units to 68,000 units by the end of September. And we already saw that they came out with a few launches just a few days back. Similarly, if we talk about JSW MG Motor is also in talks with several of its suppliers and its partners so that they can increase the production, because the components is a major challenge for the industry right now, and the only way they can really move on this end is by getting more components so that the production can go up. So hence JSW MG Motor will be doing that, and they are also going to launch 2 new EVs in the run up to the festive season. And as far as Hyundai is concerned, Hyundai is also ramping up its production. We saw the disruptions that happened a few months back, but things are back into its place, and in the upcoming few months Hyundai will also be starting a 3rd new shift at the Pune plant. This will overall increase the capacity of Hyundai in pan India. So all in all, if we see, the entire auto industry is pretty much excited for the festive season, and they're preparing for the festive season by ramping up their production, and they believe this festive season could be yet another blockbuster festive season for the auto industry.
Got it. Okay. All right. Now, for Tata Motors, of course, the key question is whether the Iveco JV becomes a growth engine for the CV business or turns into a challenge like JLR. And for the longest time, of course, JLR was that golden goose that could lay nothing but golden eggs. It has turned out to be a bit of a nightmare over the course of the last 1.5 years or so. Let's take a closer look at these two companies after the demerger set them apart, because there's a lot of preference at this juncture for the CV business. Puneet has got all of the details in this special report. Puneet?
Well, thank you for that, Alex. So definitely the Iveco acquisition is going to be, and putting out a very key question now, expected to be completed by this month end. So the question being that will Iveco's acquisition be a JLR moment essentially for the CV business, that it started off well for the company in the late 2010s, but then you saw that pressure come through post the pandemic as well. Now, JLR has definitely been a pain point for the PV business, but when you look at Iveco, there are some positives of this big acquisition, 3.8 billion euro acquisition that they're doing. They will get an aspect of new engines as well as new powertrains, something that they actually have a partnership with in India currently with Cummins, which is for Tata CV. So they will get access to a new engine. It's definitely going to be the other factor. And let's get back to the positive now, because the higher tonnage vehicles will be the other factor for the company. It's something that they don't have access to right now in terms of products, but definitely higher tonnage. Expansion to Europe with an on-ground facility will be the other big positive, will set the company set for the next 20 years. And now Iveco currently forms roughly 122 rupees per share value according to Nomura on the target price that they have for Tata Motors CV, which is over 500 rupees. So it's currently around 15 to 20%, but there are some negatives and some challenges that could occur. The one big one is going to be the cost of the acquisition at 3.8 billion euros. You will see the company having to raise a lot of debt at this point of time versus a net cash that they have been over the last few years. The other factor that there's a very big valuation difference currently. For the India EV business, trades at a much higher valuations at almost 12 times FY29 EBITDA. The Iveco one trades at 4 times on EV by EBIT, and hence there's a big difference because of the higher growth in India. And finally, the ROCE as well. Very strong balance sheet for the Tata Motors CV business. That will also come under pressure because of the debt that they'll take as well. But finally, what are the timelines that you have to watch out for? One big one continues to be that the regulatory mode is in final stages. One more approval yet to be received from the French authority. August end is what the company has said. And tender offer, since Iveco is listed in Europe, they will have to do that by September, and post-November, the integration will start for the company. It won't be very easy though, because there are two big concerns here. One is on market share. For Iveco, the MHCV, the bigger, heavier trucks continue to do well, but the light commercial vehicles, that has been consistently falling for the last 4 years. They've gone from 15% to 11% versus in calendar year 22 versus in 25, and hence market share for the smaller trucks is definitely under pressure. And the MHCV is currently stable at 8%, but the margins is the other big factor for the re-rating of the company. Tata Motors CV currently operates at a margin profile of 12 to 13% for Iveco. They've guided at 7.5%, but might be a difficult task with CY26 ending at 4% odd. So there are some positives of newer engines and bigger trucks, but definitely on the financial side, the math is not mathing at this point of time.
The math is not mathing, Puneet. That's interesting. But just a follow-up over here. The reason why we are comparing it to a JLR is because JLR also had a lot of promises, right? And on the books, on paper, everything was looking hunky-dory. The question was in terms of execution and post-execution, the impact it would have. Now here we are talking about Iveco, which could be margin accretive to some extent. Market share again is one of the keys that you're looking at. But if execution fails, are you hearing from analysts that this could become a concern and a Tata Motors CV could turn like a Tata Motors PV as well?
The biggest concern right now is the integration, because the management has not given us a timeline. This could be a very big acquisition, most certainly, but unless that timeline comes through, could be anywhere between 12 to 24 months, and might be that the stock might trade flat until the market has more clarity on the same.
So clarity in terms of the acquisition timelines is a key, but thank you so much for coming in on that one.
I just wanted to highlight that, we keep saying that NDTV Profit is for your profit. That is our tagline. And often, viewers might be wondering, or someone might be asking, what does that mean? This is a great example. The piece that Puneet has just put together, where we're going beyond the obvious and trying to find what works for you so that, we can help you move towards your profit. The next story is also, I think, in the same line, because we know that there are volume declines because of CAS, right? The new closing settlement system. There's a higher STT as well, and tighter RBI norms. They're pressuring prop traders and weighing on exchanges. Parth joining in with more details.
That's right. The prop traders are facing multiple headwinds. The first one is obviously the closing auction mechanism that has been introduced. That is raising execution losses for the domestic prop traders. Also, the STT hike that came back in the April of 2026 is increasing their overall trading costs. And the third one is that the RBI, the stricter bank norms that have been put by RBI, that is also threatening a 10% turnover cut. So these are the three headwinds that they are facing. Now, the prop traders form a very important part of our F&O ecosystem because they generate around 50 to 60% of the total equity options notional turnover. The domestic prop traders are around 50% of that turnover as well. So that's why they are really important for the entire segment. Now, if we look at the volume decline that the prop traders have seen before CAS, if we look at the total contracts, these are the long and short contracts. Both they used to trade around 82 crore contracts in a week. But after CAS, in the first week, that declined by 15%. In the second week, it saw a decline of almost 30%. So that's the kind of volume impact that we are seeing in the volumes of prop traders. Also, the ADTO pressure, the average daily turnover, that is being visible as well. In the month to date, August 2026, when compared to July, in BSE we have seen a decline of 12%. In NSE we have seen a decline of almost 14%. Also, the CAS week 2 versus the week 1, that has seen a significant downside of 20 to 23% in both BSE and NSE as well. Also, the expiry day average daily turnover, this is compared to the peak that we saw back in March 2026. In NSE, that has seen a fall of over 46%. In BSE, that has seen a fall of over 27% as well. So this is the kind of damage that we are seeing in the average daily turnovers and the volumes of prop traders. Now, coming to the impact of this on BSE, the stock has corrected over 25% from its peak back in May 2026, and Jefferies has downgraded them to a underperform rating versus a hold rating earlier. They have cut their price target by 16%, and they have also cut their FY29 to FY27 to FY29 EPS estimates by 5 to 12% as well. Now, what can BSE do to offset this damage? They have two options. The first one is that they can hike their fees in options. The fees for 1 million of premium turnover stands at 325 rupees when versus compared to the 350 rupees that NSE charges. So they can fill in this gap, and if they are able to hike this fees, they can add around 6 to 7% to their EPS. Also, they can increase their messaging fees for the colocation facility. That can also add up to 8% to their current profit after tax. So these are the two measures that they can take in order to repair these kind of damages that they are seeing. Now, there are also some brokerages that are likely to get impacted from this prop volume decline, and the top 5 names are Grow, Angel One. Angel One has a really significant derivatives exposure towards its earnings. Also, 5paisa Capital, IIFL Capital Services, and Motilal Oswal as well. So that's the entire ecosystem that is being impacted because of the decline in volumes and turnovers that we are seeing from prop traders.
Yeah, that's a nice comprehensive piece, Parth, and once again highlighting for your profit as what we really believe in and we like to really offer for our viewers. Thank you for that. All right, let's talk about Milky Mist. It's had a good listing. Let's pull up the listing of this company in the dairy space, and in fact NAM Capital has initiated a buy with a target price of 175 rupees. Can we just pull up Milky Mist and where it's looking at? It's going to list in a few minutes, but we have the pre-settlement rates, which is about 165 rupees. 140 was the issue price, and DAM's target is 175. They're saying it's a pure play exposure to dairy's fastest growing categories. Margins are built on mix amidst higher working capital. GST rationalization, a durable accelerant to formalization. Best in class margin structure defended through a difficult cost cycle, and ad spends well below FMCG players. Margin expansion creates room to scale it. You're seeing live visuals coming in from the NSE where that will list in just a minute, but Nimit is there. Okay, you have those listing visuals and Milky Mist looking fairly close to that target price, about an 18% uptick.
Yeah, 22% at this point, and of course it depends to be seen if there's
some money being taken off the table at the start, but it looks like it's slightly ahead of what the GM, the grey market,
the grey market is around more
15%.
Exactly, and it's way ahead. 5-7% is not a bad deal.
Yeah, it's not a bad
ahead of the grey market premium as well, but 22% upside is what you're seeing in terms of listing. And DAM, as Tamanna was mentioning, 175 is their target price. In fact, our colleague Nimit is at the venue. Nimit, let me go to him and catch what he's picking up from the venue as well in terms of the listing. Nimit, good morning. What's the mood like on the floor? Because it's a good listing. I mean, 22%, not bad at all.
Not bad at all, and above, like you already said, the grey market premium ratings. It's been a really good morning here, and it's one of the most fascinating stories, right? A company from a very small town, Perundurai, in South India, in Tamil Nadu, is the largest manufacturer of paneer, which is a product primarily consumed in North India, one of the most popular products in North India. And now they've come from that small town where they raised about 1,500 crores in debt to now listing at 1,500 crores on the National Stock Exchange at a large premium from their issue price. It's been a fantastic story for Milky Mist. Now, what is important to understand here, and it's been constant thing that we've been saying as well, and something that the DRHP we pulled out from, is that what are investors really putting into Milky Mist, right? The company right now is a highly leveraged company that's primarily focused in the South Indian market, that's looking to deleverage and move to North India. So the investors here that have put in their faith in Milky Mist are clear that what they're funding is the deleveraging of a regional player into a national player that's going to expand across the country, both in terms of production and in terms of distribution. Now remember, their key products are not milk at all. They do not sell milk as compared to the other competitors that are listed in the dairy space. They sell only value-added milk products. This is important because their focus is clearly on high value, high premium, high margin products. And this is also clear from their books. 33% their profitable EBITDA, 13%, and profit after tax at 4% already. In fact, their smaller North Indian operations, I spoke to them earlier, they said that they are already profitable in North India because of their focus on these high margin products. So they're not planning to go into dairy. It's a very interesting story, and from a personal front also, I would like to tell you, I've spoken to these founders. They're very simple, humble founders from a very small background, not from the Mumbais and Delhis that you see. And as the listing comes through, they're very proud of the product that they've built.
Absolutely. And you're right, Nimit. We've had the opportunity to speak with the management and understand their journey, and they made a call very, very early on to go value add. So not a pure milk play, but a dairy value add play. I want to just pull up those prices, if we can, on where it is right now. So yeah, you've crossed the DAM capital target price already, 180 rupees, and a 28% upside. It's always great when you have good listings. It tells you that the market is healthy. There are others that will open for issue today. We'll talk about that. And on the other side of the break, we speak with the Century Ply team on what their outlook is and a lot more. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा।
मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Sashi Tharu, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely.
Welcome back. You're watching India Market Open. Century Plyboards reported a strong volume-led quarter with plywood growth exceeding estimates and margins improving despite a challenging environment. Before we speak to the management, Puneet joining in for a quick setup.
Well, thank you for that. Well, from paneer to plywood, the growth has been very strong for Century in this particular quarter. A 33% revenue growth that they've done as well. And what is the significant factor is that, the growth could continue in the near to medium term. So just three key questions from the management. One will be on the timber price, so how they've been acting up, a key raw material for them. The other factor is if demand continues to hold up and if FY27 could show that growth. And the third and the final one on the logistics side, it's a new vertical for the company. If they are looking at strategic investment that could lead to a second leg of growth in a new vertical, those will be some of the key aspects from this conversation.
Got it. All right. Thanks so much for that, Puneet. Keshav Bhajanka, who's Executive Director, Century Plyboards, joining us this morning. Keshav, thanks so much for taking the time. Good afternoon to you. Alex here. So talk to us a little bit about the trends that you're witnessing, because seemingly across the board, building materials have actually had a pretty decent quarter, notwithstanding all of the pressures on the external front. So what are you seeing on the ground?
Good morning. Thank you so much for having me on the show. I think that, by and large, what we are seeing is that domestic demand remains somewhat robust as far as our sector is concerned. We have seen broad-based growth and all four of our business segments have grown. Plywood has grown very well, MDF, particle board and laminates. And we are expecting to see continued growth in the following few quarters. There has been some volatility on the raw material cost. This is predominantly due to crude-based derivatives that form a part of our chemicals or our resin. I think that volatility is there to remain until this war continues. But on the demand front, I don't see any challenges going forward.
Then have you undertaken any price increases in the first quarter that have led to a margin improvement? Is there an element of inventory gains that you've had, and will that sort of ease out or reverse in the second quarter? What is the trend that you're seeing?
Yes, we have definitely taken some price increases over the course of the first quarter. And in certain segments like plywood, those continue. But in segments like MDF, where there has been a lot of volatility, when raw material prices come down, those price increases are rolled back. And when, again, you see some semblance of increase, then you further push the prices up. Having said that, I think that for us, July has been very robust. It has actually been the highest month that we have ever done. And we expect a strong Q2 as well. August till now looks fairly good as well.
Okay, Keshav, my question to you then is if you could help us understand the quantum of price hikes that are already taken and the additions that could happen throughout FY27? And the reason I ask you this is because in the past you've mentioned about FY27 and 28 that these 2 years will be good growth years for the company, because a lot of your assets that you've created will actually be sweating it out over here. So what is that kind of revenue growth margin profile that investors should realistically watch out for?
So currently, we're not really giving any guidance because the situation remains very precarious as far as the external macro environment is concerned. Having said that, I think we have grown at a CAGR of 20% plus over the course of the past so many years, and I think that we are in a position to continue growing at that CAGR at least. With regards to price increases in plywood, we have done 5% plus, in laminates 5% plus, in MDF and particle board 10% plus. But in MDF, we have had to roll back a certain quantum due to a certain correction in resin prices. But this is a very, very volatile situation. Prices are increasing or decreasing on a daily, if not a weekly basis. So we will have to wait and watch.
Okay, Keshav, so going ahead, capacity expansion, market share gains, premiumization or margin improvement, out of the four, what will be your priority?
I think we have already expanded capacity. So, ramping up, like you rightly said, ensuring that there is operational leverage and better capacity utilization, that will definitely be a priority rather than new capacities, other than plywood, where we are almost running at full capacity. So we need a new capacity, which will come up maybe in October, November of this year. Premiumization is definitely a focus area, and growth, I think, remains the key priority.
Keshav, hi, Tamanna here. Just a couple of quick questions. You spoke about price variations and the impact they're having on both MDF and particle board. I mean, particle board has been your bumper hit in a sense, right? How do you expect that to grow? Where do you see the maximum growth coming in from? Which segment?
So I think that, there is growth that is robust across all the segments. I think plywood has been our growth driver in terms of absolute as well as percentages. I firmly believe that, all our segments will grow. Particle board, the reason that you're seeing such a big jump in quantum is because we have come up with a new capacity from a 200 to 250 cubic meters capacity earlier. We are now at a 800 plus cubic meter capacity. So that gives us room for growth. Earlier, we were being limited by capacity, which is no longer the case. So I think you will see broad-based growth. You will see growth in all the segments. And we are fairly confident that each of the segments is well poised to increase both market share and to increase profitability in the near future.
Can I just get a sense of your debt repayment plans, Keshav, going ahead?
I think our cash flow generation remains very, very strong. And currently, you're seeing a spike in debt because we have grown substantially. I think when you grow close to 30%, the working capital cycle also gets affected. Going forward, I think now, since there is no major capex, the bulk of our free cash flow is going to go into debt repayment. And this, I think we're in a comfortable position as far as debt is concerned. And now peak debt is already behind us. So I think you will see deleveraging in the near future.
Okay, when you say near future, can you specify when you say deleveraging by how much? Is there sort of a ballpark idea in mind?
Yes. Quarter on quarter, we will be looking to deleverage. And within the next 2 years, our long-term debt to EBITDA will be within the ratio of 1. So I think that is the target that we take. Working capital, of course, you will have certain debt. But our debt to EBITDA ratio, as far as long-term debt is concerned, will be under 1.
I have a quick question on your logistics vertical before you let us go. Tell us the rationale about that. It's fairly new. Why do you want to get into it? How much do you want to expand it?
So I think we have been in logistics for the last 2 decades now. We're actually running container freight stations at Calcutta Port for quite some time. An opportunity presented itself for backward integration. Instead of just running the CFS, we had the opportunity to take over a couple of berths at Kidderpur Dock. And this would give us a complete value chain, give us a different value proposition to the one that we had earlier. So it would enhance the valuation of the current business that we have as well. So we have started on this from, I think the official commissioning date was around the 20th of March. And last quarter has been EBITDA positive. I think it has also been cash positive. Going forward, we see this as a good growth engine. And as this is not one of our key verticals, maybe in the future we will look to monetize part of this asset as well.
Okay, that's interesting. You don't have any timelines for that though, Keshav?
I think it is a question of when you get the correct valuation. Today we have to create shareholder value. So I think within next year or year and a half, we should be able to do this.
Interesting. Okay. All right. Thanks so much for taking the time. Wish you all the best for FY27. Talk soon. All right, it's time now to move to our next conversation, which is effectively a talking point. And we're joined today by Harsha Upadhyay, who's speaking to us today, CIO, of course, of Kotak Mahindra AMC. Harsha, always a pleasure speaking with you. Thanks so much for taking the time and good morning to you. We're a day after the Q1 results has waned or finished, and you kind of got a trend or sense of how these numbers would pan out more or less at the midpoint of Q1. I wonder what you think about this, because just as we're closing out the earnings season, you have once again the situation that is getting complicated externally. You have crude oil that's once again above $90 to the barrel.
Good morning, Alex. Yes, first of all, I think the earnings season has panned out quite better than most expectations, I would say. Most of the expectations were that there will be some impact of the ongoing West Asia crisis, and hence either the margins will be under pressure or there will be some logistic issues that the companies would have endured, and hence the numbers may not be as strong. But contrary to most expectations, numbers have been really, really strong. In fact, after almost 8 or 9 quarters, we have seen large cap earnings growth moving at about almost 17.6% for the full season. This is a significant improvement compared to the less than 3% growth that we saw 2 years earlier, and less than 6% growth that we saw last financial year. So I think while the confidence was more on mid caps and small caps to deliver earnings growth as expected, there was very little confidence on the large cap basket when the season began. But contrary to expectations, we have seen even large caps delivering quite a bit of strength in terms of earnings trajectory. Having said that, as you mentioned, the West Asia crisis still lingers on, although it is somewhat low intensity. However, the sentiments on the energy side have remained quite volatile, and to that extent, we have also seen firming up of crude oil prices, which is not a good news from an external perspective. Purely from earnings perspective, I think things have improved quite a bit this quarter.
Yeah, earnings perspective, things have improved. Harsha, very good morning. Tamanna here. Problem is that improvement, is it reflecting in prices? Do you think that earnings improvement have now been adequately priced in by the market, and now you will need a plus, something more to really move the needle?
Tamanna, actually, we still believe that large caps are well below their median valuation range or long-term average valuation range. So to that extent, the earnings growth trajectory, which has improved, should give impetus for large caps to start performing from here on. But of course, there are other external factors which are keeping the markets in a range, I would say. In fact, I'm a little bit surprised to see some of the macro headwinds receding and FII money starting to come back, rupee dollar stabilizing. We have seen almost $55 billion of FCNR deposits coming into the country, except for monsoon, which has been a bit of an erratic this season. Most of the other things seem to be on the improving side. But even then, we have not seen markets moving out of this range, which is a little bit of a surprise. Of course, that is also partially driven by the kind of selling that continues on the secondary side, and as well as some of the IPOs, which are also taking up the liquidity.
An interesting point, Harsha, that you make. Good morning, Hiral here. You know, you've spoken about what's happening with the large caps as well, where there could be value that could be emerging. And I think in the course of the last 1 year, you have raised your exposure when it comes to IT as well as banks, and they are the heavyweights in terms of Nifty 50 as well. What's giving you the confidence in these two sectors? Because you usually see that trend when the FIs come in, these are the two sectors that usually move. Right now, IT, nothing really happening in terms of the confidence that people need to get. What is giving you the confidence?
Well, we increased our exposure to banking and financial services. We actually cut our exposure to IT services. we still continue to remain skeptical about the business review in terms of IT services.
Okay, Harsha, I think
An issue with your audio, Harsha. We're going to try and fix that. And in the interim, let's take a look at where the markets are. And we're holding out pretty much with cuts of about 1/3%, 24,215. Remember that 24,200 mark is something that was looked at very closely by technical analysts earlier today. Kush Bora was pointing that out as a level that might be respected on the downside. And we've been in a pretty tight range. That's been the case for the last several sessions in a row. Remember that the Nifty Bank as well, he's positive on, but it's underperforming just a tad bit, or more or less moving in lockstep with the benchmark Nifty 50, down about 1/3% or so. Harsha, you were making a point, you were answering Hiral. I request you to make that point again because we didn't catch everything.
Alex, I was saying that while we have increased our exposure to banking and financial services, so we have not really increased our exposure to IT services. On the contrary, we have actually reduced IT services exposure over the last 12-18 months. The concern being on the lack of business momentum and also the possible impact from AI on the margins. However, on the banking and financial services, we clearly believe that valuations are quite attractive at this point of time. The single biggest concern that was there for private banks whole of financial year 26 was about net interest margins being under pressure, given the fact that there was scramble for deposits and interest rates were on the lower side, and they were cut during the financial year as well. However, that situation doesn't exist anymore. We are going to see either stable or slightly higher rates over the next 12 months. We have also seen a good amount of FCNR money coming into the country, which means on the deposit side, there is no constraint for growth as of now. Credit growth continues to grow at about 17-18% at this point of time. With nominal GDP growth coming above double digits, I think this kind of credit growth should continue. So overall, valuations being on the safer side and with growth continuing to be strong, and largely most of the margin pressures are behind us. And that's where we believe banking and financial services will continue to deliver better numbers over the next couple of years.
Okay. What about Harsha, IT? How are you feeling about IT services? How are you feeling about power demand? How are you feeling about FMCG, if I had to pick those three?
IT services, as I explained, continue to be quite negative at this point of time. Yes, of course, the valuations are quite low. There could be very sharp pullback rallies every now and then, but from a medium to long-term perspective, we still continue to be very selective on IT services. FMCG, once again, is a sector where we have been underweight for quite some time. Clearly, there is hardly any volume growth for any of the subsegments of FMCG, as you can see for the last couple of years. The margins still continue to be very strong, but the question is how long these margins can be strong if there is no top-line growth for some of these companies. So we continue to remain negative even there. On power, we remain positive, and we believe that over the next couple of quarters, again, there will be concerns about what will happen. On power, we remain positive, and we believe that over the next couple of quarters, again, there will be concerns about what will happen in the next summer, etc., given that this year's monsoon has been not so great. So the power demand will continue to remain healthy, and to that extent, I think this entire piece should do well. However, some of the sub-segments which are related to power sector, especially the cables and wires and the ancillary companies, etc., have been trading at quite a rich multiple at this point of time. So one needs to have a little bit of cautiousness on that particular sub-segment. But power as a whole should continue to be one of the favored segments.
Sure, just 30 seconds left, but let me ask you what your revised estimates of full year earnings would be across the board.
Alex, we have not really changed our full year numbers as of now. We continue to remain at around 15-16% growth for Nifty. But the confidence on achieving those numbers have gone up post the first quarter numbers, where we have already seen close to 18% growth on Nifty basket.
Understood. All right, Harsha, always a pleasure speaking with you. Thank you so much for taking the time.
Thank you.
And speak soon. All right, well, that brings us to the end of this edition of India Market Open. It's been an absolute pleasure bringing it to you. The market may not be terribly exciting, but this show certainly was. And it was fun. So from Tamanna, Hiral, myself, and the team that put the show together, thank you so much for watching. Keep your questions ready. Up next is Ask Profit, and this is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Sashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business story.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin above the $64,000 mark on steady institutional accumulation. The US Treasury Department proposes Genius Act stablecoin rule. Keep America the crypto capital of the world, US Treasury Chief Bessent says. And lastly, Bitcoin could become the future S&P 500 as per investor Visa. The Bitcoin is above the $64,000 mark on a steady institutional accumulation. The key resistance range is between that $65,000 to $66,000 mark. Now the prices are stabilizing amidst lower volumes amongst the retail. The US Department of the Treasury has taken another big step towards implementing the new stablecoin law. Now they are proposing federal definitions on what it means to issue US stablecoins and who needs to follow the rules which have been set out in the guiding and establishing national innovation for US stablecoins, which is the Genius Act, even as the law's deadlines are fast approaching. Also looking at the commentary, US Treasury Secretary Scott Bessent has announced on X that the Treasury is moving towards the practical implementation of the Genius Act, which is designed to keep America the crypto capital of the world. Now the statement is followed by Treasury's official issuance of a notice of proposed rulemaking, which is NPRM, launching the development of the federal rules for stablecoins payments. And Bitcoin could become the S&P 500 of the future thanks to AI development. That's stated by macro veteran Jordi Visser. He says that he has made the point the convergence of AI agents, crypto, stablecoins and tokenization will dramatically increase the transaction velocity. This means that the financial processes that currently takes days or weeks could eventually happen almost instantly as AI agents transact through blockchain-based infrastructure. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. And largely we see a good buying happening, especially from the institutions when it comes to Bitcoin. That's up almost 1.4%. But Ethereum, XRP, Solana and Tron are largely in a range-bound move. If you look at the support resistance range, that's around $63,000 to $66,000. Time to now take a look at the crypto strategy for the day. Here's what's there to keep in mind. The market outlook currently is looking cautiously bullish, but still there are signs of consolidation. On the lower levels, institutional accumulation is happening, and the Bitcoin resistance range, if we talk about it, ranges between that $65,000 to $66,000 mark. Now, the broader market concerns are definitely there, especially on the rising treasury yields as well. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Well, you're watching Ask Profit on NDTV with me, Somit Sarkar. If you look at the markets, the Nifty is down around 60 odd points in trade. Nifty Bank is down around 147 odd points in trade. And if you look at the indices here, among the top gainers, it's Nifty. Among the top losers, it's Nifty Real Estate. And among the top gainers, it's Nifty Pharma, Nifty Auto, which are up around 0.3 to 0.4% in trade. But let's start our Ask Profit round with let's welcome in our technical and the fundamental guest, Swati Hotkar, AVP Technical Research Analyst with Nirmal Bang, while Tapan Doshi, Research Analyst with CA.Tapan.in are present with us. Well, the first query is coming in from Ramesh from Bangalore on Motherson Sumi. 330 shares is what he has bought at a price of 130 rupees. Current market price is 170. He's sitting on a good amount of gains. He wants to know whether should he book partial profits or continue to hold or exit completely? Tapan, any view on Motherson Sumi?
See, outlook for the, first of all, good morning, Sumit. See, outlook of Motherson looks good now. If you see that, no, that sales overall, the revenue is going up. Even EV component sale is going up. If you see the aerospace diversification is currently helping them. Of course, there is a raw material volatility and all that, which is putting pressure of little bit on margin. But I think strong global OEM presence is there for them, and diversified geography is helping them. So my take is, no, please hold on. If we can hold for almost 1 year or 2 year more, I think this may give you a better return from here also.
The next query is coming in on IFCI. Lalita from Bangalore is holding around 100 shares, bought at a price of 76.6. He's sitting on a profit. She wants to know whether should she sell or hold. Any near-term, short-term target that you could give on this, Swati, IFCI?
First of all, good morning, all of you. Definitely, the view is positive on IFCI because on the daily chart, if we look towards the setups, the stock has given the breakouts of the inverse head and shoulder pattern, which comes the neckline was coming at around 80 rupees and it's trading above those levels. I believe the stock has a very strong potential to reach up to 85 to 88 levels on the high side. So you can definitely hold on the long position if you want to keep any kind of a profit stop loss. 79 is acting as a crucial support level. So by keeping that as a profit stop loss, you can hold on the long position for immediate target of 85 to 88 rupees.
Ishwar from Kolkata wants to know any couple of stocks that he could invest for the next 3 years. Tapan, any view? Any two stocks that you would recommend for the next 3 years?
I think if you see auto stocks are doing well, including auto ancillary, what we spoken about. I think there Uno Minda is one of the stock you can think about. Even EMS sector now started coming up. I know Sigma SGS is on a higher side, but if it comes down, no, you can go for a long. And also banking, I think you can go for Federal Bank or Karur Vysya Bank. They are also good stock for hold for next 2 to 3 years.
Next one is from Kishore from Tamil Nadu. He has bought around 575 shares of Nosal at a price of 173. Should he hold or sell them? Tapan, any view on Nosal?
Well, currently it's a hold from my side. No, of course, no. If you see, the problem is there for the rubber chemical prices are a little bit weak, and the Chinese competition is there. But I think demand recovery will be slowly and steadily coming. Even export recovery will be coming. So at this level, no, if you see the balance is quite debt free and healthy cash generation. So at this level, I think one should hold this stock.
Okay, the next query is on the recently listed counter. In fact, it got listed today. Milky Mist. The stocks at 181, a strong listing is what we have seen. Revati Reddy from Andhra Pradesh was allotted 107 shares of Milky Mist and wants to know whether should book profits on listing gains or continue to hold for long term. Any view on this, Tapan?
There again, at this level, no, valuation already at a premium level. Of course, no, they are having a geographical expansion and their growth is quite good. Distribution network is also good. But at this level, if he wants to book some profit, he can book. If he is going for a short term only for premium listing, he was waiting, then he can book. Otherwise, for long term, I think he can hold it. Decent return maybe giving from here also.
The next query is from Gabriel. He wants to know whether it's a good time to buy Indus Tower for short term. Swati, any view on Indus Towers?
Yes, sir. The longer term horizon definitely positive, but the short term view is little bit cautious because the counter is continuously making the formations of the low tops and low bottoms. And I believe the strong, we might find out a support nearby 360 to 365 level. Up to that level, we might witness some sort of a more selling pressure. So wait for some more time. Let the stock find out a support nearby, find out the supports nearby the down levels at around 360 levels. So hold for some more time. Any dips towards to 360, 365 levels can grab the opportunity to take the fresh long positions. At the current moment, wait for some more time.
Next query is from, next is the caller query coming in from Hyderabad. Rishikesh, you can go ahead and ask your query.
Yes, sir. Actually, I hold HFCL under 500 shares of 180 rupees average. So what should I do? Should I sell off or should I stay in for other?
And you can hold for long term HFCL if you want to.
No, sir. Actually, I bought it for a short term itself.
Okay. Swati, any view on HFCL on charts?
Yes, my view is really positive and you bought it at very attractive levels. I will suggest to hold on for time being because stock is trading in the very strong formation setups along with the volumes and whenever we have seen a retracement, stock manages to show the bounce back rally, which is a very positive indication. This kind of a strength is likely to be extended and which will take a stock towards to at least 240 to 245 levels. So you can hold on stock for more for 10-15 points ahead, or else you can maintain the profit stop loss of 220 rupees on a downside and hold your long positions for a target of 240 rupees.
Jay from Bangalore is holding 222 shares of CMS Infosystem, bought at an average price of 281. Should he hold this counter or switch to any other stock? Tapan, any view on this?
Well, if you see the results, it's a little bit mixed bag, and no, I think no, there'll be a issue on the margin pressure also. Coming, the competition is on a higher side, and again, if you see the cash management, no growth is moderate little bit. Bank capex dependency is much more, and if you see client concentration is also there. So my take is, ATM outsourcing is rising, but still I feel the margin pressure will be there. So I'll get out from the stock and go to a better sector.
Any recommendation? Which sector would that be?
I think the one earlier, I think banking or EMS or I think even defense, that will do well. Even power sector is also doing well.
Next query is from Bhuvana from Bangalore, holding around 500 shares of Bank of Maharashtra, bought at a price of 47. Should she continue to hold or exit? Any view on this, Swati?
I would suggest to hold on this particular counter because already she is in a very good handsome of profits. Downside, we are witnessing that the stock has taken a very cluster support zone nearby 75 to 76 level. So as long as it holds those levels, the view will remain a positive. And I'm looking for a short-term target of at least 85 to 88 rupees on the high sides. So if you want to keep any kind of a profit stop loss, 76, 77 is acting as a crucial support levels. Keep that as your profit stop loss and hold on the long positions for immediate target will be a first one is 85, beyond it 88 levels can be seen. So it's all from my end.
Okay, the next is a caller query coming in from Andhra Pradesh. Jitendra, you can go ahead and ask a query.
Hi team, good morning to all. My query is about office space solutions, 305,000 quantity. For short term, how is it looking? Will results also fare better, right?
Okay, for short term, Swati, any view on charts on office space?
Frankly speaking, my view is a little bit cautious to negative as such because the counter is not finding out any good support levels at the bottom levels, continuously making a low top, slow bottom. And also the interesting fact, it is not able to give the resistance breakout of the 20 days moving average. Now that the resistance comes at around 275. So as long as it trades below that level, the view will remain cautious. I will suggest if you are getting any rise towards to 275 to 80 levels, try to exit your long positions.
Next query is from Ram from Hyderabad. He is holding 250 shares of GE Shipping, bought at a price of 1,560. Should he continue to hold this counter or exit? Tapan, any view?
Currently hold this counter now because if you see last few quarters, I think things are a little bit getting for their favor. Even the tanker cycle is favorable. Offshore recovery is getting. Energy demand is almost supportive for them. Of course, it's a cyclical earning and geopolitical risk is there. But if you see the balance sheet is quite strong and shipping cycle, no, I think it will be favorable over the time. So that will be beneficial for the company. So at this level, I think one can hold this stock for a little bit longer.
Next query is from Siva from Amravati. He is holding 300 shares of BSE, bought at a price of 3,520. Should he hold this counter for the next 3 months or exit, Swati?
See, as of now, the counter has already witnessed a price correction from almost 4,400 to now it's nearby the 30 to 50 levels, and the stock is about to enter the oversold zone. So we believe that the price correction has already been witnessed. Now probably we might witness some sort of a consolidation phase within the range of 3,200 to 3,100 levels. So I will suggest wait for some more time. No need to book your losses at the lower levels. Wait for some more time. Definitely the stock will show the bounce back rally towards at least 20 DMA, which comes from nearby your buying price itself 3,500 levels, and if it sustains above those levels, then the pullback rally can be witnessed up to 3,700 levels. So I will suggest to hold on some more time, and if the stock find out the support at 3,100, try to average out your position so that your buying price will come down.
Okay, so that's the view coming in on BSE. I think we've got Nishant who's waiting by, calling us from Gurugram. Nishant, a very good morning to you. Go ahead, ask your query.
Hi, good morning everyone.
So I bought SBI shares, 115 shares at the rate of 1051. So after that it went below 1000 and then came back again. So I just want to understand if I can hold it for a long term, or is there a better counter to, put my money?
And I'll take this up with Tapan. Then Tapan, what do you make of SBI? Of course, if you can give perspective on Q1 numbers as well, because it was on a strong footing, but overall your view on SBI?
Yeah, good morning, Mayo. See, if you see the credit growth is quite good, almost 11 to 13% for SBI. Even you see retail and MSME growth is quite good. Asset quality has been strong this quarter. ROE remains healthy. The only thing is, if you see the deposit competition is quite high. That is where things are getting worse. And if you see PSU valuation discount is having there. Also, guys, if you see I think deposit franchise, that is where bank has to focus more. But as ROE is above 1% overall strong capital position, still I think one can hold this stock for a little bit longer. If someone else want to go, means another option in PSU, I think Canara Bank is another good option if he wants to hold.
Okay, got it. So that's the view coming in on SBI. The next one that we have is coming in, and this is from our viewer Tarang, who's writing us from Bengaluru, asking about HUL. He says that he wants to know the potential upside for this one from a long-term investment point of view. Tapan, Q1 overall, I think the volume number being below estimates is what weighed on the stock. But what do you make of the numbers? And largely, guidance that's been given by the management has been maintained. So HUL a good bet from a long-term perspective?
Well, I don't think so, no, because if you see the overall volume is not going to double digit, and that is there from last few quarters also. Again, no commodity inflation risk is there. Urban demand is still moderate, and competition is quite high. Again, they spend a lot on ads and all that, and at this valuation, I think it is on a premium side. I think if someone wants to go in FMCG, double-digit growth should be there, like Marico or something like that. So I'll give a pass to HUL at this level.
Right, the next one is a caller query yet again from Bangalore. Mahesh, you can go ahead and ask your query.
Yeah, hi, good morning.
Good morning.
I hold a 3K green at 404 as an average price of 134. I would like to know the long-term outlook on if I am able, average down it at current market price.
Okay. Tapan, any view on KPI green?
The stock has been going down, and if you see the problem is the capex requirement, and there is an execution risk also, and that is little bit increasing, and also working capital pressure is there on the margin front. But if you see renewable capacity is rising, even the captive power demand is quite good for this company. So I'll not tell him to average here, but he can hold on to this stock. I think growth visibility will be there in 1 or 2 quarters. At this level, just hold, don't average it.
All right. Okay. So that's the view coming on KPI Green. The next one I think is from Paramesh, who's writing us from Hyderabad, asking about Happiest Minds and wants to know if this is the right time to enter for the next 6 months or not. So Adi, I'll come to you on this one. What are the charts indicating for Happiest Minds?
Morning, Mahima. Definitely the view at the current levels after witnessing such kind of a fall from almost 1600 to 350 levels. And if you look towards on the monthly chart, we have already seen a very strong consolidation within the range of a 350 to 400 levels. Now, at the current market price, the risk reward ratio is favorable. The overall price structure is also witnessing a high tops, high bottom formations, which gives some sort of a bullish sign for the short term period of time. At the current market price, I will suggest buy 20-30% of quantity, whatever you're planning. If you're getting any dips towards to 350, 370 levels, you can add more quantity. The short term to medium term target, I'm looking forward at least 470 to 500 rupees. So you can go for a long position at the CFP.
The next query is from Rajesh Maheshwari from Singapore. It's on Zentech. He has 200 shares bought at an average price of 1,135. He wants to know the short to medium term outlook on this one. Swati, any view on Zentech?
Yes, my view is positive. The counter is under the formations of the cup and handle pattern if you look towards on the weekly chart, and it's on the verge of giving the breakouts. The breakouts lies at the higher levels nearby at least 2020, 2030 levels. I believe, or I am preempting the breakouts in the near term futures. Any momentum about 2000, 2030 levels will extend this bullish or say the green channel towards 2400 to 2500 levels. We can definitely hold on to long positions. I believe if you want to keep any kind of a profit stop loss, 1850 is acting as a very crucial support level. So as long as it stays above those levels, the view will remain a positive, and you can place that stop loss for immediate target of 2200 and beyond at 2500 levels.
Okay, all right. So that's the view coming on Zentech. I think we've got Vijay calling us from Kerala. Vijay, a very good morning to you. Go ahead, ask your query.
Good morning. I am holding 300 shares of NTPC, bought at the price of 430.
Okay.
I'm a long-term investor. Now what to do? I want to long time. The price is at 330 something around that.
Got it. Okay, so elevated price is what you've bought it at, Vijay, and you want to continue to hold it from a long-term perspective. I'll take this up with Tapan then. Tapan, he's sitting on loss of around 27,000 rupees. Do you think he'll be able to recover his losses and maybe make some profits further if he continues to hold?
It will take some time to recover, no, but my suggestion, he can average little bit at this level, no, because capacity addition for this company is quite strong. Again, renewable expansion. If you see, they are planning for 60, gigawatt of renewable targets, storage, nuclear opportunities there, and of course, all the power stocks are a little bit down. There will be a recovery. The only thing is, we have to see the demand how it will be, because the summer was longer, the demand was okay. So again, the cash flow is stable. So looking at the opportunity, he can average here. I think things will be better in coming quarters.
Okay, so that's the view on NTPC, but it's time for a rapid fire round. Swati and Tapan, try to keep your answers as short as possible. The first one is coming in on Zaggle Prepaid. Kumar from Chennai has invested around 1.5 lakh rupees and wants to know whether he can continue to hold, maybe average at the current levels. He's already sitting on loss of around 59,000 rupees. Swati, your recommendation on the charts?
I would suggest to hold on for some more time. No need to average it out at a CMP. Any dips towards to 140 are the good levels to average out positions, but we can witness a pullback rally up to 210 rupees, so you can hold on.
Okay.
Next query is on Indraprastha Medical. It's for you, Tapan. Chandrasekhar from Bangalore wants to know whether should he buy more at the current levels for long term.
Not now, on dips.
Okay, the next one is coming in from Pravina, who's writing us from Bengaluru, asking about Apollo Microsystems. Swati, your recommendation on the charts for this one?
At the current levels, don't create a fresh long positions. Wait for some more time. Any dips towards to 370, 360 levels are the attractive levels to take a long positions.
The next query is on Castrol. It's for you, Swati. Ram from Chennai wants to know any target price if you have for Castrol.
Yes, at the current levels, the immediate target is 194 to 195. You can hold on the long position. The stop loss you can keep at 182.
Okay, the next one is coming in on either Nuvama Wealth or M&M. Which one is a better bet from a long-term perspective? Madhav from Hyderabad wants to know. Tapan, very two different sectors, but anything that you're liking from these two?
M&M will be much more stable compared to Nuvama.
The next query is on Ahluwalia Construction. It's for you, Tapan. Ashish from Delhi is holding around 300 shares, bought at a price of 822. Should he average or just continue to hold?
Just hold.
Okay, the next one is on pharma stocks, Swati. Our viewer, Dr. Lavinia from Eluru, wants to know from a 1 to 2 months perspective, any counter in the pharma space is looking attractive or not?
Yeah, at the current levels, I believe the Oro Pharma looks attractive, but you need to wait for some more time because from the 2 days we are witnessing, any dips towards to 1600 can be utilized to take a long position, and after that we might witness a strong pullback right towards to 1700. So you can keep eye on Oro Pharma.
Okay.
The next query is on Yatharth Hospital. It's for you, Swati. Neha from Bangalore wants to know whether should she buy at the current levels for the next 3 to 6 months. Any target?
No need to buy at the CMP. Any dips towards to 800 or 780 are the attractive levels to take a long position. But if you are already having the position, 900 is the immediate target.
Okay, Vodafone Idea is the other one. Gajanan from Bengaluru is holding 5,000 shares, bought at the levels of 16 rupees. Short-term view on this one, Swati?
See, the longer term view is positive. Short term, we might witness some sort of a profit bookings. You can hold on the long positions by keeping a stop loss of 12.5 and the immediate target will be at around 14.5 to 15.
The next query is on AFCOM Holding and it's for you, Swati. Uma from Bangalore wants to know whether should she buy AFCOM Holdings at current levels?
Definitely we have witnessed a retracement. You can buy 20-30% quantity, not more than that, because short-term target is coming at around 320 to 300 rupees. So on the small quantity, I requested to take a long position.
Okay, the next one is on Vari Energy. Hamid from Srinagar is bought it at the levels of 3,250 shares is what he's been holding. Continue to hold, Tapan?
Yeah, currently hold.
The next query is on Yes Bank. It's for you, Tapan. Kishore from Hyderabad has around 10,000 shares, bought at a price of 24.76. Should he hold, add more? Any long-term view here?
Yeah, he can hold. If it comes to 20 around, he can add more.
Okay, Ujjivan Small Finance Bank. Swati, is this a good time to make an entry is what our viewer wants to know.
No, I will not suggest to take a fresh long positions. Wait for some more time. Any dips towards to 65 to 60 levels are the good levels to take a fresh longs.
The next query is on HDFC Bank. It's for you, Tapan. Zakir from Dubai is holding 250 shares, bought at an average price of 825. Should he hold, sell, or average?
Hold.
Okay, all right. So that brings us to the end of this rapid fire round and time to step into a very, very short break. But if you've missed your queries on this side, then we'll definitely take it on the other side. So do stay tuned in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Welcome back. You're watching Ask Profit here at NDTV Profit. Now, for everybody who's went ahead and subscribed for Milky Mist IPO, and whether you've gotten a share of it or not, the interesting conversation is awaiting for you, because it got listed at a premium of around 17%, now trading almost 30% higher, so more people have gotten into it, and it's going to be an interesting one definitely to watch out for, to understand the company's action plan post the listing and guidance for upcoming quarters. Let's go across to my colleague Nimit, who's in conversation with the management.
Yeah, absolutely, Mahima. It's actually one of the most fascinating stories here, because it's a South Indian company started in a very small town in Tamil Nadu that manufactures paneer, and it's the largest manufacturer of paneer in the country, which is a product primarily consumed by North Indians. And it's listed at a fantastic premium here today. They're a bootstrapped company. And I'm here with Mr. Satish Kumar, who's the founder, chairman, and managing director of the company. Firstly, congratulations, Satish, on a fantastic listing. You had such a premium valuation. What do you think investors backed you for? What were the things that you thought that investors saw in a company like yours that gave you such a fantastic issue price?
Hi Nimit, good morning. Again, thank you for being in the show, NDTV Profit. We, Milky Mist, dairy product company, and now it's a packaged food company. I should say it's a bootstrapped company with 35 years legacy, and I'm the founder, and I started this business in 16 years I entered into the business, and a bootstrap company without raising equity. So today you see the today fashion is how much you are burning the cash and all the thing, but in our case, if you take last 15 years, if you take precisely, we never been in the PAT loss. We are always making the 100%. We make the profit. We are a profit-making company, and we grow more than 30% from the low base also, high base also. So, and I should say we are not telling the story much. We are telling our story. We have enough story to tell, but we are telling the less story to the investor.
So I think that's good, because I think the story now is of the story of the future, right? 30% CAGR is one thing you mentioned. It's substantially higher, almost double of most of your other competitors, although all of them do milk and you don't do milk at all. But I wanted to understand, is 30% something you're looking as sustainable? And what are the next boundaries to growth that you're seeing? What are the next chapters for Milky Mist to sustain that 30%, if that's what you think will happen?
Yeah, paneer is our flagship product, well ahead of the market. We first Milky Mist is the first company we came out with the packaged paneer in the market, and we made the first mover advantage is an early bird mover for the paneer. Paneer is predominantly it's a North Indian product, and we made this product in South. More than North, we consume. It's like a F&B, like a fruits and vegetables. We make paneer to consume in South, and also in an organized manner. See, the thing is, the day one, I came with hailing from very small farming background, but even though my always focus is only on from unorganized to organized. That is only from unbranded to branded, unpackaged to packaged. So we make if you take 2010 onwards, I'm exploring to a lot of European countries. We bring a lot of technologies. Why not? See, those days when you go to European market, they don't give the respect at all. Because the Indians means they buy only reconditioned machine. But we changed the complete narrative of the dairy, particularly in the product segment. Particularly if you take paneer, we give more attention, more focus on paneer. And also it is a 1 lakh crore market, this organized market. But if you take, we are in the very minuscule of only 10% all put together, not Milky Mist, all put together. 90% is still at the large headrooms still available. So ahead of the market requirement, whatever the European technologies are there, we invested with our own money, with the bank funding. almost 2,500 crore without raising any equity, and sitting in the village and raising 1,700 funding from the bank. It is not a small job, but we did that. We only clearly focusing on what we do. We don't cut copy paste of any of the dairy company, any of the peers. We go with our is a unique model of the business because.
So, I'll take that point from you, and you said one thing specific, that 90% headroom. Is that something I'm guessing you'll go into and organize that a lot more? One thing you spoke about is the amount of money you've raised also, right? Yeah. Sitting in a small town. So part of this IPO proceeds will go into deleveraging. A part of it is going into expanding your capacity. When looking into the future, if we could look at your plans, how is the company going to balance its expansion plans, especially going northwards in the country, with the leverage that it currently holds? How is that ratio going to change, and what is your thought behind how you're going to manage debt versus expansion?
See, actually, we are very, very comfortable in the position. Means today, half of the things it's going for our proceeding, it's going for repaying the debt. Balance it going for a project, and we are not going to repay complete debt. We keep almost approximately 800 crore debt, which is a very low cost funding from the. We are getting the animal husbandry and infrastructure scheme 3% interest. My net interest cost is for 800 crore is the 5.2%. So we keep the debt balance. We are going for expansion. We are coming out with one more plan. We already got 50 acres of land, which is not a part of IPO because at the time we didn't get the approval in place. Now we got the approval, and we are coming out with greenfield project in Baramati, Maharashtra, because we are getting very good, extremely good response from west and north markets. So, particularly if you take Skyr, Greek yogurt, we are more focusing on. See, now another thing is, if you take today whey protein all over the globe, whey protein is a very, very limited and a huge demand for whey protein. When the whey protein, when you make cheese only, you will get the whey protein. Otherwise, it is not possible. So, it is a very limited. Now that it's transferring to all the other products like paneer. The clean label product like fresh cheese, there is a cheddar, Gouda, Emmental, the specialty cheeses, and then Greek yogurt and Skyr. And these are the products we want to be a first mover. Again, we want to be a first mover advantage in these products, and we are doing that.
All right. Okay. So that was, of course, Satish Kumar, the chairman and managing director of Milky Mist, talking about what lies ahead of the company post listing. But definitely a good listing, and post that there's buying in also that's coming into the counter, now trading at around 181. So Milky Mist is the new kid on the street for sure. But let's start digging into your queries again, and I'll take the query which is coming from Sham, who's writing us from Bengaluru, asking about GSFC's buying price is 195 and wants to know whether to continue to hold this one or not. Swati, thank you so much for waiting by. What do you make of GSFC on the charts? Sorry, I think Swati, you're on mute.
I'm really sorry, Mahima.
No worries.
Looking towards the chart patterns, my view is a little bit cautious because the counter is trading in the formations of the low top, low bottom. So I will suggest if you're getting any rise towards to 165, 170 levels, try to exit the long positions. The short term to medium term, my view is a little bit cautious.
Okay, so that's the view coming in on GSFC. The next one that we have is on Studs Accessories. Ankur from Ghaziabad has been holding 400 shares, bought at an average price of 498. Says he's sitting on a loss of around 10% right now. Should he continue to hold, exit? Tapan, any view on this particular counter?
Well, if you see, the profitability is little bit volatile for this company, and I think from here also there will be demand will be there, but the margin pressure will be there. Somehow raw material volatility is there. So my take is better to move out from this stock. I think the headroom is little bit lower, so move out and go to a better sector.
All right. Okay. The next one that we have is on Tata Consumer. Anand from Goa is holding 50 shares at an average price of 950. He says that his long-term horizon is 3 years and wants to know if can go ahead and add more at the current market price. Tapan, you did mention Marico in that FMCG list, but do you think Tata Consumer also makes it to the cut?
It's a good stock. If you see the volume growth is also good, and again their margin expansion is happening, and premium products are coming up. That is where the margin may go up. The new products launches are also there, and Starbucks is also scaling some out. I'm positive about this stock. So yes, he can add, and if he can hold for 2-3 years, I think this may give better return.
Anand from Goa is holding 50 shares of Tata Consumer, bought at a price of 950. For the next 3 years, should he Right. The next query is coming in on Coal India. Subrata Mukherjee from Kolkata wants to know whether it's the right time to buy Coal India for a long term. Tapan, any view on Coal India here?
Well, my suggestion will buy on dips a little bit. I think the valuation is a little bit on a higher side. Of course, the dividend play is there and overall balance sheet is strong. But the government pricing intervention will be there in future. ECG transition risk is there. But capex is also rising for this company. So maybe around, you can say around 380 if we getting. I think that is the good level to enter for the long term.
Okay, the next one that we have is on LIC. Our viewer, Mr. A.K. Velu from Tamil Nadu has bought 900 shares at an average price of 950. Wants to know whether he can continue, and by the way, he's also gotten the bonus, so he wants to know whether he can continue to hold this one or not. Any recommendation on the chart, Swati, on LIC?
See, for longer term horizon, definitely my mind will suggest to hold on to long positions, because the counter, if we look towards on the weekly as such, it is under the sideways momentums. A positive move can be witnessed only if it manages to give the breakout of 430 levels or sustain above those levels. Then we will witness slowly and gradually positive move, which will take a counter towards to 470 to 480. So if you're looking for a medium to short term positions, then definitely you can hold on the LIC.
Right. The next query is again coming in on a new IPO, that is Dhoot Transmission. Balwant Modi from Rajkot has been allotted around 34 shares. Wants to know whether should he continue to hold or sell. Any future prospects on this, Tapan?
Yeah, currently hold. If you see the demand is stronger on this part, again, if you see the overall the cycle is, I think it may go up for this sector overall. Order pipeline is quite strong and capacity utilization will be good. But yes, one has to keep an eye on how the execution will be happening over the time. But at this level, I think one can hold this stock.
All right, okay. The next one that we have is coming in on a slightly smaller name. Our viewer Ishwar from Kolkata wants to know if he can go ahead and buy something like a Windlass Biotech in alternative of Sai Life Sciences, because saying that the latter one's P is quite high from a long-term perspective. Tapan, any view, because it's a small company?
Well, if you talk about this company, the profitability is quite volatile. Of course, the overall demand is strong, and they are going to have a good export growth also from here. New client addition is there. Of course, small cap is there, so you have to see the liquidity part. Asset light model is there, so that is not a problem. Even the balance sheet is quite strong. So yes, please hold this stock. I think even at dips, you can buy more also.
Right, the next is a caller query coming in from Hyderabad. Ravi, you can go ahead and ask your query.
Very good morning.
Good morning.
Thanks for taking the call. Actually, I have been reaching from using WhatsApp. So, I have a query on Morphin Lab. Just want to know the fundamentals.
Okay. Tapan, any view on Morphin Lab?
See, the stock has already run up a lot. If you see, the fundamental is quite good. Diagnostic demand is quite strong. Even if you see US business is quite growing, even the margin improvement and all that is good. Only thing is the API market, lot of competition is there and raw material volatility will be there. So you have to see the price pressure and all that. Balance sheet is all okay. Diagnostic growth is good. So at this level, he can hold on, but don't add the stock. Okay, don't add the stock, because I think the valuation is on our side. But hold the stock if he's already holding.
Okay, all right. The next one that we have is coming in on GE Shipping. Our viewer is holding 200 shares bought at the levels of 1287 from a 6 months outlook. Swati, on the charts, what would you recommend?
My view is positive because already we have witnessed a very sharp correction from almost 1800 to now 1250 levels. The slowly and steadily we will witness a gradually up move rally, which will take a counter towards to 1400 to 1440. So that is my immediate target. So you can hold on the long position. If you want to keep any kind of a stop loss, 1250 is acting as a crucial support levels. Maintaining that as a stop loss, hold the long positions for immediate target of 1400.
Okay, the next one is coming in from Prashant. He wants to know, Swati, the right entry price for entering into Thyrocare from a medium-term perspective. He's specifically asking for you, Swati. What would you recommend?
I would suggest to hold on for some more time. Good price it at around 520 to 500 will be the decent price to take a long position. Not at the current price because we might witness some sort of a selling pressure because already the chart is showing a negative divergence on the daily chart. So hold for some more time. Any dips towards to 500 can start accumulating the small quantity on every dips.
Right. The next query is on okay, Canara Bank or Punjab National Bank. What would be the better bet here is what Jagdish wants to know. Tapan, any view on Canara Bank or PNB, which is better?
I think Canara Bank is much better. No, if you see the credit growth will be around 10 to 12%, and their asset quality is much better. Of course, ROE is healthy. The only thing is, no, we have to see the deposit part now, how they are going to increase the deposit franchising. But if you see that this is a good stock in PSU segment, and capital adequacy is also strong. So yes, I'll go for Canara Bank compared to PNB.
Okay, all right. The next one that we have is coming in on IRB Infra. Our viewer has bought it at the levels of 21 rupees and wants to know whether to continue to hold this one or not. From medium-term perspective, Swati, your view on the charts?
My view at the current levels is little bit cautious. I will suggest to sell on rise strategy should be implemented. If you're getting any a price towards to 21 rupees, try to exit out because we might witness more selling pressure which will take a stock towards to 17 to 15 rupees. So try to exit the longs.
Okay. The next query is on Rain Industries. Siva from Amravati is holding 5,000 shares at a price of 190. Can he hold this counter for the next 3 months? Any view on this, Swati?
My view is bit cautious at the current market price. I will suggest to book your profits. At least you are getting at least 10 to 12 rupees at the CMP. Because downside it has a very good support at around 200. If it's break that level, then 180 levels can be seen in the near term future. So book your profits at the current market price.
Okay, all right. The next one that we have is coming in on Restaurant Brands Asia. This is from Neelam, who's writing us from Jaipur. She's bought 800 shares at the levels of 85. Says that it's done well for her. She's sitting on 20% profits. Wants to know the targets and stop loss for this one for the next 3 months. It's rallied quite a bit, Swati, on the back of good numbers coming in. But do you think this rally can sustain further or it's time to book profits?
I will suggest to book at least partial profits at the current market price because the already counter has witnessed a good amount of a profit, positive rally on the higher side. If it manages to give a breakout of 104 levels in the near term futures, then probably 10 points more rally we can witness up to 115 levels. But partial profits are recommended. Another partial you can maintain the stop loss of 98 rupees on the downside and hold your long positions for second partial, and the immediate target will be 115.
Next query is from Sumant from Hyderabad, holding around 300 shares of AB Capital, bought at a price of 421. Any short-term view on this? Swati, any targets if you could suggest?
Yeah, as of now, my view is a bit cautious in this particular stock because I don't feel that a strong momentum rally is likely to be catch up in the near term future. The counter has given the breakdown of the 20 days moving average. We might witness some more selling pressure, which will take a stock towards to 380 levels. So if you want to keep any profit stop loss, 390 is acting as a good support levels. By maintaining that as a stop loss, you can keep a long position. Positive momentum can be seen once the stock manages to give a breakout of 405 levels. Beyond that, 420 levels can be witnessed. So by keeping a 390 as a stop loss, you can hold on the longs.
All right, okay. The next one, Tapan, is coming in on Turtle Mint Fintech. Nagesh from Chennai wants to know from a slightly long-term perspective if this is a good hold or not, or maybe if he wants to enter the current market price. We've seen a good rally yesterday and that's continued today as well on the back of strong Q1 numbers coming in. What would you recommend?
The numbers are good overall and the management is also quite positive about this. If you see from here, I think we have to see how the margin pressure will be there. But I think here the revenue will be on the upside. And looking at the current situation, valuation looks a little bit expensive, but one can hold the stock for a little bit longer.
Okay, all right. The next one that we have is coming in, and this is on Interrock Builders, and this is from Kalyani, who's writing us from Telangana. She's spotted at the levels of 1694 and wants to know if this is the right counter to maybe add more at the current levels. Looking at the charts probably. Swati, what would you recommend?
I will not suggest to take a fresh long or add-on position at the current market price. But if you're getting any dips to 1650 or 1600 levels are the good levels to take a long position. So avoid for some more time a long position into this particular stock.
Okay, Padma from Bangalore on charts wants to know which would be a better bet, Polymed or TTK Healthcare. Swati?
Polymed and another counter is?
TTK Healthcare.
TTK Healthcare. If you look towards both the stock formations, we have already seen a very strong corrections. I believe TTK Healthcare looks promising at the CMP because the volumes and the price are going in hand. So at least 20-30% long positions can be created at the CMP. Downside, it has a crucial support nearby 1050 levels. So as long as hold those levels, my view will remain a positive, but only small quantity are advisable to take a long position, and immediate target will be at around 1200 to 1250 levels.
Okay, all right. The next one is coming in from Shankar, who's writing us from Bengaluru. Ask about Bellrise Industries. After Q1 results, should he go ahead and buy this one? He's planning to add 500 odd shares. Swati, what would you recommend?
Wait for some more time. Any dips towards to 220 levels will be the attractive levels to take the fresh long position. So hold for some more time.
Next query is from Sumana from Dubai, holding 225 shares of Prime Focus, bought at a price of 318, currently sitting on a loss of 10%. Is there a chance of turnaround or should she book loss? Tapan, any view, Prime Focus?
No, currently hold the stock. If you see the AI and VFX demand will be going up and no global content outsourcing is there. I think the content production recovery is there for this company. The only thing is media industry is quite cyclical, but for them no Hollywood recovery will be beneficial. So global clients are there. So yes, currently hold the stock at this level.
Okay, all right. So that is the view coming in on Prime Focus. But it's time for our second rapid fire round. Try to keep your answers as short as possible. The first one is coming in on Bombay Burma Trading, and this is from Raj, who's writing us from Jaipur. He's holding 100 shares at the levels of 1754. Long-term perspective, continue to hold. Exit average. Tapan?
Sell on rise.
The next query is on Control Print. It's for you, Swati. Raghav wants to know whether it's the right time to buy Control Print for 1 year.
No, not at the current market price. Any dips towards to 520, 500 are the good levels to take a fresh loss.
Okay, Mukka Proteins is the other one. Our viewer is holding 500 shares, bought at the levels of 35 rupees. Continue to hold. Sell average. Swati?
I will suggest to maintain the stop loss of 26 rupees on the downside, and you can hold on the long positions for a pullback rally of 30 rupees.
Okay.
The next query is on Repsol Solar. It's for you, Tapan. Sunil from Bangalore is holding 1010 shares of the company, bought at a price of 100 rupees. Should he hold for the next 5 years?
Yeah, currently hold.
Okay, the next one is coming in on Kalyan Jewelers. Our viewer Pramod from Rajasthan wants to know if this is the right time to enter into this one for the next 4 to 5 years. Tapan?
Yeah, good stock. Maybe around 10% down, you can start buying.
The next query is on L&T Finance. It's for you, Swati. Vijay from Chennai wants to know the short-term target for L&T Finance.
At the current levels, the upside looking at target for 325 to 330 levels.
Okay, IRFC from a long-term perspective, is this the right time to enter, Tapan?
No.
The next query is on Rail Lighting. It's for you, Swati. Jaydeep from Mumbai wants to know that should he continue to hold the 2,600 shares that he has bought at an average price of 692.
Yes, hold on for some more time. Any dips towards to 400 rupees can be look out for the average position.
Okay, the next one is from Piyush, who's holding HDFC Bank 200 shares at the levels of 750. Continue to hold. Sell. Tapan?
Hold.
The next query is on Bharti Hexacom, and it's for you, Swati. Angad from Indore wants to know whether it's the right time to enter Bharti Hexacom from medium-term perspective.
No, not at the current market price. Any dips towards to 1500 can be taken as a long position.
Okay, Transtrade Writing is the other one. Basavaraj from Bengaluru says he's bought it at the levels of 306, if I'm not wrong, and wants to know from the next 1 year perspective, can he continue to hold? Transtrade Lighting is what I'm talking about. Tapan?
Yeah, hold.
The next query is in Electronic Marts of India. and it's for you, Tapan. Siva from Amravati is holding 5,000 shares, bought at a price of 160. Should he continue to hold?
Yeah, hold.
Vishal, Megamart is the other one. Good time to enter this counter. Gaurav from Bengaluru wants to know. Swati, from a short-term perspective?
No, wait for some more time, Mahima. Any dips towards 200 to 95 rupees are the good levels to take a fresh loss.
Next query is on Sagility India. Rajan Iyer, and it's for you, Tapan. Rajan Iyer is holding 5,000 shares, bought at a price of 43. Should he continue to hold this?
Currently hold.
Okay, HAL is the other one. Jayaprada is holding at an average price of 4,500 and wants to know if she can go ahead and book profits, or what could be the next target price for this one. Swati?
I will suggest to hold on by maintaining a stop loss of 5,000 rupees on a downside, and immediate target will be 5,300 in the near-term future.
Okay.
Next query is on Piramal Pharma, and it's for you, Tapan. Arun from Hyderabad is holding 150 shares, bought a price of 175. Should he continue to hold this for long term? Tapan, Piramal Pharma.
Okay.
Okay, Swati, any view on Piramal Pharma?
Yes, view is positive. You can hold the long positions for a target of 220 to 225 rupees and place a stop loss of 200 rupees on a downside.
Okay, Tata Steel is the other one. Swati, this question is for you specifically. Sai Karthik from Dallas wants to know if this is the right time to enter and maybe targets for this one.
No, wait for some more time. Any dips towards to 165 to 160 levels are good levels to take a fresh long position, and after that we might witness a bounce back rally towards to 190 to 200 rupees.
Alright.
The next query is on Reliance Industries, and it's for you, Swati. Parag Nayak from Mumbai has bought one lot of Reliance August futures at a price of 1,328. Any targets that you could suggest?
Yes, I'm looking for a target of 1350 to 1370 levels, so you can hold on the longs.
Alright, so that's the view coming on Reliance, but with that we're completely out of time. Swati and Tapan, thank you so much for taking out the time and helping us answer all the queries that we managed to answer on this show. Viewers, if you've missed your query, of course you can tune in at 2 p.m. And ask your queries, and we'll try to answer them then. But like I said, completely out of time on this edition of Ask Profit, but do stay tuned in. KYC comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where we get you the hottest companies, and right now, of course, most of the companies have finished their Q1 numbers. But is there any alpha to be made from here or not? That's the big question. Let me give you some hints. Try to guess this company, and if you're from Bengaluru, I'm sure you must be guessing it very early. It's a Bengaluru-based managed workspace platform. Seen it all across in Tier 1 and Tier 2, Tier 3 places. The stock is still down 24% from the IPO price. Now the listing, you could say it's a recent listing, July 30th, 2025, and remember this company is coming second time in KYC. So I'm going to give you the history also, but you need to wait with me. Mutual funds have 9.3% stake in the company. The company in focus is IndiCube. This is the company which I'm talking about, IndiCube Spaces. You must have heard about it or seen it across the common working space platforms, be it GCC startups or unicorns. But why are we calling this company right now? What's the relevance of getting this company right now? Is it the valuations turning cheap, or is the Q1 numbers coming good? Because of that, the operational leverages. We need to understand that from the management, how to actually judge or value this kind of a company or the industry. Expansion and growth plans ahead, this is very much important. We will be tracking the operational numbers also, how it's faring for IndiCube Spaces. Also, another important question would be understanding the key accounting treatments. There's a lot of fair value treatments. Is Dalal Street understanding this kind of a model? That's the big question to be asked. Also, the GCC explosion, the India story. We have already spoken to a lot of peers, and now the company comes and shares their slice of history or the future. What's the moat of the company versus peers? How different is it, or is it not? Next question is, of course, apart from this moat, we'll try to understand the revenue contribution from the value added segment. That has been increasing, from 11% to 17% in the first quarter. And of course, the usual numbers, the occupancy guidances and the client mix. Is it changing? Is there some new trend which we can discuss? So a lot of these important questions is something where we'll have a discussion with the management. But let's understand the business first. ये धंधा क्या है? Accounting treatment क्या लगता है? These are the basic things with a lot of viewers write and message to me, and I'm going to break it down and make it very easy for you. If you're a budding analyst, you should be listening to this segment. Now, the integrated management office space platform, that's what the company is all about. But let's get into the details about it. There are some brands like Grow, Design Cube and IndiCare as well. This is the products profile for the company. The company offers managed workspaces. There's of course design and fitment and build solutions also. It's not just a bare shell office. You can of course do some flexi work as well, or you can change the overall interiors. The company offers efficient commercial space operations as well. That's one way to put things. Also, they have 855 clients. GCC Global Capability Center, that revenue share is roughly 53% of the total revenue. So this is a very big play on India's GCC explosion story. 65% clients have 300 plus seats, and that is a good healthy sign if you are studying this industry. The value-added services, that's where it has gone up. It's up to at 17%. This adds more margins to it, and as the scale comes up, there's an operating leverage at play also for a business model like this. Apart from this, the occupied area share, how things move on, almost 49% of that comes from the GCC segment, but second followed by the Indian corporates. Also, there is exposure from the startups and unicorn, and this is the total setup looking like when it comes to the occupied area share. Moving ahead, what's the business? Dhanda kya hai? This is the most important thing, and you should take a screenshot or share with your friends also if you are trying to understand this industry, especially for the company specific. Now, this takes roughly 55 to 60%, one center to come break even, and that is 6 months. It takes that much only. That's a good point actually. Occupancy stabilizes at 85 to 90% within 12 months. So these are the numbers you should be tracking. 6 months, 12 months we discussed. Another important Dhanda model is the capex payback. The entire setup, the entire capex comes back in 36 minutes if you invest. So these are the 3 numbers you should be tracking. But India's GCC story is exploding. 2,400 GCCs expected by 2030 and 115 every new year. So you can imagine how big the industry is getting. Also, second portion is their market size is at $110 billion. That's the growth coming in. Third important point I would like to point is the grade A demand by GCC. This is around 40 to 50%, and the story is playing out in this sector. Also, India has posted a record 24.6 million square feet of office leasing in April to June quarter. Second data which is very important to share with you is the grade A demand has outrun the new office space since 2022. So you can imagine more formalization, more MNCs, more startups, and flex space is the India's #1 office occupier. Almost 27% of second quarter leasing of calendar year 2026 was done. But what may work for the company? And we have done a detailed analysis and I've given you 2 portions of it. Analysts have a bullish stance. I'm going to share with you the number of analysts tracking the stock. A strong operational growth is something which the company has delivered. Third important point has to be the beneficiary of GCC explosion. This is the mega trend which we have identified, and it's expected to go up going ahead. Significant reduction coming in the debt to equity ratio. That also augurs well, and we have given more time now to the company to judge. 3.87 million square foot of occupancy headroom is there. So there is a good revenue visibility going ahead as well. But there are some concerns also for the stock. The valuations still remain fairly expensive. That's the first reason. Second one, there is no major addition from institutions post listing. That means the stake has been largely flattish. There hasn't been an increase of FI or DI exposure. Sector right now is out of flavor on Dalal Street right now. Even though the GCC story is going on, seems like the market is not giving premium to this sector, and complex accounting adjustments are there. That is where the market is not able to understand EPS track kare ki koi operational parameter track kare. So concerns are there, but not major concerns to be honest. So this is the entire picture for IndiCube spaces when it comes to the good and the bad. But let's try to understand more with our own analysis. This is the KYC ratings which I talk about. Of course, we are going to get you the income statement, balance sheet, cash flow, the usual ones. But today, instead of return ratios, I'm getting operational parameters. It doesn't make sense to judge the company right now in the stage of the business model it is. And that's why we tweak operational parameters also. Shareholding street cred, now it's almost 1 year. This is the second time the company is coming in KYC after 6 months. So we'll see how much of changes has happened. Valuations, we'll get its 3 more peers and compare that. But this time we're going to do on price to book. Analyst stake is very much important, and why analysts are bullish, those reasons also we'll definitely discuss. So 8 parameters where we'll be judging the company. But let's start with the first parameter, the income statement. Remember, the Q1 numbers were strong. The operational numbers were already strong. The 3-year CAGR numbers, the top line looks strong as well. Now you must be wondering this, is it profitable or not, the company? Yes, the company is profitable. First quarter we have seen that, but the losses are reducing. This is how the business model plays out in a system like this. They are going for scale operations, and now slowly the operational leverage will play out. So as of now, overall looking at the numbers, the Q1 numbers are also decent. The margins were flattish around 61%, but look at the top line growth. This is where we're seeing a good magic happening. And when we are judging a company like this at this stage, I'm going to give this a strong thumbs up for the income statement. This is of course the margins, and this is something that 58 to 61% looks sustainable going ahead. But let's talk about balance sheet also. Income statement we have done. Balance sheet, the debt equity ratio has come down. They have mentioned that in the first quarter. That is where a little bit of strength comes in. Largely these balance sheets are pretty light. It's not very heavy. Of course, remember there are adjustments, accounting standards at play, a little bit of confusion, but the management will clarify that as well. A decent cash amount also for the expansion, 385 crores to be precise in FY26. So balance sheet also is a strong thumbs up. So we spoke about income statement, we spoke about balance sheet. Let's try to understand the cash flow. Largely the cash flow segment, their expenses are also comes in at times, but the cash flow from operations here, a little bit of, you could say adjustments are there. That's why a lumpiness comes in our analysis, especially the PAT numbers. This looks higher side, but the cash flow of operations is a bit erratic. This is a business model, and there is a lot of accounting adjustments also. To take things with a pinch of salt whenever you analyze. It's not the entire story comes from just these two numbers. So because of that, a benefit of doubt, since Dalal Seat also wants to understand more, I'm going to give this a neutral rating right now for cash flow as well. Also operational highlights, this is something which I have picked up instead of return ratios. There is area under management, there is centers, number of seats, all of them above 14% year-on-year basis growth, and this is what the street actually wants. At least the operational parameters should be good or growing at a decent pace, and that's why they might justify valuations later on. The total occupancy has gone up as well. It's around 86% right now. So these are the operational highlights, and this is a strong thumbs up from my side as well. But shareholding, let's see what's happened. And shareholding, actually nothing has happened. That's the maybe a concern or maybe a positive point. Either way you can look at it, the glass is half filled. Promoter stake has been stable at 60%, a minor increase maybe for the FIs, but it's in smaller digits. Slight dip for DIs, 14%, so nothing major has happened. So I'm going to give this a neutral rating when it comes to the shareholding as well. Apart from shareholding, let's talk about the street cred, what has happened. Largely the numbers we see from March lows, the stock has gone up and given 34% returns, and good buying is happening at these lower levels. But nevertheless, from IPO price, the stock is still down 24%. 2026 it's down, as well as 2025. So from the IPO you haven't made money, but has it been a trade bet? Yes, you have made money. So I'm going to give this a neutral rating for the street cred. But apart from street cred, let's talk about valuations, how things pan out. And valuations also have taken price to book ratio, the 12 months forward numbers. IndiCube comes in at higher with SmartWorks, both of them on the higher side price to book. This is the ratio which I'm talking about, almost 8 times. Compare that with the other peers, they are on the lower side. Talk about Office as well as EFCI, all around that 2.6 to 3 times. But net the stock market actually is still not giving a proper value to it, because there is a little bit of concern. What's the profitability, the path to profitability? And of course the company has turned profitable, but what are the actual valuations right now? And right now we are still in the earlier cycle of the business segment. So I'm going to give this a neutral rating for valuations. This is the analyst outtake, 83%. There are totally 6 analysts tracking. 83% of them have a buy rating, and from current levels, almost a 40-50% return potential is coming at 267 rupees per share. That's the 12-month return potential. So it's a strong thumbs up when it comes to the overall analyst rating. So now let's understand and give you the total picture of the KYC ratings for August, which the company has come. Remember, the company had come earlier also, especially in the month of February when it was very newly minted IPO. Income statement, balance sheet is pretty strong, so I've given this a thumbs up. Cash flows, take things with a pinch of salt right now. So accounting adjustment entries and a lot more. Operational parameters were decent. The Q1 numbers started coming up. So slowly the market is digesting the model. Shareholding, street cred, nothing much has moved. So I've given this a neutral rating. Valuations also, I'm going to give this, it's slightly towards the higher side, but I've kept it neutral. But analysts remain bullish in this counter. 83% of them have a buy rating. So totally KYC rating is 6 out of 8. On the higher side for IndiCube spaces, but has this improved from the last time? That's the main question. The KYC ratings in the month of February was 4.5 out of 8, and now almost 6 months down the line it is at 6 out of 8. So there is a good improvement in the company, and of course we have given a little bit more time to judge the company and understand more. So that's a pretty interesting take, to be honest. But the conversation continues with the management of the company, and we'll be joined in by Rishi Das, the co-founder and CEO of the company. He has almost 3 decades of experience, be it HR, talent acquisition, and even you could say the overall commercial real estate. So all of them are actually co-relational. There is a good interrelation here. He's a co-founder of CareerNet Consulting as well as Hire Pro Consulting and education from IIT Roorkee as well. So the conversation will continue shortly with Rishi Das, but just after a short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Trust me.
Hello and welcome to Know Your Company, and now we are joined in by Rishi Das, co-founder and CEO of IndiCube Spaces. Welcome back, Rishi, to KYC. Last time we had you in the month of February. It's been 6 months, and yes, things have improved a lot, and Q1 numbers is something, speaking of improvement, has done really well as well. Wanted to understand, Rishi, now Dalal Street is trying to understand your business model of your company and the industry also. How does this margin outlook play out? Is this normalizing? Are we going to get some good, estimations for FY27, how things look since operational leverages kick in now?
Yeah, thank you, Sharad. Thank you so much. Yeah, so talking about the margin, as you can see, we are at about 20% of the EBITDA margin, and we are very hopeful that we will be around that range. And we see from a guidance point of view, it will range between 19 going up to 21%. So I think we have achieved, as you rightly highlighted, the economies of scale, the operating leverage. All that is there in the business. So, and also I would like to highlight that in our category, we have the best margin profile. So we are very hopeful that we should be able to maintain the margin outlook for this financial year as well as even for the next financial year.
Margin profile will be maintained for the next 2 financial years. But Rishi, let's understand a little bit. There's always that accounting adjustment or treatments which happen because of different accounting standards, how to value your company. And at times there is, you could say, the markets misprice it. So just wanted to understand what are those, treatments in the lease or the accounting segment which one should understand when somebody is studying your company.
Yeah, so I think the one very important metric is to what we have been publishing very regularly is the IGAP equivalent, because as you will be aware that in our industry, all the leases are capitalized, and then the depreciation on that is accounted for. As a result, if you go by the Ind AS accounting standard, you will see a very, very high EBITDA margin, and then you start seeing a PAT negative. So the right way to look at our business or any other business which is having leases, whether it's a PVR or any hotel which has leases, those kind of businesses, you will always see that the IGAP gives a better reflection. And in our business, I will always encourage people to look at the PAT, which is a very healthy now, and we have been paying income taxes regularly. So as what you have on your screen is a Ind AS equivalent. But if you look at the IGAP numbers, they give a very, very realistic picture, and that is, I must say, a very old school traditional accounting standard that we have been using all the while to value the businesses. So by that accounting standard, we have a 20% EBITDA margin. Our PAT is very healthy at about 8 to 9%. So I think that is a better metric to look at our category and IndiCube in particular.
That's very interestingly, you have given a good clarification for all the budding analysts and stakeholders and investors valuing your company or even the industry. But speaking of industry, you are also an industry spokesperson. The GCC explosion is on everybody's mind, and of course, you are also having a majority chunk of your revenue and area occupation under that. How do you see this happening for the industry, and how good is your company placed here?
So very rightly highlighted. Today, as I talk to you, if you look at by area, about 49% of our area is occupied by global capability centers, and their share in our revenue contribution is 53%. And this is on an upward trajectory. Clearly, we see that there will be improvement on that. But I must also say that if you look at our overall portfolio, is quite balanced. Like about close to, I will say 23-24% of our revenue area, basically occupied area, comes from the startup, the unicorns, the late stage companies. Another about 28% comes from Indian enterprises. And when I say Indian enterprises, it includes the IT sector or our traditional companies like Mahindra Logistics, or you talk about Ashok Leyland, TVS Group. Those kind of enterprises constitute about 28% of our revenue, and 49% is the global capability centers. And going by the current trend in the industry, we see that the global capability centers will continue to absorb a large chunk of office spaces, typically over the next maybe 2 to 3 years. That's what we are very hopeful of.
And sir, speaking of the expansion and the growth plans, the India story is not just in tier 1. Tier 2, Tier 3 also, across my travels, be it Coimbatore, Surat, Siliguri, Raipur, everywhere I am seeing a good action happening in Tier 2, Tier 3 also. How is IndiCube space placed here? What are your expansion and the growth plans?
So very good point. One big shift, Sharad, I must say, what has happened post-COVID is the work is going where people are. See, earlier, if you look at when we started our careers, we went where work was. Somebody like me came from Lucknow to Bangalore, 2,000 miles for work. But today, work is going where people are. So that's a very, very healthy shift. And there is a rise of a lot of tier 2 cities. So totally, if you see today, we are present in 17 cities, and we are present in 8 tier 2 cities. With Coimbatore, we have scaled up quite well. We are now almost 4.5 lakh square feet in Coimbatore. And Coimbatore is the only non-capital South Indian city in South India whose population is more than 30 lakhs. So likewise, I must say that we are now present in Cochin, Visakhapatnam, then we are in Indore, Bhubaneswar, Mohali, like that. So tier 2 story is here to stay. Also, I would like to say that if you look at China, there are 120 plus cities in China whose population is 1 million plus. In India, we have close to 50 such cities. So you can imagine over the next 20 years, we are going to at least add maybe 50 more cities whose population is going to be 1 million plus. So we will see job growth going more democratized more in terms of their spread rather than being only concentrated in the top cities.
Right. And Rishi, speaking of value-added services, there has been a significant jump, 11% last quarter, corresponding year, and now it's at 17%. That is a significant jump. Any kind of growth targets, expecting 25 to 30% of this contribution going ahead in future?
So we definitely see this on an upward trajectory. I can't say that it will be 25 or 30, but definitely we see it touching close to 20% in maybe the next year. Because what is happening, Sharad, the customers who have come to us looking for space, the customer is not only having that as an office. The customer has 5 or 10 or 20 more offices, which has nothing to do with IndiCube per se. So the customer is coming to us and saying that, can you do stuff for us there also? Suppose they already have a space, they are looking for renovation, they are looking for interiors, or they are saying, okay, can you only provide us services in those spaces if interiors are also there? So we are seeing that is a very, very healthy trend, that the customer, once they like our services, our interiors and everything, then they are giving us the opportunity to expand us across their pan-India portfolio. So a lot of vast growth is happening
Rishi,
because
sir,
of that.
increases. Right. So the wallet share of the existing customer starts increasing when you do cross-selling as well as value-added services.
Correct,
Any kind of occupancy guidance and the client mix for the future? I think currently it's at around 86%.
Yeah. So we track two types of occupancy, Sharad. One is a occupancy which is for overall occupancy, and as you rightly highlighted, we are at 86%, and this is high. Typically, we try to maintain our overall occupancy between 82 to 85%. And then we have the concept of steady state centers, because when we pick up any property, it takes us about 9 to 12 months to make the center reach a steady state, which is like 90% plus occupancy. So our steady state occupancy is about 90%, and that we see typically hovers between 86 to 90%. And also that is a function of, suppose in a given quarter, a very large supply has got added. You will see the occupancy slightly dipping, like that kind of a thing.
Right. And
So,
Rishi sir, we are
yeah.
coming short of time. I just have 25-30 seconds. In 3 lines, you have to say me what's your moat of your company against your peers.
Our big moat is, one is workspaces for everyone. We don't believe that we are providing spaces only to a startup or a GCC. So we have workspaces like hotels at every different price point. Second is we follow the talent. We go wherever the talent is. We are not married to only one size of building or one quality of building. That is the other one. And then, of course, the value-added services.
That's very nicely put, and thank you very much, Rishi sir, for giving your time for the company, its growth prospects, and of course the great Indian GCC explosion story as well. It's always a pleasure to have you with us at NDTV Profit. So that's the management of IndiCube Spaces. The stock is below its IPO price, but management has done well on the Q1 numbers, and since last time in KYC, they have improved their ratings in the last 6 months. But will Dalal Street give premium to it? That's the big question. So for these interesting stories, stay tuned to NDTV Profit and keep watching KYC.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Benchmarks hover close to the day's lowest level at the moment with Nifty 50 clutching onto the 24,200 levels. Sensex sheds more than 300 points. IT sulks in trade while pharma, energy, auto remain resilient. Oil prices extend gains as hopes for a near-term US-Iran deal fell, while a fresh vessel attack in the Strait of Hormuz renewed the supply concerns and Brent moved towards $92 a barrel. Electronics manufacturing stocks gained after the government cleared the fresh ECMS proposals. The latest approvals take the scheme's total projects and investments significantly higher, strengthening the sector's growth outlook. Milky Mist shares listed at an 18% premium, making a strong debut on the exchanges today. The packaged food company's IPO had seen robust investor demand, with the issue subscribed over 56 times. Tube Investments expects margins to recover as it passes on the higher steel costs. The company targets double-digit EBIT margin improvement, with key businesses expected to return to the earlier levels. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and let's take it straight to the market action today. And yes, I've got the color right when it comes to the market movement yet again today. And yes, it's a sluggish day of trade with pressure building in several pockets. Starting with the benchmark indices, well, the Nifty 50 is 0.35% down. The critical thing to note here is that Nifty 50 is finding comfort closer to 24,200 levels, that too holding it by the teeth, and that's what is worrying at this particular moment. But all that concern is really coming in because of the global cues being weak for India, and the biggest global cue that the Indian market has been absolutely reacting to is the crude oil prices. So with no negotiation and peace deal in sight between US and Iran, and several events of escalation as well as supply chain constraints, it's the crude oil prices which is having a huge impact on the Indian markets as well. So above $90 per barrel, that's where the crude is really trending today, and that's really causing some bit of worry in the Indian market. In fact, take a look at some of the internals as well. While Bank Nifty is trending closer to where the benchmark indices are, it's the mid-cap universe also pretty much in the similar line, so 0.3% down on mid-cap and the broader market as well. If we really take a look at some of the big companies and the heavyweights which really impact the contribution on Nifty 50, well, big boy Reliance Industries, M&M as well as Axis Bank are adding some bit of contribution, but that's marginal because on the downside is coming in from big boy from the IT sector, Infosys, which is really eroding about 20 points coming in, Bharti Airtel, HDFC Bank, ICICI Bank. So it's banks as well as IT and even Bharti Airtel. These are the three bits which are really point of worry for Nifty 50. In terms of the sectoral play, oil and gas, auto as well as defense are the ones which are resilient. But on the downside, remember, IT is going through its own huge volatility when there are days when it is the biggest gainer and there are days when it's the biggest dragger, and that's for today. In fact, bank is really taking the charge when it comes to the downward movement. Let's talk more about the markets and understand how to really play this kind of volatility in uncertain times. And Bhavin Shah, who's the founder and CIO at Samiksha Capital, joins in. Bhavin, always a pleasure to welcome you on NDTV Profit. My first question to you, given this kind of uncertainty where the Indian market is also reacting on a daily basis on the mood swings of crude oil prices, how does one really strategize and play in this market?
Yeah, I think if you look at the events over last several months, I mean, we have had this uncertainty. We have had this situation where, looks like there is going to be a final, sort of lasting peace, and then again, the matter just kind of flares up again. But I think one thing is, one can, you talk about strategizing. One thing we can count on is that while this increase in crude price and then the disruptions in supply chains, all that affects India. It also affects many other countries, including the large economies of United States or even Europe, and nobody in most of the world gets affected by it. So I think if it's an issue for us, it's even bigger issue for the countries like US. And so I continue to believe that they will still try to find a solution or some way way to call it and without accepting kind of a defeat. That's where it is, it's going to go. So I think when you see this sort of correction, one can think about looking beyond this period of uncertainty and sort of plan ahead is what I would like to say.
Right. Bhavin, you said that plan ahead is a better strategy at this point. While planning ahead in the medium to short-term play, what are the factors besides crude oil prices where we have no control, but we have a little bit of visibility on our next earnings cycle? Because half of this particular quarter has seen volatility and upward movement on crude oil prices impacting the raw material, transportation and supply chain on several sectors. Looking at this, the monsoon impact as well as the festive season impact offsetting a large part of these concerns, and on the other hand, the earnings parameters. How do you really categorize these factors and bake it into the market momentum? How much of the negative or the positive is already built in, and how much remains to be seen?
Well, I mean, I think clearly if it's sort of a really negative scenario is not built in. But at the same time, the strong earnings growth that we saw in the first quarter across the board, and the underlying indications of demand strengthening, economy gaining momentum, those are things that hopefully are still, going to help us, especially on the domestic consumption side. And I think whatever the sectors that benefit from them, credit growth has been very strong. If you look at the results and of the our monthly updates on the credit growth, so there is a lot happening in the economy, which one can expect to continue. Provided obviously the situation doesn't with the Middle East doesn't completely go out of control, and we end up with very high crude prices and more disruptions. So I think what I'm saying is that we are on a very strong footing, and I think in fact, with every quarter, if you look at last 2 or 3 quarters, the moment and the revenue and earnings growth has accelerated. And so I think even if there is some bit of dampening, that comes through because of the current environment, I still think that underlying factors helping the economy will sustain. And, we could still have a reasonable earnings growth to work with, and which I think is creating opportunities in many sectors.
Which sectors then, Bhavin, are you looking at opportunities? You said that earnings will provide many such opportunities for investments. So which are the pockets which are looking good at these valuations to really enter?
Well, I think you can look at, for example, companies catering to even as simple as, some of the rice exporters. I think there is a very, they have, many growth drivers in play, and domestically also there is a move towards premiumization and, brand support. You can look at, companies in the financial space, maybe look beyond, the banks, but like say smaller NBFCs who are benefiting from stronger credit growth. We continue to see very good growth in the healthcare space. So that I think remains interesting for us. And even some of the kind of manufacturing related, government has come out with the next generation, sort of next cycle of the PLI. And I think, it's going to drive more localization, backward integration. So the companies which are participating in that, and then, that also looks interesting.
Bhavin, two things I want to ask. Is this market buy on dips, and especially banking sector, which takes the maximum hit of the economic concerns regarding Indian market, is that still buy on dips, and to what extent? How are you apportioning the buy on dip strategy at this current moment? And also, how much of percentage of cash would you keep for a further downside risk that may be coming up?
I mean, I think we see if we talk about banking sector, the challenge there is with respect to especially the private sector banks. There is a bit of a growth. Large banks are really a growth issue, and then some of the well-known names also going through some internal issues. So there is not a whole lot of opportunities in the large private sector banks, in my view, at this point. But in terms of how much cash to keep, we have very low cash, to be honest. But we are looking at maybe exiting some names where we think we don't see enough participation in the economic recovery, and maybe so we are trying to also increase our cash levels where we don't see the thesis playing out as well. But overall, we are actually at a very low cash level, so we haven't really try to basically position for a more difficult scenario, so to speak, going ahead.
All right, so mostly positive, but Bhavin, my final question to you, in terms of the rest of the year, how are you seeing the inflation bit? And also the market is probably baking in a 25 basis points rate hike by the RBI. So RBI's action, pressure on the market already with the higher costs and the inflationary pressures impacting consumption. How are you putting this all together and making sense of the market, and what would be your action as well as analysis on that front?
Yeah, I mean, I think it's a fair point. We already seen a little bit of increase in inflation, and if this kind of high crude prices stay elevated, maybe there is some more. There could be some also effect also of so if some parts of the country have weaker monsoon. I mean, it's one of the inputs, and I think it needs to be baked into any kind of forecast. But it's again not a overriding kind of overwhelming factor at this point, given the underlying momentum in the economy, I would say.
All right, Bhavin Shah, always a pleasure to chat with you, and overall positive on the long-term potential of this market. Thank you so much for sharing your time and views with NDTV Profit.
Thank you.
Thank you. All right, moving on to the earnings momentum then, and Solex Energy is on our radar at the current moment. The stock is up almost 3.5% at this point, and it sees FY27 as a transition year, remember, with Q1 hit by seasonal weakness and expansion costs, but a strong order book. Now, the H2 execution pickup as well as maintained guidance keep the growth story intact. So, even though there has been a dip in the EBITDA margin for the company, the growth guidance for the second half of this particular year has really perked up that particular counter. Let's get chatting with the management on what's really creating this positivity around the plans as well as the guidance going forward. Dr. Chetan Shah, who's the chairman and managing director of Solex Energy, joins in now. Dr. Shah, always a pleasure to welcome you on NDTV Profit. First, I wanted to understand, you've given a good guidance. Of course, you are in an expansionary position, but the performance related margin, that is the profitability aspect that we really look at, and purely based on the performance parameters, there the EBITDA margin has taken a dip on a year-on-year basis. Of course, it's seasonally weak, but it's really comparing to the similar seasonally weak quarter in the last year. Can you help us understand that, and also give us a guidance in terms of what is it that will change to really match with your overall guidance for the margin for the year?
Yeah, thank you. In fact, thank you for the question. It's a seasonal effect, definitely for sure. And then last quarter also we had the same impact. This year we have some additional impact, which is a ALCM. And ALCM created a lot of confusion in the market, and that's the reason there are deferment in deliveries and decision making, and that is the reason the Q1 numbers are impacted. Apart from that, we had expansion in last quarter of previous financial year, so we are loaded with a lot of depreciation and interest costs on our expanded capacity also. But nevertheless, it's H1, which is always lighter. We have seen for many decades that H1 is always lighter, and we are always heavy with H2. Considering our previous year performance, our this year also, as per our guidance, we will have a much better, superior H2, and we will cover up whatever that impact due to the ALCM we had in first quarter.
All right, so confident for the future, and of course you spoke about the various execution related pressure points on the balance sheet as well, especially with the finance charges and the interest cost. How are you positioned when it comes to capex? Do you need more fundraise at this particular time? And with the finance charges, is that going to remain at these current levels? What is your prediction and projection for this financial year and the next?
Yeah, so for module business, we are not expanding at this stage. We announced our expansion, addition of our 2.5 module capacity by 2.5 gigawatt. But at this stage, considering the current market situation and the availability of the capacity in the market, we have decided not to go for the further expansion for module. So for module business, we will not have any additional capex and the cost of finance. But yes, as we mentioned about our expansion plan in cell manufacturing and BESS, we already signed MOU with the government of Gujarat for 4,000 crore, where we are putting up a 5 gigawatt of cell, which is in two phases, 2.2 gigawatt and 3 gigawatt. And so 2.2 gigawatt will have capex of almost about 10150 crore, that is 1050 crore. And BESS, we are targeting 10 gigawatt of BESS, battery pack and container manufacturing. So this we will do in two phases of 5 plus 5. So this will also attract another capex of 250 crore around. So for this we have a subsidiaries, and then those capex will be done in those subsidiaries. And in LISCO directly we do not have any expansion plan for the module.
Right. So, Dr. Shah, you have charted out the expansion projects. Now, I want to understand, in terms of your timelines and quarter-to-quarter performance uptick that you see, either because of commissioning of some of the capex and also the order book execution. Can you give us a sense of next 2 quarters visibility and beyond that, where the uptick in the performance will start to kick in?
Yeah. So basically, we do have a clear visibility for the H2, that is a Q3 and Q4. And this is a monsoon season, Q1 and Q2, and then affected by the hail same as well. But then, these are H2 is loaded, and we are already having order worth of 1,500 crore, which are the backed by the advances and PO from our customer, which are to be executed in H2. And then we have MSA already signed, and final round of documentation which is going on for the order worth of somewhere about 2,300 crore. So for the solar modules. So these are the orders that we need to execute in H2 and then the first part of the Q1 of the next financial year. So we have given we are in line with our guidance for the FY27, and we will be able to execute this.
Right. Also, Dr. Shah, what is the module realization trend that you are seeing in the present quarter versus the last quarter?
If you are meant by the utilization of our install capacity, I would like to say that this year we are taking a very conservative numbers. We have a 4 gigawatt nameplate capacity with the availability of 3 gigawatt production. So last financial year, particularly in the last quarter of the financial year, FY26, we reached up to 90% of our utilization. So this year we are going little conservative, and average utilization will be almost about 55% of our total nameplate capacity. This is what we are targeting.
Right. Cell manufacturing, Dr. Shah, is something very critical to the overall green energy thrust for the country. And that's where a lot of opportunity really lies. But as the technology really develops and it becomes more cheaper, it is much better. With your backward integration, and you already called that cell manufacturing is in the next earnings and at an inflection point. What is the margin improvement internally that you are going to see with the backward integration and the full chain and bouquet that you are creating in this particular space?
Yeah, so again, we are, giving some very conservative numbers as far as the margins are concerned, because our cell manufacturing will be become operational by December 2027, and by that time we see many other capacity also to come up, and then cost will be a little bit on a downside. But nevertheless, like we are considering EBITDA margin of somewhere about 20%, and with a PAT margin of around 10 to 12% after having our own cell manufacturing for our captive use.
Right. And finally, and very quickly, Dr. Shah, a little bit of more strategy on BESS opportunity for the company.
Yeah, so BESS is something which is the need of an hour for India. We do have a lot of challenges in terms of solar generation in daytime, and then evacuation not possible fully at daytime because of the limitation on uses. So BESS is something which is coming very fast. 100 gigawatts of orders are already awarded. Another 100 gigawatts are under preparation. So India will have a huge demand for the battery packs, the containerized solution for the storage, and the government is quite conscious about it. So the Solex has, is aligned with the demand. And we are planning to come up with the 5 gigawatt in first phase. We are coming up with the 5 gigawatt of BESS, battery pack and containerized solution. And this is what we are targeting in coming 12 to 14 months to become operational. Right. And for that, we are already tying up with the technology expert, international technology experts. Some of them are from the Europe as well. And yes. So this will actually bring us give us the advantage over the other company.
Right. Dr. Chetan Shah, it's always a pleasure to really take stock of all that expansion as well as the new projects that are really underway. All the best for this particular quarter, and the company is really in a formative stage in different areas of green energy, trying to capitalize on that particular potential. 2.5% up. Stock has taken a slight bit of dip with conservative outlook from the management. Moving forward to some news developments today, and government and Meta are discussing stronger measures to really tackle the child sexual abuse material and harmful content online. And sources say that Meta is improving moderation systems while Meta continues to really examine the concerns around the usernames. My colleague Rishabh has been really pouring in on the details on this development. Rishabh joins in with all the details on what measures are being taken and the government's discussions with Meta. Rishabh.
Absolutely. What we're picking up on the continuing engagement between the government and Meta is the fact that there is certain action that the government is now seeing that Meta is taking against various issues that were brought up over last week's meetings with the global team as well as the local team here in India. What we've seen is that firstly, action has been taken against child sexual abuse material proliferation that has been taking place across various Meta platforms. What the government and what various sources are also telling us is that Meta is being cautious on that, and there's more and more work being done to ensure that CSAM is not being proliferated on these platforms. What we're also seeing is that, of course, the government has already warned that safe harbor may not be available in these instances where content that is clearly violative of Indian law is being carried on these platforms, and that's what we're seeing. What we're also seeing is that Meta is also taking action to moderate content better on its platform. For example, if a certain piece of content has already been flagged and taken down, the reappearance of it has been an issue, and that is also something that Meta is combating with its various sort of technology, various maneuvers that it has been placing across its platforms. What we're also seeing is that the fact that social media addiction, CSAM, all of these are sort of harms that come with social media, and there needs to be a right balance between the goods of social media as well as the harms of social media, and the government's intent is to sort of have the platforms on that fine line of social media goods and harms, and that's what the government is also pushing these platforms to do better. On the usernames issue, what we're seeing is that the government is still examining what is to be done. The rollout, whether or not it will happen of WhatsApp usernames or be it Telegram or Signal, that is also still in the works, and the government is still examining those submissions. So that's what we're picking up on the continued engagement between the government as well as Meta on various issues.
All right, thanks Rishabh. A very important development there. Completely out of time on this edition of Markets at 12, but keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV and Viksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlot studio with me, Hiral Dadia, and Sharad Dubey, who's standing at the Profit Market Pit. Sharad, good afternoon. I mean, the mood continues to remain lackluster. We've come off the lows, I would say, to some extent, but that phase of consolidation, sell-on rise, that's what you're looking at.
Well, that's right. Good afternoon, Hiral. And looking at the markets, a slight recovery from day's low, but still a very narrow range bound of trade coming in. Let's pull in Nifty Bank also to show you what's happening here. Overall, largely here also a minor recovery is at play. That's what we are looking at. But what are the key factors to watch out for? That's also pretty much important. Let's get in those factors as well. There is volatility happening for both Nifty and Nifty Bank. And importantly, the support numbers is something which we should be watching out for. Overall, the level is 24,000 to 24,300. Nifty Bank also, it's on the shorter side. The support range comes on your screen. But what's moving is, of course, the global cues. That's where we are seeing some changes happening here. The key concerns are rising yields and higher Brent crude prices. That's weighing on the most of the equity classes as well, and concerns are coming in. Sugar, refinery, oil exploration related stocks are seeing buying, but on the other hand, there is some sell-off also happening, especially in the IT and the consumer durables name. But all in all, it's a very small, narrow range day of trade. Earnings season is over, but listings is pretty strong. Milky Mist is at 30% gains, a very strong 18% listing gains also coming in. So these are the key triggers, coming in for the market. And over to you, Hiral.
Okay, thank you so much for that important triggers that we are watching out for so far. But let's look at the watch list. Indo MIM, strong Q1 growth. In fact, this is a recent listing. The raw material costs have declined 11% and that stock is up nearly 10% as we speak. PTC India is seeing profit booking after a strong rally. Welspun Living, that stock is buzzing in trade on the back of some strong volumes. In fact, the earnings were very strong and post that it has got a very good ride. Moving from there on, Jyoti CNC, they've won an approval for 1,000 crore electronics manufacturing investment plan. You have your brokers and BSE which are slightly under pressure, and this is on the back of low F&O volumes, and I'm talking about the prop trading book that has been impacted on the back of CAS. Tube Investment, there is positive commentary from brokers on demand, margins and EV that they've highlighted. MRPL and Chennai Petro also in focus because gross refining margins are on the higher side due to attacks on Russian refining infrastructure. So those counters are looking at smart gains. Action Construction, again, highest level that we've seen since July 2025, more than a year on this one. Schneider is actually gaining in trade after that decline that we saw in yesterday's session post earnings. Aegis Logistics, media reports indicate that the company is in talks to acquire TriStar. So that's why that stock is up in trade. Physics while also seeing a good run. The gains have continued on the back of a strong quarter. Netweb Technologies has launched a QIP. You're talking about Sirma, SGS, Centum Electronics. On the fifth tranche of ECMS that has been announced, those counters are in focus. Lead India, I think a stock that listed just 2 days ago now, the government of Singapore has bought 22 lakh shares and that stock is up nearly 5%. And you have the entire defense pack that is in focus because DDP has notified the 6th positive indigenization plan. And I think little over 400 products is what they have cited in this notification, because of which you're seeing that defense pack which is up and about in trade. So that's with regards to where the watch list goes. But as we know, today is the 18th and today was the Tata Sons AGM that was slotted, and you have visuals that are coming in where N. Chandra has arrived at the Bombay High Court. This is just some time ago. He's arrived at the Bombay High Court Bombay House, I beg your pardon, with regards to attending the AGM goes. In terms of where the agenda, what is going to be discussed, none of that has been public right now. So we're not really going to speculate on that front, but that's N. Chandra who's arrived at the Bombay House just a little while ago, and those are the visuals that are come in as well. But moving on, over to you, Sharad, to actually take the rapid fire with Saumil Mehta.
Thanks a lot, Hiral. Good afternoon, Saumil. Always a pleasure to have you with us at NDTV Profit. We start the rapid fire round. The first stock is PTC Industries. Good buying coming in from the Singapore entity also in the stock. Volumes have picked up. What do you see on the charts?
PTC Industries, good afternoon to everyone. PTC Industries have been in the downtrend. I think we spoke about this a little while ago, probably last week. This has been in the downtrend and has broken very crucial support. So my view would be negative, and I'll be expecting the stock to go down a little bit more.
And Saumil, your views on Welspun Living. What's the important levels to track here, and is there a trade to be made?
I'll be very positive on the stock, so view positive. I'll be expecting the stock to go above at least 200 levels in the medium term outlook. Keep a stop loss around 160 levels.
And now the refining related stocks are back in focus. Chennai Petro, MRPL, all of them are buzzing in trade. Do you think there is a much more important technical trade to be made? And if yes, what kind of duration we can expect in these stocks?
I think the trend is up. And MRPL, Chennai Petro, all are looking good to me. But I think the risk reward ratio is up with MRPL. Keep a stop loss around 170, and I'll be expecting this trend to continue till at least 200, 210.
After a long time, there is a breakout happening for Action Construction Equipment, or ACE as we call it, especially on the monthly and the weekly charts. Saumil, your views on it? Will this trend sustain?
Absolutely, very positive on ACE. It's been making higher top, higher bottom since last couple of months already. So I'll be expecting higher targets above 1300 levels, which will be a medium-term target. But I think it will go above that.
Right. Your views on Schneider Electric stock has been volatile over the last 1 week. Is there any trade here? Good, any risk-reward ratio levels to look out for?
Yeah, I'll avoid for a little while now, till the time it does not correct a little bit. So avoid in the short term, but if you have a long term or a medium term position, hold on to it. 200 daily exponential moving average is at around 1090, so that will be a crucial support.
Right, and this is the second straight day of buying after Q1 numbers came in for Physics Wala, especially with the losses reducing. Now, do you think a trade can be made here, or a little bit of small profit booking can be there?
It has had a good run, so I'll be expecting the trend to continue. My view is positive, so hold on to the position. I would not suggest a short-term trading.
Aegis Logistics also, we are seeing a good volume-based movements happening here. Do you think this will sustain this up move?
I think my view would be positive on Aegis Logistics. Keep a very strict stop loss around 1160, but medium-term view still remains positive, and I'll be expecting higher targets.
All right, so that's the end of the rapid fire round. Over to you, Hiral.
Okay, thank you so much for that. In fact, interesting names coming in there. Let's also pull up a Colgate-Palmolive on the screens as well and see what that counter is doing in trade. In fact, stock down 2.5%. The question is, what's nearly not worked for them? One, they're prioritizing growth over the near term versus margins. They've said that the margins may moderate in the coming quarters. Gross margins are seen largely range bound, and higher ad spends could actually pressure the EBITDA as well, because they're going to focus on premiumization, and to move that premiumization portfolio, ad spends are expected to be higher. The focus remains on driving consumption, and there is no clear portfolio expansion beyond toothpaste, is what also Goldman Sachs is indicating. The gross margins are expected to stay stable. EBITDA is likely to be lower as ad investments rise. Let's also get in Gaurang Shah, Senior Vice President at Geojit Financial Services. Gaurang, welcome to the show. Always a pleasure to speak to you. My question coming to you is, how are you looking at a Colgate-Palmolive? I mean, no major commentary that's coming from the investor conference that they had, analyst conference that they had. However, the stock is really down in trade today.
Hi, Hiral. Good afternoon to you as well and your entire team and all the viewers of NDTV Profit. Small mandatory disclosure. All recommendations that I'll be sharing with you this afternoon on your show, Hiral, they're part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So if you actually reflect upon the earnings of some of the FMCG companies, they were quite well in terms of the expectation that the street had because of the input cost going up. But somehow they have been able to maintain the top line, bottom line number along with the margins. As a disclosure, once again, we do have a positive coverage on Colgate from a long-term point of view. And my belief, Hiral, is that one-off quarter disappointment or below expectation number should not be a reason to change your long-term strategy. So we are maintaining a positive view on Colgate.
All right. Positive view coming in for Colgate, but of course Adani Group stocks are also in focus. Bernstein has come out with its reports as well, a bullish sentiment. And to understand what are the key takeaways from the report, we are joined in by Somit. Somit, what are the key takeaways?
Well, quite a positive note that has come in from Bernstein House on Adani Group. They are saying that the group has emerged as a stronger after the short seller and the US SEC and Department of Justice overhang. They are also saying that the share pledge has been largely eliminated and the leverage has also come down for the group. They're also saying that there are three recent events which has slowed down the investor enthusiasm. Firstly, on the Adani ports, they're saying that the news reports regarding the acquisition of UK's AB port has raised some investor concern. But currently, after the fall in share prices, it is largely priced in, is what the brokerage is saying. And current correction also seems like an opportunity to accumulate Adani ports. As per Bernstein, they have maintained the outperform rating and have also high the target price on Adani ports to close to 1,970 973. For Adani Green, they have the target price is set at around 980 rupees. They are saying that the 4 to 5 gigawatt renewable capacity and BESS move to Adani Energy solution was one of the concerns. But at this point, the management has clearly stated that the IRR for this would be around 16.5 to 18%, and this deal was done to secure funding and improve revenue visibility. And they're also saying that when it comes to fundraise, the overhang has been receding, because as per them, the QIP phase is now largely behind the group, and they are positive also on Adani Power and Ambuja. For Adani Power, they have maintained their overweight rating with a target price of 220, and for Ambuja, again an overweight rating with a target price of 468.
Thanks a lot, Somit, for that. And of course, a standard disclaimer coming in on your screen as well. Gaurang sir, hi, this is Sharad here. We just spoke about, Adani group of stocks brokerages turning bullish. If you had to pick a couple of them on the fundamental basis, what would that be?
Hi Sharad, good afternoon to you as well. So I think Ambuja Cement appears on the Adani group companies on our fundamental coverage side. But there are other companies, though we don't have any specific coverage. For example, the government policy augurs extremely well for companies which are associated with port logistics and container handling. For example, Adani Port. Government has also elaborated and spoken about the Sagarmala Pariyojana, wherein the existing ports are going to have a capex. There are new ports that are going to come up. Sea connectivity, sea route connectivity, Sharad, is also something that is going to augur extremely well. So some of these strong companies, like for example, Adani Ports is there, Adani Green is there, Adani Enterprises is there. And of course, like I mentioned on Ambuja Cement, we do have a positive coverage. So there are very fundamentally strong companies in the Adani group of companies if you actually go to see.
Okay, so there is a fundamental up move in Adani group of companies. But Indo MIM, a recently listed company, now it's doubled from its IPO price as well. What's the reason for it? What are the growth triggers? We are joined in by Jasmeet for that. Jasmeet, in very short time, we are seeing so much action happening in the primary markets.
Well, as rightly said, now if you look at Indo MM as a market, right, it had already stock had rallied since the IPO, and the stock got listed at a premium as well. If you look at the issue price, roughly at 440 odd rupees, and the current price trading at 940 odd rupees, you see nearly doubling from the issue price of this particular counter. Now, what has worked well is the overall global market is spanning well for this particular counter, and even the client base. Currently, the company contributes nearly 6.3% to the global manufacturing term, which we are saying as per various brokerages, and also the reason why the stock is buzzing in today's trade is on the back of that strong Q1 performance. What we are seeing is the revenue is up nearly 9%, while the overall expenses has reduced by 11%, indeed supporting the margins. And even the EBITDA margin has increased by nearly 400 BPS, also supporting the bottom line as well, while the net profit is an uptick of 31%. While this strong fundamentals in the Q1 seeing a continuation of the rally of the stock.
Thanks a lot, Jasmeet, for that. And precision engineering, this theme has picked up, giving premiums to newly listed companies and also a valuation re-rating in a lot of listed counters as well. Gaurang sir, your views in this entire theme, and which company has a decent valuation right now? I doubt there will be, but in case if any is there, you could share that.
Well, so speaking about Indo MIM itself, as you were speaking with Jasmeet, we did have a positive coverage, Sharad, when the IPO was there. The floor was, I think, 485, correct me if I'm wrong. And this precise engineering and niche engineering, which involves high technology, Sharad, these are the themes that are going to be playing out a very crucial role in terms of what the aspirations of the government are, in terms of India becoming a large manufacturing hub, supplying to the world rather from importing from the world to exporting to the world. And the stock has almost doubled from the IPO price. I think the floor, like I mentioned, was about 485. Correct me if I'm wrong, Chal. So we did have a positive coverage in terms of subscribe for the IPO. So if I have to keep that IPO note as a base of my recommendation, if you have got invested in Indo MIM from a long-term point of view, stay invested.
All right, but looking at a lot of government announcements coming in, especially the ECMS segment, the fifth tranche has been approved. Let's pull out the stocks such as Jyoti CNC, Sirma, and even Minda Corp subsidiary. All these stocks are buzzing in trade, especially if you talk about, say, Jyoti CNC, Centum Electronics as well. These names, any one of them, you have any important views, especially for Sirma or Jyoti CNC, because our conversation is going back to manufacturing. Gaurang sir.
Manufacturing, and this is the theme that is going to evolve. That's what exactly I was mentioning in terms of aspiration that the government has. So if I'm not mistaken, I recollect very vaguely. I'm not too sure. We did cover Sirma SGS during the IPO, which was some time back. But in this entire chips, semiconductor, EMS, PCBs, and the policy which was elaborated and extended yesterday or day before yesterday, and the statements made by the Honorable Minister Sharad, we have a couple of names in this particular sector: EMS, Amber Enterprises, CG Power, and PG Electroplast. So these are the three names that feature in the EMS chip semiconductor PCBs.
Okay, so that's regards to where PG Electro past is concerned. That stock is down a little over 2%. Now, Nuvama has actually turned bullish on NMDC, upgrading the stock to a buy. Now, this is with iron ore prices bottoming out and multiple positive triggers in play. The outlook is improving. The stock seeing a recovery from the day's lowest levels, but still trading marginally in the negative. Parth joins us with more in terms of what are the key levers driving the stock. Parth, good afternoon. What do you have for us with regards to NMDC?
Good afternoon, Hiral. Well, you rightly mentioned that Nuvama has upgraded NMDC to a buy rating versus a hold rating earlier, and this is after NMDC posted its Q1 results on the 14th of August. The domestic iron ore prices have believed to have bottomed out, and the stock now trades at an attractive valuation of just 7.6 times its FY28 EPS currently, and that's why Nuvama has given a target price of 97 rupees per share. That implies a return of around 13% from the current market price. Now, let's try and understand why Nuvama has upgraded NMDC despite a miss in the Q1 numbers. If we look at the EBITDA numbers of NMDC in the first quarter, they came below estimate at 2,470 crores. These EBITDA numbers were driven by the realizations that went up 416 rupees per ton year on year, but they were below estimates because the royalty cost had jumped 30% year on year, and that's what pressured the EBITDA for the first quarter. And net effect of both of these things was that EBITDA was flat on a year on year basis, while EBITDA per ton saw a downtick of around 46 rupees. Nuvama sees that Nuvama sees this as a temporary cost blip and not a structural trend going forward for NMDC, and hence why they have upgraded their rating on the stock. Now, coming to the volume story that is slowly brewing up in NMDC, the iron ore production has surged 26% year on year, but if we look at the sales volume growth, that was pretty small, coming in just at 2% growth year on year. Now, the gap between this production and sales data is because of the monsoon logistics and the steel plant maintenance shutdowns that we saw during the first quarter of FY27. Nuvama expects that the sales will pick up in the second half of FY27 as the demand improves. So that's the first trigger behind their upgrade in the rating. The second trigger, and the bigger one, is the MMDR Act. As we know that MMDR Amendment Act 2026 has been cleared by both the houses of the parliament and is now awaiting president approval to become a law. It restricts the state's power to levy further mineral taxes, and it also removes the retrospective tax demands. This is a very big thing for NMDC because once this act gets enacted, NMDC's contingent liabilities of 15,800, that's a pretty big number, that will get erased, and that will add to the bottom line of NMDC going forward. Another things that are working in favor for NMDC is that their joint venture deposit 4 has gotten all approvals, deposit 13 has gotten forest clearance and has started commissioning as well. Improving profitability in NMDC Steel will also aid in for NMDC due to the receivables getting cleared out. So that's the entire view why NMDC is in focus and a 13% return potential candidate for Nuvama.
Okay, thank you for that. Gaurang, your view on NMDC?
I think retrospective tax moving out definitely opens up a lot of positivity, Hiral, for companies like NMDC. Now, as a disclosure again, Hiral, we did have a positive coverage on NMDC. Our targets were in place. Our fundamental team are doing a review with respect to the change in laws and, of course, the numbers and the outlook going forward. Since it is under review, Hiral, I will not be in a position to give you buy, sell and hold, but the stock looks promising.
All right, Gaurang sir, thank you very much for taking out your time and giving your views overall in this markets as well. It's always a pleasure to have you with us. But let's talk about IPOs in town, and we're talking about Sunshine Pictures. And joining us, we'll have the promoter of the company, Vipul Amritlal Shah. Hi, Vipul sir. It's always a pleasure to have you with us. Wanted to understand an asset-light business like yours. Why are they coming for their IPO? What's the overall rationale? And maybe give us the industry triggers for Bollywood as well.
So I think in today's world where entertainment industry is growing at a phenomenal pace, as of today, the entertainment industry is somewhere around 34 billion and estimated to touch 50 billion in by 2030-31. To sustain yourself in that growth and scale up without sufficient capital, you are not going to be able to do it. And that is one of the primary reason. And I'll explain you why I'm saying this in a slightly longer answer, but bear with me. In India, till 2022, Dangal was the highest grossing film. 375 crore was the net box office of the film in India. And we had 4,400 multiplexes. From there, if you see next year, Animal, Gadar, Jawan, Pathan, they all did cross 500 crore. Then the year after that, Stree 2 did 600. Pushpa 2 did 800 only in the Hindi, 500 on top of that in South. And then came Dhurandhar, which has done 900 and 1200 crore approximately.
Right, sir. And second question we'd like to understand is how the monetization will play out. There's, of course, IP rights also is there, as well as fresh content creation.
Very difficult to put a percentage in our industry because a film can come from nowhere and become a blockbuster. And suddenly all your percentages and all your calculations can go for a toss. But just one fact that I want to put on record is that in last 16 years, the company has made loss only on one film called Bastar, a very minor loss. Otherwise, we have not made loss. We work on a very strong de-risking model where we make sure that before the film rolls out, we have either sold the rights of OTT, satellite music, or we have some partner on board. And because of that, we are able to de-risk the film even before it starts. And that model has really helped us to build this company the way we have been able to build. And we will continue to do so. So it is very difficult to percentage, but yes, these funds will allow us to scale up our music activity. This will allow us to build on our film slate. We will probably also venture into regional films, Gujarati, Marathi, Punjabi, South films. So there is a lot of scope in every space in the entertainment sector at this point of time. And all these funds will go into those activities. We will have to see how they kind of give us the return. But at any point of time, we are not going to leave our de-risking model and we are not going to take blind risks.
Right. Thank you very much, Vipul sir, for taking out your time and talking about Sunshine Pictures IPO and its growth plans ahead. Pretty interesting, right? But of course, we are having a shortage of time, and that's all, folks, for Trending Stocks from me, Hiral, and the entire team who have put together this show. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done. If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Three decades of watching the world change. Of asking the questions that couldn't wait.
Benchmarks recover from day's lowest level with Nifty 50 clutching on to 24,200 level. Sensex sheds more than 300 odd points. IT sulks in trade while pharma, energy and auto remain resilient. Oil prices extend gains as hopes for a near-term US-Iran deal fell while a fresh vessel attack in the Strait of Hormuz renews supply concerns. Brent moves towards $92 a barrel. Electronics manufacturing stocks gain after the government clears fresh ECMS proposals. The latest approvals take the scheme's total projects and investments significantly higher, strengthening the sector's growth outlook. Milky Mist shares list at an 18% premium, making a strong debut on the bourses. The packaged food company's IPO had seen robust investor demand as well, with the issue subscribed over 56 times. Tube Investments expects margins to recover as it passes on higher steel costs. The company targets double-digit EBIT margin improvement, with key businesses expected to return to earlier levels. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at what the markets are really up to right now. So it's Nifty 50 that's recovered quite a bit from the day's lowest points that we saw coming in around noon. And when you talk about the levels, just about managing to clutch on to 24,200 and has just slipped a few points, like about 95 points lower on the day as well. And when you talk about Sensex as well, you're looking at 300 odd point decline coming in there. Quickly also talking about the sectoral picture as well, and that's looking a little bit tilted sharply in the favor of red as well. So it's actually IT and FMCG, PSU banks, metals, realty, bank, all of that on the back foot. What's holding a little bit resilient right now is India defense, auto, oil and gas, as well as media and pharma indices. Now that said and done, let's also quickly talk about some of the losers as well from within the Nifty 50, and of course beyond the Nifty 50, there's something like an Inox Wind that's holding on to losses of about 4%. PTC Industries yet again also on the back foot, and that's the kind of picture that you're seeing coming in. But that said and done, when you talk about the Nifty 50 as well, something like an Asian Paints, some of your IT counters, the likes of Infosys, HCL Tech, Wipro, TCS, all of those on the back foot. And add to that list something like a Bharti Airtel, Jio Financial Services, and ITC and HUL as well. So that's largely the kind of picture that you have at hand right now. Let's also quickly talk about oil prices as well, because that's where you're seeing some healthy gains also come in. Let's also quickly pull up what Brent is doing right now, and in terms of the gains that you have right now, it's gaining for the third straight session, by the way. So Brent up nearly 50% this year, and when you talk about oil, it's really extending some of those gains. So US-Iran deal hopes really continue fading, and that's the entire picture that you're looking at. It's quite the concern as far as the market's concerned, but let's also quickly get you some of those insights as well. Try and make sense of the kind of levels that we're seeing on our screens when it comes to oil, and it's definitely ticking higher this entire week thus far. So you do have David Roche, strategist, Quantum Strategy, joining us right now. Thank you so much, Mr. Roche, for taking time out and joining us. First things first, just really wanted to try and understand if you think that this sort of upward momentum that we've seen in the last few days, do you think that this is sustainable? Because there is a lot of uncertainty that is right now on the table.
Well, I don't know if it's sustainable. You have kind of two realities. One is the reality surrounding AI and plentiful liquidity and deals with absolutely massive leverage being done as if there was no connectivity to the real economy. That's one set of investors. And the other set of investors are those who look at more fundamental, well, not more fundamental issues, but different issues. Now, first and foremost among those is, as you said, is the oil price. Well, despite Donald Trump's lies that there's lots and lots of oil coming out of the Gulf, there is not. The markets are showing you that there's a shortage of Brent, not only a shortage of Brent, but a shortage of gas in Europe, TTF gas, and of diesel. Refined products are even worse. So look, it's very clear that there's no negotiations worth toffee going on between the United States and Iran. And therefore, the amount of oil coming out of the Gulf is probably about 5 million barrels a day, which leaves the world short of someplace between 11 million and 15 million barrels a day. So what's happening? That means inventories are falling. They're falling in the OECD, and they will reach critical levels in the middle of the autumn. That's what the markets are beginning to tell you, and that's the problem. Now, if that was all, that's fine. But then President Trump is not happy with that. He's threatening to bomb Oman for reasons which he has not explained and nobody understands. And he has cut back on his military cooperation with Korea, saying he loves, and Kim Jong-un in North Korea loves him. So there are more and more signs that, he is not capable of wielding the powers of office of which he is the incumbent. And that clearly is not a bull market background. We can put it on the back burner and say, okay, well, markets are fine. There's plenty of liquidity for a while, but it's only for a while. Those things are out there and they should worry us.
Absolutely. And, when you talk about, I do want to talk about how should investors be positioning for prolonged oil disruption, and we'll talk about that in just a bit. But before we do that, since you've mentioned autumn as well, are you then penciling in $100 a barrel in terms of Brent by that time period? Is there a time period that you have in mind, given that the move decisively has been higher for quite some time now?
Oh, I would say that my figure is $100 a barrel for Brent as a minimum. I would think the range would be $100 to $125 by mid-autumn.
What time period do you have in mind when you say 100 to 120? Because this is also very much dependent on the kind of trajectory that we've been seeing the last few weeks.
Well, look, it's based upon two things, and they can both be wrong. After all, I'm a humble person. The first thing is that the Iranians have absolutely no intention of negotiating the surrender of sovereignty over the Straits of Hormuz with Donald Trump. Absolutely no intention. So what that means is the oil does not flow. There's an 11 to 14 million barrels a day deficit. The inventories get down to 30 days by the end of September. And by that time, obviously, given what is clearly a looming shortage of physical supply, the Brent price will be between $100 and $125. There you are. That's how I get there. And I think that Donald Trump will go on destabilizing the world with attacks on his allies of various forms and kinds, which diminishes US credibility and power in a dramatic way, and which therefore makes the world more unstable. Markets can, as I said, ignore that for a while, but not forever.
Absolutely. And since you can't really ignore that for a while, going forward from here, because those levels are going to be biting at some point, you do have some of those inflationary concerns that are going to be highlighted as well. So how should investors, according to you, David, be positioning for prolonged oil disruption at this point in time?
Well, first of all, if I may add something just out of context, I think that the Black Sea, El Nino, and the shortage of fertilizer due to the war in the Gulf is also giving us food price inflation. And that's another wave of inflation, which is down the road, but it's coming our way. So from an investor point of view, what investors need to do is to guard against inflation. Well, the best way to do that is, in my view, to buy gold, to buy index-linked bonds, but to stay out of fixed income bonds, i.e. like US Treasuries, and European sovereign debt equivalents. You stay well out of that. You buy stocks which you think will be able to make money despite this inflation, which I think are things like shipbuilding and defense stocks, which are going to be in short supply. And you are very, very prudent of getting involved in anything which involves speculative leverage, because the biggest problem we face is inflation. The only response to inflation, whether central banks do it or the markets do it, is higher interest rates. That's a juggernaut heading for you. You better get out of its way.
No, absolutely. And David, it's actually quite interesting that you talk about food inflation, because that's actually the other discussion that we have lined up on the show as well. And that's something to watch out for in terms of those insights as well. But David, when you talk about some of those inventory drawdowns, how quickly do you expect them to be impacting prices? What is the impact that you're looking at vis-a-vis the inventory numbers that you're looking at and the oil price stick that you're looking at on your screens?
Look, I think we're in August. It's a funny month, August. It's a month of holidays when people seem to think that the world is colored by holidays like a crayon picture. But when we get back in September, people are going to have to look at what is really happening in the real economy. And I think at that point in time, in September, the oil prices start moving up seriously, inflation concerns start moving up seriously, and the markets start to worry. The equity markets start to worry finally. And I think the biggest casualty of this could be AI.
No, absolutely, and that's something to look at as well. Just very quickly, wanted to get a sense of what are the two assumptions that you think have really changed for you very significantly, very dramatically ever since the war also began, because there's been a lot of changes and it's quite difficult to keep track of all of the commentary coming in from the US president and, of course, on the war front.
Well, the first thing I've learned is not to listen to the US president because he consistently and habitually talks rubbish. What I do is look at the facts. Now, what have the facts done? Number one is it is quite clear Trump cannot win militarily in the Gulf. That means the Gulf War is perpetual and the Iranians will not give in. So that basically puts you in an energy scarcity scenario overall. The second is the Ukrainians are sinking up to 300 Russian ships. That is going to cut off approximately 16% of the internationally traded supply of grain. You better watch out, together with El Nino and a shortage of fertilizer causing falling crop yields. You better watch out for a big wave of inflation. And that means the big change in my mind, because that was a new factor, that the big change in my mind is therefore the inflation problem is the problem. It is a lot worse than I thought 3 months ago. And it's going to need, two things are going to happen. One of two, or both. The central banks do their job and they raise rates to fight this, or they don't. And the bond markets raise rates to fight this. Neither is good for any financial asset, and certainly not for assets like AI, which depend on massive leverage.
Absolutely. And, thank you so much, David, for taking time out and joining us this afternoon as well for us. You and some of the commentary coming in from Iran are quite in agreement when it comes to the US president as well. Thank you so much for helping us try and understand the impact of the inventory drawdowns. And that's some interesting perspective also coming in terms of that being also used as a measure of where oil prices are going to be going next. But let's also talk to you about where the clouds are at. The monsoon forecast has been cut to 85%, and that's the word coming in from SkyMet. They're saying that drought odds also have jumped to 70%. You're looking at rainfall deficit deepening, El Nino risks also intensifying at this point in time, and rainfall staying below normal, reservoir levels also still lagging. So that's the entire backdrop, in fact, that we're going to be discussing with GP Sharma, President Meteorology and Climate Change, SkyMet as well, and G. Chandrasekhar, agriculture economist, who's joining us to decode the entire impact on the agriculture front. And we'll come to that in just a bit. But before that, Mr. Sharma, I just wanted to come to you with the news and with your latest forecast when it comes to SkyMet. What are you looking at when you talk about reservoir levels? What are you worried about when it comes to monsoon? And what are the kind of levels below that long period average that you're looking at?
Thank you, Shreyanshi. See, this monsoon has been having a topsy-turvy curve. You remember month of June was highly deficit, over 35% rainfall deficient shortfall was there. July was a savior. Okay, it did good thing, and lot of rain-fed zone. Actually, they received decent rain. I'm talking about central parts, western parts of the country. So that saved the situation. So therefore, it was looking as if everything is going on absolutely okay. But then, as we had expressed some fear in the beginning itself, that this time the El Nino conditions are there. And we had indicated about 3-4 weeks back also that we in any case revise our monsoon forecast and give a course correction if required around this time. That's end of July or some start of August or so. And that is how we revised that. The conditions are not looking very good, though overall the monsoon rainfall over different parts of the country, particularly till mid-July, there was not, I didn't see any major water stress as such over different pockets, particularly those where it is required the most. The pockets of Maharashtra, Madhya Pradesh, Gujarat, Rajasthan, which depend largely on monsoon rains, they had a good spell in the month of July. So that was a savior. But now all those parts, all those subdivisions, they are increasing in deficit now. Already
Yes.
parts of Maharashtra, they are in red now. Yeah, that's it. Yeah.
Okay. No, perfect. Thank you so much, Mr. Sharma, for taking time out and joining us this afternoon. So that just about brilliantly sums up what the SkyMet's forecast really looks like at this point in time. Let's also take the conversation forward and talk about the other aspect that I mentioned in terms of agriculture and the resultant impact of everything that Mr. Sharma has talked about thus far. And Mr. Chandrasekhar, I just wanted to take this across to you. You've heard Mr. Sharma talking about what the long-term period average is looking like and what some of those concerns are when it comes to the sowing season, right? In terms of what could be spelling bad news for some of the August crops right now. And it's just that window really seems to be slipping away for the Kharif crop, isn't it?
So the window for planting slipped away at least 3 weeks ago. Okay, and whatever weekly progress report that we get from the Agriculture Ministry will only show incremental numbers because the states have to file their weekly returns with the central government, and the central government simply compiles it. And therefore, I know and I'm aware that the window closed by say between the 15th and 20th of July, the planting window. That's the first proposition. So don't expect any dramatic increase in area. Second, almost all crops, in my view, all major Kharif crops, be it rice, be it pulses, be it coarse grain, be it cotton, be it oilseeds, all the crops are going to face a shortfall in harvest size. And that shortfall will be in terms of two numbers. One, the Agriculture Ministry has fixed a target of production. Our harvest size is most likely to fall short of the target set for this Kharif season. Second, even as compared with last Kharif's estimate of production, production this year is likely to fall short. And therefore, expect tightening supply-demand fundamentals, expect rising prices, and expect serious government intervention. And that intervention has already begun. For example, sugar exports are suspended till September. There are stock limits imposed on many commodities. Pulses imports have been opened up substantially till March 2027. Therefore, I'm sure the policymakers have taken cognizance of the current situation. They probably do not want to admit openly that the current situation is one of serious concern, but they are taking steps one by one. But we have to wait for the final production estimate for this Kharif season, which I'm absolutely convinced I'll myself come out with my estimate probably in the next 2 weeks. It's going to fall short of the target this season, and also fall lower than what it was last year.
Yes,
it is a matter of concern.
Absolutely. And we do look forward to speaking to you when you do come out with that report. The window that I actually was talking about was the sowing season, because some of those growing crops require steady moisture, right? And that remains a little bit of a question right now. Which are the crops in particular that you are then worried about when it comes to this particular harvest? Because you're still talking about some of those growing crops, and they will need steady moisture, which, like I mentioned, is a little bit of a question that is looming large.
There are two things which we must remember. One, the regions that grow these crops, and second, what is the acreage planted so far. On both counts, I find rice is going to be a matter of concern because rice acreage, which last year was 44.7 million hectares, as of 14th August, we've planted only 38 million hectares. And as I said earlier, the planting window closed 3 or 4 weeks ago. Therefore, don't expect any dramatic increase in acreage. I am rather concerned for rice. Same with pulses. The last year's final acreage number was 19.2 million hectares. This year, as of now, it's fallen short by 2 million hectares. Okay? Same goes for oilseeds, same goes for cotton. Therefore, I think virtually across the board, all major crops are facing a challenge. Even maize, for that matter, last year was 10 million hectares. This year, as of 14th August, is only 8.8 million hectares.
Yes. No, absolutely. And point taken at that, right? It is quite worrying, to say the least, because India is world's largest rice exporter as well. And that's the reality that you're looking at. Just quickly also wanted to try and understand what you think about the double whammy when it comes to agriculture. in India as well right now? Because you do have some of those food inflation concerns other than just the monsoon. You do have fertilizers. In terms of the supply, some of those concerns still looming large. Other than that, you do have the conflict as well that is out there also making farmers worried. So quite a lot in terms of farmers' minds going through right now. So talk to us about that entire double whammy as well.
Yes, there are actually multiple headwinds. Of course, you use the word double whammy. One, of course, is monsoon or climate, as we know. I call it 3 C's, okay? The first C is climate, the evidence of which is available in front of us. The second C is crude oil. Crude oil prices are elevated. I will not be surprised if they touch $100 a barrel soon. And that's going to create energy inflation because of our massive import dependence. And the third one is currency. Currency is most likely to lose a further value. It could depreciate, and therefore a combination of climate, crude, and currency can elevate inflation expectations and erode the purchasing power of the population, particularly the vulnerable sections of the population. The second point, rural incomes. Rural incomes have not risen over the last 3 years. And this year, they can actually, not just rising, it is actually likely to fall this year. And that's going to create a huge amount of, unsettling effect in the rural areas. These are serious concerns which need to be, we need to take cognizance of this, and very proactive policy interventions are required.
No, absolutely, and we will definitely be watching out for how that really pans out, Mr. Chandrasekhar, as well. But, I just wanted to try and understand in terms of the time period as well, just for the benefit of our viewers. Do you think that the next fortnight, perhaps, or the time until September is quite, important right now? Just a very quick word on this one, please.
Absolutely. The next 4 to 6 weeks are very critical. But the IMD has said that in August and September, we will have below normal rainfall. Much worse, the IMD has said October, November, December, we will have even a very severe El Nino effect, which can potentially affect your next crop, which is Rabi, your wheat, your mustard, your chana, all of that. Therefore, I think going forward, next several months, we've got to brace for some serious agriculture-related consequences and food inflation.
No, absolutely, and thank you so much for taking time out and joining us this afternoon with that entire bit also. So really the next fortnight is very crucial to watch out for, as Mr. Chandrasekhar also said. Thank you so much for taking time out and joining us with that. Let's also take a look at Augment Enterprises. That's really in focus as well. You're looking at an integrated precious metals platform as well. Let's also go across and listen as we wrap up on this edition of the show. Let's go across and listen in to the word coming in from the management in terms of not just the IPO but also the growth strategy and the road forward.
I'll start by asking Ketan, you first, because from what I have understood, and you can correct me if I'm wrong here, is that part of your business depends on how gold prices fare. Help me understand as to how much dependency does your business have on gold prices, and if you can also help us decode your business model in the simplest way possible.
Sure. Good morning. Thank you for having us. So let me just explain about the Augment business model. As you mentioned, it is a completely integrated gold and silver platform. The whole idea behind Augment is that we are using technology to solve gold-related problems. Gold moves through various phases in its entire life cycle, whether it's on the buying side or the selling side, or it's the recycling side. So we operate through 2 platforms. One is the Augment Spot platform, where we have 5,200 jewelers across 20 delivery centers and in 13 states. These jewelers buy their physical gold requirement and their physical silver requirement on a daily basis. The platform provides them 2-way live quotes. This is the B2B spot platform. Then we have the consumer platform called the Augment Gold for All platform, where we enable the entire life cycle approach for the retail customer. The customers are able to invest in gold, they are able to monetize their old gold, and they are able to leverage against the gold that they already have. And the whole idea is that the customer should be able to manage everything through the same platform. So we have our own platform, we have partnerships with 218 fintech partners where there is an API integration, and we have 4,690 odd touch points where the customers can do the physical fulfillment as well. So that's broadly the Augmont business, where we are enabling the life cycle of the gold, and both for the B2B as well as the consumer sector.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where...
Good afternoon, you're watching Small Cap Bazaars on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So let's see what's on the show today. Firstly, we'll be speaking with the management of Salasar Techno. Now, the stock is down nearly 32% on a YTD basis. So the key question to ask the management would be the margin outlook post the Q1 numbers that we have seen. What's the way forward is something that we'll try to discuss with the management today on the show. Apart from that, we'll be discussing stocks like Subex. The stock is trading at its 1-year high. In fact, these gains are largely coming a day prior to the company's physical analyst meet. So it would be important to track what the management says in their physical analyst meet. The stock is up, I believe, nearly 16 to 18% in trade. For Neogen Fintech, the stock is up nearly 33% in the month of August, and this is the best monthly gain that we have seen for this counter since November 2024. What could be the potential reason behind this up move, and is there further room left, is something that we'll try to discuss with our fundamental guest today on the show. And when it comes to JG Chemical, that is India's largest zinc oxide manufacturer, the stock has literally doubled in FY26. What are the factors that have been aided in company is something that my colleague Varsha will bring to you today. And lastly, we'll be speaking about Bazaar Style Retail. The stock has been hitting the 5% upper circuit in 8 out of the last 10 trading session, and the stock is up nearly 50% in the month of August 2026. Yesterday, there was an important block deal, but what could we expect from Bazaar Style going forward is something that we'll try to discuss today on the show. Now, if you look at the market, Nifty, today is the 6th trading session of a downtick that we're looking at the benchmark, and this could be the longest losing streak for the benchmark since September 2025. Currently, we are hovering around the 24,200 level for the last couple of hours. When it comes to the Nifty Bank Index, that's down nearly 180 odd points in trade, hovering around the 57,300 level. On the sectoral side, if you look at Nifty Pharma, Nifty Auto have been among the gainers, but gains are hardly around 0.4 to 0.5% in trade. And on the losing side, we have Nifty IT, Nifty Real Estate and Nifty PSU Bank Index, which have been trading in red, down anywhere between 0.6 to 1.6% in trade. But when it comes to the small cap index, it's not been that great day. It's down around 0.12%. But on the gaining side, if you look at stocks like Subex, Prabha Energy, Jindal Drilling, Alpex Solar, Sigachi Industries are up more than 10% in trade. Apart from that, there is Mac Power CNC, which is also gaining close to 10 odd percent. And on the flip side, we have stocks like Hardwin India, Nelco, Khaitan Chemical, Tarsin Products, 3i Infotech down anywhere between 5 to 12 odd percent. So this is largely what we are looking at companies below the 5,000 crore market capitalization. But let's also welcome in our fundamental guest, Girish Sudani, the Vice President of Choice India. Girish, firstly to start off with, 6th trading session of downtick is what we are looking at market. How long do you expect this consolidation to continue?
So again, there would be the heavy winds behind. We are talking about the geopolitical tensions, what we are already facing now. So all the sectors are a little bit negative propositions. Once we are just expecting that 24,570 would be the important level we are focusing on. So once the levels will be not crossed, we are not very much bullish on the index funds itself. We are more focused on the stock specific and the sector specifics, like looking out the iron ores as well as the aluminium, steel and aluminum should be these type of sectors, as well as the infrastructure sectors. Like we have already seen that the Lodha in Obra Realities are giving a very bullish propositions in the pre-sales number as well as the post-sales number. So we are more focused on these type of counters itself. Don't focus on the currently index as of now, because the market is completely based on the overall sentiments, what the international sentiments coming out.
Okay. Starting off with the first link on the show today, that is Subex. The stock is one of the top gainers among the small cap stocks. It's up nearly 17 odd percent. And this is largely a day before the physical analyst meet that the company will be holding tomorrow. So let's get in Jasmeet to understand what does the company do and what are the key benefits that the company could see or the management might speak about tomorrow.
Well, Samir, thank you for that. If you look at this particular counter, right, apart from the management meet which is held tomorrow, the physical management meet, the interesting aspect is the company has had a turnaround story all this while. If you look at what the company does, this company operates as a telecom software and AI company where it helps telecom companies to manage their revenues and also manage the fraud that they go through. In terms of stock performance, as rightly said, the stock is up nearly 17 odd percent in today's trade, but over last 5 days, it's about 18 odd percent. The majority of those gains are coming in from today. Well, if you look at the recent up moves for this particular counter from the lows of 6 rupee per share, it has rallied nearly 146 odd percent to 16 rupees per share. In couple of months. Now, in terms of the key details of the Q1 performance, as it was a turnaround quarter for the company, we do note that the revenues saw an uptick of nearly 20% on YY basis, while even the EBITDA sees an uptick of about 80%, where EBITDA is reached at 16% mark and it's up about 60%. Now, in terms of the margins, from earlier 6%, it has increased to 21% in the Q1 itself, and the management sees a broad-based growth across segments. In terms of the key management commentary, which was in the Q1 and which can be in focus going ahead, and how does that go in the physical analyst meet? The first one would be the overall distribution of the revenue coming from different segments. While if you look at the PEM segment, that's the partner ecosystem management, the third largest segment of the company, even that has grown well. So this shows that the revenue is not just coming from the main segment, that's the revenue and fraud management, but also from the new partner onboarding system as well. While the second comment is the management is bullish on the overall order book, where they expect nearly 2 to 3 times of it going ahead, the increase in the pipeline. Further, they also state that they expect 100 crore quarterly revenue within few quarters. So we do see a strong bullish in terms of the overall outlook by the management, and that's the key reason why the stock has rallied in the recent close, and that will be in focus in the physical analyst meet tomorrow, which will be held, to get more details on the same.
Okay, well, thank you, Jasmeet, for that information. Let's get in a view from Girish. Girish, you have looked into the counter Subex. Anything that you find interesting, anything that could have led to this kind of a surge in the share prices?
So again, there would be the high news in terms of what the management is commented for the next few quarters itself. They are just looking out bullish on the order book itself. But I have saw some red flags into it, because there is inconsistencies in the financial track records. We have already seen in a many financial year itself. So again, there's a zero promoter holding should be there. The dependency on the telco capex would be there. Apart from that, the Middle East and the African concentration should be also going to be a big deployments in the overall payment terms in the next financial year itself. So fresh allocation is frankly not very much advisable for the retail investors, but those who already hold this particular counter can hold for the next 2 to 3 quarters itself. But let's see how the next at least 1 or 2 quarters should be maintained in their financial propositions. We are talking about for the order books as well as the financial cycles they are looking at.
Okay, but just wanted to check with you, Girish, on these counters as well. Jindal Drilling is one stock that I wanted to check with you. And this because is it completely because of the up move that we are seeing in the crude oil prices? Sentimentally, it is positive for these counters as well, and that's the reason this stock is up nearly 15% in trade today. Anything
Yes,
that you're
can
picking
we
up?
say that? Because obviously there's a directly impact on the crude prices. So I think this is a major reason behind it. Apart from that, the valuation is little bit good in the terms of the retail participations. This is the reason behind it.
Okay. Okay. Now the next stock that we'll be discussing is JG Chemical. The stock's been buzzing in trade. Let's get in Varsha to understand what could have been benefiting this counter in this financial year that the share prices have almost doubled, Varsha.
Well, overall, if you see, Q1 actually has led to this sharp performance which you've seen in the last few days, and post which we saw some kind of profit booking. But now again, it's back when it comes to the stock price, because management is expecting that growth momentum to continue in Q2 as well, and hence you're seeing JG Chemicals is up almost 6% in trade, and they're also expecting operating leverage, which will actually support profitability going forward. EBITDA margin is expected at 10 to 12%. Long-term EBITDA margin though have been set at 14 to 15%, which will be driven by value-added products. You have capacity expansion, which is underway. Current capacity stands nearly at around 70,000 metric tons per annum. Manufacturing footprint spans West Bengal and Andhra Pradesh. The Dahej plant is the next growth engine when it comes to JG Chemicals. They're setting up 40,000 plus metric tons per annum zinc chemical facility, which is pegged at around 100 crore, and the project carries estimated revenue potential of almost 900 crore. You have non-rubber segment also gaining traction. Positive traction has been seen in pharma and specialty chemicals and ceramics, and the non-rubber business contributed almost 18% to the Q1 revenue, and this is expected to go beyond 18%. Realizations have been remained are strong. Current realization levels is expected to continue, and they see no reason for price to decline in near term. So you had good quarter 1. They are expecting that growth momentum to continue in quarter 2. Long-term EBITDA margin have been increased to almost 13 to 14 to 15%, and hence you're seeing JG Chemicals is up almost 6% in trade after profit booking, which we saw in the last few days.
Right. Thank you, Varsha, for that. Girish, any view on JG Chemical post this sharp run-up that we have seen so far in FY26? Is there further room for an upside here?
It's a good candidate for obviously a portfolio candidate. We can say that almost a 31% domestic market share they are holding into the. Apart from that, overall the structure was very, very strong in the longer period of time. Obviously, we can see this little bit pressure into the crude as well as these type of structures, because their major clientele belongs to the tire industries itself. So maybe the reflection should be there, but not for the longer period of time. Obviously, the long-term margin should be very attractive of 14 to 15% EBITDA margins they are looking out for the next financial year 27-28. As well as we are talking about the Dahej plant expansions, then obviously the 50 to 60% utilization should be there and shifted to the product mix also. And they are more focused on the rubber propositions. Rubber revenue should be there approximately 30%. So overall structure was very much stronger. But can this particular counter is for the next at least 2 to 3 years down the lines, because you can see the reflection for the crude prices obviously there, as well as the overall structures in the terms of geopolitical tensions.
Right, before we get into our next stock, let's slip into a short break and we'll be back with more small cap stocks on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster. Bolder.
And the next stock that we'll be talking about is Salasa Techno. Now, to give us more details on what is the outlook for this company going forward, we are joined by Shashank Agarwal, the MD of Salasa Techno Engineering. So, firstly, to start off with, given the fact that we don't speak quite often, if you could just give us in brief, what does the company do, firstly?
All right. Okay, so we are primarily tower manufacturers. So we are market leaders in telecom towers, wherein we supply telecom towers to various companies in India, which include Indus Towers, Reliance, BSNL, HFCL, and so many others. And apart from that, we are major producers of power transmission line towers and transmission line monopoles, wherein we supply transmission line towers and monopoles to different customers. And as well, we do the EPC work for the state taxi boards, PGCIL, and likes of those. So it's a mix of manufacturing and an EPC company, wherein about 30% of the business comes from EPC, and which is engineering, procurement, and construction, and rest about 70% comes from manufacturing, which includes towers, monopoles, heavy structures, structure for solar power plants, and likes of that.
Right, sir. Then let's start off with the first quarter earnings. Firstly, if you could take us through what were the key reasons behind the decline in the EPC segment profitability.
Okay, so we were expecting a lot more turnover in EPC business this quarter compared to what we have been able to achieve. Primarily, that has been one of the projects in Tamil Nadu. Since there were elections in Tamil Nadu, a lot of things could not really move during month of April and May. And that is the reason that the cost of inventories and everything went up, whereas the sales could not be achieved to the level where we were expecting to.
Okay. And by when do you expect a recovery in this segment then?
We've already started recovering. We have recovered this month, last month, and in the coming month. So second quarter, of course, is going to be better than Q1, of course.
When can we achieve that historical levels of margin in the EPC business? Is that even doable in this financial year or something in the next financial year that we should keep an eye out for?
No, I think we'll be able to achieve that within this financial year, of course. There's
now,
no reason.
Okay. When we talk about the steel structure, that segment delivered a strong revenue growth. Do you expect this momentum to continue, and how much of this was price-led and volume-led? If you could give us that idea as well.
So we have a good order book for heavy structure division, wherein we have a long-term contract with a couple of companies, and this momentum would continue at a similar pace, or it might even increase. And we expect to achieve a good turnover from this particular sector.
And if you could tell me how much of this growth was price-led and volume-led as well, sir?
So basically, it is both, I would say. The volume is also there, and in terms of tonnage, we are increasing tonnage every month in that particular division. As far as the prices are concerned, prices are, of course, based back to back on the commodity prices of steel. So that hasn't been much of a change in the steel prices as such comparatively to the last quarter or so. So it is primarily volume-led.
And say, sir, 2 or 3 years down the line, what could be the revenue mix of steel structure and EPC? What is the internal target here?
So we basically are planning. We have full focus in increasing our manufacturing capacity, and at the same time we want to do some good EPC projects. Today our order book stands at about 2,300 crores, which includes about 2,000 crores of EPC and 300 crores of confirmed orders of manufacturing. Plus, on top of that, we have regular orders, from our customers, which are not factored in, which are on a regular basis, on a month-to-month basis. So EPC, as far as the mix goes, I think the EPC would remain somewhere around 35 to 40%, and 60% would be manufacturing, but on a broader top line.
Right. And lastly, sir, just wanted to check with you, any guidance that you could share with us for FY27 on the revenue front, EBITDA, or the bottom line front?
So we of course should be achieving at least 12 to 15% or maybe even 20% growth compared to what we have had at 26. That's the revenue targets for the year. And as far as the EBITDA margins are concerned, I think EBITDA margins would be typically in the range of 8.5% to 9%. But there'll be significant improvement in the PAT. For reason being that after the merger of the amalgamation of EMC Limited, we have some carry forward losses, wherein will not be paying taxes, and our PBT would become PAT. So PAT would increase.
Well, thank you, sir. Thank you for giving us the way forward for Salasar Techno. Let's get in a view from Girish Sodani. Girish, you heard the management. The outlook seems to be quite optimistic, but the share price is showing some other side of move. Why do you think this is happening here? Why the share prices are down nearly 30-odd%, but the outlook seems to be quite resilient here?
Again, we talk about the margin propositions. Obviously, the heavy dent in the particularly margin itself. If we talk about the quarter-on-quarter basis, not for the annual or year-on-year basis, but the quarter-on-quarter basis, there is a heavy dent in the margin itself. If we talk about the net profit, PAT is also almost 12 crores to 5 crores. So this is a basic reason I had been. And apart from that, there is a heavy pressures in the 5G towers proposition itself, because I think the overall business is completely depend on the tower industries currently, and we have already saw that these type of companies have heavy pressures in the commodity volatility also because of the geopolitical tensions. So I think this is a heavy structure, steel and zinc, what they are using of. So the conditions was completely depend on that. Apart from that, so the overall structure was little bit defined completely comfortably. If we talk about the management commentary itself, the management have a strong optimism in the terms of the EBITDA as well as the margin propositions in the next 2 to 3 quarters. As of now, for the investor propositions, I don't think so that the fresh allocations is actually advisable. But if you want to just want to enter in this particular counter a small cap company, so you have to at least wait 1 or 2 quarters itself. Let's see how the margin should be there, and the order book of approximately 1,000 to 1,500 crores, what we are just expecting, how the regulation should be there.
Right. Let's move on to Bazaar Style. Now that stock is up nearly 50% alone in this odd month, and stock has been hitting an upper circuit for 8 out of the last 10 trading sessions. Let's get in Mahima with more details on this.
Right, so Sumit, you rightly pointed out, the stock has done very well in the last couple of days. In fact, yesterday's block deal, where Aditya Kumar Harvasia bought around 45 lakh shares at the rate of 362 also indicated. And this is, of course, the common promoter of Cupid, which has also made around 300 crore of investment in the company. If you take a look at the Q1 performance, also it's been on a strong footing because revenue saw an uptick of 29%, EBITDA an uptick of 24%, and PAT an uptick of 8%. Store expansion has also been healthy. 276 stores are there as of June. They added, overall store count went up by 19%, and 44 stores is what they've added. Rental area has also gone up by 22% this quarter. In terms of operational metrics also, bills were up by 24%, quantity sold was up by 32%, average transaction value also went up by 4%, so more driven by volumes rather than the average price uptick, and sales per square feet was up by about 2% odd. Lastly, in terms of what's also auguring growth for them is the focus market that they have, which has seen market share gains, now contributes around 22% of the total revenue, and it's gone up by 50% this quarter. So the growth, of course, on the back of a low base, but the growth has been at that 50% mark. So this is the overall view as to why we've seen good gains coming in on Bazaar Style. The operations in Q1 were also very strong.
Girish, quickly your view on Bazaar Style at current valuations. Is it a good buy?
Not for the current valuation is a good buy, but obviously this is a strong candidate for the portfolio. We are just going to see that the heavy expansion should be there in the tier 2 and tier 3 cities, and their SSG numbers are completely very attractive. But the stock is already moves too much high, so I don't think so that fresh allocation is advisable.
Thank you, Girish. Thank you for joining us and giving us your views on the stocks that we discussed on the show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Good afternoon, you're watching the afternoon edition of Ask Profit with me, Somit Sarkar. In this show, we'll try and address all your queries with both our fundamental and the technical guest as well. But before that, let's have a quick look on the markets. The Nifty, that's down nearly 100 odd points. We are trying to sustain around the 24,200 level for the last 2 hours of trade. Now, if you look at this, is the 6th trading session of the benchmark that is headed towards that could end in red, and this could be the longest losing streak for the benchmark index since September 2025. The Nifty Bank Index, that's down nearly 200 points in trade, trying to sustain around the 57,300 level. Among the sector indices is the Nifty Auto and the Nifty Media Index, which have been gaining in trade, but gains are largely around 0.5 to 0.6%. On the losing side, we have Nifty IT, Nifty Real Estate, Nifty PSU Bank Index, which are down anywhere between 0.7 to 1.7% in trade. On the stock specific action, it's Tube Investment among the FNO stocks, which is up nearly 8 odd %, followed by MCX up around 3.8% in trade, and then Bosch, which is up close to 3.6%. On the losing side, we have Inox Wind, SBI Cards, Colgate down anywhere between 3 to 4 odd % in trade. But let's start with the query session right now. Let's welcome in our both fundamental and technical guest, Kunal Shah, Senior Technical and Derivative Analyst with Mirae Asset Sher Khan, while Sharad Awasthi, Head of Research Private Client Group, SMIFS, is joining with us. The first query is coming in from Raj from Jaipur. He's holding around 100 shares of Bombay Burma, bought at a price of 1,754. Currently sitting on a loss of around 10 to 13 odd %. But for long term, should he continue to hold this counter? Sharad, any view on this?
No, I don't think I actively cover this one. I think largely it is because of the investment holdings that they have that draws some attention. But I would not have a detailed opinion on the stock.
On charts, any view on this, Kunal?
I think on the charts, it's already trading in a downtrend. My suggestion to him would be hold with a stop loss of 1435 on the downside. If that is breached, then exit along.
Okay. The next query is coming in. The viewer hasn't mentioned his name, but he's holding around 500 shares of Mukka Proteins, bought at a price of 35. Should he hold, sell, or average? Kunal, any view?
So I think continue to hold. A fresh breakout had come last week. Now we require a follow-up action over here. 25, 26 now is the support on the downside. The stock can extend towards 32, 33 on the upside.
It's from Venkatraman from Bangalore. He's holding 4 shipping stocks. Cochin Shipyard, GE Shipping, Garden Reach and Mazgaon Dock. Which one of these should he exit and which one should he hold? Sharad, any view?
Mazgaon is certainly we are very positive one. Even Cochin and GRSE should do pretty well in the years to come. Particularly, we are more bullish on Mazgaon as to the order conversion that happens because we believe the all-time high order book could be much higher vis-a-vis what it is right now. So maybe Mazgaon and GRSE in terms of valuation looks very attractive at these prices. I think if you don't consider future abnormal growth in order book, even then GRSE remains our top bet. But considering the type of opportunities and the type of moat, I think Mazgaon is a much better, larger time frame bet if you are looking at 2-3 years. But 1.5 year, I think GRSE probably would do much better than all 4 of them. So GRSE is the top bet if you are looking at 12 to 18 months. But if you can extend the horizon to 3 to 4 years, I think Mazgaon could be something that could really emanate into a different scale basically.
The next query is coming in from Manjunath from Karnataka. Hindustan Aeronautics holding 20 shares, bought at a price of 4,400. Should they continue to hold for the next 2 years? Any view on this, Sharad?
Yeah, I think certainly you should continue to hold. Mazgaon is a great bet in terms of the submarine part of it, which has a huge moat. We think even HAL has a huge moat in terms of the aerospace engineering space. And the type of developments around engine development, etc., Russian tie-ups, what we are hearing, I think that should be very positive for them. And the scenario is very different vis-a-vis what it was, say, 1.5, 2 years ago, when the valuations had a lot of froth. Right now, I think you're looking at 35, 36 times. I think easily these stocks have huge moat. And once the export opportunity also opens up and the domestic side also speeds up, we are initially working with targets of around 5,500. But I think within the defense space, HAL, Mazgaon, and BEML would remain our top bets. I think HAL is something that you could continue to hold for around 3 to 4 years. Should be one of the biggest beneficiaries of the conversion in defense and the export opportunities that open up for India.
Query is coming from Sandeep Patil from Mumbai. He has bought few shares of Tata Motors passenger vehicle, to be precise 4,576 shares, bought at a price of 346.8. Should he continue to hold this or should he exit? Kunal, any view?
I think overall the stock has been trading in a downtrend on technicals. Again, my suggestion to him would be the recent swing low of 318. That is very important. If that is reached on a downside on a closing basis, then exit your longs in TMT.
Query is from Srinivas Rao from Hyderabad. He is holding 90 shares of Biocon, bought at a price of 418. Current price is 419. Should he continue to hold or exit, Kunal?
I think I continue to hold here. I'm expecting the stock to move higher towards 440.
Next query is from Sriram Raghuraman. He's a senior citizen from Chennai, holding 100 shares of Union Bank at an average price of 37. What's the fundamental view on this, Sharad?
I think finally what has happened in the banking space is that advances have grown. Q1 generally is a slow quarter, but even Q1 has shown good numbers. I think the capex activity is strong. The urban consumption part of it should also pick up over the next 2-3 quarters. So we are very bullish on the whole banking space. I think and for Union Bank particularly, if you look at it, the price to book is roughly 1 right now. And I don't think that 15 to 18% growth would be very difficult for most of these banks post consolidation. And The asset quality issue is also behind us. We don't see any kind of perk up there because even the MSME and microfinance part is getting addressed. The Union Bank does not have much focus, I believe, on the microfinance side, but MSME, they might have some exposure. So I think at these valuations, it's not very risky. I think expect 10 to 15% upside minimum over the next, 6 to 9 months. So continue to hold for around 15 to 20% upside on Union Bank.
The next is a caller query coming in from Andhra Pradesh. Gautam, you can go ahead and ask your query.
Yeah, actually, I want to buy like a Schaeffler India. Which one is better, Schaeffler India or Shriram Pistons? Which one is better for long-term purpose?
Okay. Sharad, which one is better, Schaeffler India or Shriram Pistons?
See, Schaeffler generally is a very strong company, but if you look at the valuations, I think there probably it's a bit of a stretch. It's already trading at 40, 45 times 1 year forward. So I doubt there's much left on the table, but generally the whole bearing part of the story usually trades at premium valuations. So maybe you are looking at 10-15% upside in Schaeffler. Regarding Shriram Pistons, I think most probably the valuations there probably are better than Schaeffler. But I would not have an exact hold on the numbers. But I think the valuations probably there are comfortably better than Schaeffler. And being a smaller company, I think most probably they will have a better growth rate also vis-a-vis what Schaeffler is doing. So maybe it's a strong group. So you could look at Shriram Pistons as a better opportunity vis-a-vis Schaeffler. Schaeffler is a good name, but I think again, typically what happens is the valuations are a bit of a stretch for Schaeffler mostly. Yeah, so Shriram Piston is probably available at 27, 28 times 1 year forward. So I think probably that's a better bet to hold on to. And you are looking at 20-25% kind of CAGR in earnings also. So maybe it trades at 30, 35 times. You are looking at long-term targets of somewhere around 6,500, 7,000 on the stock. So the Shriram Pistons is probably a better name to bet on rather than Schaeffler at the current juncture.
Right, the next query is coming in from Gauri, and she wants to know whether should she sell her shares in Info Edge, in which she's already making gains of around 30% and should she invest in some other mid or small cap stock. Kunal, anything that looks good on charts?
I think overall, Naukri is again still looking good. So my suggestion to her would be continue holding the stock. However, on the other side, I think there are a lot of opportunities which one can grab onto at the current levels. So I think from that space, I think Paradeep Phosphate is something which is very good on the charts. And I think that could be accumulated at the current levels. 148, 149 is where it is trading. I'm expecting this stock to go towards 160 on the upside.
Okay, the next query is from Manthan from Ahmedabad. He's holding 2,800 shares of Suzlon, border price of 57. Should he sell or continue to hold for the next 5 years? Sharad, any view?
Yeah, 5 years, I think you should certainly continue to hold. There is a lot of momentum in the whole renewable energy space. Suzlon would benefit out of that. Long-term targets are very aggressive. I think with the recent corrections, the valuations are not also very stretched in the shorter term, 1.5 year. So I think, yeah, for a 4 or 5 year kind of horizon, you can easily continue to hold Suzlon.
Okay. The next query is coming in from Udit. He's holding 500 shares of Kalyan Jewellers. Should he continue to hold this? Kunal, any view?
I think, yeah, continue to hold. Overall, the stock has seen a very sharp run-up in the recent times. So there might be some sideways consolidation into the stock. For the momentum to come back, 623 is the important level. Once that is taken out, then the stock can extend towards 680, 690 on the upside.
Next query is from Shreyash. He's holding 65 shares of Rolex rings. He wants to know whether should he buy more or wait for a further dip in the share prices. Sharad, any view on Rolex rings?
Yeah, again, something that usually trades at a premium. It's already trading at 32, 33 times TTM earnings. But I think the type of growth they've registered, they've continued to register decent growth even in the long term. So I think they could continue to hold. It's not very expensive, but I would not call it mouth-watering valuations also. So you can continue to hold expecting market-related returns, 15-20% kind of upside.
The next query is from Shrikant from Hyderabad. He's holding 100 shares of PTM, border price of 1,376. Should he hold this counter? Can it cross the IPO price in the next 3 months? Kunal, any view?
Yeah, I think overall the trend is still bullish. I think dips could be utilized as a more buying opportunity. I'm expecting the stock to at least go towards the level of 1850 on the very short term. We have already seen a sharp rally into the stock, so there could be some cool off or profit booking, but that should be utilized as a more buying opportunity.
The next query is from Sadashiv from Tirupati. He's holding 400 shares of Anantaraj, bought at a price of 517. Should he book profit or hold till the next quarter? Kunal, any view?
I think continue to hold. We have already seen the accumulation that has happened at the lower levels. I'm expecting further move on the upside, can extend towards 680, 700 on the upside.
Okay. The next query is on Sagility. Shankar from Bangalore wants to know whether it's a good time to buy Sagility for long term. He's planning to buy around 1,000 odd shares. Sharad, any view?
Yeah, I think at current valuations, again, something you would not call very mouth-watering, 2-3 years, 15-16% kind of CAGR. So maybe not this year, but next year they would report something around 3 rupees as earnings. It's trading at around 42, 43, can trade at around, 20, 21 times. So maybe you're looking at a target of 60. So if you're happy with that kind of returns, I think that's a decent bet at these levels.
The next query is from Sriram from Vishakhapatnam. He's holding 1,800 shares of NTPC Green. Should he hold this counter for the next 5 years, Sharad?
5 years is a long time. I think a lot of the projects would go on board next 2-3 years. Expect a very rapid expansion in earnings. Right now, after the recent correction, it's already trading. If you look at 29, most probably we are expecting 4 rupee kind of earnings. So it's not very expensive right now. So yeah, if you're looking at 4-5 years, I think this is a good level to get into it. But 1.5 years, you might not see much of an income. So accumulate gradually in a staggered fashion on every dip. And I think for the long term, you could easily expect, first 2-3 years, I think what we are expecting is a target of around 120, 130, considering it trades at around 40 times, 30 times. And beyond that, I think even then 25-30% kind of annualized growth would not be very difficult for the company. So in 5 years, you could add another 50%. So yeah, 5 years, I think you would be looking at doubling your money. So it's a good bet at these valuations.
Right. The next is a caller query coming in from Agra. Gary, you can go ahead and ask your query. Gary? Okay, his query was which stock is better for long term, Vedanta, HDFC or ITC? Sharad, quickly your view on this?
Yeah, I think both HDFC and ITC are good names, but I think ITC would have its own challenges with respect to cigarette pricing, etc. So I think my preferred choice would be HDFC Bank. There would be a lot of improvement. We are working with targets of around 1,050, 1,100 on the stock.
The next query is coming in from Ram from Hyderabad. He's holding 300 shares of GE Shipping, bought at a price of 1,600 rupees. Should he hold or book losses? Kunal, any view?
No, I think overall continue to hold the stock. I'm expecting a good bounce already. We have seen good selling pressure from the high levels. So this could again go back towards the levels of 1,500, 1,600 on the upside.
Ranjit from Bangalore has few shares of BAC, bought at a price of 3,442. Should he average or exit, Kunal?
Hold whatever he is having, continue to hold the stock. Probably you will get a good pullback rally on the upside.
The next query is from Sairam from Andhra Pradesh. 62 shares of Astral, bought at a price of 1,698. Currently sitting on a loss of around 10 odd %. What's the medium term view on this, Kunal?
I think the medium term look is positive for Astral. We had already seen a recent breakout into the stock. Now the immediate hurdle is 1,600. Once that is taken out, you can expect this rally to continue towards 1,700, 1,750 on the upside.
Oscar from Bangalore has 50 shares of Oracle Financial Services, bought at a price of 11,000. Should he continue to hold this counter for short term, Kunal?
Yeah, definitely continue to hold the counter. Once it breaks above 11,920, could see further momentum toward 12,200 on the upside.
Okay. The next query is from Joshi from Tiruvananthapuram. He wants to know whether should he buy Torrent Power for long term. Sharad, your view on this?
Yeah, I think generally what has happened with power stocks is they've already become a bit expensive. So I don't think there's a lot of opportunity left to buy there. But I think, 15-16% kind of growth next year, already trading at 25-26 times. So I don't think means the small bounce back market related returns 10-15% is okay, but nothing astronomical. So I don't think it's a decent bet to look at these valuations. Even now, you should not be jumping into buy Torrent Power.
Okay. The next query is on Right. The next query is from Murli from Hyderabad. He wants to know whether is it a good time to buy Uflex or Lenskart. Your view on this, Sharad?
Packaging stocks might do well. I think the valuations are attractive, whether it's Uflex, Jindal Poly, or even Polyplex. But my best bet would be Polyplex amongst these. I think the international operations, etc., make it a better bet. Lenskart, I think the valuations are a bit stretched, even considering a platform business, but the quarterly numbers have been good, so maybe that rally continues. But within the two, I think most probably the flexible packaging space is more attractive at these valuations rather than the Lenskart.
Right. The next is a live caller coming in from Mumbai. Shaunak, you can go ahead and ask your query.
Yes, I've bought Asian Granito at 55.67, holding 3,000 shares. So should I hold or average it down? I want a short-term view.
Should he continue to hold Asian Granito for short term, or should he buy more? What should he do?
I think utilize pullbacks to exit the stock. Overall, the trend is weak for the stock. You might get some pullback into the stock towards 50-55 zone. Now, utilize that as an exit opportunity.
Well, with that, let's start our rapid fire segment. Kunal and Sharad would kindly request you to keep your answers as short as possible so that we can cover most of the queries. The first one is coming in from Ashok. He wants to know whether can he buy Bata Limited at current market price. Kunal, any view here?
Yes, you buy at the current levels can go towards 800.
Kavya from Hyderabad is holding shares of Laurus Labs, bought at a price of 1,416. What's the short-term outlook on this, Kunal?
Continue to hold, can extend towards 1950.
Next query is on Asian Paints. It's for you, Sharad. Rituraj from Bangalore wants to know whether should he buy this counter for the next 2 to 3 years.
Yeah, certainly you should buy it. Next 2 to 3 years should be very good for most paint companies.
The next query is on ITC and it's for you, Sharad. Umesh from Bangalore is already holding 25 shares, bought at a price of 307. Should he continue to hold or sell?
No, you should continue to hold. Dividend yield is attractive. We are looking at targets of 400 plus on the stock.
The next query is on Electronic Marts of India and it's for you, Kunal. Siva from Amravati is holding 5,000 shares, bought at a price of 160. Should he hold for the next 3 months? What's your view here?
I think overall there's a good breakout. 164 now is the new support, can extend its rally towards 210, 220 on the upside.
The next query is on Bharat Coking Coal and it's for you, Kunal. KCP Rao from Hyderabad is holding few shares. Should he continue to hold them for the short term?
No, I think there's no trend into the stock. Once it breaks above 34, 35, then one can go aggressively long.
Okay. The next query was on Pace Digitech and it's for you, Kunal. The viewer is holding 202 shares, bought at a price of 198. Should he add more, continue to hold? Any view on this?
Continue to hold and keep a strict stop loss of 174 on the downside. If that is breach, then exit your long.
The next query is on Clean Science. It's for you, Sharad. Mohan from Coimbatore wants to know whether should he buy fresh stocks of Clean Science at current levels?
Yeah, certainly. The business is unique. I think more or less we have bottomed out in terms of the cycle. So you should buy more.
The next query is for you, Kunal. It's on Marico. N. Padma from Hyderabad is holding few put options of Marico. 840p put option. Should she continue to hold?
I think overall the larger term trend is positive. Yes, from a short term perspective, the immediate support is at 840. If that is breached, then the fall could go towards 820 on the downside.
The next query is on Gabriel India and it's for you, Kunal. Asta Sabarwal is holding few shares, bought at a price of 1,098. Should she continue to hold this counter or exit?
Yes, definitely continue to hold, can go towards 1,800 on the upside.
Next query is on SBI AMC. It's for you, Sharad. Ishwar from Kolkata wants to know whether should he buy SBI funds at current levels.
No, I think you can give it a miss. The whole AMC basket is trading at expensive valuation, so we are avoiding it. Maybe UTI AMC or APSL AMCs are good bets, but rest of the AMC stocks seem like expensively valued.
The next query is on Indus Stars. It's for you, Kunal. The viewer wants to know whether is it a good time to buy Indus Stars for short term.
I think we still need a confirmation. We have reached the 20 DMA. Need to go about 380, then one can go long for targets of 400 on the upside.
The next query is on Idea Forge. Sanskar and it's for you, Sharad. Sanskar from Jabalpur wants to know whether it's the right time to buy Idea Forge for long term.
Yeah, certainly we are very bullish on the stock. I think the quarterly numbers have changed and most probably every quarter you have a positive surprise from the stock.
The next query is on IRDA and it's for you, Kunal. Prabhakar from Hyderabad is already holding few shares bought at a price of 135. Should he hold or sell?
Continue to hold.
The next query is on IDFC First and it's for you, Sharad. Bharat Vyas from Mumbai is holding 8,000 shares bought at a price of 74. Should continue to hold them for long term?
No, I think fairly valued at these prices. I would not be very bullish on the stock at current prices. It's better to switch into something like an HDFC or an Axis.
Well, that was the last query today on the show, and we have managed to answer nearly 120 odd queries in both the morning and the afternoon edition. And with that, it's a wrap on this edition of Ask Profit Afternoon Edition. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A new Nepal, new possibilities. A new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You got to be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show.
Hi, thanks so much for joining in. You're watching NDTV Profit. We're coming to you live from the NDTV Profit Suzlon studio. My name is Alex Matthew. That's Mahima Vachhrajani, and this is India Market Close. And if we had gone to sleep yesterday and woken up right now, you would think nothing has changed, because we're down about 0.4%. It's been a very narrow range for the Nifty 50, and the broader market's more or less mirroring that. Let's pull up the mid-cap index. Just about 0.3% lower at this point for the mid-cap index, about 0.1% higher for the small-cap index. And it's a very narrow range for the broader markets and for the benchmark Nifty 50.
Yeah,
So,
I mean, we're just seeing that earnings is now over, and we're just seeing no action earnings specific. It's just very news specific, and that's why not a very broad range as you indicated, right?
But if you can pull up the 1-month chart for the Nifty 50, just to drive home this point, because of course, there's a fair bit of volatility that you've seen early on, but over the course of the last part of this period, it's just been consolidating and downwards, right? And it's not moved sharply at all.
Yeah.
So that's the thing. And pull up the India VIX, because that's going to be a key talking point. 11.6 or thereabouts right now. It's been hovering around that 11.3, 11.6 mark, and that's really low. So it's not really something that you can expect will move the needle very dramatically, and means that we're likely to see a pretty soft or quiet close despite it being the weekly expiry, and normally that's when you see a little bit of fireworks.
Yeah, I mean, and now that, for cash also things have normalized, I don't think that we will see a sudden spike upwards or downwards per se in the Nifty 50 per se. But let's also take a look at the chart, the heat map, and see as to what are the counters that are doing well, keeping the Nifty at least in check, and which are the ones that continue to be under pressure. You have Axis Bank topping that chart. Slowly and steadily this stock has been climbing. M&M also doing fairly well. Grasim back in the green, had seen some profit taking post the earnings, but today is back in the green. Max Health is the other one which is doing fairly well. ONGC moves as per how crude moves, unfortunately. So that's the one counter. But I think IT is where the pressure continues for second day in a row. You have HCL Tech, which is down 2%. Infosys, yet another 2% downtick on this one as well. Asian Paints, again, crude price is what is impacting this one as well. Tata Motors PV, since the earnings have come out, has not done very well. So down by about 1.8% as well. Tech Mahindra down 1.7%. So largely your IT names. Geo Financials now is seeing that profit taking coming in post the earnings. It's seen good rally, but profit taking coming in on this one.
Pull up the IT index and maybe do a 1-week chart if you can, the Nifty IT, because yesterday in trade you saw a drop of as much as 1.7% or thereabouts. This is the intraday chart, but the 1-week chart is what we're talking about, right? Because yesterday you saw a drop of about 1.75%. Today you're seeing a drop of 1.8%, which means for the week as a whole, or over the last 5 sessions, close to 5% being shaved off. Pull up maybe the 3-month chart for the Nifty IT, and you'll see that this is money being taken off the table in all probability, right? Because you had a little bit of a gain from those absolute low levels that you saw in July, and then some money being taken off the table on the top. So it'll be interesting to find out what the view is. But before we do, let's take a look at the sectoral heat map for the market as things stand right now. There's quite a bit of a decent amount of green on the screen. IT under pressure, 1.8% cuts. Realty, PSU banks, FMCG, as well as the consumer durable pack. But defense is doing well, and followed by the media index and CPSE auto as well, up as much as 0.5% or thereabouts. Individual stocks, let's look at those as well from the broader markets. We can pull up the BSE 500. There are still a few that are reacting post numbers, essentially. I think Tube Investment is reacting to management commentary during the conference call. You have a few others that are bouncing back from cuts that you saw. In fact, I saw Siemens no, was it Siemens or was it another counter that saw quite a bit of a crack yesterday? It's bouncing back today. Mastec, SBI Cards, Torrent Power, as well as KNR Construction and Raymond losing ground. But we've got Akshay Bhagwat, Senior Vice President at JM Financial, as well as Lancelot Dicuna, who's the CIO of ValueX Wealth, joining us this afternoon. Gentlemen, thanks so much for taking the time. Good afternoon to you. Akshay, I'll come to you first. A very lackluster trade, very quiet trade over the last 5 or 6 trading sessions. Is there anything to suggest that we will have a more exciting close, or are we likely to see more of the same over the last 1 hour?
Good afternoon, Alex and Mahima. Well, see, it is the cash effect which is playing, and if you look at the option pricing for the at-the-money 24-200 straddle, it's a 50-point combined premium of calls and puts at the same strike, which means that the market is not pricing much of the moment because there is fear as we just 1 hour to go for cash. So clearly, it's more of a range-bound scenario. The volumes are slowly dipping, and the market slowly is getting a negative tone in the last 7 to 8 trading sessions. So overall, technically, the downside still is open till 24050, which is a gap which can be filled eventually. And the resistance is 24,400. This is more of a short-term positional outlook. And still the drift is on the lower side for the Nifty index, with the gap likely to be filled in the due course of time.
Got it. Okay. Updates coming through for Sammaan Capital, and this is related to a case that was ongoing. They've said that they've gotten a clean sheet by agencies. It was recorded in court. There are no allegations against Sammaan Capital, is what the Managing Director and Chief Executive Officer of the company has been quoted as saying. The Supreme Court has asked the CBI to probe into allegations against the ex-promoter. This is all breaking news as things stand right now. The Enforcement Directorate has stated very clearly that Sammaan Capital in this situation is a victim, and beyond that as well, the FIR in which the CBI will be probing Sammaan Capital is not the accused here. So they've had certain clarifications that they've made with regard to an ongoing case. It says that Sammaan Capital has gotten a clean or a complete and total comprehensive clean sheet from all agencies, and this has been recorded today in court. A 7-year-long battle has finally ended for the company today. We'll get you more details in the context for which we're talking about. Some of you may not know about that context. We'll get that for you in just a bit.
Yeah, and I think if we have Lancelot who's joined us now. Good afternoon to you, Lancelot. Any quick thoughts on this one? I mean, if it's been 7 years, to come to a conclusion now, but quick thoughts on this?
Well, I think whatever conclusions are there will take away the uncertainty as far as the company is concerned. So, in that sense, we will get some kind of resolution. But until that happens, it's always been like it'll be a cloud hanging over the thing. But now that we're seeing some conclusion that gets lifted, and then maybe people start looking at valuations a little differently.
Okay, strong recovery is what we're seeing from the day's low point. It's gone up, but it's again, the stock is seeing some downtick coming in, now down by about 2.5%. Of course, this is towards the ex-promoter, so we'll have to see as to how things fare from here on. But Akshay, before we go on to our stock of the day, your top picks for the day, what is it that you're looking at? And I'm guessing it should be on the buy side.
Yeah, absolutely. So stock-wise, I'm keeping the trades on the buy side. The first trade is in L&T Finance, where there is a good intraday uptick, which we have seen with price volume support. Roughly looking at upsides from short term till around 340 to 350. These are the targets with which you can buy L&T Finance, and the stop loss should be around 310 on this buying trade. And Reliance Industries is one interesting stock which is slowly building up accumulation, which I feel should see a momentum pick up soon. So Reliance Industries is where you can buy at the current market rate. We are looking at a potential breakout and a target to be around 1380 to around 1400 in due course of time. The stop loss will be around 1277.
Okay, all right. So those are the picks that Akshay has on his radar. But Tube Investments is what we've chosen as the stock of the day, and it's seen a sharp rally in trade today, and this is following the commentary that's coming from the management. Let's get in Varsha to understand more as to what is aiding that stock today higher, and what is the positive commentary that's coming from the management.
Well, I would say con call gone right, and hence, you're seeing stock is up almost 8%, a positive commentary coming from management. Talking about demand, so what are they saying about demand is demand remains strong across core engineering business. Volumes are up almost 17% year on year. Well, exports is expected to see double-digit growth momentum to continue. Management is expecting the margin pressure that they saw in Q1 to ease out in next 2 to 3 quarters, and EV volumes is showing strong traction. Losses are past peak. Well, one EV business is expected to break even when it comes to FY27, 2 more in FY28, and CDMO business and a cycle business remain a key growth driver for the company. FY27 capex planned at around 350 crore. This is standalone, by the way. Now let's analyze. Now talking about margins, because that was the pain point when it comes to Q1. So steel inflation hit engineering and MFP margins. Well, price recovery from customer typically comes with 2 to 3 quarter lag, and hence they are expecting full recovery of steel cost increases. Q1 under recovery is also expected to be recovered fully. They are guiding for EBIT margins returning to double digit when it comes to in future quarters. Now talking about demand outlook, which they are expecting to remain strong, they are bullish when it comes to demand for next 1 to 2 quarters. Geopolitical developments though is a key risk according to management, and export, if you see, posted double digit growth, and this momentum is expected to continue. Export overall contributed almost 14% of revenue in Q1. Talking about EV business, which is past peak losses, quarterly losses have likely peaked according to management, and one EV business, if you see, is expected to break even this year, 2 more in FY28. And lastly, on the capex plan, standalone capex is expected at around 350 crore. Overall group capex excluding CG Power at around 700 odd crores. Investments are directed towards engineering, your medical and CDMO. So overall, I would say management is expecting that margin pressure which we saw in Q1 to recover in coming quarters. Demand is expected to be strong. So overall a bullish quarter, or rather bullish con call, I would say, and which has led to stock at 8%.
Yeah, absolutely. Thanks so much, Varsha, for that. Lancelot, the question is there enough on the table if you want to get in at this moment? The stock is already up as much as 8-9%. Is there a possibility that it flags off? What's your opinion on the valuations?
So I think the valuation is a little on the higher side. Its stock trades almost 90 times earnings. And if you look at last couple of years, earnings has been a little difficult, while the management has indicated that margins will improve from, roughly about 9% to 11-12%. And there is good growth going forward in terms of the main verticals, which are, engineering, metal form products, and bicycles. I think, it is still a little bit expensive, and unless you start seeing significant growth outperformance, both in profits as well as in revenues, one should wait, because the risk return ratio is not in favor of, buying at this point in time, because in the future, if there's any negative surprise, that would see some serious re-rating on the downside.
All right. By the way, the entire pack of the defense space is in focus, and this is because a significant order has come through. More defense orders are set to stay at home. The indigenization theme is playing out, and the latest list for indigenization covers 405 items and could unlock over 3,000 crore rupees for Indian firms in the way of orders and tenders. Parth joining in to tell you about what the latest update is and who likely stands to benefit. Parth?
So DDP has notified the 6th positive indigenization list, having an estimated business potential of over 3,000 crores for the domestic defense industry. This list includes 16 Indian Coastal Guard items and 389 DPSU items. So in total, 405 items are there in the list. These kinds of indigenization since 2020 has generated over 9,000 crores in import substitution for the India's defense industry. So that's pretty big coming coming in. Coming to the scope of items that are included in this list, they include air platforms, armored platforms, warships, missile systems, defense electronics and ammunition as well. Coming to the program context, this region portal, that is basically a dedicated platform where MSMEs and Indian defense PSUs offer the defense items. In that portal, 33,000 items for indigenization have been offered since August 2020, and the first 5 lists, this is the 6th list, the first 5 lists that were notified have notified around 5,000 items for domestic development. So more than 15,700 items have been indigenized over the last 5 years, and DPSUs have placed procurement orders for more than 10,000 crores worth of orders since March 2026. Now coming to the beneficiaries, the companies whose items have been listed in the list, starting with Bharat Dynamics Limited, whose 13 items have been listed, then Bharat Electronics, the maximum number of 227 items have been listed of the company, then BEML and GRSE, both of which have seen 7 of their items listed in the in this list, and HAL as well, around 86 items, and lastly Mishra Dhatu Nigam has seen 7 items placed on this list. So these are the 6 names from the listed defense space that stand to benefit from this.
Okay, Par, thank you so much for getting us that entire list of names that benefit from this entire DDP indigenization. Akshay, of course, Parth did cover as to how many of these, get listed company-wise as well. Execution, of course, will be the key aspect to watch out for. But seeing that we've seen a significant rally today in a lot of these names, do you think any of these names still look attractive, where there could be further upside that one can enter into?
Absolutely. So Paris Defense is one stock which has seen a very significant breakout on the technical charts. This has been supportive of volumes. It's a massive 10% up today. It's a bullish pattern which we spot on the charts, which is giving us targets of 1600 to 1650 on the short-term momentum front. So this is one good pick. If you are chasing momentum, you can look at Paris Defense.
Okay, all right. So that's the view coming on defense. I'll quickly come to you also, Lancelot. Like I said, for all of these defense companies, order wins is not a problem, but the execution is. At the same time, despite of, muted returns on a lot of these names in the last so many months, execution still remains a key. So if you're watching out for the defense space fundamentally, which one would you place your bet in?
I think a lot of these companies, have risen, Naima, on the back of order wins and the anticipation that, they will convert, these orders into sales and profits. But if you've seen and you look at a percentage of order book vis-a-vis the sales, you will find that many of these, companies, they're not able to convert those into sales in a short term. So given that background, I think most of them are expensive at this point in time. And maybe the ones that have a smaller business cycle, companies like Data Patterns, to some extent BEML, and BEL to some extent also has been able to do some reasonably good execution. These are companies which one can follow, but at the moment, valuations of all these companies appear to be fairly stretched, and so one should probably wait for some kind of correction before investing in them.
Yeah, that's true. Despite of not having a significant rally, the valuations still, do not look cheap at all. So that's a concern that the entire industry is facing. But just shifting back to Sammaan Capital, the Supreme Court has asked the CBI to examine allegations against former India Bulls promoters. Sammaan Capital said the probe is related to a former promoter, not the company. Nimit is here with more details on this one. Nimit?
A very topsy-turvy week for Sammaan Capital, right? Earlier this week, the Karnataka High Court, actually on Friday, the Karnataka High Court quashed the ED proceedings against the group. Then on Monday, it agreed to rehear the ED's arguments to reopen the case. And now the Supreme Court has said that it's asking the CBI to look into the allegations against these former promoters, the IFHL promoters, now Sammaan Capital. Of course, now these allegations are of round-tripping, of fund diversion, provision of loan evergreening and a 1,574 crore transaction. Now, the group that's filed is called the Citizens Whistleblower Forum. It's a public interest NGO which has filed the case against the Union of India. Sammaan Capital is not directly involved, a key point which the Sammaan Capital founder has also raised. Sammaan Capital has says that there are no allegations against the company, that the probe concerns former promoters, not the company, and the fact that it is not named in the FIR. But the fact is that the Karnataka High Court is rehearing this case and is rehearing the ED allegations, and now the CBI has been asked by the Supreme Court to independent of the ED's proceedings itself, look into all of these allegations that I just named.
All right. Nime, thank you so much for getting us those details. And like you mentioned, it's been a tough week for Sammaan Capital as a whole. But, we already took a view of Lancelot on this one. But Akshay, anything quickly on the charts if you can give? It's recovered quite a bit from the day's low point now. When we were talking about this update coming in, it was down almost 2.5%, but now has recovered quite a bit. Anything that you're seeing on the charts right now?
See, it's the news, post-news, the stock is trying to settle down. And if I were to just look at the stock, technically leaving aside the news, then the stock has a very strong support zone at the levels of 140 to 145. It's almost made a low of 145. So the chances of a slight pullback from here looks more of a probable situation. And if it does, we are again heading to levels of 160 to 165.
Okay, all right. Let's talk about sugar. And this is something that, of course, is a cyclical business, but the latest update has to do with tight global sugar supplies, lower inventories and rising prices, which are all boosting the sector's outlook. It's looking good for quite a few of these companies, but there's also news that there could be duty changes in the offing. Let's head across to Sharad to find out what the context is and which companies stand to benefit. Sharad?
So Alex, first of all, initial trade, the sugar stocks were up, but now of course news flow coming in that government might be having an intervention. Now this weighs in cutting the import duties of sugar, and the duty cut might curb the domestic prices, and those prices, I'll get you those details as well. Now they're weighing in lowering 10% tax on imports and may scrap 100% tax on inbound shipments. Now this of course is not good for the profitability of the sugar companies, and recently the sugar stocks have been doing really well. The domestic prices have crossed the 5,000 rupees quintal mark, and these are the prices for the month of August. We are seeing that up move up almost 10%. We have taken it from the major sugar belts of Muzaffarpur and Kolhapur. The global white sugar prices, that's also at a 15-month high level. So globally, why this is happening? This is because of tightening of supplies, and these are the sugar stocks from 26 lows. You can see a significant up move has happened, but yes, a little bit of correction happening in the day's trade. Largely apart from this, also if you look at it, the tightening supplies is coming because of Europe's output that's expected to fall to its lowest in the decade. Get in Thailand, get in India, that's where the El Nino impact is happening, and that production we can see is becoming a problem, especially for the sugar industry as a whole. And because of that, there might be a little bit of diversion which can be played on the other side with not sugar but not on the ethanol as well. Now sugar now commands a premium over this ethanol. This is the pricing which I'm talking about, and going ahead also we can see that this is right now positive for the sugar stocks, and the diversion can play here as well. But what lies ahead is important as well. Inventories are on the lower side. India may import sugar, and the crushing season has been delayed, and that is why sugar stocks are there. But this trend we already got for you 2 weeks ago, and I'm sure you could have made an alpha out of it, because the reason why sugar stocks are in focus.
Okay, all right, Shah. Thank you so much for getting us those details. And yes, since the time Shah had pointed out with regards to sugar stocks, they've rallied quite a bit. Something like a Balrampur Chini or Dalmia Bharat has done pretty well in the last 1 week or so. Akshay, I'll stick with you for this one as well, because largely a lot of these names are small cap names, and they very frequently see volatility in terms of buying and selling. Any specific counter that you're liking? Balrampur was where the charts were looking attractive, but now it's now seeing profit taking coming in. What do you make of charts for any of these names?
So most of the sugar names have already had their fair share of run up from the short term perspective, and we are noting some bit of profit taking from the higher levels. So buying at the current levels is what is need to exercise caution at the current juncture. A slight dip should make it more suitable from a risk reward perspective. If you're looking at stocks, then Balrampur Chini, which you mentioned, is a good pick, but again, wait for some dips from the current level, and the ideal level to buy from the current level should be somewhere around 620 to 630 on the lower end.
Okay, all right. So that's the view coming in on sugar names. But now let's try to get in Somit Sarkar, who joins us with all the chatter from the dealing room that he's been hearing. And let's try to find out as to post earnings season, what has he been picking up. Somit, what did you find today?
There are a lot of fundraise and QIPs and block deal is something that's been on the street post the earnings season, and first two stocks are on that. Polycab and Indigo. Now there are sell flows on the PMS desk. In fact, if you look at the charts, you can see a sharp downfall that has come in the last half an hour of trade, and dealers are expecting block deal to happen very soon in both the names, that is Polycab and Indigo. For Netweb Tech, the company opened their QIP yesterday. What I'm picking up from dealers are that the demand is quite strong here. A chunk of FIs and domestic investors, and which are largely long only funds, have been subscribing or have shown interest for this QIP. When it comes to SPR Auto, which was earlier known as Shriram Piston Rings, their QIP also opened. The demand is largely driven by domestic investors is what dealing rooms are indicating. For Paytm, there was a big block deal that took place today. Resilient was the seller here in this counter. What dealing rooms are indicating is that the demand was quite weak here, and among mutual funds only SBI was one of the large buyers in trade is what dealing rooms have indicated. For Jana Small Finance Bank, there are buy flows on the large HNI and the PMS desk. Dealers expect some positive news flow very soon here, and there's also a buzz of a potential block deal that could happen. TPG might likely be a seller on this counter. And lastly, when it comes to Godrej Consumer, there are buy flows on the PMS desk. Dealers are expecting new CEO name to be announced very soon. So keep an eye out for Godrej Consumer as well.
Okay, all right. New CEO name on the cards for Godrej Consumer is something that we'll be looking out for. But Lancelot, while we are talking about GCPL, overall for FMCG as a whole, what we've seen this quarter is that largely there has been volume driven growth, but very similar to what it did in last quarter. Price hikes have led to that margin uptick coming in, and there are higher ad spends also that has aided the top line per se. What do you make of these FMCG names, especially the staple names in terms of earnings, and anything in specific that you're liking, especially because something like a Marico or Tata Consumer that has kind of given good double-digit volume growth?
So, Mahima, we've seen most of the companies announce in the FMCG space announce a little better volume growth. And I think that has been a carry forward from the fact that, after reduction of GST rates and, rationalization, there has been some amount of improvement in the demand, as well as we've seen inflation has tapered off a bit. So the companies are performing better. But I think one can look at a little bit more shift in favor of premiumization. And those companies which have been following the strategy of providing premium products and higher value addition on the products like Britannia and to some extent, the Marico Industries, they have come out with better numbers in terms of the profitability. Also, the outlook from most of the companies is that this trend is likely to sustain, and we should see, despite the Middle East, challenges, we should see some amount of, sustainable growth coming in from this sector. And the few companies who've focused on premiumization are able to even improve margins. So that's a good sign going forward.
All right. Akshay, one of the top losers on the entire, Nifty total market right now is Ahluwalia Contracts. Volumes are also pretty high on this one. Seems like a big seller selling stake. But, what do you make of the charts on this one? And do you think that it could have found its bottom or there could be further downside?
Yeah, 10% down is a big downside for the stock in intraday, and the stock has broken its important short-term technical support of 745, which further fuels the downside. So probably looking at the downside till 640 to 650 zone, where you can find some bit of respite buying.
Okay. Milky Mist is the interesting one and the new kid on the street. In fact, it did hit upper circuit after getting listed at a premium of almost 70% and now trading 30% higher. In fact, DAM Capital did initiate buy rating on this one today with a target price of 175. What they're saying is that it's a pure play exposure to dairy's fastest growing categories. Margins built on mix amid higher working capital. What they're also saying is that the GST rationalization is a durable accelerant to formalization of this entire space, and it has one of the best in class margin structure defended through a difficult cost cycle. Plus, when Nimit was speaking to the management as well, they did say that it's one of those bootstrapped companies and has not made losses since the time of inception, and ad spends well below FMCG players. Margin expansion creates room to scale it is something that's making DAM Capital bullish on Milky Mist. Lancelot, any quick take on this one? Because just from my own personal experience, and I'm saying this, that I was somebody who used to use Amul very frequently, but after kind of trying Milky Mist products, which is of course at a premium range, as well as slightly higher versus what the other curd companies sell it at, but there has been a shift in terms of where consumption goes for me, in terms of where curd goes, and even paneer for that matter, and that's been the case for a lot of people that I've been talking to as well. So there is a matter of premiumization that's working out well for this company, and the IPO listing has also been on a very strong footing. Do you think that this 175 target price that's been given by DAM Capital could be justified?
But I think maybe the 175 target price could be justified, based on the fact that yes, they do have a significant advantage in terms of the others, but at the same time you have to look at it also from the base. So they are coming up from a much smaller base as compared to the others like Amul, etc. And that base is something which which will be very difficult to dislodge over a longer period of time. So I think the initial period where a lot of people shift to newer products based on the premiumization that they offer will maybe moderate over a period of time, and when people start to see that okay, the the growth is not going to be that high, then even the valuations may also reflect that moderation.
Makes complete sense, but the fact that this has also been a digital first brand and has scaled quite a bit because of quick commerce and e-commerce is something that will be interesting to see going forward, as well as to how they can penetrate beyond those southern markets, because it has a very strong brand presence in the southern markets, but moving towards the north we'll have to see as to how that takes place. But with that, it's time to slip into a very short break. On the other side, we'll get you BTST trades, and of course Akshay and Lancelot, thank you so much for taking out the time and helping us with your insights on all the stocks that we discussed. Like I said, time to slip into a very short break. Do stay tuned in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and mean.
Welcome back. You're watching India Market Close and this is NDTV Profit. We're joined on this leg by Amit Goel of Blue Oak Wealth as well as Sunny Agarwal, who's Head of Fundamental Equity Research at SBI Cap. Gentlemen, good afternoon to you and thanks so much for taking the time. Amit, just another boring day in the markets, huh?
I swear. Absolutely. Yeah.
Okay, so no, before you get into any of that, why don't you also tell us what strategies that you would employ? It is, of course, expiry day today. And are there any short-term trades that you're suggesting, or are you saying it's better to sit by and sip some iced tea?
Iced tea is always welcome, Alex. I mean, if you're offering that, I'll be more than glad to have it. But coming to the markets, if you remember last time when we had met on the eve of independence, and we went on a spree of complimenting each other, I would have to compliment again that you've grown a nice fuzz and you're joining the club. So welcome to the club. But for that, if you look at the, if I were to, kind of recall the stock that I had given on that day, it was, I was bullish on the defense stocks, and we had looked at Paras Defense as one of the picks at around 1300 levels. Currently, it is at 1550, 1530 levels, which is where I would probably suggest taking off some profits from this counter because there is a lot of strong momentum here. And yeah, I mean, this could be a good opportunity to, book some profits from this particular counter, which was given last week. Now, coming to the picks for the day, what I feel is where I see some bit of momentum is in HFCL. It has been in a very strong rally from 74 levels itself, but of late it was, in a sideways consolidation range. With today's move, supported by strong volumes and the moving average support, it is trying to give a breakout sort of a formation at around 280, 228 levels. So keeping a stop loss of around 212 levels, one could look for targets of 250 and above.
This one has been a very interesting one and has seen very interesting moves also. This one and Sterlite, both of them are, either upper circuit or lower circuit is what we've seen on the charts. But interesting picks, Amit. But just something that's flashing on your screen down there with regards to Tata Sons AGM that's being called off due to lack of quorum. The lack of quorum on SRTT ban by Charity Commission, is SRTT basically stands for Sri Ratan Tata Trust, and the date has not been announced yet for the next AGM, so that's something that we'll be watching out for.
So yeah, the context is important to understand, right? The Sir Ratan Tata Trust is one of two trusts that will have to nominate members to the board to have the AGM proceed for Tata Sons. And as things stand right now, because of a ban that has been levied by the charity commissioner, the Sir Ratan Tata Trust cannot meet. The board cannot meet, and so therefore nomination cannot take place. And without the nomination, a quorum or the necessary number of members meeting for the Tata Sons AGM to proceed does not take place. So one thing has to happen followed by the next. As things stand right now, that has not taken place, and so therefore you'll have to wait for an update from the charity commissioner whether or not there is an allowance to go ahead with a meeting to nominate a member for the AGM to proceed. And of course, there's also the announcement of who will represent the Sir Ratan Tata Trust in the panel that will be formed to identify the next chairperson of Tata Sons. So all of that has to happen as things stand right now. Right now, the moot point is that the AGM has, or rather the members have met, and the AGM has been adjourned because of the lack of a quorum. Right now, let's talk about MCX, and it is witnessing a tug of war between strong volume recovery and regulatory headwinds. Sharad joining in to talk about a bull versus bear scenario with MCX. I wonder which is stronger, Sharad.
Well, it's actually the bulls are quite stronger, but I'm going to put you the other side also of the story, because the volumes are going up, so much volatility, be it crude oil, precious metals, and one of the biggest beneficiary happens to be MCX, and that's the first, the most important bull case. The bear case is, of course, the delay in the launches of new products, because a lot of competition is coming up. Second important reason, let's have a study at MCX, and that is the SEBI's proposal to increase the FPI participation. We had seen a good momentum last week on that news, and that will actually deepen the markets going ahead. But RBI restricting bank funding for domestic prop traders, that's of course on the negative side. Also looking at the volumes, there has been a good recovery, especially in the month of August, while on the bear case, the stock has already run up and it's trading at the valuations which is more expensive than the 5-year average PE numbers. Let's look at one more case, and largely the company itself is a near monopoly in the most non-agri commodities, but slowly other exchanges are announcing more competitions such as electricity futures and other products also, especially in the non-agri segment. So competition is heating up. Lastly, UBS has the highest target price with a buy rating of 3,800 rupees. On the other hand, the lowest target price is by Motilal Oswal with a neutral rating at 2,790. So this is an interesting case of bull versus bear for MCX.
All right, okay, Shah, thank you so much for getting us that bull versus bear perspective. Sunny, which side of the camp are you on for MCX?
Yeah, so we continue to remain on bull side. I mean, we are bullish on the business because as we all know that market is still very underpenetrated, and as the new product launches are seen, we will see that there is a humongous scope of increase in volume. At the same time, in a short to medium term, as the volatility in the gold and silver prices increases, we have seen that there is an abnormal increase in volume, which definitely benefits MCX. So again, and as Sharad rightly pointed out, FPI participation is another trigger which can play out in medium to long term in terms of enhanced participation. So I think we continue to remain bullish. I think it's a structural long term growth story. So any dip should be buyed and it should be part of your portfolio at least for next 3 to 5 years.
Okay, all right. So that's the view coming in on MCX. Indocount is the other one that's been shining in trade today. A lot of other textile names are also doing very well in trade, but for Indocount specifically, Q1 was also a very strong show. There has been improving export demand and margin expansion also happening, supporting its overall FY27 growth outlook as well. Jasmeet is here to give us a deep dive and a spotlight on the stock as to why it's buzzing and seeing that gain of 12.8% as you can see on the screen. Jasmeet, take it over.
Well, Mahima, thank you for that. As rightly said, over the entire textile space, Indocount is something that has gained a lot in the recent times. If you look at the recent rally of this particular counter, from the month of March lows, the stock has rallied nearly 104%. and the stock is about 51% in last 6 months. Now, what is driving this rally is firstly the overall turnaround for the company, which we saw in the Q1, and also the strong FTAs that the government has been signing with different countries is something that's supporting the entire space and Indocon specifically. Let's quickly understand the key reasons and what's working for this particular counter. While the first one is the Q1 results. The Q1 was a turnaround quarter for the company, where we saw a healthy growth in terms of the revenue, which was up nearly 27%, while even the EBITDA increased in this quarter, and the margin expanded to 30%, increasing over 200 BPS points. Further, we also seen that the management states a strong bullish outlook, where they state that they want to reach that 5,500 crore of revenue in FY27, and they also call out that the Q1 performance was in line with what they were estimating. Further, they also estimate to reach 13% margin goal consolidated in FY27 alone, while the Q1 margins are already in line in terms of the guidance. So these are the few things that are possibly impacting from the management side of the business. Now, there are other key reasons also that's impacting the stock and the textile sector as a space. Now, if you look at the overall performance in the US market, that has improved over the time, and further the company has also signed various FTAs between the UK and EU, which is helping the stock. In terms of the other key details, we also know that the US inventory correction, which happened a couple of months ago, which was largely done, and we can expect a strong demand recovery from here on from the US market itself. If we look at the management key commentary, management remains bullish and continues to focus on expanding their market apart from the US. The non-US market currently contributes about 30% of the revenue, and they expect that 30% to increase by 20% in FY27, which shows to increase the overall risk which we saw recently in the US because of the tariff, which will not happen again if they expand the overall geographies. That's the key focus of the management. Further, they also remain on track to achieve the guidance. Now, if you look at the key analyst recommendation for this particular counter has 6 buy calls, and the return potential from here on is 16%, and this 16% comes in after the rally which we saw already in today's trade.
All right. Thanks so much, Jasmeet, for that. Sunny, what's the view on Indocount and not just necessarily on this one, and it's buzzing in trade today after the update that we've just spoken about. It's up 13%. What's the view on this counter and any others in the space that may not be as expensively priced?
Yeah, I think definitely. I think for all these home textile players which are focusing on US as a key geography, for them, Q2 and Q3 is again a very seasonally stronger quarter. So I think when they have delivered such a fantastic set of number in Q1, I am expecting that Q2 and Q3 will be far better and will report a sequential growth. So seeing that well placed for at least next 2 quarters in terms of earning delivery. In terms of stock pick, what I feel is that relatively we have seen a very handsome rally in this all home textile player. Would like to focus on domestic players which are focusing on yarn as a key manufacturing segment. So companies like Nitin Spinner, or for that matter Vardhaman Textile, KPR Mill. These are the few players which I feel can be looked for the fresh investment at the current juncture.
And, quickly, Amit, any BTSC trades that you have, especially a quick one, because, the cash segment for F&O will shut soon. So, quickly, if you have anything on mind.
GRFC is the pick. I still go with the momentum in defense space, and I will keep a stop loss around 2,600 or below for targets of about 2,800 and 900.
Okay. Pull up Great Eastern Shipping and also maybe Shipping Corporation of India, but GE Shipping for sure. The stock has come off the high point of the day, but still trading with gains of about 2%. Shipping Corporation of India up about 3.2%. Sunny, the conversation has been after the first quarter results that, of course, freight rates going up on account of external factors has been positive for these two counters, right? This is not something that will continue in perpetuity, but in all probability, a second quarter might also see similar gains. Is there a case to be made to invest in these counters to take advantage of that?
See, Alex, obviously short-term volatility will always be there as we keep on seeing fluctuation in the freight rate basis, the kind of situation which is playing out geopolitically across Strait of Hormuz or any other part of the world. So as we speak, Baltic Dry Index, which is one of the key index tracked globally by investor, during the last 1 month is down by 14%, and that is something getting reflected in the stock prices also. But having said that, what we believe is that post COVID, we have seen that majority of the shipping line is concentrated in the hands of China, and government is giving a lot of boost to ensure that even India as an economy should have its own shipping line, and we believe that that should augur well for all the ship operators like GE Shipping, including Shipping Corporation of India. So long term, we believe that it's a structural growth story, and within all the companies, we believe in terms of valuation, Shipping Corporation of India, which is an government-owned entity, trades at a very reasonable valuation. Again, a market leader as far as inland shipping or outbound shipping is concerned. So if any investor has long-term horizon, I think it's a good opportunity to accumulate Shipping Corporation of India. And I'm sure as the government unveils more incentive for shipping industry, ultimately Shipping Corporation of India will be one of the key beneficiaries.
What is the return potential in your opinion? If you look forward, maybe not a 1 year target, but maybe beyond that? Sunny? Sunny, are you able to hear me?
Yeah, now I can hear you. Yeah.
What is the return potential in your opinion, even if it's not a 12-month target, the long-term potential in your opinion?
I think again, Alex would not like to give any target, but what I feel is that potentially used. So maybe it can be a good compounding story depending on the new ships which Shipping Corporation of India would add over the period of next 1 or 2 years. But in case there is an policy support, we believe that maybe 15 to 20% CAGR return is not a big ask as far as SCI is concerned.
Okay, let's take a check of where the markets have. Well, the indices have seen their last trade, if you can call it that, at 315. Of course, is when the cash market for F&O stocks stops, and that is a large part, of course, of the large cap stock. The Nifty 50, therefore, has paused at 24,166. You have the mid cap index that's down about 1/3% or so. The small cap index a large part of it, of course, continues to trade. It's still up about 0.2% or so. The Nifty Bank is interesting to look at. It is down about 1/3%, more or less moving in lockstep with the benchmark Nifty 50. And quite a few of those internal stocks actually moved quite significantly in trade yesterday. The large ones at that, State Bank of India and HDFC Bank, were a couple of the big movers in that cash window. So just a quick view, Amit, from you on how expiry is panning out. It's tended to be a little quiet, is it not?
Yeah, it has been. I mean, the entire large cap space, Bank Nifty included, has been in a range which is difficult to break. In fact, a couple of times when we had met, 24,774 at the top was a very strong resistance, and the market has given up. It is moving in a range. There has been no clarity in terms of the price momentum, and expiries also have been fairly subdued. No real rocket, no real volatility, so to speak, which is in a way good that we don't see a lot of spikes happening during the day, and retail traders can possibly look at closing out their trades before the cash window sets in, which is around 3 o'clock itself, so as to avoid these kind of possible volatilities in the closing bit.
And that ultimately is leading to a drop in the volumes across the board, and specifically on prop trading as well. Prop traders are actually losing some of the volume that they've had in the past. That's measurable, in fact, and the data is showing that there is quite a decline, and this is on account of the adoption of the cash. Parth is joining in to talk about some of those details. Parth, very interesting information that you pulled up. What are the standout features?
So there are three headwinds that the prop traders are currently facing. Starting with the first one, the most obvious, the closing auction session, the new mechanism that has been introduced by SEBI, that is causing an increase in execution losses for the domestic prop traders. The second one is the STT hike recently that came effective from April 2026. That is increasing the overall cost for overall trading cost for them as well. And the third one, the RBI's stricter bank guarantee norms, that is also threatening a 10% cut in the turnover. So these are the three headwinds that the prop traders are facing right now, and prop traders make a significant chunk of the overall F&O segment because they generate around 50 to 60% of the total equity options notional turnover. And not just that, the domestic segment of the prop traders, they also alone contribute to roughly half of that entire turnover. So that's how important the prop traders are. prop traders are for the Indian F&O segment. Now let's look at the volume decline that we have seen. Well, before cash, total around 82 crores of contracts, that's both long and short, were traded by prop traders. But in the week 1, we have seen a decline of around 15%. In the week 2, that is the week of between the 10th of August and 17th of August, that has seen a decline of almost 29%. So that big of a damage is what we are seeing in terms of volumes. Also, the average daily turnover, the month till date numbers for August when compared to July, those are down 12% for BSE, 14% for NSE. Also, the week 2 versus week 1 in terms of cash, we saw that 29% decline, and that's visible in both BSE and NSE as well, between the range of 20 to 23% decline. Also, the expiry day average daily turnover, that has seen really sharp fall versus the peak that we saw in March 2026, down almost 27.5% for BSE and over 46% for NSE. So that's the kind of damage that we are looking in terms of both volumes and the daily turnovers. Now, what impact does it give on BSE? Let's try and understand that. Well, the stock has corrected over 25% from its peak back in May 2026. Even Jefferies has downgraded BSE to an underperform rating versus an hold rating that they had on the stock earlier. They have cut their target price by 16% to 2,940 rupees per share, and they have also cut their EPS estimates between FY27 and FY29 by 5 to 12% as well. So that's the kind of impact we are seeing on BSE. But what can BSE do to offset this damage? They can do two things. The first one is they can hike their option fees. Currently, they have a fees of 325 rupees for every 10 lakh of premium turnovers. Compared to NSE charges around 350. So there's this gap of 25 rupees. And if BSE hikes these option prices, it could add around 6 to 7% to their EPS. The second method that BSE can do is they can increase their messaging fees for colocation facility. If they do this, then it can add around 8% to their bottom line as well. So these are the two measures that they can take. Now, coming to the brokers that are likely to get impacted as well, we have big names like Grow, Angel One. Angel One has a significant exposure towards that F&O segment. 5 Paisa Capital is also among the bigger brokerages. Also, IIFL Capital Services, Motilal Oswal as well. So that's the entire ecosystem that is getting impacted because of the cash mechanism, because of the STT hikes, and this is the entire outlook for BSE and the brokers involved as well.
Thank you so much for putting that into perspective. Quite an extensive research that he's done on this one. So a nice one. Sunny, I'll quickly come to you on BSE. As he was pointing out, that overall, we've seen a 25% downtick in the stock since May 2026 peak. There's also, downgrades coming in from brokerages, EPS cuts also coming in. And at the end of the day, we can all see that there is going to be volume impact, overall impacting the top line for BSE. So what do you make of it? And do you think that the two remedies that were suggested in the link could be, one of the ways to kind of combat the top line loss that it is making on account of cash?
Yeah, I think definitely. I think most of the negatives are already in the price. So as we have seen on account of implementation of cash, the volume have dipped significantly, and to that extent stock price has also corrected. And even in terms of valuation, what I feel is that from the earlier peak, now even valuations have turned comfortable. And as rightly pointed out, BSE do have some levers, at least in terms of pricing as compared to NSE, where they can utilize that lever to shore up an earning growth. What I believe is that ultimately, as CB has already indicated, that cash is likely to continue. Maybe a better mechanism on or lenient mechanism on SLBM adoption is something which can drive the volume going forward. So which I believe should be the next step which regulators may adopt, and that can again lead to an increase in participation as far as derivatives is concerned. So maybe short term, maybe I think all the negatives are in the price, and stock can consolidate in a short run. But if somebody is a long-term investor, definitely one should consider accumulating this stock, keeping in mind that even NSE is likely to come out with an IPO next month. So now with a valuation almost at par with an NSE as far as an off-market transactions are concerned, we believe the downside is very limited and upside is subject to a volume recovery, which we believe will be seen over the period of next 6 to 12 months.
Okay, specifically on the charts then, and pull up the year-to-date chart for the BSE, you will still notice that it has reasonable gains. And by reasonable, I'm still talking about a 26% gain. Of course, it's come off the heady highs that it had in the months of May and June. But Amit, on the charts, how does it look at this moment?
Weak in one word, but I'm constructive on the overall capital market space, especially with the wealth management companies like 361, Anand Rathi, Wama, and others. But speaking specifically about BSE, while obviously it's like a duopoly, and we have seen a very strong run up in this and subsequent correction also. If this stock comes around, if we are able to pick this stock up at around 2800, 2600 levels, which was the prior consolidation level on the weekly charts, that could possibly be a great entry point in the stock. Currently, I see there is a continued weakness, and possible entry is around the 2800, 2600 levels itself.
That's the technical view coming in on BSE. But you know what, Amit, there are certain names that have done very well today. Something like an HEG that's touched highest levels since Jan 19. You have something like an Aegis Logistics also 3-day gaining streak straight coming in on this one. You also have Paras Defense. Of course, we talked about defense names, but Action Construction is also the other one that's continued its 3-day gaining streak. Anything from these names that you're liking and where upside could continue still?
I mean, given the kind of run-up these stocks have had in this kind of a weak market, I would possibly not look at fresh entry points here and possibly look to book some profits if I was an early entrant. So again, coming back to where I do see some bit of momentum building up, I continue to be a little bullish on and a little biased on defense stocks, and shipping would be there, which is GRSE is again my top pick, and none of these stocks which you have given because of the sharp run-up that we have seen in this kind of a weak market.
That's an important point. By the way, Schneider Electric is a stock that I was talking about right at the I wanted to talk about right at the start. It saw quite the crack yesterday, 11% drop. Has recovered a little bit of ground, half of that actually, not half of that, but 5% today. Sunny Agrawal, what's the view on Schneider, specifically Schneider Electric? Would you be a buyer right now, just looking at their order book and the potential for the rest of FY27?
Yeah, I think again, sitting on a very strong order book. However, we have seen that this quarter was slightly muted for Schneider. So maybe looking at the kind of capex which we are witnessing across the power as well as especially on a data center side, I think Schneider is one of one key beneficiary. Nonetheless, all the cap good companies which are related to this power and data centers are trading at an expensive valuation. But since the growth potential is again very humongous, I think can sustain this valuation going forward. In case margin recovers, I believe that there is a further upside which is still left on table. So maybe buy on dip is the strategy which one can adopt in Schneider Electric.
All right, okay. So that's the view coming on Schneider Electric. Amit, something like, in the textile space, Wellspun Living is also something that's done very well today. But textile stocks right now are kind of divided into two. There are some that are doing very well. There are some that continue to be under pressure. Anything in that space that you specifically like?
I mean, obviously, as a momentum follower, as a trend follower, I would obviously like the usual suspects: ICIL, Illucount, Nitin Spinners, Filatex, Sport King, etc. But then again, they have run up very, very sharply, to pick up these kind of stocks in a momentum would be when they correct a little and come to a support level, which I don't see happening anytime soon. They have given all sorts of breakouts. So, if you have early entrants, ride them or wait for a dip towards, long-term moving averages and then possibly pick it up from there.
Okay, I think the final rates are in. Can we pull them up? I think for the Sensex, it's in. 77,235. Pull up the intraday chart for the Sensex and you will see what I'm talking about. So it's closed lower. The close at 315 was 77,375. It has closed at 77,235. So it's dropped a little bit and cuts of about 0.6% visible on the Sensex. The Nifty and the Nifty Bank are yet to close. So in case you're wondering why that is, remember that you've had the cash session effectively that starts off at 320. 320 to 325 is when a large part of those trades take place. Limit orders can be placed after 325. There's a random close anywhere between 325 and 330, after which the orders are matched. And once those orders are matched, then you have a final close for each of the stocks that form a part of the CAS, which is essentially your F&O stocks. And then you find the final value of the Nifty 50 and the Bank Nifty as well, which has come through, which is not too much of a drop, just about 11 points or thereabouts. In fact, the sharper cut is for the Sensex today. 45, 46 points or thereabouts for the Nifty 50. And in fact, even the IT index has dropped a bit further. You have the IT index is now dropped about 1.9%. Pull up the intraday for the Nifty IT. You'll see what I'm talking about, 1.93% or thereabouts at 3213. So it's had a little bit of a drop at the end. But the Bank Nifty not moving too much. So too the Nifty 50, the big drop actually coming through in the Sensex. Let's talk about some of the trends that have come through and maybe look at individual stocks. Sharad joining in to tell you about where the big changes were in the F&O space.
Well, Alex, largely a little bit of a dip coming in from the banking names, and this is coming from the second straight day. And of course, the action is much more in Sensex, but today, remember, is Nifty's expiry. Not much change here on the numbers on the front, but stock specific moves is also pretty much important. Let's get in the stocks, especially with the Nifty 50 losers. Where's the action coming in from Max Health, Sun Pharma? Not so much of that action is actually coming in. SBI Life, NTPC, L&T also make it to the list. Let's look at the Nifty gainers and see what's the difference happening because of the cash change in terms of percentage. If you could just show the Nifty, actually there aren't any gainers as such. A couple of names are there, but it's quite flattish here. No major trend coming in. Of course, remember throughout the day there was a negative trend coming in, but let's just show you the action, which is there 24,100 and 24,200. If you could show the call and put options, then you'll realize where the open interest change is happening, and look at that 1.1 crore contracts and put. This is where the action is happening, and also the 24,150 or the 24,200 levels. This is also something where in the call segment we are seeing a good momentum. Look at that 3.2 crore share. So this is where the congestion is happening. But net, we'll see for the second straight day the dip has been there, but the action has moved to Sensex, not Nifty.
For that. And okay, so let's talk about how things are closing out. It's been another one of those sessions, a sixth day of consolidation on the downside for the benchmark Nifty 50. We're now below that 24,200 mark. We've hit that 24,150 mark, and really that 24,000 mark is not looking too far out of sight as things stand right now. So a little bit of a drop at the end. The broader market's also consolidating, but not too much movement to speak of there either. The mid-cap index, pull that up, the intraday chart if we can, very quickly, to talk about the broader markets. Just about 0.4% here, and the small cap index will have closed in the green, but just very narrowly so, 0.2% higher or so. So the heat map should kind of give us a sense of how things work.
Yeah, absolutely. And nothing's changed, right, since last we spoke, because you have Axis Bank still topping that chart. You have Max Health, Grasim doing fairly well. But Asian Paints has, been the top loser on the Nifty 50 today, now down by about 2.5%. And of course, you have all your IT names in the red that continue to be under red: Infosys, HCL Tech, Wipro, as well as something like a TCS. Tata Motors PV, like I said, since the earnings, it's been under pressure and is still seen a downtick of around 2.2%. But the advanced decline ratio is going to be an interesting one. Like Alex said, it's been a narrow range for the broader end of spectrum as well. Slight, widening is what we've seen, but in the favors of bears, unfortunately. So we've more declines versus that of advances, and that's the pressure that's reflected in the mid-cap 150. Largely, I think the mid-cap 150 is what is dragging it.
Yeah, and there were a few movers in the broader market. So pull up the Nifty 500 just to close out. Cube investment, one of them, we spoke about it. It's arguably the stock of the day. Graphite electrode manufacturers in focus. HEG up as much as 6%. Mahima told you it's the highest level since 2019. Certainly something to watch out for. Wellspun Living, a couple of other stocks in that space also buzzing. HFCL once again at upper circuit, very volatile stock. Restaurant Brands Asia and Ingersoll Rand doing okay. Mastech losing about 5.8%. SBI Cards, Torrent Power, Raymond, as well as Sonata, Soft and Lodha. But really not too much to speak of in terms of the big movers in the broader markets as well. Par for the course. Expiry has been quiet this time around. Remains to be seen if we defend that 24,000 mark in trade tomorrow. I guess it also depends on the overnight news flow. But on that note, from Mahima and myself and the team that put this show together, thank you so much for watching. This is NDTV Profit.
In our tradition, celebration is not complacency. We take in how far we have come and we fix our eyes on the ascent that remains. I present the budget for the year 2026-2027.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin above the $64,000 mark on steady institutional accumulation. US Treasury Department proposes Genius Act with a stablecoin rule. Keep America the crypto capital of the world, US Treasury Chief Bessent says. Lastly, Bitcoin could become futures S&P 500 as per investor Visa. Well, India's crypto ecosystem could see a new layer of oversight through a proposed self-regulatory organization, or as we call it, SRO. But what exactly does this mean? How is it similar to the evolution of India's equity markets? Let's understand more. So, an SRO can be understood as an interim rule book for an emerging market. In India's equity markets, industry-led bodies and market institutions have historically played an important role in establishing standards around investor protections, disclosure, market conduct, and grievance redressal. Now, alongside formal regulators such as SEBI, the proposal for a crypto SRO is relevant because the digital asset market is still evolving while a comprehensive regulatory framework is yet to be put in place. The idea is not to replace the regulator, it is to create a bridge until a formal law and regulatory framework is established. For a retail investor, this could significantly be important in 4 areas. First, transparency. An SRO could establish minimum standards for disclosures, communication, and governance across crypto platforms, playing a field and also bringing that to a level. Secondly, the investor protection. It could create a common standards for handling customer complaints, resolving disputes, and improving accountability. Thirdly, the custody and security. With digital assets, safeguarding customer assets is a critical issue. Industry-wide standards around custody, segregation, and security could help reduce the risks. And lastly, the compliance. An SRO could help strengthen anti-money laundering and transaction monitoring standards across the ecosystem. But there is an important distinction for investors. This proposal does not mean crypto is now formally regulated like ET entities. The Parliamentary Standing Committee's recommendation is not itself a law. The existing tax framework also remains unchanged, including the 30% tax, which is applicable on crypto gains, and 1% TDS on specified crypto transactions. So the way to look at an SRO is not as the final destination, but as a regulatory stepping stone for an emerging asset class. Bringing in common standards for transparency, investor protection, and market conduct can help build trust while policymakers work towards a comprehensive framework. The larger message for retail investors is simple. An SRO would signal greater structure and accountability, but it should not be mistaken for full regulatory recognition of crypto as an asset class equivalent to equities. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Three decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have really fared today. First, the viewers' benchmarks have finished near the day's lows with selling pressure intensifying towards the close. The Nifty has ended below 24,100 levels while the Sensex has slipped 400 points and this is reflecting a weak end to the session. Talking about the sectors, so most of the sectors have ended session in the red with pharma and auto showing relative resilience and it was IT that has faced the sharpest pressure, sliding more than 2% and weighing on the broader markets. Looking at the sugar stocks now, so that could be, turning sweet again. Domestic prices have crossed 5,000 per quintal, rising 10% in August as lower monthly release quotas and falling mill inventories tighten the supplies. Globally, white sugar has hit a 15-month high with production concerns building across Europe, India, Thailand and Brazil. The big shift for mills is that sugar is now commanding a premium over ethanol that could encourage greater diversion towards sugar, boost realizations, and even provide a sweet spot for sugar stocks. Here's electronics manufacturing stocks are getting another policy boost. The government has approved 31 fresh proposals under the Electronics Component Manufacturing Scheme, bringing in 7,877 crores of new investments. So that takes the total approvals across 5 tranches to 106 projects. Now with cumulative investments now surpassing 69,000 crores, the bigger signal is that private investment is outpacing the targets originally set for the scheme. So for electronics manufacturers, this could mean a deeper domestic component ecosystem, greater scale, and more opportunities as India pushes to build out its electronic supply chain. Talking about the defense stocks, so they are getting another indigenization boost. The Defense Production Department has notified its 6th positive indigenization list covering 405 strategically important items with an estimated business potential of 3,070 crores. The list spans aircraft, armored platforms, warships, missile systems, defense electronics, and even ammunitions. So this builds on the government's broader push to reduce the import dependence, with around 9,000 crores of import substitution already generated since 2020. So for defense companies, the message is very much clear. More indigenization could mean a larger domestic order pipeline. And Tube Investments is getting a boost from positive management commentary, with the stock up 8%. Management is saying that demand remains strong, with core engineering volumes up 17% and exports delivering double-digit growth. More importantly, the current margin pressure is being viewed as temporary, with steel cost recovery expected over the next 2 to 3 quarters. Management also believes that EV losses have passed their peak, with one business targeting break-even in FY27 and 2 more in FY28. Now, CDMO and cycles remain key growth engines, while FY27 capex is pegged at around 350 crores. Indo MIM has delivered a strong post-IPO run, with the stock now nearly doubling its issue price, and it listed at about 700 rupees against an IPO price of 485 rupees, a 44% premium, and has also gained further since then. So the big driver has been operating leverage. Now Q1 revenue grew 9.3%, even as material consumption has fallen 11%, pushing the EBITDA margin up 402 basis points to 33.34%. Net profit has jumped over 31%, and this has been held by gross margin expansion, with Indo MIM retaining its position as the world's largest MIM manufacturer. The earnings story remains firmly in focus for the company. And next stock in focus is Bazaar Style, which is clearly, in focus after another powerful run there. The stock has hit the 5% upper circuit in 8 of the last 10 sessions, and is also up nearly 50% in August. So a block deal yesterday saw Aditya Kumar buying 45 lakh shares at 362 rupee a piece. Fundamentals are also supporting the story, with Q1 revenue up 29%, EBITDA rising 24%, and PAT growing 8%. So store count has reached 276, while the bills and quantities sold have climbed 24% and 32% respectively. Next counter to look at is Lenskart, which is deepening its China footprint, and the market is taking notice. Now, shares rose as much as 4.5% after its joint venture, Baofeng Frame Cart Technology, incorporated a new step-down subsidiary in China. So, Wenzhou Frame Cart Trade received its certificate of incorporation on August 17th, with the joint venture holding a 95% equity stake. The new entity will focus on trading, importing, exporting, and procuring spectacle frames and also related products. The move could really strengthen Lenskart's sourcing and even supply chain capabilities in one of the world's key eyewear manufacturing markets. Here's next counter to look at is Sigma Advanced Systems, which is getting a boost from the growing anti-drone security market, and the company has partnered with Indrajal Autonomous Defense Systems to secure 155 crores of anti-drone patrol vehicle orders from the Home Ministry. Now, the lion's shares, 145 crore, is allocated towards border security, while around 10 crores is meant for urban policing and VVIP security. So the order highlights the government's growing focus on countering drone threats and also could open up further opportunities for domestic defense technology players as security requirements expand. Next counter to look at is DCX Systems, which is adding to its order book with fresh business wins, and the company has received orders worth 15.19 crores for cable and wire harness assemblies. And its arms, Renil Advanced Systems, has also bagged export orders worth 3.09 crores for printed circuit board assemblies. And together, these orders highlight continued demand for specialized electronics and interconnect solution. Now, for DCX, the focus remains on building a stronger order pipeline, while the export win at Renil could really provide an additional growth driver. And viewers, the government and Meta are in discussions over content safety, with child sexual abuse material, or the CSAM, emerging as a key concern. Now, sources are saying that Meta is taking steps to tackle the reappearance of the flagged content and also strengthen moderation. Now, CSAM clearly violates Indian laws, and also platforms could face the loss of safe harbor protection if legal conditions are not met. So the government is saying that its intent is not to censor, but to ensure laws are followed. Now, MeitY is also examining issues around algorithmic bias and usernames, while stressing the need to balance social benefits with digital harms. And viewers, Uber is expanding its travel footprint in India, and this time it's moving onto the rails. The company has partnered with Ixigo to bring train ticket booking directly to its app. So users can now book tickets, check PNR status, and also arrange Uber rides to and from the railway stations. So the move connects first mile intercity and last mile travel on a single platform. With trains now added to moto, auto, cars, metro, intercity cars and buses, Uber is pushing towards a one-stop mobility platform for travelers across India. And viewers, Ferrari's first ever electric car has just set a record at auction, but not without some controversy along the way. The Ferrari Luce fetched a staggering $40 million at a charity sale in California, which is more than 35 times the usual price of the car. So designed with input from British iPhone designer Sir John Ive, the Luce marks Ferrari's first step into the electric vehicle market, and the car faced criticism for its 5-seat design and also battery power, with some questioning whether it really fits the Ferrari DNA. But the record sale could help rewrite that story, with all proceeds going towards the Ferrari Foundation's educational programs. Now let's have a look at some national news. Jharkhand student protest has taken a significant turn, with leader Devendranath Mahato calling off his hunger strike. The move came after Hemant Soren government cancelled exams and government recruitments, including JPSC and JSSC CGL, following weeks of student protest. Now, Mahato, who is hospitalized in Ranchi, said that students will support the ongoing probe into examination irregularities, but the bigger demand remains systemic reform, and students want stronger guarantees against paper leaks and recruitment irregularities. The government now faces the task of restoring trust in the state's examination system. Yes, Maharashtra's new freedom of religion law will come into force on August 28 following presidential assent, and the State Home Department has formally notified the date, with Chief Minister Devendra Fadnavis describing the move as a protective measure for women. Now, once implemented, offences under the law will be cognizable and non-bailable. Now, that means that police can register cases without prior court orders, while bail will not be available as a matter of right. So, the law marks a significant new legal framework for religious conversion-related offences in Maharashtra. And the Supreme Court has rejected a plea challenging hanging as a constitutionally valid method of execution, but has left the broader question open for future consideration. A 2-judge bench declined to refer the issue to a larger bench, keeping the 1983 ruling that upheld hanging in place. The petitioner had argued that hangings is cruel and inhuman and that lethal injection could offer a less painful alternative. Now, for now, however, the existing legal position remains unchanged, while the question of whether India should consider an alternative method of execution remains open. Let's look at some global news now. Viewers, Iran is signaling a harder military stance as efforts to end its war with the United States stall. A senior Iranian official has told one of the agencies that Tehran will move towards a fully offensive posture after negotiations failed to make progress. Now, Washington, meanwhile, has ruled out extending the temporary ceasefire. Diplomatic momentum has also faded around the Strait of Hormuz, with oil tanker traffic still disrupted. Now, the stalemate raises the risk of a longer conflict and also fresh pressure on global oil supplies. And viewers, Trump's approval rating has fallen to the lowest level of his current presidency, according to a report. And just 33% of Americans say that they approve of his performance, while 64% disapprove. So that's down from 35% earlier this month, matching the lowest level recorded during his previous term in 2017. The poll also points to growing public concern over the war with Iran. Now, an overwhelming majority of Americans believe that the conflict could last a long time, adding to the political pressure on Trump as the war continues to dominate the agenda. And hope remains that Congo's Ebola outbreak can still be brought under control, but the containment challenge is clearly intensifying. The WHO, who had earlier said that spread could be reversed within 3 months, but since then the outbreak has expanded to a 6th province and is also moving faster than response efforts. So the strain has now caused more than 4,900 confirmed cases and over 2,300 deaths, making this Congo's deadliest Ebola outbreak on record. So the focus now is on speeding up the detection, contact tracing, and even containment. With that, viewers, it's a wrap on this edition of Market Express, but stay tuned to NDTV Profit as there's more action lined up ahead.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary, conversations that connect countries and cultures, where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it?
Market ends lower for the sixth straight session, its longest losing streak since September 2025. Nifty ends below 24,200 for first time since July 28 as elevated oil prices keep indices under pressure. Broader indices perform better versus major indices on back of higher financial stocks. Oil prices extended gains as hopes for a near-term US-Iran deal has fallen, while a fresh vessel attack in the Strait of Hormuz renewed supply concerns. Brent remains above $90 per barrel range. SkyMet raises drought risk, sees 70% probability of drought, cuts monsoon forecast to 85% long period average from 94% set in April. Government tells Meta Safe Harbor won't cover child sexual abuse material violations. Meta tightens grip on harmful content and assures better content moderation. Government stays firm, says Meta must follow rule of the land. Federation of Indian Pilots urges DGCA to adopt oral fluid testing, backing scientifically valid, transparent and procedurally fair checks to ensure safety while protecting pilots' rights and due process. After Maharashtra government makes Marathi language mandatory for taxi drivers and auto rickshaw, some taxi drivers go on strike. US President praises India's election system, cites voter ID in push for US law. US Ambassador Sergio Gore backs Trump on India voter ID claim, urges Congress to pass Save America Act. National Sports Awards 2025 announced no Khel Ratna this year. World Cup winning chess player Divya Deshmukh, badminton player Gayatri Gopichand, Glasgow Commonwealth Games medalist Narendra among 17 named for Arjun Awards. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But first up, let's see how the markets have really fared today. So viewers, markets have ended lower for the sixth straight session, marking their longest losing streak since September 2025. Elevated crude oil prices have continued to weigh on the investor sentiment, dragging the Nifty below 24,200 mark for the first time since July 28. Now, Asian Paints and Trent Mahindra premium vehicles were among the top losers, falling around 2.2% each. Now, my colleague Jasmeet Singh Ghai gives us an overview of the market roundup.
Well, for the second day in a row, we see a negative spike post the cash in the markets today. If you look at the Nifty, it's down about 11 odd points, while Nifty Bank falls nearly 45 points post cash. Now, if you look at the Sensex aspect, we do see a negative spike again. It's down about 90 odd points post the cash session. Now, if you look at the key markets and how they have flooded in today's day, we do note that the overall performance in the market was on the flatter side. If you look at the Nifty 50, it ends in red, down about 0.5 odd %. While in terms of the top losers, we have stocks like Asian Paints and TMPV among the top losers both lost about 2.2 odd %. While if you look at the broader market, they have outperformed the benchmark in today's trade, while Nifty Midcap 150 ends in red, down about 0.5 odd %. If you look at the top losers in Midcap 150, we have stocks like SBI Cards and Oberoi Realty, both among the top losers in Nifty Midcap 150. In terms of the small cap, we overall note that the small cap ends in on a brighter note, ends in green, gains about 0.2 odd %. If you look at the top gainers in small cap 250, we have stocks like Jyoti CNC and Prime Focus both gaining the most, while Jyoti CNC has gained nearly about 9.5 odd %, while Prime Focus gained about 7.3 odd %. Now, if you look at the key sectors, while the sectors give a mixed picture where we see that overall sectors have closed in red, barring Nifty Oil and Gas, Nifty Pharma and Nifty Auto. In terms of the top losing sector, we have the overall IT space that has been losing for the second day in a row. We see that Nifty IT has lost about 2 odd %, and in terms of the top gaining sector, we have Nifty Auto, which has gained about 0.3 odd %. If we look at the top gainers in Nifty Auto, we have stocks like Tube Investments of India, which has gained about 8 odd %, while Bosch has also gained about 4 odd %. In terms of the top losers in Nifty IT, we have stocks like Emphasis and LTM, which led the overall fall, which are down about 3 odd %. In terms of the key trend in today's market, we do note Nifty IT, Nifty FMCG are down for the third consecutive day in a row, while Nifty PSU Bank is down for the fourth consecutive day in a row. If you look at the aspect in terms of the Nifty Oil and Gas, it has gained for the second day in a row. Lastly, Nifty Pharma snaps its 3 days of losing streak and gains in today's trade, while Nifty Auto snaps its 2 days of losing streak and again gains in today's trade.
Thank you so much, Jasmeet, for that market roundup. And viewers, let's have a look at the Indian currency now. So the rupee has closed at 95.68 against the US dollar, ending marginally lower as elevated crude prices and steady dollar demand weighed on the currency. Now, oil prices rose amid continued uncertainty over the US-Iran standoff and the Strait of Hormuz, adding pressure on the rupee. The currency has also remained cautious after the RBI brought forward the closure of its concessional FCNRB forex swap facility, raising concerns over the pace of future dollar inflows. Meanwhile, the Strait of Hormuz and crude prices remain firmly in focus as uncertainty over the US-Iran conflict continues. Iran says that it is working with Oman on a plan to manage shipping through the strategic waterway, but there is still no broader peace deal between Washington and Tehran. So Donald Trump has now doubled down on his position, saying that Iran cannot be allowed to have nuclear weapons, while also claiming that US has total control of the Strait of Hormuz through the blockade. With Brent back above $90 and WTI also gaining, markets remain on edge over the risk of prolonged disruption. Let's listen in to what President Trump exactly said.
Well, they want to make a deal, but they're not going to make the kind of a deal that I feel is necessary. Look, we're in there for one reason. Iran cannot have a nuclear weapon. You understand that? Iran cannot have a nuclear weapon, and they won't have a nuclear weapon. And right now, them building one after what we did previously with the B-2 bombers, it could be a long time behalf. But Iran cannot have. It's very simple. They can't have a nuclear weapon. I think it's a great idea. Yeah, I mean, we control it. We control it with the blockade. We have a blockade. We control it with the blockade. And I like the idea of declaring it a territory.
Why might you do that?
We have total control over the strait. Now, they can be a nuisance. They can put a mine in the water, and people don't like having mines hit their billion-dollar ships, etc. But the blockade has been very effective. And, we're taking out, now maybe that will stop, or maybe it'll open up even further, but we're taking out millions of barrels of oil a week. If you look at the kind of numbers that we're doing, the strait is open, and the oil prices are coming down, and they will continue to come down unless we decide to do something far more drastic than we're doing. Iran is in big trouble. They have 300% inflation.
Switching gears now, viewers, tight global sugar supplies, lower inventories and rising prices are boosting the sector's outlook. Reports also suggest that the government is mulling cutting import duty of sugar. My colleague Sharad is here with more details.
First of all, initial trade, the sugar stocks were up. But now, of course, news flow coming in that government might be having an intervention. Now, this weighs in cutting the import duties of sugar, and the duty cut might curb the domestic prices. And those prices, I'll get you those details as well. Now, they're weighing in lowering 10% tax on imports and may scrap 100% tax on inbound shipments. Now, this, of course, is not good for the profitability of the sugar companies. And recently the sugar stocks have been doing really well. The domestic prices have crossed the 5,000 rupees quintal mark, and these are the prices for the month of August. We are seeing that up move up almost 10%. We have taken it from the major sugar belts of Muzaffarpur and Kolhapur. The global white sugar prices, that's also at a 15-month high level. So globally, why this is happening? This is because of tightening of supplies, and these are the sugar stocks from 26 lows. You can see a significant up move has happened, but yes, a little bit of correction happening in the day's trade.
Switching gears from sugar to some legal news now, the Supreme Court has asked the CBI to examine allegations against former India Bulls promoter. Sammaan Capital said that the probe is related to a former promoter and not the company. My colleague Nimit is here with more details on this development.
A very topsy-turvy week for Sammaan Capital, right? Earlier this week, the Karnataka High Court, actually on Friday, the Karnataka High Court quashed the ED proceedings against the group. Then on Monday, it agreed to rehear the ED's arguments to reopen the case. And now the Supreme Court has said that it's asking the CBI to look into the allegations against these former promoters, the IFHL promoters, now Sammaan Capital. Of course, now these allegations are of round-tripping, of fund diversion, of loan evergreening, and a 1,574 crore transaction. Now, the group that's filed is called the Citizens Whistleblower Forum. It's a public interest NGO which has filed the case against the Union of India. Sammaan Capital is not directly involved, a key point which the Sammaan Capital founder has also raised. Sammaan Capital has says that there are no allegations against the company, that the probe concerns former promoters, not the company, and the fact that it is not named in the FIR. But the fact is that the Karnataka High Court is rehearing this case and is rehearing the ED allegations, and now the CBI has been asked by the Supreme Court to independent of the ED's proceedings itself, look into all of these allegations that I just named.
Thank you so much, Nimit, for that. Now, switching gears now and turning our focus to the defense space. So more defense orders set to stay at home. The centre's latest indigenization list covers 405 items and could unlock over 3,000 crores for Indian firms. My colleague Parth is here with more details.
So DDP has notified the 6th positive indigenization list having an estimated business potential of over 3,000 crores for the domestic defense industry. This list includes 16 Indian Coastal Guard items and 389 DPSU items. So in total 405 items are there in the list. These kinds of indigenization since 2020 has generated over 9,000 crores in import substitution for the India's defense industry. So that's pretty big coming in. Coming to the scope of items that are included in this list, they include air platforms, armored platforms, warships, missile systems, defense electronics and ammunition as well. Coming to the program context, this region portal, that is basically a dedicated platform where MSMEs and Indian defense PSUs offer the defense items. In that portal, 33,000 items for indigenization have been offered since August 2020, and the first 5 lists, this is the 6th list, the first 5 lists that were notified have notified around 5,000 items for domestic development. So more than 15,700 items have been indigenized over the last 5 years, and DPSUs have placed procurement orders for more than 10,000 crores worth of orders since March 2026. Now coming to the beneficiaries, the companies whose items have been listed in the list, starting with Bharat Dynamics Limited, whose 13 items have been listed. Then Bharat Electronics, the maximum number of 227 items have been listed of the company. Then BEML and GRSE, both of which have seen 7 of their items listed in the in this list, and HAL as well, around 86 items, and lastly Mishra Dhatu Nigam has seen 7 items placed on this list. So these are the 6 names from the listed defense space that stand to benefit from this.
Thank you so much, Parth, for that. And viewers, government sources are telling NDTV Profit that India is looking to give its FDI framework a major reset, with interministerial consultations on easing the rules now concluded. My colleague Shrimi is now joining us on the phone line to explain what this really means. Shrimi, over to you.
Yeah, that's right. A major development actually. The government is planning a couple of changes in the current FDI rules, but the 2 important changes which they have kind of suggested and considered is one, the threshold for FDI proposal requiring CCA approval, which is the Cabinet Committee of Economic Affairs. They are going to increase that to up to 15,000 crores from the current 5,000 crores. So that's one, which also means that the bigger proposal, in fact, between 5,000 to 15,000 doesn't need cabinet blessing, as and when it comes. The second important change is the easing rules governing downstream investments. So essentially, it's reducing the need for fresh approval in all the cases where the underlying foreign investment has already received the government clearance. So if any parent company already invested in Indian company, the subsidy, if they want to put in more foreign capital in that particular company or in India, they doesn't need a separate sort of clearance from government. So that these two are very, very important. And in fact, all the consultation has been concluded and will soon go to cabinet for the final approval. But this is very important from the context of that how we are seeing that both government and RBI has been continuing focus on attracting more foreign capital into India, kind of reducing procedural hurdles for global investors. And the latest data also supporting the fact that how net FDI inflows has been negative again in May 2026 with outflows exceeding around $74 million. So this is, of course, a way, a next step there to sort of ease a lot of hurdles which FDI are facing and tapping more foreign capital into India.
Right. Thank you so much, Rimi, for gathering us, those details for our viewers there. And moving on, viewers, sources are telling NDTV Profit that Tata Sons AGM has been called off after the meeting could not meet the required quorum. So what really led to Tata Sons AGM being called off, and what does the SRTT development mean for the Tata Group's wider governance framework? Let's have a look at this report that my colleague Nimit filed earlier today.
The Tata Sons AGM on this rainy evening outside Bombay House has been adjourned. It was scheduled to take place today. It started at 2:30. The members met, but the key issue that stood in the way, as we've been reporting, is the Charity Commissioner's order preventing the Sir Ratan Tata Trust, which is one of the two trusts along with the Dorabji Tata Trust that control 50% of Tata Sons. And the Ratan Tata Trust hasn't gotten permission from the Charity Commissioner to hold a meeting in a board meeting, and now holding this board meeting is key because they need to finalize a nominee for the Tata Sons meeting. That could not be done. So the meeting for Tata Sons, something that has been very rare over the years, has been adjourned for now. Now this meeting was key in the face of Mr. N. Chandrasekharan's statement that he will be stepping down at the end of his next term in February 2027, and the fact that a succession plan had to be put in place. For now, that has not been decided as the meeting could not take place. Other smaller decisions, including a dividend payout and approving of financial statements for the year, had to also be done, which could not be done yet. No clarity yet on the meeting, when it will take place next. But what we understand is that Tata Sons, in fact the Sir Ratan Tata Trust, is working with the Charity Commissioner to explore when the ban on its holding meetings will be lifted.
And viewers, the Federation of Indian Pilots has written to the DGCA seeking the introduction of oral fluid testing for psychoactive substances among pilots. So FIP wants the method to be used as the complementary test alongside the existing urine testing framework. My colleague Danish, who has been tracking the story, is now joining me. So Danish, what changes is FIP really seeking, and how could oral fluid testing work alongside the current system?
Well, FIP has written this letter to the DGCA suggesting that now the Indian government must use oral fluid testing in order to find out whether any pilot has consumed any banned substance or not. And this is coming as a repercussion of the Phuket-Delhi flight incident of Air India, which we witnessed a few weeks back. So FIP believes that if this oral fluid testing begins, then the government will be saving a lot of time, because as per the different global mandates, we can clearly see that as far as this oral testing is concerned, those samples can be collected within 15 minutes. But when it comes to collecting urine samples, samples. That takes almost around 45 minutes. So FIP believes that this will reduce the overall the time that it takes for collecting the samples. Plus, they also believe that the oral testing is much more cost effective, and any pilot can be tested whenever they land an aircraft, and you don't have to go for one particular area. It can be done anywhere once the flight ends. And they also believe that this is a global norm. They have given an example that the Australian Civil Aviation Authority, they also have this mandate. In fact, they've also said that even the US Department of Transportation, it gives both options of urine testing as well as oral fluid testing. So they believe that considering that the Indian aviation market is growing globally, and as we speak, every week we are seeing that there are new aircraft that are coming in, which clearly means that there will be a requirement of more staff. And in order to to just reduce the overall time when it comes to testing, they believe that this could be a big step, and this will not only save cost, but it will also save time. And FIP has made it very much clear that they stand by DGCA. They're standing with them when it comes to testing the pilots, and they're not against any kind of testing. And they believe that if the new method can be introduced, a lot of time and cost can be saved.
Thank you so much, Danish, for getting us those details there. And meanwhile, moving on, viewers, SkyMet has sharply downgraded its 2026 southwest monsoon forecast, now expecting rainfall at just 85% of the long period average versus its earlier estimate of 94%. Released in April. So the private forecaster also sees a 70% probability of drought, with nationwide rainfall already 13% below the LPA between June 1st and July 31st. So, however, the India Meteorological Department is standing by its own second stage long range forecast, which had projected below normal monsoon rainfall at 90% of the LPA. The contrasting forecasts now put the monsoon outlook firmly in focus, with rainfall trends over the coming weeks crucial for agriculture, reservoirs, and even the broader rural economy. Earlier today, we also spoke to GP Sharma, President Meteorology and Climate Change, SkyMet, for his outlook. Let's listen in.
This monsoon has been having a topsy-turvy curve. You remember month of June was highly deficit, over 35% rainfall deficient shortfall was there. July was a savior. Okay, it did good thing, and lot of rain-fed zone. Actually, they received decent rain. I'm talking about central parts, western parts of the country. So that saved the situation. So therefore, it was looking as if everything is going on absolutely okay. But then, as we had expressed some fear in the beginning itself, that this time the El Nino conditions are there. And we had indicated about 3-4 weeks back also that we in any case revise our monsoon forecast and give a course correction if required around this time. That's end of July or some start of August or so. And that is how we have revised that. The conditions are not looking very good.
Switching gears now, viewers, government and Meta are discussing stronger measures to tackle child sexual abuse material and harmful content online. Sources say that Meta is improving moderation systems while Meti continues to examine concerns around user names. My colleague Rishabh is here with more details on this development.
Absolutely. What we're picking up on the continuing engagement between the government and Meta is the fact that there is certain action that the government is now seeing that Meta is taking against various issues that were brought up over last week's meetings with the global team as well as the local team here in India. What we've seen is that firstly, action has been taken against child sexual abuse material proliferation that has been taking place across various Meta platforms. What the government and what various sources are also telling us is that Meta is being cautious on that, and there's more and more work being done to ensure that CSAM is not being proliferated on these platforms. What we're also seeing is that, of course, the government has already warned that safe harbor may not be available in these instances where content that is clearly violative of Indian law is being carried on these platforms, and that's what we're seeing. What we're also seeing is that Meta is also taking action to moderate content better on its platform. For example, if a certain piece of content has already been flagged and taken down, the reappearance of it has been an issue, and that is also something that Meta is combating with its various sort of technology, various maneuvers that it has been placing across its platforms. What we're also seeing is that the fact that social media addiction, CSAM, all of these are sort of harms that come with social media, and there needs to be a right balance between the goods of social media as well as the harms of social media. And the government's intent is to sort of have the platforms on that fine line of social media goods and harms, and that's what the government is also pushing these platforms to do better. On the usernames issue, what we're seeing is that the government is still examining what is to be done. The rollout, whether or not it will happen, of WhatsApp usernames, or be it Telegram or Signal, that is also still in the works, and the government is still examining those submissions. So that's what we're picking up on, the continued engagement between the government as well as Meta on various issues.
Thank you so much, Rishabh, for that. And viewers, India is set to showcase its growing semiconductor ecosystem at Semicon India 2026, with over 240 global chip companies expected to attend. Now, METI Secretary S. Krishnan is saying that the event comes as 3 major semiconductor facilities have started production, while another 5 to 6 facilities are expected to begin commercial production by the year end. So let's listen in to what exactly he said.
We are holding this event on the back of 3 major semiconductor projects which were approved under the ISM 1.0 coming into commercial production. As you're aware, the Prime Minister inaugurated the first of those on February 28th, followed by 2 more, and there is a likelihood more will be inaugurated before the end of this year. The tally should touch about 5 or 6 before the end of this calendar year. So in that sense, the actual on-ground success of Semicon 1.0 would be there on display for everyone to see.
Switching gears now, viewers, Marathi language has been made mandatory for auto rickshaw and taxi drivers in Maharashtra. So the move has left several drivers concerned. Maharashtra Transport Minister Pratap Sarnaik has announced that auto rickshaw and taxi drivers in Mumbai and across the state who do not have a working knowledge of Marathi could face action against their licenses. Now, drivers who do not have practical or even basic working knowledge of Marathi will first be given a 1-month notice to learn the language, and if they fail to do so within the stipulated time period, the license may be suspended for up to 3 months. In fact, my correspondent Prajakta spoke to some taxi drivers in Mumbai to understand their views on this decision. Let's have a look.
Maharashtra government has made compulsory to auto rickshaw and taxi drivers to speak Marathi. 17 August deadline has passed. Now government will start taking action against auto rickshaw and taxi drivers who cannot speak Marathi. We are here to speak to talk to some taxi drivers. आप बताइए, आप कहाँ से हैं?
मैं यूपी से हूँ।
आपको आती है मराठी?
मराठी आती है, लेकिन फुल पूरा नहीं आता है, और सामने वाला बोलेगा तो अपने को पूरा समझ में आता है।
वो जो भी अभी गवर्नमेंट ने जो आपको दिया था ये फैसला किया, आपने एग्ज़ाम दी थी? आपने
एग्ज़ाम का भीड़ बहुत था। अभी जो 1 महीने का टाइम बढ़ाया गया है, अभी 1 महीने का सरकार ने टाइम दिया है, उस पीरियड के अंदर हम लोग करने वाले हैं।
On that note, viewers, it's a wrap on this edition of Profit 360, but stay tuned to NDTV Profit for more news and updates.
friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300 300 300.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where we get you the hottest companies, and right now, of course, most of the companies have finished their Q1 numbers. But is there any alpha to be made from here or not? That's the big question. Let me give you some hints. Try to guess this company, and if you're from Bengaluru, I'm sure you must be guessing it very early. It's a Bengaluru-based managed workspace platform. Seen it all across in Tier 1 and Tier 2, Tier 3 places. The stock is still down 24% from the IPO price. Now the listing, you could say it's a recent listing, July 30th, 2025, and remember this company is coming second time in KYC. So I'm going to give you the history also, but you need to wait with me. Mutual funds have 9.3% stake in the company. The company in focus is IndiCube. This is the company which I am talking about, IndiCube Spaces. You must have heard about it or seen it across the common working space platforms, be it GCC, startups or unicorns. But why are we calling this company right now? What's the relevance of getting this company right now? Is it the valuations turning cheap, or is the Q1 numbers coming good? Because of that, the operational leverages. We need to understand that from the management, how to actually judge or value this kind of a company or the industry. Expansion and growth plans ahead, this is very much important. We will be tracking the operational numbers also, how it's faring for IndiCube Spaces. Also, another important question would be understanding the key accounting treatments. There's a lot of fair value treatments. Is Dalal Street understanding this kind of a model? That's the big question to be asked. Also, the GCC explosion, the India story. We have already spoken to a lot of peers, and now the company comes and shares their slice of history or the future. What's the moat of the company versus peers? How different is it, or is it not? Next question is, of course, apart from this moat, we'll try to understand the revenue contribution from the value added segment. That has been increasing, from 11% to 17% in the first quarter. And of course, the usual numbers, the occupancy guidances and the client mix. Is it changing? Is there some new trend which we can discuss? So a lot of these important questions is something where we'll have a discussion with the management. But let's understand the business first. ये धंधा क्या है? Accounting treatment क्या लगता है? These are the basic things with a lot of viewers write and message to me, and I'm going to break it down and make it very easy for you. If you're a budding analyst, you should be listening to this segment. Now, the integrated management office space platform, that's what the company is all about. But let's get into the details about it. There are some brands like Grow, Design Cube and IndiCare as well. This is the products profile for the company. The company offers managed workspaces. There's of course design and fitment and build solutions also. It's not just a bare shell office. You can of course do some flexi work as well, or you can change the overall interiors. The company offers efficient commercial space operations as well. That's one way to put things. Also, they have 855 clients, GCC Global Capability Center. That revenue share is roughly 53% of the total revenue. So this is a very big play on India's GCC explosion story. 65% clients have 300 plus seats, and that is a good healthy sign if you are studying this industry. The value added services, that's where it has gone up. It's up to at 17%. This adds more margins to it, and as the scale comes up, there's an operating leverage at play also for a business model like this. Apart from this, the occupied area share, how things move on, almost 49% of that comes from the GCC segment, but second followed by the Indian corporates. Also, there is exposure from the startups and unicorn, and this is the total setup looking like when it comes to the occupied area share. Moving ahead, what's the business? Dhanda kya hai? This is the most important thing, and you should take a screenshot or share with your friends also if you are trying to understand this industry, especially for the company specific. Now, this takes roughly 55 to 60%, one center to come break even, and that is 6 months. It takes that much only. That's a good point actually. Occupancy stabilizes at 85 to 90% within 12 months. So these are the numbers you should be tracking. 6 months, 12 months we discussed. Another important Dhanda model is the capex payback. The entire setup, the entire capex comes back in 36 minutes if you invest. So these are the three numbers you should be tracking. But India's GCC story is exploding. 2,400 GCCs expected by 2030 and 115 every new year. So you can imagine how big the industry is getting. Also, second portion is their market size is at $110 billion. That's the growth coming in. Third important point I would like to point is the grade A demand by GCCs. This is around 40 to 50%. And the story is playing out in this sector. Also, India has posted a record 24.6 million square feet of office leasing in April to June quarter. Second data which is very important to share with you is the grade A demand has outrun the new office space since 2022. So you can imagine more formalization, more MNCs, more startups, and flex space is the India's #1 office occupier. Almost 27% of second quarter leasing of calendar year 2026 was done. But what may work for the company, and we have done a detailed analysis and I've given you two portions of it. Analysts have a bullish stance. I'm going to share with you the number of analysts tracking the stock. A strong operational growth is something which the company has delivered. Third important point has to be the beneficiary of GCC explosion. This is the mega trend which we have identified, and it's expected to go up going ahead. Significant reduction coming in the debt to equity ratio, that also augurs well, and we have given more time now to the company to judge. 3.87 million square foot of occupancy headroom is there, so there is a good revenue visibility going ahead as well. But there are some concerns also for the stock. The valuation still remain fairly expensive. That's the first reason. Second one, there is no major addition from institutions post listing. That means the stake has been largely flattish. There hasn't been an increase of FI or DI exposure. Sector right now is out of flavor on Dalal Street right now. Even though the GCC story is going on, seems like the market is not giving premium to this sector, and complex accounting adjustments are there. That is where the market is not able to understand EPS track kare ki koi operational parameter track kare. So concerns are there, but not major concerns, to be honest. So this is the entire picture for IndiCube spaces when it comes to the good and the bad. But let's try to understand more with our own analysis. This is the KYC ratings which I talk about. Of course, we are going to get you the income statement, balance sheet, cash flow, the usual ones. But today, instead of return ratios, I'm getting operational parameters. It doesn't make sense to judge the company right now in the stage of the business model it is. And that's why we tweak operational parameters also. Shareholding street cred, now it's almost 1 year. This is the second time the company is coming in KYC after 6 months. So we'll see how much of changes has happened. Valuations will get its 3 more peers and compare that. But this time we are going to do on price to book. Analyst stake is very much important, and why analysts are bullish, those reasons also we will definitely discuss. So 8 parameters where we'll be judging the company. But let's start with the first parameter, the income statement. Remember, the Q1 numbers were strong. The operational numbers were already strong. The 3-year CAGR numbers, the top line looks strong as well. Now you must be wondering this, is it profitable or not, the company? Yes, the company is profitable. First quarter we have seen that, but the losses are reducing. This is how the business model plays out in a system like this. They are going for scale operations, and now slowly the operational leverage will play out. So as of now, overall looking at the numbers, the Q1 numbers are also decent. The margins were flattish around 61%, but look at the top line growth. This is where we're seeing a good magic happening. And when we are judging a company like this at this stage, I'm going to give this a strong thumbs up for the income statement. This is of course the margins, and this is something that 58 to 61% looks sustainable going ahead. But let's talk about balance sheet also. Income statement we have done. Balance sheet, the debt equity ratio has come down. They have mentioned that in the first quarter. That is where a little bit of strength comes in. Largely these balance sheets are pretty light. It's not very heavy. Of course, remember there are adjustments, accounting standards at play, a little bit of confusion, but the management will clarify that as well. A decent cash amount also for the expansion, 385 crores to be precise in FY26. So balance sheet also is a strong thumbs up. So we spoke about income statement, we spoke about balance sheet, also operational highlights. This is something which I have picked up instead of return ratios. There is area under management, there is centers, number of seats, all of them above 14% year-on-year basis growth, and this is what the street actually wants. At least the operational parameters should be good or growing at a decent pace, and that's why they might justify valuations later on. The total occupancy has gone up as well. It's around 86% right now. So these are the operational highlights, and this is a strong thumbs up from my side as well. But shareholding, let's see what's happened. And shareholding, actually nothing has happened. That's the maybe a concern or maybe a positive point. Either way you can look at it. The glass is half filled. Promoter stake has been stable at 60%. A minor increase maybe for the FIs, but it's in smaller digits. Slight dip for DIs, 14%. So nothing major has happened. So I'm going to give this a neutral rating when it comes to the shareholding as well. Apart from shareholding, let's talk about the street cred, what has happened. Largely the numbers we see from March lows, the stock has gone up and given 34% returns, and good buying is happening at these lower levels. But nevertheless, from IPO price, the stock is still down 24%. 2026 it's down, as well as 2025. So from the IPO, you haven't made money, but has it been a trade bet? Yes, you have made money. So I'm going to give this a neutral rating for the street cred. But apart from street cred, let's talk about valuations, how things pan out. And valuations also have taken price to book ratio, the 12 months forward numbers. IndiCube comes in at higher with SmartWorks, both of them on the higher side price to book. This is the ratio which I'm talking about. almost 8 times. Compare that with the other peers, they are on the lower side. Talk about Office as well as EFCI, all around that 2.6 to 3 times. But net the stock market actually is still not giving a proper value to it, because there is a little bit of concern. What's the profitability, the path to profitability, and of course the company has turned profitable, but what are the actual valuations right now? And right now we are still in the earlier cycle of the business segment. So I'm going to give this a neutral rating for valuations. This is the analyst outtake. 83%, there are totally 6 analysts tracking. 83% of them have a buy rating, and from current levels, almost a 40-50% return potential is coming at 267 rupees per share. That's the 12-month return potential. So it's a strong thumbs up when it comes to the overall analyst rating. So now let's understand and give you the total picture of the KYC ratings for August, which the company has come. Remember, the company had come earlier also, especially in the month of February when it was very newly minted IPO. Income statement, balance sheet is pretty strong, so I've given this a thumbs up. Cash flows, take things with a pinch of salt right now. So accounting adjustment entries and a lot more. Operational parameters were decent. The Q1 numbers started coming up. So slowly the market is digesting the model. Shareholding, street cred, nothing much has moved. So I've given this a neutral rating. Valuations also, I'm going to give this, it's slightly towards the higher side, but I've kept it neutral. But analysts remain bullish in this counter. 83% of them have a buy rating. So totally KYC rating is 6 out of 8. On the higher side for IndiCube Spaces, but has this improved from the last time? That's the main question. The KYC ratings in the month of February was 4.5 out of 8, and now almost 6 months down the line it is at 6 out of 8. So there is a good improvement in the company, and of course we have given a little bit more time to judge the company and understand more. So that's a pretty interesting take, to be honest. But the conversation continues with the management of the company, and we'll be joined in by Rishi Das, the co-founder and CEO of the company. He has almost 3 decades of experience, be it HR, talent acquisition, and even you could say the overall commercial real estate. So all of them are actually co-relational. There is a good interrelation here. He's a co-founder of CareerNet Consulting as well as Hire Pro Consulting, and education from IIT Roorkee as well. Now we are joined in by Rishi Das, co-founder and CEO of IndiCube Spaces. Welcome back, Rishi, to KYC. Last time we had you in the month of February. Yeah. It's been 6 months, and yes, things have improved a lot, and Q1 numbers is something, speaking of improvement, has done really well as well. Wanted to understand, Rishi, now Dalal Street is trying to understand your business model of your company and the industry also. How does this margin outlook play out? Is this normalizing? Are we going to get some good estimations for FY27, how things look since operational leverages kick in now?
Yeah, thank you, Sharad. Thank you so much. Yeah, so talking about the margin, as you can see, we are at about 20% of the EBITDA margin, and we are very hopeful that we will be around that range. And we see from a guidance point of view, it will range between 19 going up to 21%. So I think we have achieved, as you rightly highlighted, the economics of scale, the operating leverage, all that is there in the business. So, and also I would like to highlight that in our category, we have the best margin profile. So we are very hopeful that we should be able to maintain the margin outlook for this financial year as well as even for the next financial year.
Margin profile will be maintained for the next 2 financial years. But Rishi, let's understand a little bit. There's always that accounting adjustment or treatments which happen because of different accounting standards, how to value your company. And at times there is, you could say, the markets misprice it. So just wanted to understand what are those, treatments in the lease or the accounting segment which one should understand when somebody is studying your company.
Yeah, so I think the one very important metric is to what we have been publishing very regularly is the IGAAP equivalent, because as you will be aware that in our industry, all the leases are capitalized, and then the depreciation on that is accounted for. As a result, if you go by the Ind AS accounting standard, you will see a very, very high EBITDA margin, and then you start seeing a PAT negative. So the right way to look at our business or any other business which is having leases, whether it's a PVR or any hotel which has leases, those kind of businesses, you will always see that the IGAAP gives a better reflection. And in our business, I will always encourage people to look at the PAT which is a very healthy now, and we have been paying income taxes regularly. So as what you have on your screen is a Ind AS equivalent. But if you look at the IGAP numbers, they give a very realistic picture, and that is, I must say, a very old school traditional accounting standard that we have been using all the while to value the businesses. So by that accounting standard, we have a 20% EBITDA margin. Our PAT is very healthy at about 8 to 9%. So I think that is a better metric to look at our category and IndiCube.
Very interestingly, you have given a good clarification for all the budding analysts and stakeholders and investors valuing your company or even the industry. But speaking of industry, you are also an industry spokesperson. The GCC explosion is on everybody's mind, and of course, you are also having a majority chunk of your revenue and area occupation under that. How do you see this happening for the industry, and how good is your company placed here?
So very rightly highlighted. Today, as I talk to you, if you look at by area, about 49% of our area is occupied by global capability centers, and their share in our revenue contribution is 53%. And this is on an upward trajectory. Clearly, we see that there will be improvement on that. But I must also say that if you look at our overall portfolio, is quite balanced. Like about close to, I will say, 23-24% of our revenue area, basically occupied area, comes from the startup, the unicorns, the late stage companies. Another about 28% comes from Indian enterprises. And when I say Indian enterprises, it includes the IT sector or our traditional companies like Mahindra Logistics, or you talk about Ashok Leyland, TVS Group. Those kind of enterprises constitute about 28% of our revenue, and 49% is the global capability centers. And going by the current trend in the industry, we see that the global capability centers will continue to absorb a large chunk of office spaces, typically over the next maybe 2-3 years. That's what we are very hopeful of.
And sir, speaking of the expansion and the growth plans, the India story is not just in tier 1, tier 2, tier 3 also. Across my travels, be it Coimbatore, Surat, Siliguri, Raipur, everywhere I am seeing a good action happening in tier 2, tier 3 also. How is IndiCube space placed here? What are your expansion and the growth plans?
It's a very good point. One big shift, Sharad, I must say, what has happened post-COVID is the work is going where people are. See, earlier, if you look at when we started our careers, we went where work was. Somebody like me came from Lucknow to Bangalore, 2,000 miles for work. But today, work is going where people are. So that's a very healthy shift. And there is a rise of a lot of tier 2 cities. So totally, if you see today, we are present in 17 cities. And we are present in 8 tier 2 cities. With Coimbatore, we have scaled up quite well. We are now almost 4.5 lakh square feet in Coimbatore. And Coimbatore is the only non-capital South Indian city in South India whose population is more than 30 lakhs. So likewise, I must say that we are now present in Cochin, Visakhapatnam, then we are in Indore, Bhubaneswar, Mohali, like that. So tier 2 story is here to stay. Also, I would like to say that if you look at China, there are 120 plus cities in China whose population is 1 million plus. In India, we have close to 50 such cities. So you can imagine over the next 20 years, we are going to at least add maybe 50 more cities whose population is going to be 1 million plus. So we will see job growth going more democratized more in terms of their spread rather than being only concentrated in the top cities.
Right. And Rishi, speaking of value-added services, there has been a significant jump, 11% last quarter, corresponding year, and now it's at 17%. That is a significant jump. Any kind of growth targets, expecting 25 to 30% of this contribution going ahead in future?
So we definitely see this on an upward trajectory. I can't say that it will be 25 or 30, but definitely we see it touching close to 20% in maybe the next year. Because what is happening, Sharad, the customers who have come to us looking for space, the customer is not only having that as an office. The customer has 5 or 10 or 20 more offices, which has nothing to do with IndiCube per se. So the customer is coming to us and saying that, can you do stuff for us there also? Suppose they already have a space, they are looking for renovation, they are looking for interiors, or they are saying, okay, can you only provide us services in those spaces if interiors are also there? So we are seeing that is a very healthy trend, that the customer, once they like our services, our interiors and everything, then they are giving us the opportunity to expand us across their pan-India portfolio. So a lot of vast growth
Actually,
is
Rishi
happening
sir,
because
increases.
of that.
Right. So the wallet share of the existing customer starts increasing when you do cross-selling as well as value-added services. Any kind of occupancy guidance and the client mix for the future? I think currently it's at around 86%.
So we track two types of occupancy, Sharad. One is occupancy which is for overall occupancy, and as you rightly highlighted, we are at 86%, and this is high. Typically, we try to maintain our overall occupancy between 82 to 85%, and then we have the concept of steady state centers, because when we pick up any property, it takes us about 9 to 12 months to make the center reach a steady state, which is like 90% plus occupancy. So our steady state occupancy is about 90%, and that we see typically hovers between 86 to 90%. And also that is a function of, suppose in a given quarter, a very large supply has got added. You will see the occupancy slightly dipping like that kind of a
Right.
thing.
And Rishi
So,
sir,
but
we are coming short of time. I just have 25-30 seconds. In 3 lines, you have to say me what's your moat of your company against your peers.
Our big moat is, one is workspaces for everyone. We don't believe that we are providing spaces only to a startup or a GCC. So we have workspaces like hotels at every different price point. Second is we follow the talent. We go wherever the talent is. We are not married to only one size of building or one quality of building. That is the other one. And then, of course, the value-added services.
That's very nicely put, and thank you very much, Rishi sir, for giving your time for the company, its growth prospects, and of course the great Indian GCC explosion story as well. It's always a pleasure to have you with us at NDTV Profit. So that's the management of IndiCube Spaces. The stock is below its IPO price, but management has done well on the Q1 numbers, and since last time in KYC, they have improved their ratings in the last 6 months. But will Dalal Street give premium to it? That's the big question. So for these interesting stories, stay tuned to NDTV Profit and keep watching KYC.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hello and welcome. You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vajrajani, and this is a show where we talk about personal finance and more. And in today's episode, we're going to try to cover 2 topics. The first one, we're going to talk about up market capture ratio and down market capture ratio. What does this mean for your mutual funds, and why this is a very important factor to watch out for before choosing any mutual funds. And to take this conversation ahead, we're now joined by Vijay Mantri, founder and chief investment strategist at Vijay Mantri Financial Services Private Limited, joining us now. Vijay, thank you so much for taking out the time. I'll start by asking a very basic question first. Help our viewers understand what up market capture ratio is, and then down market capture ratio as well.
So first of all, thank you, Mahima, and thank you to all the viewers for joining in. So the up market capture ratio and down market capture ratio suggests to you a particular fund compared to its benchmark. So for instance, if there's a large cap fund, then it get compared with large cap Nifty 100 or BSE 100. So it looks at if the BSE or Nifty 100 has gone up by 10%, 20%, whatever the number, how much is your fund has gone up. If it has gone up more than the index itself, then upside capture more than the index would capture more than 100%. So for instance, in a period, suppose BSE Sensex, BSE 100 has gone up 12%, and your fund has gone up 15%, then actually it is picking up 125% of upside ratio. It means that it is capturing more than the market has delivered. And downside ratio is basically when the BSE 100 goes down, say by 20%, your fund has gone only by 10% or 20, or 80% or 90%. So suppose BSE 100 fall by 10%, your fund fell by 8% or 9%, then it capture only 80% to 90% ratio. So if any fund has to be examined, one of the metrics we are using is that in the upside journey, does it capture more than 100%? And its downside journey, does it capture less than 100%? If a fund it goes along with the market. When the market rises, it also rises in same value. Or when the market fall, it fall by the same value. Then the fund manager is actually not adding any value. So either the fund has to demonstrate the capabilities. When the market goes up, it captures more than the market going up. Or when the market goes down, it participates less in the market fall. So either of these two are a great thing to do. But the best part is that a fund which not only capture the upside ratio more than the market going up and also fall less than when the market is going down. But this is just one of the metrics we are using. We use more metrics when we analyze funds.
Makes sense. Makes sense, Vijay. And because, it cannot always be seen in isolation, and there are multiple factors that you need to consider. First of all, just to follow up on what you said, the importance of this ratio. And like you said, this cannot be just looked at in isolation. You have to, factor in other factors as well. So how should one exactly go about, choosing a mutual fund along with considering these ratios as well?
So this could be a starting point. So beyond upside and downside capture ratio, one also need to look at attribution analysis. What is the meaning of attribution analysis? When the fund is going up, suppose the fund got 40 stocks or 50 stocks, how many stocks are participating in the growth journey? If it is wider set of stock participating, then one tend to believe that the process of fund house is so robust, it is just not a select few stocks which are participating in the growth journey, but many more stocks are participating. It means it is more by process than by luck. If in a fund only few stocks are delivering all the return, then it could be draw of luck or it could be something else. So these kind of funds don't provide consistent return. So beside upside and downside ratio, one need to look at attribution analysis, how many stocks are contributing to the growth. Second thing, when you look at upside and downside ratio, these are just historical metrics. In future, a fund which has demonstrated great capabilities of showing less in downside and more in upside may behave differently in future because the fund philosophy has changed, the fund manager has changed, fund house's approach has changed. We have seen that pass in the market. But I think it is a good starting point. Whenever any investor is looking at investing, they can themselves examine this ratio or they can ask their mutual fund distributor to give this data.
Okay. The other aspect is that, in terms of a fund that can have a low down market capture ratio, but is also, kind of underperforming in stock markets as well. How do you balance these two? Like both of these ratios together, is it possible to have in a fund, and how should one go about it, seeing both of them together?
So quite possible. A fund, generally good fund houses, good funds, invariably fall less when the market fall. So this is the biggest contribution. And when they rise, they rise with the market or maybe some less or a little bit more. But the biggest contributing factor of a great fund is to fall less when the market fall. And why I'm saying that, there could be fund which does exceedingly well in the market rise, it means the fund have high beta. When the market fall, the fund fall more. Now when you look, when the markets are doing extremely well and the fund is outperforming, you see great historical number of that fund or for that particular matter, the such category. But most important thing to keep in mind is that, do you have the ability to capture the investment performance of that fund? So fund which is more volatile, it is very difficult for investor to capture the investment performance of that fund or for that matter, that particular asset category. So investors need to be extremely aware that not only the performance, but their own ability to capture that performance is very important. For instance, momentum fund are one category. When the market rises, they do exceedingly well. But how many investors benefited out of it? Or same way, look at silver. It showed dramatic investment performance, but how many investors was able to capture the investment performance in their own portfolio? So whenever you look at examining any asset category, any scheme, just keep in mind not only the investment performance, but do you have the ability to capture that investment performance? So that way, the fund which fall less have more ability to give the investment performance to the investor what it belongs to the fund.
Understood. And Vijay, generally, when you assess these ratios, what is the time frame that you should look at generally? For mutual funds, it's always advisable to at least look at 3 years, right? Not less than that. So, when you're looking at these ratios specifically, over what market cycle should these capture ratios be looked at? And especially when we've seen a full bull and bear cycle is when you should conclude these ratios?
So I think it's very important. At least you should have minimum 3-year horizon, but mostly we look at 5 to 7 year period. But more importantly, we look at what happened. The market corrected sharply or rose sharply. So for instance, during COVID, what happened? Post-COVID in the recovery, what happened? What happened during Ukraine-Russia crisis? What happened when the Trump announced the West Asia crisis started? How the fund has behaved at that time. So we see these numbers when the market either rise sharply or market fall sharply, either of those period. And consistency, we look at not over 3 year, but we look at 5 to 7 year. And we look at rolling return, then we figure out which fund has been more consistent. If the fund consistent rolling returns are better, then that fund has a greater ability to deliver decent investment performance to the investor.
Okay, understood. In terms of, what matters more question, do you think an improving upmarket capture ratio is better or a further reducing the down market capture ratio is a better trend? Just trying to get more sense as to which one has more importance over the other, or both of them are equally important?
If you are a long-term investor and you are a mutual fund investor, then the downside ratio can be more. A fund house which protect the downside does much better job, because we have seen when the market goes up, everybody get very excited, and when the market goes down, people take money out. So in a fund which rose very fast and also fell very fast, people tendency to invest at the top and take money out the bottom is very much there. All of us are human beings. But a fund which fall less, I think there the investor longevity is much higher. So from an investor actual investment experience, a fund which does a better job of downside protection deliver more return to the investor. So investor need to keep in mind their funds return and their return which come to the investor, and these could be dramatically different.
Is there a possibility, Vijay, that you can give us an example of a stock or a sector that has kind of helped the fund during a market correction, but also limited upside during the subsequent rally? If at all you have any example in place that comes to your mind.
So there are many fund houses. For instance, if you look at during the COVID period, everybody thought that the new, if you hear the commentary in 2020, March, April, everybody is saying that go toward quality, to go toward Asian Pen, Fidelities and all these kind of company, Britannia and HDFC and TCS. But their fund house like HDFC FlexiCap, which moved more toward the value stock, the PSUs and all these kind of stock. And at that time it looked very bad. But when the market recovered, these stocks did exceedingly well. So there are many illustrations in the market where a fund house has changed the track depending on the market conditions. Similarly, one need to keep in mind where most investors make mistake. When the market rises, certain stock lead the rally, and when the market fall, these stock fall. So many people try to average that out. So they do the same thing with the fund house. When the fund anyway has gone up and it has fallen, they believe it is a great time to go and invest in that fund. Perhaps it is not the right time, because in the market fall, the stock which has fallen less will perhaps lead the next rally. And similar thing can we talk about the fund houses as well, or a scheme as well.
Got it. Okay, Vijay, thank you so much for taking out the time and putting that into perspective. And, once again, thank you so much for taking out the time and speaking with us at NDTV Profit.
My pleasure.
All right, viewers, so it's time to step into a very, very short break. Of course, we talked about two very important ratios that are kind of important in determining the way you choose your mutual funds. But on the other side of the break, we're going to differentiate or have a versus comparison between two mutual funds. Now, which are these mutual funds? You'll have to wait for a bit to find out. So do stay tuned in. We'll be right back.
of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance
Presented by Canara Bank. Together we can.
Welcome back. You're watching Your Money Matters. Before I took this break, I wanted to create some suspense, and hence I tried to not give you the fund names that we're going to try to differentiate between. I'm going to talk about FlexiCap mutual funds. So we're going to try to decode the difference between Parag Parikh, HDFC, as well as the new one on the street. That's Abacus, fairly new one. And we're going to try to decode as to how these FlexiCaps are different in terms of their strategy, and which one would probably suit your own goals. And to take this conversation ahead and to decode that for us, we are now joined by Santosh Joseph, who's the founder of Germinate Investor Services, joining us now. Santosh, always a pleasure speaking with you. I'll start by asking you the difference between the strategy that all of these three funds are adopting. We've seen a slight underperformance when it comes to Parag Parikh for some while now, but they've gone ahead and said that this should improve from here on. But Abacus is the more slightly aggressive one, if I'm not wrong. So help me understand as to how the strategies are different in all three of these FlexiCap funds.
Hi, good afternoon. So good to be on the show. Actually, if you notice the July data also from the AMFI numbers that came out, you saw that FlexiCap were leading the pack in terms of diversified equity. Now, over 7,000 crores being collected in the FlexiCap category, and between these three funds that you just mentioned, they got almost 50% of the market share. Now, you're comparing two behemoths, which is the Parag Parikh FlexiCap and HDFC FlexiCap, and then you have the new kid on the block, just started in December, last week of December 2025, you have the Abacus FlexiCap fund. Now, the good news is all the three of them have extremely seasoned pedigree of a fund management background. Parag Parikh, of course, has got Rajiv Tucker. You got Amit Ganatra, who's again a seasoned guy, but now managing this fund since Feb of 2026. And then you have Mr. Doshi managing the fund, Abacus FlexiCap, under Mr. Sunil Singhania since December of 2025. Three simple FlexiCap funds, but the simplicity ends there by their name. The strategy is extremely unique. So the FlexiCap fund, that is Abacus, is running an extremely aggressive strategy, which is almost 50% of the portfolio is in mid and small cap, which is exactly what the FlexiCap strategy allows a fund manager if he feels the opportunities are available. Whereas on the other extreme end, you have Parag Parikh, where you have about 10 to 12% in the entire mid and small cap space. Then comes the HDFC, where you got about 16% between mid and small cap. So when you just look beyond the wrapper, the difference starts unfolding. So at the primary level, they're running three different strategies, even though the name is FlexiCap.
Okay. For Parag Parikh, let's start with that because, that's one of the counters that has still gotten highest inflows in terms of a July flow stand, right? Do you think that here the brand story is what is getting in the flows, or is it something else? I mean, just wanted more sense as to, because you might see this on ground, right? Why is it that inflows keep increasing in Parag Parikh, which has kind of underperformed in the last couple of months? And I know that we don't generally look at mutual fund from a month-to-month perspective, but more sense on why is it that people are still more fixated towards Parag Parikh?
I think you alluded to the right point. People like the brand and the long-term track record. Nobody's looking at the immediate short-term. Now, when you look at the month of July or the 6 months in 2026 or maybe a year to date, the numbers tell a different story. But the luxury of Parag Parikh that investors have is they've seen multiple cycles. The fund has been there since 2013, 2014. It is again the largest fund or a flexi-cap fund in the category. So people are coming in here because they got the confidence that over long-term investing, this fund will be rewarding for them. Not to forget, the fund is also unique between any flexi cap in the market because they still have over 12% of global or international exposure, because they got the overseas exposure still, though it is reducing every month, but they still got their international large caps going for them. And not to forget their cash holding, which they held over the last 6 months to last 12 months, which helped them in the downfall, but now is why you're seeing that very short-term performance getting affected because the significant amount of cash holding they had and they continue to have.
Okay, and between HDFC and Abacus, because HDFC has around just a slight more than 70% in large caps, if I'm not wrong, and Abacus has around 30% or so in small caps. So how does one differentiate between the two? Because one is taking an aggressive approach, whereas one is taking a slightly less aggressive approach. So what should one keep in mind before evaluating these two?
Well, I think when like you spoke about HDFC, over 75% in large cap, whereas when you look at Abacus, just shy of 50% in large cap. It clearly tells you that the portfolio managers are looking at the market very differently and they're building their portfolio to what they believe in. Now, you must also add a point here that Abacus has got the huge benefit of being the new fund which launched only in December, and while they took 4-5 months to start deploying the fund, they went through the month of March, which was the greatest opportunity so far in 2026, where the markets gave you a huge discount in the month of March in the way of correction. Therefore, the ability to deploy funds in mid and small cap and the valuations are attractive could be one of the reasons. The other reason is because clearly they're seeing robust activity, either it's from earnings side or even from the growth perspective in mid and small cap. Now, HDFC is a larger fund, and for them to move even 5-10% away from large cap will mean a significant impact on their mid and small cap portion. Even though HDFC has got a far larger list of stocks and Abacus has got far shorter list of stocks, it is because the size of the fund, they also have to keep in mind their meaningful exposure to mid and small cap.
Oh, then between the three, Santosh, how would you kind of rate them in terms of aggressive to less aggressive for somebody who wants to understand कि कितना risk लेना है in that spectrum? How would you rate these three?
Well, considering the little data that we have, Abacus is new, and you have Parag Parikh, which is 14 years, and HDFC FlexiCap, which must be at least 30 plus years right now. Let's try and do justice to this. Purely from the way the portfolio is positioned today, if someone is entering the portfolio today, I think the aggressive of the three would be Abacus. HDFC would fall in the middle because of their pedigree and because of the way they got large cap exposure and the number of stocks they have. Parag Parikh, thanks to their international exposure and the cash holding and over exposure to ultra large caps both domestically and overseas, would be number 3 purely from a risk perspective. So it's not that they're bad or they're different, it's just that from a risk perspective, I would put Abacus as number 1 and Parag Parikh as number 3.
Now, I mean, just from the fact that, we've seen the AUM for FlexiCap mutual funds as a whole, increasing month on month. I mean, if I'm not wrong, it's crossed that 6 lakh crore mark as well. Do you think that these funds are now becoming the sheer approach to maybe generating alpha, and that's how people are looking at it? Is that understanding correct? Why is it that people are now, skewing more towards the flexi cap funds?
Well, that's a good question because see, generally we would like investors to come into diversified equity funds and avoid chasing trends, thematic ideas and sectoral funds. Now, the good news in a flexi cap fund like we just discussed is there is very good representation for mid cap and small cap. The fact that we spoke in Abacus, they got almost 50% in mid cap and small cap doesn't also make you chase a small and mid cap in a standalone individual manner. Now, we also have to keep in mind that as the market evolves and grows, the market capitalization increases, the sheer size of the large caps are becoming bigger. In fact, today a 30,000 crore company is also considered a small cap or a very small mid cap. What it means is the depth of the market changing. Flexi cap funds will become a mainstay in investors' portfolio, and rightly so. They're doing the right thing because they do not want to take a call on mid cap or small cap themselves. If they do, there are many funds that they can take, but in a flexi cap fund, the investor is coming with a clear objective of being participating in equity and letting the fund manager decide time to time what is the exposure across market cycles and even sectors, and in an odd case raise cash if required.
Okay, just one last question from my end, Santosh, is that, for somebody who is making a choice between the three, what would your advice be? What should one look at, the metrics, if there is a checklist in place, and then decide as to which one suits better for their goal? So, if at all there is a view on that.
It's a tough choice to make between the three because let me tell you, Parag Parikh and HDFC have delivered fabulous returns, have a track record of making many investors richer. HDFC, like I said, over 30 years, and Parag Parikh now for almost 15-16 years. Abacus, though the new fund, is coming from a very strong pedigree, from a strong fund manager track record. We all know Sunil Singhania and his ability to manage portfolios efficiently and generate a rewarding return for the client. So, if I were to build a portfolio and if I had the discretion of the client listening to me, I would say add all the three because Parag Parikh gives you the ability to raise cash whenever they feel it's required and also the little bit of international exposure. HDFC is a proven track record and a winner. Abacus right now, with the way they've structured the portfolio and the being so nimble and light-footed, could also be a great winner. So I think even if you're able to add two of these into your portfolio rather than fight over which is the best of the three, you'll still do yourself very well.
All right, got it. Santosh, thank you so much for taking out the time and helping us decode the difference between the three. And of course, as always, pleasure speaking to you.
Thank you.
All right, viewers, so two very important topics that we talked about today. Definitely something to take away, from this edition of Your Money Matters. But with that, completely out of time, do stay tuned in. More news and updates on the other side.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, ideas across borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait.
Presented by Canara Bank. Together we can.
We're joined today by Harsha Upadhyay, who's speaking to us today, CIO, of course, of Kotak Mahindra AMC. Harsha, always a pleasure speaking with you. Thanks so much for taking the time. We're a day after the Q1 results has waned or finished, and you kind of got a trend or sense of how these numbers would pan out more or less at the midpoint of Q1. I wonder what you think about this, because just as we're closing out the earnings season, you have once again the situation that is getting complicated externally. You have crude oil that's once again above $90 to the barrel.
Yes. First of all, I think the earnings season has panned out quite better than most expectations, I would say. Most of the expectations were that there will be some impact of the ongoing West Asia crisis, and hence either the margins will be under pressure or there will be some logistic issues that the companies would have endured, and hence the numbers may not be as strong. But contrary to most expectations, numbers have been really, really strong. In fact, after almost 8 or 9 quarters, we have seen large cap earnings growth moving at about almost 17.6% for the full season. This is a significant improvement compared to the less than 3% growth that we saw 2 years earlier, and less than 6% growth that we saw last financial year. So I think while the confidence was more on mid caps and small caps to deliver earnings growth as expected, there was very little confidence on the large cap basket when the season began. But contrary to expectations, we have seen even large caps delivering quite a bit of strength in terms of earnings trajectory. Having said that, as you mentioned, the West Asia crisis still lingers on, although it is somewhat low intensity. However, the sentiments on the energy side have remained quite volatile, and to that extent, we have also seen firming up of crude oil prices, which is not a good news from an external perspective. Purely from earnings perspective, I think things have improved quite a bit this quarter.
Yeah, earnings perspective, things have improved. Harsha, Tamanna here. Problem is that improvement, is it reflecting in prices? Do you think that earnings improvement have now been adequately priced in by the market and now you will need a plus, something more to really move the needle?
Tamanna, actually, we still believe that large caps are well below their median valuation range or long-term average valuation range. So to that extent, the earnings growth trajectory, which has improved, should give impetus for large caps to start performing from here on. But of course, there are other external factors which are keeping the markets in a range, I would say. In fact, I'm a little bit surprised to see some of the macro headwinds receding and FII money starting to come back, rupee dollar stabilizing. We have seen almost $55 billion of FCNR deposits coming into the country. Except for monsoon, which has been a bit of an erratic this season, most of the other things seem to be on the improving side. But even then, we have not seen markets moving out of this range, which is a little bit of a surprise. Of course, that is also partially driven by the kind of selling that continues on the secondary side, and as well as some of the IPOs, which are also taking up the liquidity.
An interesting point, Harsha, that you're making earlier. You know, you've spoken about what's happening with the large caps as well, where there could be value that could be emerging. And I think in the course of the last 1 year, you have raised your exposure when it comes to IT as well as banks, and they are the heavyweights in terms of Nifty 50 as well. What's giving you the confidence in these two sectors? Because you usually see that trend when the FIs come in, these are the two sectors that usually move. Right now, IT, nothing really happening in terms of the confidence that people need to get. What is giving you the confidence?
While we have increased our exposure to banking and financial services, so we have not really increased our exposure to IT services. On the contrary, we have actually reduced IT services exposure over the last 12-18 months. The concern being on the lack of business momentum and also the possible impact from AI on the margins. However, on the banking and financial services, we clearly believe that valuations are quite attractive at this point of time. The single biggest concern that was there for private banks whole of financial year 26 was about net interest margins being under pressure, given the fact that there was scramble for deposits and interest rates were on the lower side, and they were cut during the financial year as well. However, that situation doesn't exist anymore. We are going to see either stable or slightly higher rates over the next 12 months. We have also seen a good amount of FCNR money coming into the country, which means on the deposit side, there is no constraint for growth as of now. Credit growth continues to grow at about 17-18% at this point of time, with nominal GDP growth coming above double digits. I think this kind of credit growth should continue. So overall, valuations being on the safer side and with growth continuing to be strong, and largely most of the margin pressures are behind us. And that's where we believe banking and financial services will continue to deliver better numbers over the next couple of years.
Okay. What about Harsha, IT? How are you feeling about IT services? How are you feeling about power demand? How are you feeling about FMCG, if I had to pick those three?
IT services, as I explained, continue to be quite negative at this point of time. Yes, of course, the valuations are quite low. There could be very sharp pullback rallies every now and then, but from a medium to long-term perspective, we still continue to be very selective on IT services. FMCG, once again, is a sector where we have been underweight for quite some time. Clearly, there is hardly any volume growth for any of the subsegments of FMCG, as you can see for the last couple of years. The margins still continue to be very strong, but the question is how long these margins can be strong if there is no top line growth for some of these companies. So we continue to remain negative even there. On power, we remain positive, and we believe that over the next couple of quarters, again, there will be concerns about what will happen in the next summer, etc., given that this year's monsoon has been not so great. So the power demand will continue to remain healthy, and to that extent, I think this entire piece should do well. However, some of the sub-segments which are related to power sector, especially the cables and wires and the ancillary companies, etc., have been trading at quite a rich multiple at this point of time. So one needs to have a little bit of cautiousness on that particular sub-segment. But power as a whole should continue to be one of the favored segments.
Sure, just 30 seconds left, but let me ask you what your revised estimates of full year earnings would be across the board.
Alex, we have not really changed our full year numbers as of now. We continue to remain at around 15-16% growth for Nifty. But the confidence on achieving those numbers have gone up post the first quarter numbers, where we have already seen close to 18% growth on Nifty basket.
Understood. All right. Harsha, always a pleasure speaking with you. Thank you so much for taking the time.
Thank you.
And speak soon.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV and Viksha, ideas across borders. The Nepal.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
We're joined now, and I'm quite interested and excited for this conversation by JP Morgan India's Rajiv Batra. So the view from JP Morgan remains broadly constructive, with domestic demand helping offset external headwinds. Power, capex, defense and auto stand out, while financials and industrials remain their top pick. IT is the key underweight. Rajiv Batra, head of Asia and co-head of Global Emerging Markets Equity Strategy at JP Morgan, joins in with more insights. Rajiv, it seems like for the Indian markets, you can do everything right, but the results are not showing. If this was a student, they would be quite frustrated because they're putting in the hard work, getting all the marks, or at least the unit tests are working, but final exam mein result nahi aa raha hai. The quarterly numbers are good, the macro and micro indicators are good. What else needs to happen?
Thanks for having me back on the show. You gave a right analogy that student is trying its level best, trying to get the grades and stuff. But we forget when we enter into the postgrads and the B school, it's all about the relative grading. And that's where India is lying at this current juncture, where it's all about the relative performance overall and relative earning growth. Yes, definitely India large cap or MSCI India has delivered 19% revenue growth, 16% bottom line growth, but it's in the era where S&P 500 has driven 33% earning growth, and MSCI EM benchmark has given you 91% earning growth. So in that sense, even absolute term, we are giving what all about market want, but in a relative term, it is falling short what the neighboring countries are offering us. The good part is, if we keep on building on this momentum, like what we have learned from small cap space, mid cap space, which have been delivering 20% plus kind of a growth for the last 7 quarters, and now emerging as a huge outperformer. If the large caps keeps on doing so in consistent manner, then the relative outperformance one fine day will also come for India.
One fine day. Okay. So we have to wait for, I'm sorry if I'm stretching the analogy, we have to wait for everyone in the class to perform worse than us. And for, or for the invigilators to feel that we have potential in the future.
Either they perform worse, or we keep on performing and keep on bettering our performance compared to the previous quarters over there. Either of the situation. Right now, like last 2 months, we got the benefit because others were not doing well, and hence 2 consecutive months India outperformed the regional benchmarks. But this particular month itself, it's not just because of others not performing, others are also making a comeback, but India's story got supported by fundamentals where current account pressures, inflation pressures were all subsiding, and to put cherry on top, a double-digit growth on the top line made a comeback.
Okay, Rajiv Gralia, so, if you're talking about a comeback in terms of India, what's preventing you from turning more aggressive when you talk about your base case Nifty target, because that is still at 27,000?
To become more positive, or to shift from our base case 27 to bull case 30,000, number one ingredient is you need the broadening of growth to other sectors, which have just started in this quarter on a consistent manner, at least for next 2 to 3 quarters more. That's where the earnings momentum will start building up in India, particularly the large cap. Second, and the most prominent one, where the pressure keep on coming, global oil prices and inflation needs to cool down. So that remove the worry or threat of policy tightening or a higher policy rate coming on us will get subsided fully. And last but not the least, FPI outflows needs to reverse. Here I'm not calling for we want a huge amount of inflow. By reverse means there should be pin drop silence. No outflows, no inflows, but nothing happening. Right now we are fighting with 2 kind of outflows, one from FPI and the second one where there are capital issuances going on and they are taking liquidity out from what domestics are doing through buying.
Rajiv, very interesting ingredients that you've given to actually move from the base to the bull case as well. But if, let's hypothetically understand that earnings may continue to grow in double digit in calendar year 26, in calendar year 27 as well, do you think valuations could also be a limiting factor for the further upside to come in? Or do you think valuations probably will be out of the picture at that point in time?
So right now, the base case just purely takes into account 11% earning growth for this year and 13% earning growth for next year. No re-rating into account overall. Re-rating in this environment will be a stretch where we are seeing global bond markets is becoming super volatile. We just saw US 30-year yield touching almost a 2007 high kind of a mark, except China across the big global countries, in DM countries, bond yields are rising. So that's not a good news from the valuation sense overall. Then the dollar liquidity tightening because of constant worry of hike comings in different G3 countries is a constant pressure point for the valuation. Hence, it's better not to rely too much on a valuation re-rating and continue to stick towards earning. And if earnings maintain that particular path, by default, in matter of not 12 but 18 to 24 months, people may start giving us a valuation premium, which is missing at the current juncture. It has declined from 110% relative premium to EM to now 60-65%. To command that 110% again, we need to constantly give high teens earning growth for the large cap space.
Rajiv, I'm wondering, with the recently concluded Q1 numbers showing what they have, why are you still not as constructive on IT services? Not that the numbers were great, but that sense of dread on AI is beginning to ease. Would that cause a re-rating or a relook at any point at the IT sector?
So Tamanna, for that sector needs to make a comeback, we need growth, potential growth number to move from a current cohort of 4.5% at least to a high single digit number, 8.5 or even maybe 9%, which looks like a stretch. The current valuation which we are trading in post the recent rebound only justify this 4.5 or max 5% of an earning growth. Now to go a higher multiple from here, from where the decline happened, growth needs to move. If growth is not a certainty yet, valuation rebound will be question mark, and markets or IT sector movement will be much more in line with what action will happen in the global software space. As an example, we saw for the last 2-3 days, global software sector stocks are under pressure, and hence we are seeing again Nifty IT taking a hit overall. So valuation should not be an argument to look into the Indian IT space. It is much more on earnings rebound and more probably the higher earnings certainty, whether you can get that 8%, 9% threshold of earning growth for next 3 to 5 years.
Which to your mind are the clear winners of Q1, notwithstanding base effect, etc., which are setting to benefit once macro factors undergo a change?
Look, the clear winners are number one, power demand hitting 271 gigawatts in mid-May was made it that sector as a clear winner. Beyond that, the capex which is going on the grid side, on other power equipment side, defense industry. Then on the consumption side, it was very heartening to watch the volume growth that has come in consumer staple space, in the auto space, and also the export scaling that started happen overall. Now, if the macro headwind fully subsides, then people will start giving better valuation even to financial sector, which is seeing a very strong, robust credit growth, but they are not getting the deserved valuation, which ideally should have happened by now. And that's where the Nifty banks or MSCI India financials are struggling. So financials will be the one particular space to watch. But beyond that, I will say one needs to keep a barbell at this occasion in terms of an allocation, where on one side you could be on a quality growth, which is your financials, healthcare, and in financial healthcare and consumer discretionary space. But on the same point of time, where there's a very strong earnings momentum, you need to be on industrials and materials.
Okay, industrials and materials, Rajiv, how are you looking at consumption? Because if you see in terms of this quarter, a lot of outliers where you've seen, that growth coming in there. Now, the question is FMCG, question is consumer staples. If you have to look at both of this, take into consideration what El Nino potentially could do, because there is murmur about El Nino and the impact, but no one's really talking about it right now. Would you say with valuations where they are, this could be an opportunity to nibble in?
El Nino is now becoming a very well-known risk. The new risk in town will be what happens to the policy rates overall. If the way global bond market is moving and the volatility is rising overall, we don't know at which level the US 30-year, 10-year or Japanese bond 30 or 10-year will settle. But if that brings the argument to defend your bond market, to defend your currencies, you need to do the rate hike, then that becomes a new headwind beyond El Nino to the consumption space in India. So that's worth watching over there. But it's not all bad news only. At same point of time, the good news will be the 8th pay commission. Again, that gained a lot of traction start of this year, but suddenly for the last 6 months, nobody is like talking or even taking that into account. So taking all these factors into account, valuations again will be a constraint to command much more higher premium from here, but it will be the earnings direction led by volumes that will decide the course. So I will not be looking at the value growth. I will be tracking how the volumes are panning out each and every month to give us a clear direction in the consumption space.
And Rajiv, how are you looking at the financial side of it, in terms of BFSI? Because we've been speaking about what's happening on the FCNRB. The window is getting closed earlier, so there could be some positive moves in terms of the collection. But do you think there is a potential of any negative impact on the banks going ahead? Or again, between PSUs and private, what would you look at?
So in terms of banking sector, the only big negative which I'm worried about at this juncture is if...
The task now is to use that strength with greater ambition, to identify opportunities early, to build capabilities ahead of demand, and also to ensure that our institutions remain at the forefront of India's next phase of economic growth. I repeat my appreciation of the team DFS for having come up with background notes for all the 7 topics which you discussed between yesterday and today. I think when government wants to work, when government is inclined to put its heart and soul and present something, they do it really incomparably well. And this DFS exercise, where the 7 documents were prepared for you all to go through well in advance before you came here and then deliberated on those 7 topics, stands out as one of those high quality publications which can be on their own standalone documents rather than a preparatory note before you deliberated. My appreciations to the secretary, the joint secretary, the additional secretary and the team, the directors and everyone who in a very short span of time produced those remarkable 7 documents. When the quality of seed is good, the crop yield also is good. So when the preparatory documents are themselves of this high order, the deliberations and the discussions have yielded very good, actionable outcomes. So each one of the groups deserve a high 5, if I can say that, for your performance and the presentation, and committing yourself to undertake those actions, 0 to 6, meaning within 6 months what you have to do, 6 to 12 months what you have to do, and 12 to 18 months you complete what you have set for yourselves under the 7 categories. So I think you're making the media's job very easy. They are here, they are very keenly watching what the banks have got to say, but you've really done rigorous, very systematic consultation, deliberation, that the outcomes are also appealing enough and also with the timeline given. Now, if I could talk on the banking for youth, a focused campaign is something which I think is required. India is one of the world's largest, youngest population countries. Our young people will increasingly shape the country's patterns of consumption, savings, investments, entrepreneurship, and wealth creation. In all this, youth are going to set for us a certain standard. Banking is also the foundational infrastructure of a person's livelihood journey. Hence, financial capability should develop seamlessly alongside adulthood, not as a reactive, stressful adjustment upon starting one's first professional engagement. So engaging them early, therefore, presents both an important responsibility and a significant opportunity for our banks.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about it?
Hello and welcome to The Big Question. I'm Vikram Oza. Now, this is the kind of situation that most of us face when we book our air tickets. You book a ticket a month in advance, you could get a good bargain. You book the same ticket a day before departure, that fare could be 2, 3, even 4 times higher. Now, airlines call this dynamic pricing. Passengers often call it daylight robbery. Now, the Supreme Court is stepping squarely into this debate. The court has told the centre to act against airlines that flout fare directions, even suggesting that carriers that flout the rules could be grounded. But what are the rules? Well, broadly, airlines are required to publish and adhere to their declared tariff structures, while the DGCA, the Director General Civil Aviation, their tariff monitoring unit must monitor the fares as well and ensure that carriers do not charge outside those declared tariff ranges. But to be fair, India does not currently have a statutory airfare cap or a detailed binding fare control regime for domestic airlines. And for the moment, the government is saying to the court that these new rules that cover airfares, that cover surge pricing, baggage charges, cancellations and refunds as well, all of these will be ready within 3 weeks. It will be given in an envelope. But even as that process unfolds, this is the bigger issue. Nobody is disputing that airlines need pricing freedom in a free market. Aviation is a capital-intensive business. Demand does fluctuate. But when fares shoot up during festivals like a Mahakumbh, or during disruptions like the large-scale operational issues we faced when Indigo had problems, or when you had emergencies like the Pahalgam episode or during COVID, the question is, in times like this, where does market pricing end and where does consumer protection begin? And on pricing, you take a step back and let's ask this. Should the market decide the pricing? Should the regulator step in for stronger enforcement? That is the big question. So yes, the Supreme Court is saying go as far as ground the airlines if they flout airfare rules, but the rules are still being made. But the broader question is, now should pricing have limits placed on them in a free market, in a capital-intensive industry like aviation? Let's ask the experts, and this debate is open to them. Joining us on the show is Krishnava Dutt. He is founder and managing partner at Argus Partners. Joining him, Mr. Shivaraman. He is former Director General of Civil Aviation. Good to have you, sir. Mr. Bhargav is also with us. Jitendra Bhargav, former Executive Director of Air India. Sanjay Lazar, the CEO of Avialaz Consultants, and economist Rajan Ratna is with us as well. So thank you, gentlemen, for taking the big question today. But Krishnava Dutt, if I can begin by asking you about this irony. India already has fare directions, right? Airfare directions. There are tariff filings, a DGCA monitoring mechanism that is already in place. Are those rules not protecting passengers when the airfares suddenly go through the roof? So today, when we hear the Supreme Court go as far as to say that airlines that don't comply with fare directions should be grounded, do you see it primarily as a pricing issue, or is this an enforcement issue?
So, if I look at it, there's nothing. Can you hear me? Thank you, Vikram, for having me over. So Mr. I don't
perhaps unmuted.
Can you hear me?
We can't hear you.
I am not mute. Can you hear me?
Yes. Go ahead, sir.
Yes. So thank you. I don't know. Would not want to describe this as a simply a weak enforcement issue. I mean, airlines face genuine cost pressures, fuel volatility, a falling rupee, foreign currency losses, maintenance costs. There is a lot of it. The regulatory weakness is to have a clearly defined how to distinguish a commercially justified, high fare. You mentioned that, there are, places when they can intervene and justify that. The current rule 135 does give DGCA some power in terms of exercising if there's a predatory pricing or an oligopolistic pricing. But I think there needs to be a greater precision and transparency and real-time data. So I don't think it's an enforcement issue per se, and probably when the rules which are being framed as we speak, when it comes out, hopefully these issues would be addressed.
So we'll have to wait for that to happen, Mr. Shivaraman. When you talk about airlines already operating under a regulatory framework, and the DGCA's tariff monitoring unit is tracking fares on the key routes as well, why do you think the court is still so unconvinced that passengers are adequately protected?
First of all, we must understand one thing. Indian airline industry has got a serious structural problem. For example, Indigo Airlines had to ground more than 100 aircraft because of engine issues. Even today, 30 to 40 aircraft have been grounded. We have a growing demand for air traffic, growing demand for passenger seats, because the economy is growing at 7 to 7.5% per annum. And this is not matching the supply that is coming from the airline sector. For their own problem, they can't get aircraft, they can't get pilot, they can't get engineers. So one has to understand the constraints under which the Indian airline industry is functioning. We cannot say that you have to function within these fair limits, because there are periods in which there is a surge in demand and the airline industry cannot supply the number of seats because for want of aircraft, for want of seats at all. So therefore, they have to regulate their own supply and demand problems by increasing the fares. And that's why India has not capped the fares. India has tried to regulate it in such a manner that if it becomes a predatory pricing, they are trying to impose a cap on the fares. And this is a system prevalent throughout the world. We have already seen how airlines have disappeared from this country. Jet airlines were working very well, it suddenly disappeared. Kingfisher suddenly disappeared. Go Air suddenly disappeared. If we start putting the airline industry into a straitjacket, I'm sorry, this India will not be able to see a growth in the airline industry. I think this matter has to be properly stated and brought to the notice of the Honorable Supreme Court before any decision is given by them in order to protect, to put the airline industry into a straitjacket.
So straitjacketing, you say, is not something that our aviation sector needs, and globally as well, it's not something that we haven't seen this kind of dynamic pricing in. Mr. Bhargav, as a former airline executive, you think airlines can realistically survive if government starts second-guessing commercial pricing decisions?
No, I am deadly against government intervention as far as fares can be controlled. What the government or the regulatory agency need to do is to ensure the capacity is not mismanaged, reduced to manage fares on a higher level. What happens in the aviation industry is that airlines submit their flight schedule for summer and winters. This is the number of flights they're going to be operating. Now, they can really cut down on the number of flights to ensure that the fares are high, citing capacity constraints in the market. Let's go back to 3 months ago when ATF went through the roof. Government intervened and capped the ATF prices at 76 rupees per kiloliter and told the oil marketing companies we are setting aside 10,000 crores as compensation for them. So if government can give a benefit to an airline in time of crisis, there is no reason why government can't play the same role when fares go beyond a certain level. Now, the fares went up in the month of April, May when the ATF prices were hit. And now let's compare, or the DGCA can do it, airlines can do it. Are the fares at the pre-April level after the capping of the ATF prices? The answer is no. The fares are still high. Are the airlines operating as many flights as they're committed for the summer schedule, or were we actually operating in the month of April? The answer is no. That is why the fares are high and people are talking about it. The reality is, as Mr. Shivaraman very rightly said, many an airline have bit the dust because they've not survived. 3 of the airlines are listed companies. They come out with the quarterly results and show massive losses. So they're clearly not fleecing. But airlines haven't done themselves a favor because in the time of crisis, the fares go far beyond reasonable level. Now, that is what the Supreme Court is hinting. Let's have a bracket that the fares will start, say, on a certain sector, 4,000, go up to 8,000, not 20,000, for example. Now, what we are witnessing is isolated cases. 90% of the passengers travel on fares which can be described as below par or median fare or slightly above, but not astronomically high fares. But this 3, 4, 5%, because unlike the trains or the buses, the fares are not fixed, they're dynamic pricing. As the fewer seats remain on a flight, the fares go up. But airlines need to self-regulate that we can't be fleecing passengers. The public perception in the times of crisis, when there's a railway accident in a certain place, the demand shoots up.
But does self-regulation work?
The demand shoots up.
In the kind of experience we have seen so far, does self-regulation work? Sanjay Lazar.
Vikram, for having me on your show. Couple of things, since Mr. Dutt also here, Mr. Bhargav and Mr. Sivaram, I think the airlines did themselves a huge disservice by not implementing themselves in this matter last year. This decision will now be taken out of their hands because it's a PIL and the DGCA and the government are involved. That's one. Because the airlines cannot make a case for themselves here. Number two, I do believe that the court and the litigant should have first concentrated on building a strong passenger charter. Mr. Bhargav and Mr. Sivaraman have spoken of airlines that have shut down. There are about 27 to 28 airlines that have shut down since 1992 until 2026. That's a huge number of airlines in India. I think before the Honorable Supreme Court goes on to try and regulate prices, which I'm against, let me be very clear, they should first ask the government to stipulate taxes. You're killing airlines with 40, 50% of taxes, PSF, passenger is dying with it. the airports are charging so much. It's crazy. So therefore, whatever passengers pay in the end, the airline is not getting all of it. The airline is getting 40-50% of it. There is another aspect here is, when people look at a website and they see 28,000 for a Bombay Delhi, let's understand that these are dynamic pricing. They're buckets. They're buckets of fares. So maybe just 2% of the entire aircraft is selling at that. And that's probably at the last minute. But people print that, produce that in social media and news channels like this. And they say, 28,000 is the fare. That being said, we have gone overboard. I think the airlines must exercise restraint, like the Honorable Court has said. And I wouldn't be averse to having an upper cap somewhere where it's reasonable.
So what is reasonable? The upper cap that you're talking about, you say this is an issue that often gets blown out of proportion, but where does the truth lie? If you were to look at it from an economic perspective, Rajan Ratna, help us understand, in any market economy, demand influences prices, right? So when does a market signal become market abuse? Because here we are trying to put some guardrails on the kind of pricing that happens, especially in difficult times.
Yes. Let me start with saying, when we talk about airline, we are talking about the services industry. Now, what is expected is, to the extent the service is provided, they need to charge. I mean, yes, let me co-equate. You go to a barber in a normal shop, you pay 200, 300. You go to a 5-star, you pay a higher price. That's for the consumer. But here in this particular case, when we are talking about these flight fares, I myself have been traveling. If I look at any of the ticketing price, even after 2 months, for the same day, if there are 10 flights, I find, depending on their timing, it's a dynamic pricing where you get a quite range of the prices for the same day, for the same sector that you are traveling. Now, if you see 2 months from now on, if I have to travel somewhere, I get puzzled. What is the factor which goes in deciding that if I have to travel from Delhi to Mumbai after 2 months, one ticket shows 5,000 and another time is showing 10,000 or 12,000? Definitely, all the tickets are not sold, so this is not the last moment ticket buying. So what I feel here, see, this dynamic pricing is globally. It's not only India, other countries also have that, but there are regulators who look into, but they don't decide on the pricing, but they look at the capping. India has shown in 1 or 2 times of the capping, but I think in India we need a strong regulation and strong regulator. The second thing which I find is these pricing of the airlines are not very transparent. What makes you decide? I mean, I was hearing, okay, you have a airport taxes, the government taxes. For the same sector, the taxes remain same, the services remain same. Maybe with the timing, the airport service charges would vary. But does airline show transparently to the consumers as to why a ticket price is 5,000 and why it has gone to 10,000 for the same 2 months before if I'm booking? And that lack of transparency brings the doubt in the minds of consumer that he or she is facing.
So as I understand it, you are all for capping. You're saying that dynamic pricing is a global phenomenon, but capping is an essential guardrail that we need to introduce and ensure implementation as well. And there should be more transparency, because the other bits, when you're talking about airfares, 50% if it's going to the government, to the airport authority, etc., if that is going to remain constant, then what about the fluctuation? Is that adequately, transparently shared with travelers? Krishnavadat, the petition is also arguing this goes beyond airfares. The regulation on airfares is one part of it. They're saying it should also cover surge pricing and baggage fees and cancellations and refunds. So you think the legal battle now is moving beyond ticket prices into overall passenger rights? Is that the area we're in now?
So there are, distinct different categories. Yes, you're right. There is surge pricing, baggage, cancellations, and so on and so forth. But I'll just take one part on the capping. The choice is really not between free pricing and fair pricing. It's not binary. It's not by saying that we either cap or we don't cap. I don't think the debate is, whether it. No one is saying that it should be a capped or a. People know the dynamic pricing over the world has worked and does. I think, and as I alluded to Section 135, which is a right of the DGCA, that there must be a process defined very well and transparent, which says this is the time in terms of adversity, in terms of force majeure, in terms of specific airlines actions, where there would be a possibility where this regime should come in place. Now coming to, and that is for specific to surge pricing. Now coming to, which you said, baggage, maybe at some point of time the underlying should be probably a transparency. For example, refund and airline cancellation, you said. There must be a choice of refund and rerouting. There must be a choice given that there should be a transparent compensation. If there's a baggage, for example, I always say, there must be a freedom of unbundling. That if there's a freedom of unbundling and saying that I am deciding I am a daily passenger and I do not want to have a check-in luggage, I should have the ability to decide, and my pricing should be accordingly transparently given to me. So to that extent, yes, I think the judgment will eventually capture not only the ticket pricing, but cancellations, refunds, and baggages as well.
So what I'm seeing over here, and you can correct me if I'm wrong, the court's apparent concern is not that we have dynamic pricing, that it exists, but whether the fare increases are becoming excessive and are becoming unpredictable. Also, if passengers are understanding how prices are determined, and that's where the transparency bit comes in, the ancillary charges are being used to inflate the final ticket cost. That's something the court is also noticing, and whether the existing monitoring has any real enforcement teeth. So how valid are those concerns, Mr. Shivaraman?
Yeah, I don't know whether I'm amused or I'm surprised. Why pick up only this industry? Because it is a high-flying industry, literally high-flying. Why not the pharmaceutical industry? When the atorvastatin or drugs which are used in the diabetic cases, etc., are being differentially priced. Why nobody is looking at that where life is involved? Here only the airline pricing is being looked at because everyone travels by air. And particularly the people who can afford to travel by air. That's why you want to look at everything concerning the airline industry. What about the pharmaceutical industry? What about other industries? Why is nobody worried about other industries? Why nobody is worried about the pricing in those industries? Because the airline industry is attracting big people, educated people, cultured people, cinema stars, judges, lawyers, everyone. So you want to look into the nitty-gritty of airline pricing. Fine. If that were to be the case, why not the government order, like in every other industry, a cost audit be conducted in respect of every airline industry before they submit their balance sheet? There should be a cost audit report also, along with the audit report of the airline. Then you would know what is exactly the price they are charging for a particular sector, what exactly it costs for them to run between or fly between those two sectors. So let us look at it from a holistic angle. Why are we bothered only about the airline pricing?
So
why not about pricing?
Don't you think it's adding up to the transparency bit that we are seeking, right? And it's not like the government hasn't intervened, sir.
In pharmaceutical pricing? Where is the transparency in pharmaceutical pricing? I know when Medical Corporation of Tamil Nadu purchases atorvastatin, they pay only a few naya paise. When you go into the market, you pay 6 rupees for a tablet.
But sir, during COVID, didn't the government intervene? During COVID, to be able... The intervention is in difficult times, sir. During the Mahakumbh intervention, fare surge happened, the government intervened. There are caps during the Indigo operational disruption as well. Doesn't that show that the government already accepts that there are circumstances where the markets fail?
Only when there is predatory pricing, government can intervene. All over the world, governments do intervene when there is predatory pricing. But when there is no predatory pricing, when the airline sector is itself in trouble, in India, all the airlines are in trouble. 400 aircraft are there in Indigo, only 300 or 350 are flying. Others are on the ground because of the engine problem. Air India is already in terrible loss, thousands of crores loss. I know Air India very well. I've seen Air India functioning from the ground up as DGCA. So you see, you also look at the way in which these airlines are also managed. The government cannot probably micromanage every one of these airlines.
So you're saying that airlines, we need to cut them slack right now, sir? Is that what you're saying? Mr. Bhargav, do you agree with what what we are hearing from Mr. Shivaraman?
No, to a partly yes, partly no. Let me put it this way. But where we go wrong, somebody made a mention of the Mahakumbh price surge at that time. My contention at that time when the Kumbh was taking place was, did the government sound the airlines that these are the days on which there'll be Mahasnan? There'll be more people traveling from various points. The answer is no. If you don't ask the airlines to mount more additional capacity, the fares will go up. Simple demand capacity equation goes in there. Then the question of unbundling of fares, well, DGCA did unbundle fares. And DGCA has only a month ago brought in a factor, like one of the panelists said, that if you're going without a checked baggage, you are charging 200, you are charged 200 rupees less in fare. One can always question, as somebody spoke about transparency, that is the cost of managing a bag worth 15 kg of weight only 200 rupees, that the benefit should be given to a person without a checked baggage only 200 rupees. There are various ifs and buts. But the moot point is, which Supreme Court need to take care of, is that what percentage of the total fare paid by passenger goes to an airline, and which of these other things should be absorbed by the government and not by the passengers. Security is a concern, we all know about it. Everybody, passengers are paying because of the CISF on duty at the airports. Now the question comes in, is the passenger going to bear it? ATF charges, sale tax? Is the airline passenger going to keep paying for it?
But the pricing itself,
charges,
sir,
airport charges.
Mr. Bhargav, the pricing itself.
Said, just one point. What I've very often said is, the tragedy of the aviation industry is that everybody associated, every sector associated with the airline makes profit and not the airline.
But the pricing is a maze, wouldn't you say?
Point made by Mr. Shivaraman, that because aviation industry is a glamorous industry with a glamour quotient, gets the attention of the media, the parliamentarians, the Supreme Court now, etc. Therefore, everybody talks about it. The price increases in all sectors takes place regularly. And if government can have a mechanism how to increase the DNS allowance of central government employees based on pricing index, well, they can apply the same formula for airlines that the fares must go up in certain proportion.
So Mr. Ratna, let me just take this across, Mr. Bhargav, just a moment. If one airline is charging 8,000 rupees, another is charging 18,000 rupees for a similar flight on the same day, is that competition working or is that competition breaking down? Is that what we need in an economy like ours, even in an aviation sector, which seems to be beaten down from all reports? It is. But is that what we need for growth?
You know, there are very, I think, isolated cases of 8,000 and 18,000. Normally, you have a mechanism of pricing for the low-cost airline, which is Indigo, SpiceJet, Akasa Airline, and another one for Air India. Now, if Air India is to benchmark its fares only 200-300 rupees more than Indigo, it is bound to be losing money because the cost of a legacy carrier with this food provided, service provided, everything takes longer to clean up an aircraft because you're providing food on a flight, etc. You cannot do it. It has to be gone into in great detail. The judges have to understand how an airline mechanism functions. Why is Indigo making marginal losses versus Air India making huge losses? Simple, it's a full service carrier and this is not. Everything depends on the cost factor, the business model they are following. SpiceJet, Indigo, both are low-cost airlines, Akasa Airline. Why is Indigo being able to make reasonable profit or minor losses? For the simple reason, the scale of operations.
The scale of operations, one understands, Mr. Bhargav. I understand. There is the scale of operations. That's the fundamental of the aviation sector. But Mr. Lazar, this survey that I was looking at, Local Circle survey, it found a majority of respondents favoring fare caps, many supporting a 2x upper limit. Is public frustration itself becoming this policy issue right now?
Vikram, I just want to point out, now I'm looking at my screen, and Air India and Indigo operate the equal number of flights between Mumbai and Delhi. Tomorrow, Indigo is 8,000, Air India is 18,000. Now, Mr. Bhargav is right, and a full service carrier. Now, why is Air India 18,000? That's the premium service. It's the premium section. Okay. So it's not an ordinary economy. Plus they have food, plus they have full service carrier. So there will be this difference. Now you want to cap it at what? You know, the question cannot be said, I will cap it at 2x of what? Of Indigo, of SpiceJet? Because Air India will always be more expensive. They will always bleed. So there has to be a rationale. And again, I come to, and one point I think Mr. Dutt missed, this petition also covers the passenger charter. it's also delved. I don't think it's come to that as yet. It's going to talk of passenger compensation, because I had spoken to the petitioner last year in November, December, when the Indigo crisis broke out. So there are lots of layers of this problem which are going to unveil itself. This is not purely about fares. It's going to go into unbundling. It's going to go into taxation. It's going to go into transparency and passenger rights. This gentleman is a frequent litigant, and I think he's got the attention of the Honorable Supreme Court at this point, because at that point there were judges who were stuck and of some courts, and they have taken suo motu notice.
No, fair enough. I mean, but the issue remains. When you talk about airfares, we're talking about that much more transparency coming in. This isn't really about whether airfares should be cheap or not. It's about whether pricing power should have the boundaries when consumers have limited alternatives and little visibility into how those prices are arrived at. Yes, markets need freedom to thrive, but consumers need protection as well. The challenge for policymakers is going to be about finding that balance and to deliver both. I want to thank my panel for joining us. Unfortunately, out of time, but this is a larger discussion. Krishna Vidatta, Mr. Shivaraman, Jitendra Bhargav, Sanjay Lazar, Rajan Ratna, thank you for joining us with your perspective tonight. Yes, nobody is arguing about the dynamic pricing scenario. It's the way that markets thrive, that industries grow. But when you're talking about consumer protection, that's some balancing act that the government needs to do as well. And what this new structure, the new framework is going to be very closely watched. I'm Vikram Oza with a big question. Thank you for joining us.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
New rules of engagement. Ambitions crossing.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where we get you the hottest companies, and right now, of course, most of the companies have finished their Q1 numbers. But is there any alpha to be made from here or not? That's the big question. Let me give you some hints. Try to guess this company, and if you're from Bengaluru, I'm sure you must be guessing it very early. It's a Bengaluru-based managed workspace platform. Seen it all across in Tier 1 and Tier 2, Tier 3 places. The stock is still down 24%. From the IPO price. Now the listing, you could say it's a recent listing, July 30th, 2025, and remember this company is coming second time in KYC. So I'm going to give you the history also, but you need to wait with me. Mutual funds have 9.3% stake in the company. The company in focus is IndiCube. This is the company which I'm talking about, IndiCube Spaces. You must have heard about it or seen it across the common working space platforms, be it GCC startups or unicorns. But why are we calling this company right now? What's the relevance of getting this company right now? Is it the valuations turning cheap, or is the Q1 numbers coming good? Because of that, the operational leverages. We need to understand that from the management, how to actually judge or value this kind of a company or the industry. Expansion and growth plans ahead, this is very much important. We will be tracking the operational numbers also, how it's faring for IndiCube Spaces. Also, another important question would be understanding the key accounting treatments. There's a lot of fair value treatments. Is Dalal Street understanding this kind of a model? That's the big question to be asked. Also, the GCC explosion, the India story. We have already spoken to a lot of peers, and now the company comes and shares their slice of history or the future. What's the moat of the company versus peers? How different is it, or is it not? Next question is, of course, apart from this moat, we'll try to understand the revenue contribution from the value added segment. That has been increasing, from 11% to 17% in the first quarter. And of course, the usual numbers, the occupancy guidances and the client mix. Is it changing? Is there some new trend which we can discuss? So a lot of these important questions is something where we'll have a discussion with the management. But let's understand the business first. ये धंधा क्या है? Accounting treatment क्या लगता है? These are the basic things with a lot of viewers write and message to me, and I'm going to break it down and make it very easy for you. If you're a budding analyst, you should be listening to this segment. Now, the integrated management office space platform, that's what the company is all about. But let's get into the details about it. There are some brands like Grow, Design Cube and IndiCare as well. This is the products profile for the company. The company offers managed workspaces. There's of course design and fitment and build solutions also. It's not just a bare shell office. You can of course do some flexi work as well, or you can change the overall interiors. The company offers efficient commercial space operations as well. That's one way to put things. Also, they have 855 clients. GCC Global Capability Center, that revenue share is roughly 53% of the total revenue. So this is a very big play on India's GCC explosion story. 65% clients have 300 plus seats, and that is a good healthy sign if you are studying this industry. The value added services, that's where it has gone up. It's up to at 17%. This adds more margins to it, and as the scale comes up, there's an operating leverage at play also for a business model like this. Apart from this, the occupied area share, how things move on, almost 49% of that comes from the GCC segment, but second followed by the Indian corporates. Also, there is exposure from the startups and unicorn, and this is the total setup looking like when it comes to the occupied area share. Moving ahead, what's the business? Dhanda kya hai? This is the most important thing, and you should take a screenshot or share with your friends also if you are trying to understand this industry, especially for the company specific. Now, this takes roughly 55 to 60% one center to come break even, and that is 6 months. It takes that much only. That's a good point actually. Occupancy stabilizes at 85 to 90% within 12 months. So these are the numbers you should be tracking. 6 months, 12 months we discussed. Another important Dhanda model is the capex payback. The entire setup, the entire capex comes back in 36 minutes if you invest. So these are the three numbers you should be tracking. But India's GCC story is exploding. 2,400 GCCs expected by 2030 and 115 every new year. So you can imagine how big the industry is getting. Also, second portion is their market size is at $110 billion. That's the growth coming in. Third important point I would like to point is the grade A demand by GCCs. This is around 40 to 50%. And the story is playing out in this sector. Also, India has posted a record 24.6 million square feet of office leasing in April to June quarter. Second data which is very important to share with you is the grade A demand has outrun the new office space since 2022. So you can imagine more formalization, more MNCs, more startups, and flex space is the India's #1 office occupier. Almost 27% of second quarter leasing of calendar year 2026 was done. But what may work for the company, and we have done a detailed analysis and I've given you two portions of it. Analysts have a bullish stance. I'm going to share with you the number of analysts tracking the stock. A strong operational growth is something which the company has delivered. Third important point has to be the beneficiary of GCC explosion. This is the mega trend which we have identified, and it's expected to go up going ahead. Significant reduction coming in the debt to equity ratio. That also augurs well, and we have given more time now to the company to judge. 3.87 million square foot of occupancy headroom is there. So there is a good revenue visibility going ahead as well. But there are some concerns also for the stock. The valuations still remain fairly expensive. That's the first reason. Second one, there is no major addition from institutions post listing. That means the stake has been largely flattish. There hasn't been an increase of FI or DI exposure. Sector right now is out of flavor on Dalal Street right now. Even though the GCC story is going on, seems like the market is not giving premium to this sector and complex accounting adjustments are there. That is where the market is not able to understand EPS track kare ki koi operational parameter track kare. So concerns are there, but not major concerns to be honest. So this is the entire picture for IndiCube spaces when it comes to the good and the bad. But let's try to understand more with our own analysis. This is the KYC ratings which I talk about. Of course, we are going to get you the income statement, balance sheet, cash flow, the usual ones. But today, instead of return ratios, I'm getting operational parameters. It doesn't make sense to judge the company right now in the stage of the business model it is. And that's why we tweak operational parameters also. Shareholding street cred, now it's almost 1 year. This is the second time the company is coming in KYC after 6 months. So we'll see how much of changes has happened. Valuations, we'll get its 3 more peers and compare that. But this time we're going to do on price to book. Analyst stake is very much important, and why analysts are bullish, those reasons also we'll definitely discuss. So 8 parameters where we'll be judging the company, but let's start with the first parameter, the income statement. Remember, the Q1 numbers were strong, the operational numbers were already strong, the 3-year CAGR numbers, the top line looks strong as well. Now you must be wondering, this, is it profitable or not, the company? Yes, the company is profitable. First quarter we have seen that, but the losses are reducing. This is how the business model plays out in a system like this. They are going for scale operations, and now slowly the operational leverage will play out. So as of now, overall looking at the numbers, the Q1 numbers are also decent. The margins were flattish around 61%, but look at the top line growth. This is where we're seeing a good magic happening. And when we are judging a company like this at this stage, I'm going to give this a strong thumbs up for the income statement. This is of course the margins, and this is something that 58 to 61% looks sustainable going ahead. But let's talk about balance sheet also. Income statement we have done. Balance sheet, the debt equity ratio has come down. They have mentioned that in the first quarter. That is where a little bit of strength comes in. Largely these balance sheets are pretty light. It's not very heavy. Of course, remember there are adjustments, accounting standards at play, a little bit of confusion, but the management will clarify that as well. A decent cash amount also for the expansion, 385 crores to be precise in FY26. So balance sheet also is a strong thumbs up. So we spoke about income statement, we spoke about balance sheet, also operational highlights. This is something which I have picked up instead of return ratios. There is area under management, there is centers, number of seats, all of them above 14% year-on-year basis growth, and this is what the street actually wants. At least the operational parameters should be good or growing at a decent pace, and that's why they might justify valuations later on. The total occupancy has gone up as well. It's around 86% right now. So these are the operational highlights, and this is a strong thumbs up from my side as well. But shareholding, let's see what's happened. And shareholding, actually nothing has happened. That's the maybe a concern or maybe a positive point. Either way you can look at it, the glass is half filled. Promoter stake has been stable at 60%, a minor increase maybe for the FIs, but it's in smaller digits. Slight dip for DIs, 14%, so nothing major has happened. So I'm going to give this a neutral rating when it comes to the shareholding as well. Apart from shareholding, let's talk about the street cred, what has happened. Largely the numbers we see from March lows, the stock has gone up and given 34% returns, and good buying is happening at these lower levels. But nevertheless, from IPO price, the stock is still down 24%. 2026 it's down, as well as 2025. So from the IPO you haven't made money, but has it been a trade bet? Yes, you have made money. So I'm going to give this a neutral rating for the street cred. But apart from street cred, let's talk about valuations, how things pan out. And valuations also have taken price to book ratio, the 12 months forward numbers. IndiCube comes in at higher with SmartWorks, both of them on the higher side price to book. This is the ratio which I'm talking about, almost 8 times. Compare that with the other peers, they are on the lower side. Talk about Office as well as EFCI, all around that 2.6 to 3 times. But net the stock market actually is still not giving a proper value to it, because there is a little bit of concern. What's the profitability, the path to profitability? And of course the company has turned profitable, but what are the actual valuations right now? And right now we are still in the earlier cycle of the business segment. So I'm going to give this a neutral rating for valuations. This is the analyst outtake, 83%. There are totally 6 analysts tracking. 83% of them have a buy rating, and from current levels, almost a 40-50% return potential is coming at 267 rupees per share. That's the 12-month return potential. So it's a strong thumbs up when it comes to the overall analyst rating. So now let's understand and give you the total picture of the KYC ratings for August, which the company has come. Remember, the company had come earlier also, especially in the month of February when it was very newly minted IPO. Income statement, balance sheet is pretty strong, so I've given this a thumbs up. Cash flows, take things with a pinch of salt right now, so accounting adjustment entries and a lot more. Operational parameters were decent, the Q1 numbers started coming up, so slowly the market is digesting the model. Shareholding, street cred, nothing much has moved, so I've given this a neutral rating. Valuations also, I'm going to give this, it's slightly towards the higher side, but I've kept it neutral. But analysts remain bullish in this counter. 83% of them have a buy rating. So totally KYC rating is 6 out of 8. On the higher side for IndiCube Spaces, but has this improved from the last time? That's the main question. The KYC ratings in the month of February was 4.5 out of 8, and now almost 6 months down the line it is at 6 out of 8. So there is a good improvement in the company, and of course we have given a little bit more time to judge the company and understand more. So that's a pretty interesting take, to be honest. But the conversation continues with the management of the company, and we'll be joined in by Rishi Das, the co-founder and CEO of the company. He has almost 3 decades of experience, be it HR, talent acquisition, and even you could say the overall commercial real estate. So all of them are actually co-relational. There is a good interrelation here. He's a co-founder of CareerNet Consulting as well as Hire Pro Consulting and education from IIT Roorkee as well. Now we are joined in by Rishi Das, co-founder and CEO of IndiCube Spaces. Welcome back, Rishi, to KYC. Last time we had you in the month of February. It's been 6 months, and yes, things have improved a lot, and Q1 numbers is something, speaking of improvement, has done really well as well. Wanted to understand, Rishi, now Dalal Street is trying to understand your business model of your company and the industry also. How does this margin outlook play out? Is this normalizing? Are we going to get some good, estimations for FY27, how things look since operational leverages kick in now?
Yeah, thank you, Sharad. Thank you so much. Yeah, so talking about the margin, as you can see, we are at about 20% of the EBITDA margin, and we are very hopeful that we will be around that range. And we see from a guidance point of view, it will range between 19 going up to 21%. So I think we have achieved, as you rightly highlighted, the economies of scale, the operating leverage, all that is there in the business. So, and also I would like to highlight that in our category, we have the best margin profile. So we are very hopeful that we should be able to maintain the margin outlook for this financial year as well as even for the next financial year.
So margin profile will be maintained for the next 2 financial years. But Rishi, let's understand a little bit. There's always that accounting adjustment or treatments which happen because of different accounting standards, how to value your company, and at times there is, you could say, the markets misprice it. So just wanted to understand what are those, treatments in the lease or the accounting segment which one should understand when somebody is studying your company.
Yeah, so I think the one very important metric is to what we have been publishing very regularly is the IGAP equivalent. Because as you would be aware that in our industry, all the leases are capitalized, and then the depreciation on that is accounted for. As a result, if you go by the Ind AS accounting standard, you will see a very, very high EBITDA margin, and then you start seeing a PAT negative. So the right way to look at our business or any other business which is having leases, whether it's a PVR or any hotel which has leases, those kind of businesses, you will always see that the IGAP gives a better reflection. And in our business, I will always encourage people to look at the PAT, which is a very healthy now, and we have been paying income taxes regularly. So as what you have on your screen is a Ind AS equivalent. But if you look at the IGAP numbers, they give a very, very realistic picture, and that is, I must say, a very old school traditional accounting standard that we have been using all the while to value the businesses. So by that accounting standard, we have a 20% EBITDA margin. Our PAT is very healthy at about 8 to 9%. So I think that is a better metric to look at our category and IndiCube.
That's very interestingly, you have given a good clarification for all the budding analysts and stakeholders and investors valuing your company or even the industry. But speaking of industry, you are also an industry spokesperson. The GCC explosion is on everybody's mind, and of course, you are also having a majority chunk of your revenue and area occupation under that. How do you see this happening for the industry, and how good is your company placed here?
So very rightly highlighted. Today, as I talk to you, if you look at by area, about 49% of our area is occupied by global capability centers, and their share in our revenue contribution is 53%. And this is on an upward trajectory. Clearly, we see that there will be improvement on that. But I must also say that if you look at our overall portfolio, is quite balanced. Like about close to, I will say 23-24% of our revenue area, basically occupied area, comes from the startup, the unicorns, the late stage companies. Another about 28% comes from Indian enterprises. And when I say Indian enterprises, it includes the IT sector or our traditional companies like Mahindra Logistics, or you talk about Ashok Leyland, TVS Group. Those kind of enterprises constitute about 28% of our revenue, and 49% is the global capability centers. And going by the current trend in the industry, we see that the global capability centers will continue to absorb a large chunk of office spaces, typically over the next maybe 2-3 years. That's what we are very hopeful of.
And sir, speaking of the expansion and the growth plans, the India story is not just in tier 1, tier 2, tier 3 also. Across my travels, be it Coimbatore, Surat, Siliguri, Raipur, everywhere I am seeing a good action happening in tier 2, tier 3 also. How is IndiCube space placed here? What are your expansion and the growth plans?
It's a very good point. One big shift, Sharad, I must say, what has happened post-COVID is the work is going where people are. See, earlier, if you look at when we started our careers, we went where work was. Somebody like me came from Lucknow to Bangalore, 2,000 miles for work. But today, work is going where people are. So that's a very, very healthy shift. And there is a rise of a lot of tier 2 cities. So totally, if you see today, we are present in 17 cities. And we are present in 8 tier 2 cities. With Coimbatore, we have scaled up quite well. We are now almost 4.5 lakh square feet in Coimbatore. And Coimbatore is the only non-capital South Indian city in South India whose population is more than 30 lakhs. So likewise, I must say that we are now present in Cochin, Visakhapatnam, then we are in Indore, Bhubaneswar, Mohali, like that. So tier 2 story is here to stay. Also, I would like to say that if you look at China, there are 120 plus cities in China whose population is 1 million plus. In India, we have close to 50 such cities. So you can imagine over the next 20 years, we are going to at least add maybe 50 more cities whose population is going to be 1 million plus. So we will see job growth going more democratized more in terms of their spread rather than being only concentrated in the top cities.
Right. And Rishi, speaking of value-added services, there has been a significant jump, 11% last quarter, corresponding year, and now it's at 17%. That is a significant jump. Any kind of growth targets, expecting 25 to 30% of this contribution going ahead in future?
So we definitely see this on an upward trajectory. I can't say that it will be 25 or 30, but definitely we see it touching close to 20% in maybe the next year. Because what is happening, Sharad, the customers who have come to us looking for space, the customer is not only having that as an office. The customer has 5 or 10 or 20 more offices, which has nothing to do with IndiCube per se. So the customer is coming to us and saying that, can you do stuff for us there also? Suppose they already have a space, they are looking for renovation, they are looking for interiors, or they are saying, okay, can you only provide us services in those spaces if interiors are also there? So we are seeing that is a very, very healthy trend, that the customer, once they like our services, our interiors and everything, then they are giving us the opportunity to expand us across their pan-India portfolio. So a lot of vast growth is happening because
increases.
Of that. Yeah.
Right. So the wallet share of the existing customer starts increasing when you do cross-selling as well as value-added services. Any kind of occupancy guidance and the client mix for the future? I think currently it's at around 86%.
Yeah. So we track 2 types of occupancy, Sharad. One is a occupancy which is for overall occupancy, and as you rightly highlighted, we are at 86%. and this is high. Typically, we try to maintain our overall occupancy between 82 to 85%. And then we have the concept of steady state centers, because when we pick up any property, it takes us about 9 to 12 months to make the center reach a steady state, which is like 90% plus occupancy. So our steady state occupancy is about 90%, and that we see typically hovers between 86 to 90%. And also that is a function of, suppose in a given quarter, a very large supply has got added. You will see the occupancy slightly dipping, like that kind of a
Right.
thing.
And Rishi
So,
sir,
but
we are
yeah.
coming short of time. I just have 25-30 seconds. In 3 lines, you have to say me what's your moat of your company against your peers.
Our big moat is, one is workspaces for everyone. We don't believe that we are providing spaces only to a startup or a GCC. So we have workspaces like hotels at every different price point. Second is we follow the talent. We go wherever the talent is. We are not married to only one size of building or one quality of building. That is the other one. And then, of course, the value-added services.
That's very nicely put, and thank you very much, Rishi sir, for giving your time for the company, its growth prospects, and of course the great Indian GCC explosion story as well. It's always a pleasure to have you with us at NDTV Profit. So that's the management of IndiCube Spaces. The stock is below its IPO price, but management has done well on the Q1 numbers, and since last time in KYC, they have improved their ratings in the last 6 months. But will Dalal Sid give premium to it? That's the big question. So for these interesting stories, stay tuned to NDTV Profit and keep watching KYC.
In our tradition, celebration is not complacency. We take in how far we have come and we fix our eyes on the ascent that remains. I present the budget for the year 2026-2027.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
We're joined today by Harsha Upadhyay, who's speaking to us today, CIO, of course, of Kotak Mahindra AMC. Harsha, always a pleasure speaking with you. Thanks so much for taking the time. We're a day after the Q1 results has waned or finished, and you kind of got a trend or sense of how these numbers would pan out more or less at the midpoint of Q1. I wonder what you think about this, because just as we're closing out the earnings season, you have once again the situation that is getting complicated externally. You have crude oil that's once again above $90 to the barrel.
Yes. First of all, I think the earnings season has panned out quite better than most expectations, I would say. Most of the expectations were that there will be some impact of the ongoing West Asia crisis, and hence either the margins will be under pressure or there will be some logistic issues that the companies would have endured, and hence the numbers may not be as strong. But contrary to most expectations, numbers have been really, really strong. In fact, after almost 8 or 9 quarters, we have seen large cap earnings growth moving at about almost 17.6% for the full season. This is a significant improvement compared to the less than 3% growth that we saw 2 years earlier and less than 6% growth that we saw last financial year. So I think while the confidence was more on mid caps and small caps to deliver earnings growth as expected, there was very little confidence on the large cap basket when the season began. But contrary to expectations, we have seen even large caps delivering quite a bit of strength in terms of earnings trajectory. Having said that, as you mentioned, the West Asia crisis still lingers on, although it is somewhat low intensity. However, the sentiments on the energy side have remained quite volatile, and to that extent, we have also seen firming up of crude oil prices, which is not a good news from an external perspective. Purely from earnings perspective, I think things have improved quite a bit this quarter.
Yeah, earnings perspective, things have improved. Harsha, Manna here. Problem is that improvement, is it reflecting in prices? Do you think that earnings improvement have now been adequately priced in by the market and now you will need a plus, something more to really move the needle?
Tamanna, actually, we still believe that large caps are well below their median valuation range or long-term average valuation range. So to that extent, the earnings growth trajectory, which has improved, should give impetus for large caps to start performing from here on. But of course, there are other external factors which are keeping the markets in a range, I would say. In fact, I'm a little bit surprised to see some of the macro headwinds receding and FII money starting to come back, rupee dollar stabilizing. We have seen almost $55 billion of FCNR deposits coming into the country, except for monsoon, which has been a bit of an erratic this season. Most of the other things seem to be on the improving side. But even then, we have not seen markets moving out of this range, which is a little bit of a surprise. Of course, that is also partially driven by the kind of selling that continues on the secondary side, and as well as some of the IPOs, which are also taking up the liquidity.
Tradition. Celebration is not complacency. We take in how far we have come and we fix our eyes on the ascent that remains.
I present the budget for the year 2026-2027.
Good evening. Welcome. You're joining us on the Bottom Line this Tuesday evening for a complete lowdown on the business day. We get you that complete picture and with perspective. I'm Vikram Oza, and here are the news stories grabbing the headlines tonight. The Large Street having ended lower for the sixth straight session now, its longest losing streak since September 2025. The Nifty ending below 24,200. This has happened for the first time since July the 28th, as elevated oil prices keep the indices under pressure. The broader indices performing better versus the benchmarks on the back of the traction that we've seen in the financial stocks. Oil prices extend gains as hopes for a near-term US-Iran deal have fallen. A fresh vessel attack in the Strait of Hormuz has renewed supply concerns, Brent remaining above $90 a barrel. Public sector banks set to target the youth as the finance minister has announced a month-long Banking for Youth campaign from the 2nd of October, with public sector banks offering no-frills accounts and zero charges to attract first-time customers. FDI rules are set for a big reset. Sources telling NDTV Profit that the government may raise the FDI approval limit that is required by the CCEA, the Cabinet Committee on Economic Affairs, to 15,000 crore rupees and is now likely to ease the downstream rules. The proposal is to be taken up for cabinet approval soon. After the Supreme Court orders a CBI probe into allegations against the former India Bulls promoter, Samman Capital is distancing itself from that case, saying it is not an accused and has no links with the former promoter. The government tells Meta that Safe Harbor will not cover CSAM, that's child sexual abuse material violations. Meta tightening its grip now on harmful content, assuring better content moderation. The government stays firm, saying that Meta must follow the law of the land. The Federation of Indian Pilots urging the DGCA, the Directorate General of Civil Aviation, to adopt oral fluid testing, backing scientifically valid, transparent and procedurally fair checks to ensure there is safety, while Air India is saying that all pilots have been tested voluntarily beyond regulatory requirements. SkyMet raises drought risks. It sees 70% probability of drought. It has cut the monsoon forecast to 85% long period average from what was 94% that was set in the month of April. National Sports Awards 2025 being announced. No Khel Ratna this year. World Cup winning chess player Divya Deshmukh, badminton player Gayatri Gopichand, Glasgow Commonwealth Games medalist Narinder. These are among the 17 who have been named for the Arjuna Awards this year. Our top line tonight, it's the monsoon outlook. It has suddenly become a lot more worrying. SkyMet has sharply downgraded its 2026 southwest monsoon forecast from 94% of the long period average in April that they had announced and put out. Now it is just 85%. And very importantly, it puts the probability of a drought as high as 70%. This warning coming at a critical point between the 1st of June and the 31st of July. The nationwide rainfall already 13% below the long period average. So there is also this clear divergence in forecast because the IMD, the Indian Meteorological Department, continues to stand by that second stage forecast that they made of 90% of the long period average, which is still below normal but significantly less severe than the kind of projection being made by SkyMet. And this is where the larger economic concerns lie, because a persistently deficient monsoon could hurt kharif sowing, could hurt crop yields, reservoir levels would be hit as well, farm incomes too. So with the impact potentially spilling over into rural demand and food inflation, this becomes a compounded problem. So the next few weeks are going to be crucial when it comes to the monsoon. The question is whether India is staring at just a weak monsoon or a drought situation, which would have wider economic consequences. Earlier today, we had a word with GP Sharma. He's the president at the Meteorology and Climate Change Department at SkyMet, and we got his outlook. Listen in to what he told us.
This monsoon has been having a topsy-turvy curve. You remember month of June was highly deficit over 35% rainfall deficiency shortfall was there. July was a savior. Okay, it did good thing, and lot of rain-fed zone. Actually, they received decent rain. I'm talking about central parts, western parts of the country. So that saved the situation. So therefore, it was looking as if everything is going on absolutely okay. But then, as we had expressed some fear in the beginning itself, that this time the El Nino conditions are there. And we had indicated about 3-4 weeks back also that we in any case revise our monsoon forecast and give a course correction if required around this time. That's end of July or some start of August or so. And that is how we revised that. The conditions are not looking very good.
So it is a bleak outlook as far as SkyMet is concerned, and it's even lower than what IMD has put out. Now, the consequences of this are going to be watched, and we will dissect it as more information about the monsoon comes in. Let's get you the market pulse now. Nasdaq taking a major step towards round-the-clock equity trading. There is a new overnight session that is being planned from 9 in the evening to 4 in the morning. This is Eastern time, and it starts the 6th of December 2026. So it happens this year. Later this year, it would take Nasdaq to nearly 23 hours of trading a day, 5 days a week, with just a 1-hour evening pause. So the traditional 9:30 a.m. to 4 p.m. session is going to remain the benchmark for pricing. The extended hours are aimed at catering to global investors and making equities that much more competitive with 24/7 crypto markets. This full rollout, though, is still subject to SEC approval, with the system readiness and market integrity key considerations over there, and we'll see how that pans out for them. Now, public sector banks are preparing for a fresh push to bring India's young population into the formal banking system. Finance Minister Nirmala Sitharaman has announced a month-long Banking for Youth campaign. It begins on the 2nd of October, and it's aimed at first-time account holders who are aged anywhere between 16 and above. So, from students to young professionals, all of them are eligible. The focus is on improving financial literacy, expanding their access to banking services, and also encouraging early participants in the formal financial ecosystem. As part of that drive, public sector banks are also going to offer zero balance. They will offer them no-frills accounts without any charges and make it easier for young Indians to start their banking journey. We got in a word from the Finance Minister about this. This is what she was saying about the campaign.
I would like the public sector banks to consider launching a focused, month-long Banking for Youth campaign commencing 2nd October 2026, Mahatma Gandhi Jayanti, with particular outreach to young citizens above 16 years of age. It could be coordinated through DFS and the IBA. The portal can also help perhaps guide them to the nearest public sector bank branch, where they can open a basic savings bank deposit account with no banking charges, interact with bank officials, and also access appropriate banking services. So essentially, a simple no-frills account, because you're talking of bringing financial inclusion to those who are in the age group of 16 to 18.
On the policy front, India could be preparing for one of its biggest overhauls when it comes to foreign investment regime. This is the biggest in years. Government sources telling NDTV Profit that consultations across ministries on easing of FDI norms have now wrapped up. Now the focus is on making India a more attractive destination for global capital at a time when countries are competing very, very hard for investment and supply chain shifts. So if the proposed changes do go through, they could make it easier for overseas investors to put money into key sectors in India, potentially accelerate investment flows into the Indian economy. My colleague Shrimi has been speaking to her sources. She's joining us on the phone line with more details. So Shrimi, what have you heard? What could this really mean for investors and India Inc.? I believe you're joining us live from Delhi. Tell us more what you're picking up on this, because it could be a major shift that India is pushing for.
Yeah, very important development. Actually, the government is kind of weighing on some of the tweaking and important sort of changes in the investment rule to make more easier to tap foreign capital into the country. And in fact, what we are given to understand that they are going to change the threshold where they are going to increase it from current 5,000 to 15,000 for government clearance. And actually, currently you need CCA approval for the same. And the second important, that some sort of changes in the downstream investment, which essentially mean that if your parent company invested in India and already secure government approval, the subsidiary, if they want to sort of invest further and bringing in foreign capital, they don't require actually the government clearance once the parent company secure that. So these two important changes, along with the other tweaking which is under consideration, and in fact the DPIIT under Commerce Ministry has already made a draft note which will soon be presented to Cabinet, and this is coming at a time when both government and RBI are working together to sort of boost foreign investment into India, and especially after a lot of data which suggesting, in fact the official data of RBI of May 2026, if you see, showing some sort of negative inflows as far as net FDI inflows is concerned. So to mitigate all those challenges and to boost foreign investment into the country, the government is working towards it, and you will see some very big decision very soon once the Cabinet give the green signal to this DPIIT proposal.
Now, how big a boost this is going to be for investments pouring into the country, that is going to be a key monitorable over here. But from the likes of it, from what we're picking up from our sources, this could be a big push when you talk about the FDI rules and how much easing there could be on that count. Meanwhile, we were talking about the youth and how banking sector is going to yield to them and try and get them more into the fold. Also, the government wants public sector banks to stop looking at young Indians as just customers. They want them to start looking at them as future earners, as entrepreneurs, as job creators. So the Department of Financial Services is now pushing a youth-centric banking model with simpler digital onboarding. There would be customized education, there would be entrepreneurship loans, financial products as well. All of these built around different life stages. So the ambition is to raise youth participation in agriculture from what is 6% to raise it to 10%, and the share of salaried youth, they're trying to push it from 25 to 35%. The bigger shift is from product-led banking to the journey-led banking. So this would mean they would have to use data, they would have more financial literacy and also digital tools to build long-term banking relationships with young Indians. How much of that agenda gets pushed remains to be seen. Now, as far as the Middle East war are concerned, Hormuz uncertainty, all of that is continuing. President Donald Trump is saying the Strait of Hormuz is open and is operational. He's also insisting that the U.S. naval blockade remains fully in force. And Trump is also saying that all water mines in the strait have been removed or detonated. And yet, at the same time, Donald Trump says there are no talks, no conversations with Iran that are currently taking place or even scheduled. It adds to all the uncertainty over the path ahead. So the comments come as the 60-day US-Iran negotiation window has expired. There has been no broader agreement that has been arrived at. It keeps the future of the crucial oil route in focus, and that is quite clear that it's going to have a ripple effect on oil prices. In the boardroom of BSNL, we're entering a